What we're seeing really is third quarter net sales meeting the average estimate from SoftBank there. But coming up, we'll stay corporate and we'll be speaking to the CFO of Michelin as the French tyre maker embarks on a €2 billion share buyback. That conversation next. This is Bloomberg.
Hello everyone, good morning to all of you, good afternoon, good evening to all of you at whatever time zone you are right now. Welcome once again to this commodity live analysis. इंडियन मार्केट को देखोगे तो इंडियन मार्केट इज अगेन बोरिंग, सेम ही सिनेरियो चल रहा है। पिछले 2-3 दिनों से देखोगे मार्केट एक ही जगह पे कंसोलिडेशन कर रहा है। निफ्टी बैंक निफ्टी दोनों ही कुछ मज़ा नहीं आ रहा वहाँ पे काम करने में। अभी इतना मोमेंटम ही नहीं है इंट्राडे में। 15 मिनट चार्ट फ्यूचर देखोगे निफ्टी थोड़ा सा ज़्यादा फॉल कर गया आज। कल जैसा मैं बता रहा था आपको 26,000 से लेकर 26,000 रेजिस्टेंस जोन है, कल वहीं पर कंसोलिडेशन में ही था 15 मिनट पे। और आज भी देखोगे ओपन इक्वल टू हाई बनाया है फ्यूचर में और थोड़ा बहुत उसी लेवल पर है। एक ही चीज़ सही है कि कंसोलिडेशन कर रहा है ये कंटिन्यूसली 25,800 से 26,050 के बीच में। अगर इसी लेवल पे कंसोलिडेशन करता है और ब्रेकआउट होता है 26,050 फ्यूचर में, तो मुझे लग रहा है फिर मार्केट ऑल टाइम हाई जरूर जाना चाहिए। अभी इट इज़, मुझे लग रहा है एक्यूमुलेशन फेज पर ही है। सेम फॉर बैंक निफ्टी एज वेल। क्रूड ऑयल और नेचुरल गैस को देखोगे कल की लेवल है, कुछ चेंज नहीं हुआ है। ठीक है, क्रूड ऑयल और नेचुरल गैस में कल याद होगा एक पॉइंट ऑफ इंटरेस्ट था, वहाँ से थोड़ी बहुत सेलिंग आई थी। नीचे मैंने बताया था एक एरिया ऑफ इंटरेस्ट है 5857। देखते हैं यहाँ पर अगर ये सपोर्ट क्रिएट करता है तो बाई करेंगे, नहीं तो अभी इसमें और कोई ट्रेड नहीं चल रहा। नेचुरल गैस कल एक सेलिंग का ट्रेड था लेवल पे, वही अभी भी है रनिंग। ये रेजिस्टेंस अभी भी इम्पैक्ट ही है। नीचे देखोगे तो अभी हमारे पास और ये जो सपोर्ट है, दिस इज अ मल्टीपल टाइम टेस्टेड लेवल, इसको लिख लेते हैं वापस से। मल्टीपल टाइम टेस्ट हो चुका है। नीचे एक स्ट्रॉन्ग सपोर्ट दिखता है अभी 250 से 255 के बीच में। दैट इज़ अ वेरी गुड स्ट्रॉन्ग सपोर्ट जोन। ये भी है सपोर्ट 270 72 के अराउंड, बट ये बहुत बार टेस्ट हो गया अब, तो थोड़ा सा रिस्की रहेगा ये लेवल। अपर लेवल पे देखोगे ये एक रेजिस्टेंस जोन है, अभी भी है। इस लेवल पे देखोगे वैसे नेचुरल गैस को तो ये इस पर्टिकुलर जोन पे कल ही आया था, मतलब कल क्लोजिंग होते होते आया था मार्केट यहाँ पे। थोड़ी बहुत सेलिंग आई थी, वापस फॉरेक्स में थोड़ा बहुत ऊपर गया, रेजिस्टेंस पर ही है अभी फिलहाल। तो थोड़ी बहुत सेलिंग आ रही है। मैं एक्सपेक्ट कर रहा हूँ कि अगर ये थोड़ा फॉल करे तो बेटर ही रहेगा अनटिल कोई नया सपोर्ट नहीं बन जाता। एनी ब्रेकआउट अबव 293 94 इस लेवल के ऊपर कहीं अगर ब्रेकआउट वगैरह सस्टेन करता है, प्रॉपरली ब्रेकआउट होता है, तब एक चांसेस बन सकते हैं प्राइस को वापस 330 335 तक जाने के, अनटिल उसको बीच में रेजिस्टेंस ना हो। दिस इज द स्ट्रॉन्ग रेजिस्टेंस राइट नाउ। वैसे ये ऊपर वाला जो रेजिस्टेंस है ये भी एक बार टेस्ट हो चुका है, बट अभी एक ही बार हुआ है, तो एक्सपेक्ट करेंगे कि ये अभी भी होल्ड करे अपर लेवल पे। सो 330 335 का जो ऊपर वाला रेजिस्टेंस जोन है वो स्ट्रॉन्ग ही है। बाकी वैसे नेचुरल गैस को देखोगे कोई बहुत ज़्यादा ट्रेंडिंग नहीं है। मार्केट पिछले 2-3 दिनों से एक रेंज के अंदर ही फंसा हुआ है। परसों आया था रेजिस्टेंस जोन के अराउंड आपका प्राइस 9th ऑफ फरवरी को, तो 9th 10th 11th और आज 12th, तो 4 दिनों से एक इसी रेंज में है प्राइस लास्ट फ्रॉम 4 डेज। तो किसी एक साइड रेंज ब्रेक कर दे तो मुझे लगता है फिर मोमेंटम अच्छे हो सकते हैं, क्योंकि अब ये लेवल भी ऊपर का 2 बार टेस्ट हो चुका है। फिर से अगर थोड़ा बहुत पुल बैक आता है तो तीसरी बार टेस्ट होगा। अभी फिलहाल ये रेंज है, बाकी कई मल्टीपल टाइम टेस्ट हो चुके हैं। अगर अब ये वापस पुल बैक में ही से सीधा आता है नेचुरल गैस, एक री एंट्री वापस मिल जाएगी, बट याद रखना फिर ये लेवल भी तीसरी बार टेस्ट हो जाएगा। तो दैट इज़ अ मल्टीपल टाइम टेस्टेड लेवल, वी कैन से इट। नीचे वाला तो ऑलरेडी है मल्टीपल टाइम टेस्ट कर ही चुका ऑलरेडी। बाकी नीचे ये लेवल मार्क किया हुआ है वही है अभी फिलहाल सपोर्ट। लेट्स सी, थोड़ा कंसोलिडेशन करके फॉल करता है, पुल बैक तो मुझे लग रहा है आएगा जरूर, क्योंकि कल रेजिस्टेंस पे हिट किया था, मार्केट अपसाइड गया है, तो कहीं ना कहीं एक इस तरह का पैटर्न बनाने की कोशिश जरूर होगी यहाँ पे। बहुत जो लिक्विडिटी बची हुई है 290 294 के अराउंड हो सकता है वो भी ग्रैब करने वापस थोड़ा बहुत मोमेंटम दे। सो लेट्स सी, फिलहाल के लिए तो ये पूरा टारगेट एक्सपेक्ट करेंगे, डिवाइडेड बाय 2, फर्स्ट 284 देन 272। ओके बाकी आज इम्पॉर्टेंट डेटा है एक अनएम्प्लॉयमेंट क्लेम्स का इवनिंग पे, उसका ध्यान रखना, गोल्ड और सिल्वर को इम्पैक्ट करता है मेजरली। एक्सपेक्ट देखोगे लास्ट टाइम 231,000 अनएम्प्लॉयमेंट क्लेम्स फाइल किए गए थे यूएस में, जो लोग अनएम्प्लॉयड थे। इस बार एक्सपेक्ट है कि ये डेटा थोड़ा सा कम आएगा। लेट्स सी क्या एग्जैक्टली डेटा इसी के अकॉर्डिंग आता है। अगर ऐसा आता है तो डॉलर के लिए पॉजिटिव हुआ, गोल्ड और सिल्वर के लिए नेगेटिव। अगर अपोजिट आया तो डॉलर के लिए पॉजिटिव, डॉलर के लिए नेगेटिव, और गोल्ड और सिल्वर के लिए पॉजिटिव। तो डेटा तो गोल्ड और सिल्वर के लिए नेगेटिव ही है फोरकास्ट में। एग्जैक्टली देखते हैं कितना आता है। बाकी नेचुरल गैस इन्वेंट्री भी है। फोरकास्ट देखोगे लास्ट वीक -360 बुलियन का डेटा आया था। इस बार एक्सपेक्ट कर रहे हैं ये -256 बुलियन, मतलब लास्ट वीक के कंपैरिजन में ज़्यादा एक्सपेक्ट कर रहे हैं। तो अगर फोरकास्ट के अकॉर्डिंग डेटा ज़्यादा ही आता है -256 बुलियन से, कितना भी ज़्यादा आए, दैट इज़ बेरिस। तो नेचुरल गैस का जो फोरकास्ट है इन्वेंट्री का, दैट इज़ बेरिस। ठीक है, फोरकास्ट एग्जैक्ट डेटा जो आएगा तब पता करेंगे। बाकी कल इंपॉर्टेंट डेटा रहेगा, कल सीपीआई का डेटा है, यूएस का इन्फ्लेशन का डेटा कितना रहता है यूएस में इन्फ्लेशन मंथ ऑन मंथ एंड ईयर ऑन ईयर बेसिस पे, कोर सीपीआई और सीपीआई का डेटा। बाकी फिर सैटरडे संडे मंडे को याद रखना यूएस मार्केट आई थिंक क्लोज है, फॉरेक्स तो ओपन है, बट यूएस मार्केट में भी शायद क्लोज है। ठीक है, रीजन वहाँ पर आई थिंक वॉशिंगटन डे है शायद, तो उस वजह से बैंक हॉलीडे है मंडे को, तो हो सकता है थोड़ा वॉल्यूम थिन रहे ऑन मंडे। कैंडल की उम्मीद नहीं थी, ओपन इक्वल टू लो बनी है कैंडल। लुक एट द क्रूड ऑयल नेचुरल गैस कैंडल, ओपन 289.6, लो 289.6, ओपन 289.6, लो 289.6, ओपन इक्वल टू लो। बड़ी क्रूशियल कैंडल है। अगर लास्ट कैंडल के ऊपर सक्सेसफुली क्लोज हुई तो थोड़ा सा प्रॉब्लम क्रिएट कर सकती है सेलर्स के लिए। क्रूड ऑयल में देखते हैं, यहाँ पर ये एरिया ऑफ इंटरेस्ट एक है जरूर। क्या ये यहाँ पर एक सपोर्ट क्रिएट करेगा नहीं करेगा, अभी किया नहीं है। ठीक है, तो डायरेक्टली तो बाई नहीं करेंगे, वेट करेंगे प्राइस एक्शन कैसा बिल्डअप हो रहा है अराउंड 5,850 to 860 इस रेंज के आसपास। अगर एक ठीक ठाक प्राइस एक्शन बुलिश साइड में क्रिएट होता है तो फिर एक बाइंग का प्लान करेंगे, अदरवाइज हो सकता है फॉल ही करता रहे क्रूड ऑयल। तो अभी के लिए थोड़ा सा इस लेवल को नज़र में रखना, ये जो एरिया ऑफ इंटरेस्ट मार्क किया हुआ है 5,850 to 860, वैसे कोई पर्टिकुलर पॉइंट नहीं होता, तो ये एक रेंज मान सकते हो। यहाँ पर प्राइस एक्शन कैसा बिल्डअप हो रहा है उसके बेसिस पर ही डिसाइड करेंगे कि यहाँ से वापस बाई करें या फिर नहीं। ठीक है, से प्राइस को देखोगे, प्राइस वापस नीचे उसी रेंज में आने की कोशिश कर रहा है। भी करते रहो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम। मॉर्निंग पे देखोगे क्रूड ऑयल ओपन हुआ था, मोमेंटम आया अपसाइड डाउन साइड, अगेन एक लोअर लो फॉर्मेशन पर ही चल रहा है। कल ये जो आपका एक पॉइंट ऑफ इंटरेस्ट था, ये लेवल मैंने वैसे आपको बता दिया था, मल्टीपल टाइम टेस्ट हो चुका था, यहाँ पर काफ़ी वॉलिटिलिटी थी, इसलिए कल लिया ही नहीं यहाँ पर कुछ ट्रेड। किसी ने अगर सेल किया होगा तो उसको मिल गया होगा लगभग 80-90 पॉइंट के आसपास, मार्केट मोमेंटम कर चुका है। ठीक है, ये वैसे था एक रेजिस्टेंस जोन ही, बट जितनी यहाँ पर मार्केट वॉलेटिलिटी क्रिएट करके गया था, लेवल को कई बार ब्रेकआउट ब्रेकडाउन ब्रेकआउट ब्रेकआउट सब कर चुका था यहाँ पे। तो आई थॉट कि यहाँ पर अब नॉर्मली तो सेलर इस तरह के जोन में एक्टिव दोबारा नहीं होंगे, बिकॉज उस केस में एसएल कहाँ रखें थोड़ी सी प्रॉब्लम होती है। क्या कल यहाँ पर सेलर फिर से एक्टिवेट जरूर हुए। ये मैं समझना कि कोई एक पर्टिकुलर लेवल है, वो सपोर्ट अगर है तो वही रहेगा। हो सकता है उसके जस्ट नीचे प्राइस नया रेजिस्टेंस, कोई रेजिस्टेंस है तो उसके नीचे जस्ट कोई नया सपोर्ट क्रिएट हो जाए एंड वाइस वर्सा। तो हो सकता है इमीडिएट कोई रेजिस्टेंस हो और जस्ट उसके नीचे कोई सपोर्ट बन जाए, तो फिर फाइट हो जाएगी दोनों लेवल पे। जो जीतेगा मार्केट उसी साइड मूव कर जाता है। ठीक है, जिस टाइम फ्रेम पे आप देख रहे हो ऑब्वियसली। गोल्ड और सिल्वर को भी देखोगे तो गोल्ड और सिल्वर भी रेंज के अंदर ही चल रहे हैं। बिटकॉइन ने थोड़ा सा स्लम ज्यादा कर दिया, 70,000 गया था, 60,000 से सपोर्ट लेके वापस 67,000 पे वापस आ गया। कि जो लोग अगर एल्गो ट्रेडिंग करना चाह रहे हैं तो वो लोग धन में अकाउंट ओपन कर सकते हैं, धन के थ्रू ट्रेड कर सकते हो, वहाँ पर एल्गो ट्रेडिंग अवेलेबल है। ठीक है, एंड वहाँ पर बहुत सारे फीचर्स धन टीम कंटिन्यूअसली इंगेज करते जा रही है। यू कैन यूज़ द मार्जिन ट्रेडिंग फैसिलिटी, उसका यूज़ कर सकते हो। तो जो लोग धन में अकाउंट ओपन करना चाहते हैं, लिंक डिस्क्रिप्शन बॉक्स में है, और मैंने लिंक भी किया वैसे कमेंट बॉक्स में। आप चाहें तो वहाँ से अपना अकाउंट ओपन कर सकते हैं और ट्रेड कर सकते हैं। ठीक है, जो लोग स्पेशली एल्गो ट्रेडिंग अगर करना चाह रहे हैं, इन द सेंस ऑफ इतना टाइम नहीं मिलता, वो लोग धन में डायरेक्टली एल्गो ट्रेडिंग के थ्रू, जो भी एल्गो आपको सही लगता है, ऑप्शन बाइंग, ऑप्शन सेलिंग, इक्विटी ट्रेडिंग, ईटीएफ, यू कैन यूज अकॉर्डिंग टू दैट। ठीक है, जब आपका अकाउंट ओपन हो जाएगा तो उसमें बाय डिफॉल्ट वो आपको फ्री में मिल जाता है। हाँ, एल्गो आपको उसमें जो भी एल्गो आप लगा रहे हैं उसके परचेज के अकॉर्डिंग उसको बाय करना पड़ेगा, एंड दैट इज नॉट दैट मच। हाँ बिल्कुल, आप अपने चाहें तो अपनी खुद की स्ट्रेटजी भी बना सकते हैं और उसको एपीआई के थ्रू इंटीग्रेट कर सकते हैं, और उसके थ्रू और लोग अगर ट्रेड करना चाहें तो वहां से ट्रेड कर सकते हैं, कम्प्लीटली मेड इन इंडिया. सो यू कैन यूज डिफरेंट एल्गोस अकॉर्डिंग टू योर यू नो किस तरह से आप ट्रेड करना चाह रहे हो. मैंने एक बार पहले ही बताया था वैसे, ये जिन लोगों को नहीं पता फिर से रिपीट कर देता हूँ. धन के थ्रू आप एल्गो ट्रेडिंग में अपना जो भी अमाउंट है वो फिक्स करके रख सकते हो, वहां पर ऑटोमेटिकली ट्रेड होते रहेंगे. ठीक है, जैसे भी आप ट्रेड करना चाहते हो, कोई पर्टिकुलर नहीं है. ठीक है, ये उन्हीं के लिए मैं बोल रहा हूँ जो लोग नॉर्मली ट्रेड नहीं करते. जो लोग ट्रेड करते हैं उनके लिए तो कोई फायदा नहीं है, ठीक है, वो तो मत ही करना. बट जो लोग इतना टाइम नहीं दे पाते सुबह से शाम तक, फॉर दोज इट इज़ वेरी बेनिफिशियल. ठीक है, आप जिस भी सेगमेंट में ट्रेड करना चाहते हैं, किस तरह का ट्रेडिंग स्टाइल आप रखना चाह रहे हैं, डायरेक्शनल ऑप्शन में ट्रेडिंग, हेज ऑप्शन में ट्रेडिंग, लॉन्ग टर्म इन्वेस्टमेंट, नेकेड ऑप्शन बाइंग, नॉन डायरेक्शनल ऑप्शन, स्विंग ट्रेडिंग, उसके अकॉर्डिंग बहुत सारे आपको यहाँ पर एल्गोज मिल जाएंगे. उस पर जो भी आप सिलेक्ट करना चाहो सिलेक्ट कर सकते हो. डिपेंड अपॉन आपको हाई रिस्क वाले एल्गो चाहिए, लो रिस्क वाले एल्गो चाहिए, हाई अमाउंट रिक्वायर्ड वाले एल्गो चाहिए, लो अमाउंट रिक्वायर्ड वाले एल्गो चाहिए. जैसे ये एक एल्गो है, इसमें मिनिमम 10,000 रुपीज़ रिक्वायर्ड है. हो सकता है एक दूसरा एल्गो देखोगे वहाँ पर मिनिमम 3 लाख रुपीज़ चाहिए. सो दैट इज टोटली डिपेंड अपॉन किस तरह से आप कर रहे हो. ठीक है, बाकी जो लोग ऑलरेडी ट्रेड करते हैं तो वो भी आप देख सकते हो. यहाँ पर एक ऑप्शन आता है मोस्ट डिप्लॉयड का, या फिर मोस्ट ट्रैक, मोस्टली तो मोस्ट डिप्लॉय वाला ही है. इसमें ऑप्शन सेलिंग ही है ये. ठीक है, कर्वेचर, क्रेडिट स्प्रेड, ओवरनाइट, एंड चाहो तो आप इसका बैक टेस्ट भी देख सकते हो, इसका रिजल्ट कैसा रहा है. जैसे फॉर एग्जांपल इसका बैक टेस्ट अगर आप चेकआउट करोगे तो यू कैन सी द रिटर्न 1 मंथ में, 3 मंथ्स में, 6 मंथ में, 1 ईयर में कितना मिला है. ठीक है, यू कैन डायरेक्टली सी फ्रॉम हेयर एज वेल. ठीक है, चार्ट पे देखोगे तो यहाँ से भी देख सकते हो इन लोगों ने जिस तरह से डिप्लॉय किया है. बैक टेस्ट की रिपोर्ट, कितने ट्रेड कब लिए गए हैं, कितना अमाउंट कब डिप्लॉय किया गया है, स्प्रेडशीट कैसी रही है, स्कोर कितना रहा है, और ये स्ट्रेटेजिक काम कैसे करती है. ठीक है, वो भी मेंशन रहता है यहाँ पर. इसमें लोग करते क्या है, आपको कुछ नहीं करना, बस अपना अमाउंट डिप्लॉय करना है, एंड देन यू कैन सिट एंड रिलैक्स एंड जस्ट चेक इट आउट. बट रिमेंबर दिस इज एल्गो ट्रेडिंग, तो कोई ऐसा नहीं है कि परफेक्ट है, नथिंग इज परफेक्ट. यहाँ से आप थोड़ा सा इसको एक बार जरूर चेक कर लेना कि आप जो भी एल्गो डिप्लॉय कर रहे हो उसमें रिस्क रिवॉर्ड कितना है, और वो कितने ट्रेड ले रहा है फ्रिक्वेंटली. जैसे ये वीक्स में सिर्फ 3 ही ट्रेड लेगा मैक्सिमम. ठीक है, रिस्क कितना है, वेरी हाई, मीडियम, लो. जैसे फॉर एग्जांपल अगर मैं लॉन्ग टर्म इन्वेस्टिंग का एक एल्गो देखूं, ये एक एल्गो है अल्फा इंडस्ट्रीज ऑटोमेटेड. तो इसमें आपको देखोगे तो इसमें रिटर्न आपको उतना नहीं मिलेगा, बट दैट इज लो रिस्क, वेरी लो रिस्क. अगर आप उसका चेकआउट करोगे, इसमें ओवरऑल 3 मंथ्स में, 6 मंथ में, 1 ईयर में, 2 ईयर में मैक्सिमम इतना प्रॉफिट ही है, बिकॉज दैट इज लो रिस्क एल्गो. ठीक है, इक्विटी में ट्रेड करता है लॉन्ग टर्म के लिए. ठीक है, अगर आप चेक करना चाहो तो इसका स्टेटस भी यहाँ देख सकते हो कि एवरेज ड्रॉ डाउन, मान लो आपने 10,000 रुपीज या फिर 1 लाख रुपीज भी इन्वेस्ट करके रख लिए सेलगो में, तो मैक्सिमम कितना ड्रॉ डाउन हो सकता है, विच इज 2.78, मतलब 3%, 1 लाख का 3%, 3,000 हो गया. मैक्सिमम 3,000 ही मिनिमम रिस्क जाता है उसमें. ठीक है, रिस्क रिवॉर्ड काफ़ी अच्छा रहता है, तो इसलिए प्रॉफिटेबल है लॉन्ग टर्म में. ट्रेड फ्रीक्वेंसी महीने में एक ही ट्रेड होता है, रिस्क हाई है. मैक्सिमम ड्रॉ डाउन यहाँ पर देख सकते हो कितना हो सकता है आपके कैपिटल का. सक्सेस रेशियो, एवरेज प्रॉफिट इन ट्रेड एंड ऑल. ठीक है, तो इस तरह से ट्रैक कर सकते हो. बट ये जरूर चेक करना, ये मैट्रिक्स इंपॉर्टेंट है. ठीक है, कई बार लोग सिर्फ एल्गो देखते हैं, कितना रिटर्न दे रहा है वो देखते हैं, बाकी और कुछ नहीं चेक करते. दिस इज वेरी इंपॉर्टेंट. ठीक है, तो इसको भी कर सकते हो. बाकी ये किस तरह से काम करती है तो ये भी यहाँ पर मेंशन लिखा हुआ है. इक्विटी में लॉन्ग टर्म के लिए ये इन्वेस्ट करते हैं इस एल्गो के थ्रू. सो ये सब कुछ आप कर सकते हो धन में. बाकी और ब्रोकर का मुझे पता नहीं, वैसे कुछ ब्रोकर शायद और भी करते होंगे. एपीआई के थ्रू तो बहुत सारे ब्रोकर करते हैं, अगर आप अपनी स्ट्रेटेजी डालते हो या फिर किसी थर्ड पार्टी की स्ट्रेटेजी इन्वॉल्व करते हो. बट डेडिकेटेड एल्गो ट्रेडिंग मुझे इंडिया में जो इनबिल्ट है किसी इंडियन ब्रोकर में वो इसी में दिखी, बाकी में तो मुझे इतना कुछ खास दिखता नहीं है। वहाँ वो दो तीन एल्गो डाल देते हैं, एल्गो के नाम पे एल्गो डाल देते हैं, 2000 नॉट एल्गोस, ठीक है, जिसमें वो कहते हैं कि आप बस अमाउंट डाल दो, हम ये बाई कर लेंगे, कॉल स्प्रेड पुट स्प्रेड इस तरह से बना देंगे। दैट इज नॉट एल्गो ट्रेडिंग एक्चुअली। ट्रेड डायरेक्टली फ्रॉम डायरेक्टली फ्रॉम धन। मैंने लिंक एक बार फिर से पिन कर दिया कि उसमें एक बाय द वे अलग अलग ब्रोकर वैसे प्रोवाइड करते हैं। एमटीएफ जो लोग लेते हैं ना सर्विस, थोड़ा सा अपना एसएल का भी ध्यान रखना वो लोग, ठीक है, जिन लोगों को नहीं पता, दैट इज अ मार्जिन ट्रेडिंग फैसिलिटी। फॉर एग्जांपल अगर आप कोई शेयर बाई कर रहे हो एंड यू हैव ओनली 1 लाख रुपीज इन योर ब्रोकर अकाउंट, राइट, तो अगर आप नॉर्मल उसमें बाई करोगे या सेल करोगे वट एवर, तो वहां पर आपको फुल अमाउंट 1 लाख का जितना अमाउंट है उतना ही आप शेयर बाई या सेल कर सकते हो। बट मार्जिन ट्रेडिंग फैसिलिटी में आपको 3x 5x तक का लेवरेज मिल जाता है, इन द सेंस ऑफ, ठीक है, इवन ईटीएफ में भी अगर ट्रेड करते हो तो वहां पर भी लेवरेज मिल जाता है गोल्ड सिल्वर में। क्योंकि नॉर्मल अगर गोल्ड सिल्वर ट्रेड करोगे उनके फ्यूचर को या फिर ऑप्शन सेल करोगे, मार्जिन बहुत हाई है, बहुत ही ज़्यादा हाई है अभी फिलहाल के लिए, बिकॉज ऑफ द प्राइस वेरी ऑल टाइम हाई के अराउंड चल रहा है इसलिए। सो वहाँ पर मार्जिन ट्रेडिंग फैसिलिटी ले सकते हो, बट ध्यान रखना मार्जिन ट्रेडिंग फैसिलिटी लेते वक्त आपका लॉस भी थोड़ा ज़्यादा हो सकता है, क्योंकि आपने एक तरह से मार्जिन ले लिया वहाँ पर काफ़ी ज़्यादा। तो इस चीज़ का जरूर ध्यान रखें जो लोग इंट्राडे में ट्रेडिंग करते हैं वो लोग, कि वो लोग मैक्सिमम लोग लेते हैं जितना मेरे को मैंने देखा है। लास्ट कैंडल देखो ओपन इक्वल टू लो बनी थी, जैसा मैंने कहा अगर ये प्रीवियस कैंडल के ऊपर क्लोज होती तो थोड़ी प्रॉब्लम क्रिएट कर सकती थी, बट नहीं हुई। ऊपर गई जरूर, बट वापस क्लोजिंग बेसिस पे नीचे आ गई है, तो कोई इशू नहीं है। ये लेवल अब हमारे लिए कुछ प्रॉब्लम क्रिएट नहीं करेगा अभी। क्रूड ऑयल आ रहा है, देखते हैं। एरिया ऑफ इंटरेस्ट इंपॉर्टेंट है ये लेवल, इसको नोट करके रखना। अभी फिलहाल के लिए तो नीचे और कोई सपोर्ट नियर बाई में दिखता नहीं है। एक और पॉइंट ऑफ इंटरेस्ट बन सकता है 5700, अगर वो भी नहीं बना तो फिर सीधा 5640 जो नीचे सपोर्ट लगा रखा है। 12:30 हो गया, 1:30 देखते हैं लंदन सेशन के बाद। थोड़ा सा मुझे लग रहा है वॉल्यूम आना चाहिए अब। क्रूड ऑयल में कुछ बनेगा तो देखेंगे, अभी कुछ नहीं है।
Day, breaking down and zeroing in on the age group between 25 and 54 and saying that if you look at that data set in terms of that working age population, 80% of those people are employed. So he's suggesting if you zero in on the 25 to 54-year-olds, you're looking almost like full employment in the US, which poses the question, and the reaction, where we did see the reaction in the markets, it was the front end of the yield curve with yields up.
A little bit.
And a little bit of repricing, repricing in terms of June, moving back to July for the next cut from the Fed. But how do you, as Walsh, justify and make the case for additional cuts in an environment where the jobless rate has moved down from 4.4% to 4.3%?
And there's lots of people coming out on the Fed, the FOMC, saying just that, which I think is interesting. Just in terms of the data, just in terms of what happened with the data, and then you put the AI story into the mix as well. But there's just continuous churn below the surface. What is interesting yesterday in terms of the sectors that did well in the States: energy, consumer staples, materials, utilities. That's really defensive. Healthcare's in the mix as well. The financials index, communication services, consumer discretionary all did badly yesterday. But you're getting this kind of churn. The real estate story, what is happening in the software space more broadly, that continues to churn at the bottom of this market, which is really interesting.
So real estate services was yesterday's version of, I've lost count, legal services, wealth management, all the areas of the market that we've worried about with regards to AI. Let's talk about, this seems quite retro now, Tom, tariffs.
It does feel very retro, doesn't it? And this is, and we were discussing, of course, in our editorial meeting, this is less about the likelihood of tariffs being removed or adjusted until, of course, a Supreme Court decision. This is more about a political blow for President Trump in the lead up to the midterm elections in November. We had a number of rebels, 6 Republican rebels in the House, who voted alongside the majority of Democrats to essentially sanction President Trump over tariffs targeting Canada, specifically Canada. Now, in order for this to become law, because the Senate has passed similar legislation, it would have to be rubber stamped by President Trump. There's no sign that he would do that. So it's very unlikely it actually changes the arsenal of tariffs aimed at Canada. But what it does do is remind us that the cost of living crisis, the impact of tariffs, particularly for those Republicans in those states that have heavy trade ties with Canada, that is becoming more salient. And it's very difficult, it seems, for President Trump to address that. This is a source of deep concern for Republicans in the lead up to the midterms.
I think that's the takeaway from this. It's a political story. It's concern around what is happening into the midterms and what impact you could see post the midterms. But I think we need to take what you just said and think about what the world looks like post-November. If Trump does lose the House and the Senate, it looks far away, losing the Senate, but it's possible. How does the political landscape change? Does he double down? Does he ignore congressional kind of oversight? Kind of what happens in that world, I think, is interesting. And it points to potentially more volatility, not less volatility for financial markets.
Yeah, absolutely. So if you were seeing midterms as a time when things got easier, maybe that's not the case. I thought it was interesting in the context of tariffs, though, that recent Bloomberg economics analysis has focused on the fact that it seems to be US importers who have been paying the price of these tariffs, maybe in some cases passing that on to consumers. But it's not the case, according to this analysis, that last year we saw the exporting countries paying the price of the tariffs. It has been the US importers who've been doing it. That is according to Bloomberg Economics. Let us move on to the earnings stories that we have out this morning. There are plenty of them. I will do my bit and start with Hermes. So on the luxury side of things, Q4 sales at constant FX coming in better than expected, 9.8% higher. The estimate was 8.2, so that seems to be a beat on expectations. Resilient Birkin bag demand seems to be the headline. I mean, why wouldn't you? When gold's going higher, or it was... Sure. Is it today? Not today. Exactly. Gold might be some store of value, and so is a Birkin.
So from the discretionary to the staples story, Unilever, of course, Coleman's mustard, mayonnaise, Dove.
These are important things.
These are essential items, of course. You can find others out there, of course, as well. So this stock is up about 8% in the last 12 months. The redhead across the terminal for Unilever. Fourth quarter underlying sales. A pretty decent beat, increasing 4 4.2%. The estimates had been for a 3 just shy of 4%. So a bit of a beat coming through for fourth quarter underlying sales. For Unilever, they see 2026, so this is the look ahead, they see 2026 underlying sales of a range of 4 to 6% at the top end. The estimates had been for 4.1%. So that's decent in terms of the top end of that range, coming in above expectations, announcing a €1.5 billion share buyback as well. So that's a stock to watch.
Let's talk about AI disruption and security. OK? Very short. Brings both of those two things together. Company listed back in October, out with numbers this morning. Adjusted EBIT margin above 26. The EBITDA line looks a little light, which is maybe where the market will focus this morning. We're about to find out. And the EBIT line, the adjusted EBIT line, looks ahead of expectations. Now, what is interesting here, and we're going to get to this in just a second, is that this is a company that listed in October. Its stock generally has then come down below the listing price. But last few days, we've seen it potentially being impacted by the AI trade and disruption around the AI trade. Is that right or is that wrong? Well, let's find out. Austin Lally is the CEO of Verisure. Good morning.
Well, good morning. Nice to be back.
Yeah,
great to have you back.
Yeah, thank you.
I hope you've enjoyed life as a listed company since October. Come with a few bumps along the way, and last week was fascinating. Last few, kind of beginning of the year, there's been this AI turbulence in the market. As Anna says, it's affected all kinds of different things, like the legal sector, the software sector more broadly, but it's affected you as well. And I'm just, do you see AI affecting your business right now? Is there any evidence of AI in these numbers this morning?
Yeah, actually, one of the reasons we're sort of quite calm, confident, forward-looking is we're obviously actually an AI beneficiary.
OK, you're not a victim?
No, we're an AI beneficiary, and I think we're going to demonstrate that progressively over time. We're already using AI to great benefit in many aspects of the business. If I take maybe the core of what we do, which is the security service that we provide, I mean, it's basically what we call detect, verify, intervene.
Yep.
We're actually using AI algorithms already to do a better job of analysing incidents,
right,
of confirming whether it's, in a sense, a false positive or real. And we think we do that better than anyone else because we've got a proprietary system. Right. It's a closed system. We've got 6 million customers. We've got about 85 million devices.
Right.
We're getting audio, video 24/7 from those devices. We're using that to train our algorithms. I mean, I would say to win in AI, actually, it comes down to what's the quality of the training data that you have. And we've actually got more training data of higher quality than anyone else.
So you don't see Anthropic coming out with a plugin that's going... this is what seems to be happening on the other side. You don't see that happening?
Certainly not. I mean, our business is really about eventually human intervention.
Yeah.
It's about when you assess an incident, being able to respond to it. I mean, we've always been effectively like I would call it an outcome-based business. And so AI actually contributes to positive outcomes for us. And I think over time, investors will see this.
OK. Good morning to you, Austin.
Good morning.
Yeah, interesting to see how the market gets its head around the complexities under the hood of these various stories then. If I look at the numbers then, fourth quarter adjusted EBITDA looks a little light of what the estimates were, but maybe there weren't that many estimates. EBIT looks a little better. I wonder how that informs your full-year guidance. What are you telling the market about the year ahead?
Yeah, I think EBIT's the more relevant measure for us, given how much we invest in customer acquisition. So that's really primarily what we've guided on. Actually, the adjusted EBIT in the quarter, I think, is a bit ahead of expectations, as you noted. Very happy with that. I think we came in at like 953 million of adjusted EBIT. That gives us confidence, actually, in the 2026 guidance. What we've actually guided to is that margin increasing to over 26% next year. We're also confirming the guidance we gave at the time of the IPO on our revenue. So the annualised recurring revenue came in very strong in the quarter at 12.7%. Now, about 2 points of that is the impact of the acquisition in Mexico that we closed in Q4. So what we're guiding to for 2026 is that will be about 10%, which again is exactly what we said at the time of the IPO.
Getting new customers on the books must be really important to your...
it's the key, the whole thing,
key thing
about
for
the
your
story.
business.
Exactly.
And so what do we watch to know how easy or difficult that is for you? Because we sit around this desk every day talking about all kinds of volatility in all kinds of global markets, growth stories, the ebbs and flows of all the data and the like. What is key for you? What do you watch? What dictates whether people are prepared to enlist you?
I think what's interesting is that we grow at a pretty consistent pace even when the macro situation changes. And the reason is because the penetration's so low. I mean, if you look at our biggest markets, Iberia, Nordics, where we started, the penetration is only 10%. I mean, only 10% of homes and small businesses have security. It's not like we're running against this kind of mature market where the economy makes the difference. I mean, it clearly has, you know, an impact on the margins. But in general, it's the penetration opportunity that allows us to keep growing, like, you know,
so
consistently.
So you see it as a structural growth story, not
yeah,
so much
I mean,
the
basically
tactical
we're the
side.
market maker.
Yeah.
I mean, we are the number one advertiser, we're the number one brand. We basically take 2/3 of the market growth. I mean, the market grows because we go in and invest to grow it, right? We spend about 8 to 9% of our revenue on category creating marketing. I mean, you know, that's
Okay.
in a sense the primary driver of the growth.
Do you face a trust deficit? I mean, we've seen hardware, we've seen surveillance systems in Israel hacked. Israel's pretty on top of these kind of systems. They had their own systems, home systems hacked during that conflict with Gaza. You talked about video and audio and all that data that you collect. Can you give an ironclad guarantee, even WhatsApp encrypted, and there's been reports that analysts at WhatsApp and at Meta have been analysing personal data. Can you give an ironclad guarantee that that data is protected and that your team are not looking at it?
No, I think we're the absolute best in class in this. And I'll give you an example. You know, any of the images, for example, or data that we would get from the customer, that's only accessible when an alarm incident is triggered, right? So it's not that we're on a 24/7 basis operator steering at your home. It's when there's an alarm incident triggered, that data then gets accessed by the alarm monitoring centre.
But is that part of the story? You have to convince. But is winning customers' trust part of that friction as you try and grow beyond 6 million?
No, I think, in fact, we've been, because we're the market leader, because we're the number one brand, because we've been doing this for year after year, I think we've actually built up a major trust advantage.
Okay. What do you get in terms of customer numbers? Where are you by the end of the year?
Well, you know, we're not guiding on installation volume, but we're currently at 6.2 million almost, right? We just crossed the 6 million milestone towards the end of last year. I mean, it's been a very consistent story. If I look back over the past decade, you know, we've basically tripled the portfolio over that time. And if you think about that 10% annualised recurring revenue growth that we've guided to for 26, I mean, that'll be a combination of volume growth, right, and it'll be a combination of some pricing.
You paint a really stable, steady picture. You paint a positive picture. Stock's below the IPO price.
It is.
12.50. It went out the door at 13.50 back in October. What gets you back? Is there a lock-up problem with some of the PE investors that you think's holding the stock back? Is it the AI? What gets you back north of 13.50 and maybe reaches some of the analyst targets, which are much more positive?
Yeah, they are. And listen, I'm disappointed at how the stock has traded, right, in the most recent period.
Why do you think that is?
Yeah, but I think as CEO, it's quite important that we're not, I would call it, like, you know, chasing the ticker.
Sure.
I think what I've got to do is focus on delivery.
Yeah.
But
why are you disappointed?
Yeah, because I think that, you know, this is a growth story. You know, we posted a great set of numbers in Q3 after the IPO.
Yeah.
We've posted another really strong quarter today. Now, what I believe is that if we keep delivering this effectively double-digit progress on revenue and this strong progress on profitability, I think eventually markets will see the fair value in the company.
Cool. Lovely to see you.
Thank you.
Thanks, Austin. Thanks so much for being with us this morning. Really appreciate it. Austin Lally, the CEO of Very Sure. Coming up on the programme then, still lots to discuss. Cisco gives a tepid margin forecast for the current quarter due to surging memory chip prices. We'll watch European market read across. To what extent is there that direct read across? We'll have a look into the European session this morning. Plus, Schroders CEO will be with us. Richard Oldfield joins us exclusively, 8:15 London time. This as the asset manager, the storied asset manager, agrees to be acquired by a subsidiary of Nuveen in a deal valuing it at just under £10 billion, $13.5 billion. So really exciting conversation that will surely be. Up next, we will take a look at some of the big moves in the markets this morning, including Japan's super long bonds extending their post-election rally. If you have questions, if you want to get in touch, ID plus BBTV Go is the function to use on the Bloomberg terminal. This is Bloomberg.
Leading investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Welcome back. We are 40 minutes from the opening trade. Happy Thursday, everyone. European futures pointing to decent gains, up 0.7% after a flat session yesterday. The earnings story front and centre, and also digesting the data out of the US yesterday, Anna.
Yeah, absolutely. Working in some of those earnings stories. They've come thick and fast this morning, haven't they? Let's take a step back, though, and think about the macro story. Our Markets Live executive editor, Mark Gudmore, joins us now for a few minutes on these markets. And, Mark, let's start with Japan, if we could, because since the election, we seem to have seen quite a lot of retreat from some of the earlier Takaichi trades that the market had been playing quite strongly. So the yen has strengthened and continues to do so a little bit today. 153 is where we trade right now on the yen. What's the context around that?
Yeah, good morning, Anna. It very much seems to be this buy the rumour, sell the fact type of event. And people are now suddenly building this whole new narrative. But this is a turning point for the yen, because now that Takaichi will have 4 years to implement her policies, it's pro-growth, it's a buy Japan moment. We have certainty what's going to happen. And therefore, the whole narrative that we are trading on the yen is all wrong. And therefore, the yen's going to turn around. It's undervalued, and it can start a big macro trade. As we've talked about a lot, the macro community loves buying the yen, constantly wrong on this. And so it's very easy for that narrative to kind of get momentum. I'm not sure it sustains. I think it can last for a couple of weeks, a couple of months. But the fundamental reasons for being bearish to the yen have not changed. Even if Takaichi makes a difference in the margin, this is still a very slow growth economy with a very large debt pile that offers deeply negative real yields that are unappealing. And so therefore, I think the ongoing story is that if yen rallies maybe for a couple of weeks or a couple of months, it's just a great time to re-implement carry trades and fund to buy other risk assets in the yen, which Japan itself does. That's what Japan Inc. does en masse. And therefore, I don't know how long this change of narrative happens, but I don't believe it. I won't get on board. I'll just stay quiet to the chance to get bearish the yen again. It will come.
Eventually. Why didn't the dollar go up more yesterday? Why did the front end only move a little bit? That was a strong payroll number.
It was a very strong payrolls number. The reaction in yields surprised me. I would have thought yields would go much further. I understand the flattening move in yields, but I would have thought, it should be overall a bigger shift higher in the yield curve, right along the curve than we saw. The dollar move doesn't surprise me as much. We've talked a lot. The world is overexposed to the dollar on a structural basis, and that needs to change over the coming years. It's not going to happen overnight, but every time there's a spike in the dollar, it's another chance to offload. Hedging ratios need to improve. The dollar is 1 year into a multi-year downtrend. That has many more years to go. So dollar weakness is never going to particularly surprise me. The backdrop here is that if you get weak data, oh my God, well, it's justification for cuts and it's to sell the dollar. If you get strong data, well, maybe the Fed will still cut rates, and that's even worse for the dollar because they've got terrible monetary policy. Basically, it's heads the dollar loses, tails the dollar loses. That's the kind of the underlying backdrop we've got for the year ahead in the dollar.
Mark, another day, another set of anxiety, another round of anxiety when it comes to the AI apocalypse, the assassination, another sector, real estate. How anxious are you about this, and to what extent is this a broader market impact?
So I'm really surprised that the overall index level is holding up already, given the immense rotation we're seeing. I still kind of think we see a little bit of an equity shock in the coming weeks on some of this kind of wealth damage that's happening out there, some of the portfolio damage that's happening. But in the terms of the fundamental level, I don't think that the AI is going to savage jobs quite as quickly as some of the doom-mongering timelines. I believe it's happening. I'm not a Luddite in this thing, but I just think it's farther down the line.
OK, it's the time horizon that is in focus. Bloomberg Markets Live Executive Editor Mark Cudmore. Mark, thank you. Remember, you can get up-to-date, of course, analysis and insight from Mark and the rest of the team. Just go to MLive, go on your terminal. Here's the daybook for you today, then. Here's what else to be thinking about above and beyond what's happening on the earnings front. We'll get some details, of course, stateside as well on that story. 9 a.m. UK time, the IEA oil market report. Brent has been gradually grinding higher towards $70 a barrel. We continue to keep an eye on what's happening in Iran and the US build-up of military forces there, of course. But that oil market report is out at 9. 1:30 p.m. UK time. Further detail, further colour on the state of the labour market in the US with US initial jobless claims. And at 7 p.m. UK time, the RSA State of the Nation. So, President Trump, State of the Nation. Later, is that President Trump? RSA, State of the Nation? No, where is that?
Sounds like
is that South Africa?
Yeah.
OK,
yeah.
We'd probably know, wouldn't we?
State of the Nation is coming. The State of the Union is coming.
South African, State of the Nation, Ramaphosa.
Yes,
OK,
all of those things.
We'll zero in on that.
Trump is coming.
Emerging markets. The Rand is performing quite well. Earnings, I'm drifting off a little bit. Earnings, we're going to get L'Oreal, which is going to be interesting. Airbnb, Coinbase, given the rout in crypto, all of that is on your agenda. There's a picture of the South African leader which would have helped me with that assessment. Guy, what are you watching for?
Just don't know how to follow that, really. Let's update what is happening. Apple's long-planned upgrade to Siri has run into a few snags during testing over recent weeks, potentially pushing back the release of several highly anticipated functions. Bloomberg has learned that the company is now looking to spread the rollout of new capabilities over a longer period of time instead of releasing them in the next operating system, which, incidentally, is planned for March. The latest hitches are part of a long and trying saga for Apple, which first announced plans for the revamped Siri back in 2024. Feels like a very long time ago, June 2024. Bloomberg has also learned that Anthropic is nearing the completion of a deal to raise more than $20 billion in a funding round co-led by investors including Peter Thiel's Founders Fund, D.E. Shaw and Dragoneer. The investment group, the funding round has become a who's who of Silicon Valley and Wall Street investors. Other participants include Blackstone and BlackRock. Sources say Anthropic is set to be valued at around $350 billion in a deal that could be announced as early as this week. And President Trump says he's told the Israeli Prime Minister Benjamin Netanyahu that he intends to press ahead with talks with Iran. In a Truth Social post, Trump says nothing definitive was reached during their meeting in Washington, but he insists his preference is to reach a deal with Tehran. Netanyahu's office, meanwhile, says the two leaders agreed to continue coordinating closely, which basically means they didn't agree.
We have the CEO of Schroders coming on.
We do. This is huge.
On the show.
This is huge this morning. Massive deal.
Massive deal. Nuveen, 9.9 billion, almost 10 billion pounds.
Absolutely. This is going to shake up London. It's a continuation of a trend, but it's a fascinating transaction that comes this morning in that space.
Stay tuned for that interview and for that conversation. There's a lot more as well on the FX space. Stay with us. This is Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
The phone is, what's great about it is it's a well-developed gaming ecosystem, right? So it, folks know to find games there, but it's also a highly competitive gaming ecosystem. So its developedness gives you both that upside and that downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are going to like unleash this with a bunch of creators, and they're going to go figure out stuff that we didn't even imagine that they can do with that interactivity.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
What is it? Thursday the 12th. Thursday the 12th. It's Thursday. And it's the 12th. We're 30 minutes from the start of the opening trade. Stocks look like this, okay? So we're gonna bounce this morning at the get-go. The CAC's going to have a really good day. We're going to see what happens with Hermes. I'm fascinated to see what happens with the FTSE. Schroders is called up 20% this morning. We're going to talk to the CEO very, very shortly. I can't kind of reinforce this enough. Nuveen takeover, massive deal. Tom's got some really interesting facts. We'll get to those in just a minute. Euro Stoxx 50 futures up by 0.8% at the moment. So we do get a bit of equity action at a headline level this morning, which I think is interesting in itself. What's happening in the bond market?
Yeah, let's have a quick look at bond markets. We have been watching what's been going on in Japan, of course, and the post-Takeichi trade, the post-re-election of Takeichi. There's been some focus on that this week, hasn't there? It's certainly the long end of the Japanese curve. Not much action here in Europe, though, as you can see. Not much movement at all. A little bit of selling, just very much at the margin. The focus on the jobs report yesterday over in the United States. As we move through this week, we get towards the inflation report. That will be the next real focus for global bond markets then, Tom.
Yeah, so the data was in focus yesterday stateside, as was this vote in the House, a rebuke, essentially, of President Trump's tariff policy, even if it won't materially change it, at least in the short term. Donald Trump's tariff policy suffering their strongest political blow yet.
On this vote, the yeas are 219 and the nays are 211. The joint resolution is passed. Without objection, the motion to reconsider is laid on the table.
The Republican-led US House passing that legislation then aimed at ending the president's levies on Canadian imports. The move signalling growing anxiety over the White House economic agenda ahead of those midterm elections. Let's bring in our Washington Deputy Bureau Chief, Laura Davison. Laura, fantastic to get you on and your take on where this leaves President Trump, his tariff agenda, how much of a political blow this is.
Yeah, so in terms of practical effects, Donald Trump is going to just march right ahead with his tariff agenda. Really the only thing that could stop him is the Supreme Court, which is due within a decision here in the next couple weeks about whether these tariffs are constitutional. But in terms of the politics, this House vote shows that this is a really tricky issue for Republicans. We had a lot of situations here where you had only 6 Republicans who broke with the party, but a lot more were privately very uncomfortable and sort of hoping this would pass, even though they publicly voted no. Republicans are headed into an election year. They're trying to hold on to their House and Senate majorities, but that's really an uphill climb. And as voters are really concerned about the economy, cost of living, and they're blaming these tariff policies, it gets harder and harder for them to publicly embrace them.
Why are they feeling so gloomy about all of that when the labour market looks okay? The jobs data yesterday was good.
Yes, the labor market is good, but if you look back in the past year or so, it's been one of the weakest years for labor, going back, several decades. So, we constantly hear this disconnect between what voters are saying that they're, that they feel like their paycheck isn't keeping up, grocery prices are too high. Well, the underlying fundamentals of the economy look good. This is really the trap, though, that Joe Biden fell into. He kept saying, look, the data is good, why aren't you feeling it? Trump has also sort of headed down that road. This is very tricky, politically for him to manage, and why you're seeing him put pressure on the Fed to cut interest rates. This data that we just saw indicates that the Fed might be more reluctant to cut interest rates here in the next couple months. But this is something that Trump has repeatedly said, and he has his pick to lead the Fed, Kevin Warsh, who needs to go through Senate confirmation, who has pledged that he will try to turn the central bank into a more dovish position.
Yeah, don't really envy Kevin Warsh at this point, given the conundrum he faces potentially. Bloomberg Washington's Deputy Bureau Chief Laura Davison, fantastic. Thank you for the context around what we're seeing stateside around tariffs and the data as well. Meanwhile, the so-called quiet quitting of the US dollar came across a little louder after a blowout, and that blowout January payrolls number that we've been discussing, making no sustained positive impact on the greenback. The Bloomberg dollar index is down for a fifth straight day. Joining us now is Kirsten Kunvik-Nielsen, FX strategist at Danske Bank. Kirsten, why are we getting weaker dollar on stronger data?
Yes, good question. I mean, in the beginning, of course, we got a rally, but I think just yesterday's data goes to show that investors are keen to sell into rallies. There is still this very much negative sentiment around the dollar. We're also seeing in its position in data really stretched to the short side. So I think that's why. And then one thing that I really took notice of yesterday, in terms of the non-farm report, but also these negative benchmark revisions, we're seeing just a structurally slowdown of employment growth in the US. So we're definitely seeing some divergence there, in particular to the euro area. And I think that's why we're just not getting the reactions that we are.
That's interesting. I mean, and we've had confirmation of Kevin Warsh to the Fed. Is that story, though, around Fed independence, is that still having an impact on the dollar, or have we moved past that in the market conversation?
I think it's something that really kind of alleviated this pressure that we saw a couple of weeks ago where euro dollar bounced up towards the 120 mark. I think just alleviating these concerns in terms of Fed independence, in terms of what we're seeing with different rulings on Lisa Cook, etc. So it's not as much a market theme. I think it's something that helps euro dollar consolidate around the current levels, definitely. But again, I think it's supposed to step a bit more into the background now that we have this nomination.
Kirsten, good morning. It's Guy. Can I ask you whether or not we should all care about Norwegian inflation? And I ask this question because Norwegian inflation surprised massively to the upside. And it comes after the Australians, for instance, have decided that they also have an inflation problem. We've got the RBA raising rates. We've got CPI coming out of the States tomorrow. We've just had strong data coming out of America. And I'm wondering whether the market is going to shift back to being really worried about inflation. And this kind of creeping inflation theme that we're starting to see emerging around the world is going to impact the major crosses.
No, definitely. I think it's quite striking. I think it's also something that we're kind of seeing in just the manufacturing sector. We're definitely seeing some more bullish signs there. It's striking the divergence we have between central banks, as you mentioned. We have the Bank of England still very much signaling that they're going to cut rates. We have the RBA a lot more on a hawkish path. I think there is some potential for that, at least for some economies, that will start to, again, be a bit more worried about inflation, definitely. And also just remembering the global backdrop. I think the global economy has been surprisingly resilient. And again, these more bullish signals from the manufacturing sector, it's definitely something to be attentive about.
Well, there's inflation in Japan, isn't there? The yen is currently up 0.2% at 152. It's had a decent run of gains in the last few days. Our MLive strategist, head of MLive, Mark Cudmore, former FX strategist, said he would lean into the carry trade. Would you, Kirsten, at this point? Have the gains in the yen run a little too far?
I don't think so. We're actually quite bullish on the yen. I think there's definitely some things in terms of that dollar yen is kept kind of on the top side given intervention risks. That's one thing. But I think just narrowing rate differential, as you say, inflation is still to the strong side in Japan. Also, the economy, I know it's not a booming economy, but the growth backdrop is actually quite solid. So I would definitely favor actually going for a stronger yen against the dollar. I don't think it's come too far. I think we can get below the 150 mark.
Kirsten, what's changed there, though? Is that because you see the BOJ, you got maybe the election makes you think the BOJ will keep hiking rates or something? I mean, what is it that's changed recently that has led to the strength in the yen? Is it actually to do with the market being convinced that the US could perhaps get involved in some intervention?
I think the big move that we got a couple of weeks ago definitely has something to do with the rumors about rate checks that were occurring. So if we could get some joint intervention between the US and Japan. I think also just this verbal intervention that they remain quite focused on not having a too sharp move higher in dollar yen. And then also I think the price action has been quite interesting just since the election. Focus is, of course, what we'll get in terms of the budget for the fiscal year 26 in Japan, but also just looking at JGBs. I mean, price action has been actually quite more muted the past couple of days since the election. So maybe we're just getting something a bit more calm, a bit more stable, a bit more predictable now. And I think that's something that can underpin the yen.
Justin, you mentioned the Bank of England a few moments ago. You said that the Bank of England is at the kind of more dovish end of the spectrum. It's going to be cutting. There are signs, and I know you can't see it in the data this morning, which is slightly weaker than anticipated on the GDP front, but there are signs that the UK economy is beginning to gain a little bit of traction. How easy is it going to be for the Bank of England to cut rates at this point if the rest of the world's rate-cutting cycle is beginning to stall?
No, definitely. I think when we look at the UK, I think, and the Bank of England, of course, they're a very split committee. I think they find it just as hard. We have these notoriously split votes where we have 5 members voting for unchanged, 4 voting for a cut. So I think there's definitely also some disagreement within. I think when we look at the UK and the Bank of England in terms of the entire interest rate backdrop, we're not necessarily back at neutral. So I think that we can still see some 1 or 2 more cuts from the Bank of England because it's just removing some of the tightness, some of the restrictionness of monetary policy. But it's definitely striking, and I think that's something I am very keen to watch, just the divergence again between central banks. But I think the weakness that we're seeing in the labor market, if we're starting to see some more alleviating inflation pressures, I think that could open the door for some more easing. Also, just remembering they tend to have this kind of dovish bias within the Bank of England. They really have a bias just towards cutting rates. So if the door opens up, if we get some weaker data, I think they can continue.
Kirsten, great to get your take. Thank you very much indeed. We'll follow the politics in at a later date. Kirsten Colby-Nielsen, the FX strategist, joining us from Danske Bank. Let's talk about the story of the morning, and that is Schroders. So the investment bank got sold in 2000. The asset manager is now looking like it's going to be sold in 2025. The family are selling. This is a huge story for the City of London, a real kind of changing of the guard. You've got some amazing... what was Schroders originally set up to do?
So 1804 was when it was set up. Originally for arranging bonds, financing, arranging and issuing bonds for major infrastructure projects. Sound familiar? Including power stations across Europe, the Americas and Asia. At the time, 1804, we're in the middle of the Napoleonic Wars. The UK and France, and Pitt the Younger. William Pitt the Younger had just begun his 2nd premiership.
I'm sure some of that skill set still lives on, which would be useful at this time when we're talking about data centre build-outs and all the rest. But 2 centuries of independence for Schroders then coming to an end here. They are going to be retaining the Schroders brand, which I think is interesting because it is one that,
recognisable.
This story caught all our attentions this morning when it broke on the Bloomberg terminal. So it definitely is recognisable. It does create one of the world's largest active asset managers with nearly $2.5 trillion in assets, which is interesting. And and London will be the non-US headquarters of this business. But of course, but Nuveen started in Chicago.
9.9 billion price tag. So there's some upside here. The stock looks like it's going to move quite significantly at the get-go. But it's a continuation of a trend as well in terms of consolidation within this asset management space.
Absolutely. And M&A trends, they're all the rage at the moment, aren't they?
UK assets.
UK assets being attractive.
US buyers finding value in UK assets.
Is it a diversification trade when it comes to those from Chicago coming and looking maybe potentially outside the UK?
And how does the AI story fit in here? The amount of investment that's going to be required to deliver on the technological change that's needed for these businesses to stand up to AI threats and to embrace AI opportunities. How much of that is driving the investment?
So we've got
loads of questions. Fortunately, we've got someone to answer.
I was about to say, we're about to get the CEO on. So we're going to have Richard Oldfield on 8:30 UK time. You definitely do not want to miss this interview. It is coming up right here on Bloomberg. Richard will be joining us shortly. Market open 17 minutes away. We'll see how the stock trades. This is Bloomberg.
cidade estava sitiada.
Isso ao começo eu tremia, não sabia o que fazer. Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering. And someone is driving a Range Rover with their money. Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Welcome back. We are a little under 15 minutes away from the start of the opening trade this Thursday. European futures on the front foot after a flat session on Wednesday. Pointed gains of 0.7%. There's some really interesting stories at an index level and at a corporate level as well. US futures also pointing to gains around 0.2%, Anna.
Yes, let's talk about the UK economy, shall we? The UK has grown less than expected in the fourth quarter. In another setback for Prime Minister Keir Starmer, GDP rose 0.1% in the final 3 months of 2025, which falls short of Bloomberg estimates of 0.2% growth. The figures mark a disappointing end to the year in which the economy was forced to navigate huge tax rises, US President Donald Trump's trade wars, of course, and a devastating cyber attack at the largest UK car manufacturer, which mattered more than you would expect to the GDP data that we've been talking about this year. Joining us now is Dan Tomlinson, UK Exchequer Secretary to the Treasury, Labour Party MP, of course. Very good to have you with us, Dan. Thank you.
Good morning.
For joining us. There was a hope that maybe after the uncertainty of the budget was worked through, that December would look better, that December would be more positive. But this data set doesn't seem to show that turning a corner story. What do you think's going wrong?
Still going up, and the thing that I'm really interested in when I think about the pace of economic growth is what's happening to GDP per capita. That's what translates into rising living standards for people across the country. Last Parliament had GDP per capita fall, worst on record. In terms of wages, you were talking about Napoleon, I heard when I was...
You were listening.
We have the longest squeeze on wages since Napoleon was making his way around Europe under the last government. We're turning that around. We had the fastest wage growth in the first year than we had in the first 10 years of the Tories. And GDP per capita was falling in the last Parliament, -1 in 2023, 0 in 2024, +1 this year. We can see that things are moving in the right direction. Of course we want to go further. Of course we want to go faster. There's definitely more to do. But we are seeing growth increase, and we're also seeing that the UK is the fastest growing economy of the European G7
So your message is the comparisons with Napoleon, with the last government, with
well,
other parts of the G7.
No,
that was nice. No, I liked it. I liked it, Dan. Thank you. The comparisons you say then are favourable. But what about the lack of confidence in the growth strategy? And I'm not even talking about the City of London here. I'm talking about within your own government, within the cabinet. We saw those WhatsApp messages from Wes Streeting that suggested that he doesn't understand where the growth is going to come from. Now, if even members of the cabinet don't buy into the growth story under Keir Starmer, then what hope for the rest of us?
We have a really strong growth story and a Chancellor who's obsessed with getting our economic growth rate up and increasing our productivity and our economic potential. We've got to focus on economic stability. That's one of the things that has delivered the 6 cuts in interest rates that the Bank of England have implemented since we came to power in July last year. That's also enables firms to do the investment, which is the second pillar of the growth strategy. We're seeing investment increase. The growth in investment in the UK economy was twice as high in 2025 than it was in 2024, up from 1.7 to 3.4%. That investment will drive long-term growth, and that's from both public and private sector. Yes, we've increased public sector investment. We need to do that in the UK. We've been living off our past for too long, our roads, our railways, our infrastructure. We need to invest in them, but alongside the private sector. And then we're implementing really significant reforms too to our pension system so we can unlock that capital, to our planning system so we can get things built again.
So you believe in it. Guy?
Is the Chancellor slowing down deregulation because she wants to do a deal with the EU?
The Chancellor is very focused on what we can do to make sure we can pull back those barriers that are standing in the way of economic growth. One of the big things we need to do is change our planning system and continue to change
Could
it.
she deregulate faster if we weren't thinking about getting a better relationship with the EU?
Well, I think that one of the things that people often want to say is that it's not possible to both motor on domestically and focus on relationships both with the US and the EU. But what this government has shown is that we've been able to get the prosperity deal, and we're working closely to deepen that with the United States, and then to continue to make progress in deepening our relationship with the European Union too. Our objective is to, deepen our relationship with the European Union, strengthen our ties with the US too, and then make sure we can motor on and get our own house in order when it comes to regulation, productivity.
Do you think
and
a
growth
different leader
domestically.
of the Parliamentary Labour Party would be able to manage that relationship, EU, US, in the same way that Keir Starmer has?
I think Keir Starmer's managing it really, really well, and we aren't thinking about a different leader. What we're thinking about is working with Keir Starmer, Rachel Reeves. That's the top team that was elected in 2024. People, they have a strong mandate to deliver for the British people, and that's what they're focused on. That's what I'm focused on too.
The fiscal rules were changed in 2024 to allow the Chancellor to spend more on things like infrastructure. Can this government be bolder on that? Can you use that more to generate the kind of growth that this economy needs? Is there more that you can do on that front this year?
One of the really key things that this government wants to do, and this is one of the Chancellor's priorities, is to get borrowing falling. It's really important we do that. We are seeing borrowing is forecast to fall in every single year of this forecast, fastest reduction in borrowing in the G7. So it wouldn't be right, it isn't the government's position that we could do more by borrowing more to invest more. We think we've got the balance right. The key thing, though, which is incredibly important, is that the money that we are borrowing for investment, that we spend that well. So we've got the National Infrastructure Transformation Authority, NISTA. It goes in and looks really carefully at our infrastructure projects. One of the problems we've had for decades in the UK is that when we build something, it always overruns, it always costs too much, and we don't get good bang for buck for it. So we want to make sure we want to make sure that we can do that differently. Make sure that when we do build things, we're not spending like the last government did, this 120 million on the back tunnel on HS2 or whatever it was.
We've got this big deal in the financial sector today, which is Schroders and Nuveen taking a bid, looking to take this over for about £10 billion. Does the Treasury welcome that kind of takeover?
We do want to see people coming to the UK and looking to invest in the UK. That is a good thing overall. Both people domestically being able to choose to invest, individuals, but big businesses too, and also we're a small open economy, right? We in the grand scheme of things, one of the things we need to do is make sure that we are open. We're working with businesses in other large economies to make sure we can get the investment into the UK.
This is a positive sign. It's not a sign that assets and companies are undervalued in the UK.
I don't think so, no.
OK, so welcoming it. Just a final comment on another story that pushed stocks up in the housing sector yesterday, so it's important to get some clarity. Are you working on, even behind the scenes, some kind of revised Help to Buy scheme? Because the market got excited about that possibility yesterday.
So what the government is focused on is doing all we can to get to our 1.5 million new homes target. That is so important.
Do you see merits in that kind of scheme?
I'm not going to comment on particular schemes or stories that may or may not have been made up or got into the press. I don't know. I'm the tax minister. You're asking me about something. You're asking me about something that isn't to do with tax. But we do need to make sure that we are doing all we can to get to that 1.5 million new homes target. That's both about public sector investment, working alongside the private sector, and then these reforms to the planning system, which, by the way, the reforms to planning that we made in 2024, the OBR revised up long-term growth, revised up the revenues coming into the Exchequer because of those reforms, and they said that was the single biggest non-fiscal change that they had made. So it was good news doing those sorts of things for the fiscal position.
If you want to come and talk about taxes anytime, you're more than welcome.
Come back.
We should have asked more about tax. I apologise.
Next
Thank
time.
you.
There's some interesting kind of survey data on taxes out over the last couple of days. Dan, great to see you. Thanks for stopping by to see us. We really appreciate it. Dan Tomlinson, MP, Exchequer Secretary to the UK Treasury. It's quite a title. Anyway, let's talk about Schroders and talk about what is happening here. Stock looks like it's going to bounce, being taken over by Nuveen. Big change in the City of London, you could argue, but a continuation of the kind of consolidation we've seen within the asset management space.
I thought it was interesting. I mean, Dan is still here, but it's interesting that clearly not naming this particularly, but broadly welcoming the kind of investment flows that we're seeing, and this deal potentially, at least on its merits. So we'll see that.
Got a lot of corporate earnings to factor into the market open as well this morning. Plenty of German corporates reporting. We'll certainly pivot to that story. Get an update on what's going on at various German corporates in the next hour. This is Bloomberg.
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
So nothing happened in the US equity session yesterday. I'm joking, of course, but if you look at the index levels, you could be confused into thinking that was the case. US stocks finished really flat despite the really strong payroll number. Loads of corporate activity going on below the surface. What is going on? Well, basically, everything's cancelling itself out. And in some ways, what you are seeing in terms of the AI churn is being matched by what you're seeing in a really strong performance in consumer staples and utilities and these kinds of stocks. You're getting a real rotation within the market. And you just don't see it here. It's not there. You can just see this market just going sideways, doing nothing. But below the surface, interesting things are happening, Tom.
Yeah, rotation below the index level, but also regionally as well. Worth noting that Asia and the MSCI Asia Pacific best start to the year now versus the S&P in a century. European futures on the front foot this morning, pointing to gains of 0.8%. Some really interesting idiosyncratic stories, some corporate stories, the earnings stories, of course. FTSE 100 futures pointing to gains of 0.5%. We look at real estate and maybe some pressure there on the AI story, but also in terms of financial services, the Nuveen bid, £9.9 billion for Schroders. Certainly that will be in focus and can lift the broader sector around financial services. DAX futures pointing to gains of 0.4%. The CAC count should be mentioned as well because Hermes came out with a beat and CAC count futures are pointing to gains as well, Anna.
Tom, let's have a look at some of the individual stocks that could be in focus. We've talked about it a few times. We will continue to do that. We've got the CEO on shortly. Schroders is in focus. Nuveen is buying Schroders for just under £10 billion, creating one of the world's largest active asset managers, of course. Siemens in focus, raising its outlook. Demand for factory automation products, boosting returns. Orders including, of course, for data centres, so that's a focus. And EssilorLuxottica could be an area of movement in the markets as well, riding a boom in demand for AI-powered glasses of all things. Guy.
Let's take a look at this market open. You can fold in Mercedes, you can fold in German industrials, you can fold in what impact high chip prices are having in names like Ericsson and Nokia. So much going on in terms of the corporate activity that we're watching at the moment. But it cancels itself out a little bit. Today we're going to see maybe a little less of that. So we're expecting actually markets to climb reasonably strongly today here in Europe. 0.6-0.7% maybe is what we're anticipating. But below the surface again, there's some really interesting corporate activity. We're a bottom-up market. It feels like it's been a top-down market for a long time. Are we starting to see a little shift in that? FTSE 100's up by 0.6%, 600's up by 0.6%, IBEX is up by 0.5%. Took ages to get the CAC count open yesterday. What are we going to see this morning in terms of the activity there? And Germany's got so many single stocks that we need to be focusing on. There's a sector story below that, above that as well. Let's focus on that. Tom, what are you seeing? Yeah, let's dive into the sectors then. You're seeing a bit of a relief for the tech stocks actually on a sector basis. Just getting the latest reading. So tech at the top of the list across your sectors so far. Names like Relex gaining a little over 4%. It is now third best performer across your sectors. So tech up 1% as a sector. Consumer products, so therein lies luxury gaining 1%. Basic resources, after a strong session yesterday, also posting gains so far of 1%. On the downside, just three sectors so far in negative territory, including the safe haven tilt of utilities, down 0.4%, along with real estate and chemicals. Just three sectors in negative territory. Broadly, that positivity is there on a sector-by-sector basis.
Yes, we talked at the top of the last hour about the numbers out of Hermes, and it's been so busy, we haven't mentioned them since, but that is it seems a positive story for the luxury sector, and so that's pushing that particular sector higher. So Hermes itself is up by 2.9%. I see that Bruno Cucinelli and some of the other names in the luxury space up around 1.5%. So we've had earnings already, and they've been kind of mixed from the sector, but Hermes just underscoring some of the positivity, I guess, this morning. Lots of the German names not open. It's yes.
We'll wait for those.
Yes.
They'll be here in a minute. You're getting a rotation away from what has done well, I think, over the recent days. This kind of defensive tilt that we've seen in the market. Yeah. British American Tobacco, National Grid, beginning to roll. Unilever's in the mix there as well. So the stocks that have done kind of okay recently may be beginning to maybe move off. But on the other hand, just to kind of flip that around, Anheuser-Busch is doing really well this morning. Second best performing points stock, third best, up by 3%. So I don't know. I'm trying to find a line through this, and I guess the corporate news and what we're seeing elsewhere maybe confuses that picture.
Yeah, it does a little bit. Let's get some analysis on these markets this morning. Banu Buwaja joins us, Chief Strategist at UBS Investment Bank. Banu, good morning to you. We spend a lot of our mornings over the last couple of weeks talking about AI and which is the sector that is the market's concern that day, and it seems day in, day out to rotate from one sort of subsector of white-collar jobs to another. Yesterday was real estate. I mean, how are you navigating these waters where the overarching indexes aren't necessarily responding to this story, but underneath the hood, there's quite a lot of volatility?
Yeah, there's a lot of rotation. Many people call it broadening, but there are quite a few different types of trades going on, right? So what you've seen over the last several months is low quality, I'm talking about the US primarily here, low quality companies have significantly outperformed high quality companies. You've seen small caps beginning to outperform large caps, which is interesting because that says that the equity market believes this is early cycle because they're thinking we're going to get a fiscal boost, we're going to get a monetary boost, economic growth is doing just fine. So the equity market thinks that this is early cycle, which is actually quite interesting because the credit market and the labor market, which are more reliable sort of cycle clocks, they're more reliable indicators of where you're in the cycle, they're telling you you're late cycle.
Yeah.
You know, the default rate cycle has come down, and it's now just about beginning to pick up. Unemployment has come down, well, just about beginning to pick up. This is late cycle stuff, whereas the equity market's behaving, I think, primarily because of the fiscal boost, behaving like this is early cycle. And I think that rotation from large cap to small cap and low quality and high quality companies to low quality companies, I think that should be faded. We should go back towards high quality companies. And I think at this minute we should be quite careful with small caps, whereas the market actually is going headlong into that.
Is that because you think we are actually further through the cycle? Or you think that actually the cycle isn't, the cyclical story isn't setting the agenda, it's a structural one?
It's a good question. That's two reasons. First, because I think we are further down the cycle, and also because I think while there is some sign of revival, like you saw it in the ISM, you saw it in capex orders, you saw it yesterday in the labor market, things are looking just a little bit better. But you're also going to see higher tariff inflation come through. Tomorrow is a big number on inflation. And that number, we think, is going to be above consensus. Consensus, I think, is about 32 basis points on core month on month. We're looking for 38 basis points. But not just next month. Over the next 3-4 months, we're looking at high inflation at a time when savings rate for the U.S. consumer is at 3.5% at a low ebb, at a time when real disposable income growth is barely positive. That, we think, will tell on the consumer. And I think that will lead to a rotation back towards high-quality companies, back towards large-cap stocks.
Banu, you haven't mentioned AI yet. So the rotation is a cyclical story. It's not an AI defensive play.
So the market is moving away from AI, right? But it is moving into low-quality companies like profitless tech in recent weeks, in recent months has done quite well. They're moving away from the AI names, they're moving away from tech, but they haven't moved necessarily into the most defensive names. They moved into consumer discretionary, they moved into financials, they moved into mining, energy, so they've moved into deep cyclicals, the kind of stuff that in the Q3 earnings season had done extremely well, but the Q4 earnings season is a much more mixed season.
It's a cyclical story, but it's also a defensive AI play because their sector's less likely to be disrupted by AI. That's another factor, isn't it?
Well, I'm not sure I would call it defensive, because if you look at the low-quality companies, it's hard to put a line through this. The guy's right. If you look at low-quality companies, they have significantly outperformed high-quality companies. So I'm not sure the market's playing defense. It's going into deep mining. It's going into energy. It's going to financial. So I think it is an early cycle story in the U.S. That's the way the market has been playing it. And I'm sure that I'm thinking that this probably should not be the case. We should probably be moving towards high-quality companies.
So not a broadening. Broadening is the wrong way of thinking about this.
No, actually, it is a broadening because if you think about performance, Guy, in the last 12 months, 9 companies out of the Russell 3000 drove 72% of the gains. That's going to broaden out.
Okay.
Right? That's going to broaden. So the performance is going to become broader. So more stocks are going to drive it. But it is, I think, going to be higher quality stocks than sort of the low quality or the
Is tech going to be, like, when I come back, is what I want to come back to still going to be there?
I think so. I think we eventually do want to come back to tech. I think software names have derated quite a lot.
Okay.
Semiconductor names have tremendous visibility in terms of their earnings over the next 12 months. So the market is not taking down their margins, but their margins, expected margins for the next 2 years are extremely high. This is 40 to 45% margins in the semi names. They're extremely high. I don't think the market will be able to sell them right now because every result that you get from a semiconductor company, whether it's ASML or it's TSMC or anything along the food chain.
What about the memory companies? Like Samsung and ST Hynix, they're going to go toe to toe?
I think they will still be quite strong. In the near term, I think the semi cycle will go quite strong.
Okay.
I think it's the software names that we will probably come back to first. I think market is still invested in the semis. That's quite a big overweight for the market. Until that comes down, I don't think we can go headlong into tech and say tech is now cheap. I think we first have to start bargain hunting in the software names before we do it in the semis.
Let's talk about that bargain hunting in the software names then, Banu. Does that mean then that all that we've seen over the last couple of weeks has been overdone? I mean, if we indiscriminately sold, we don't want to indiscriminately then buy back. So what are we looking for? What have we learnt about which of these businesses in the software space will be resilient and find an opportunity in AI and which will be eaten?
Yeah, that's absolutely right. So, look, I mean, AI is not just going to be about LLMs, right? It's not just going to be about ChatGPT and so on and so forth. In the future, quantum computing right now is still somewhere between reality and fantasy, but you have robotics, you have the medical applications of AI. The companies that can move into those spaces, robotics and medical applications, the companies that can sell software into those spaces, I think that is going to be, those are the companies that are going to survive. I'm not going to go into individual stocks, but we do think that Microsoft, for instance...
But that's specialist software then?
It is specialist software, but as a whole, I think that sector can do well. So it's not like those margins need to go to zero. Last year, it was a bit of a surprise that DeepSeek came and went, and nothing happened to software margins. This year, Anthropic did for the market what DeepSeek couldn't last year, and put these margins under a cloud. But I think that the sell-off has been indiscriminate.
Sorry, you were about to say something about Microsoft.
No, we do think that it has come off quite a lot already. So that is a company which we think is a quality company that we would actually be going back into right now, rather than going into small caps and thinking about a major renaissance in the US economy.
It's interesting as you're talking about embedding AI and tech. You've got Luxottica up double digits, and of course they have this partnership with Meta. They've been very successful in selling those AI enhanced glasses. So that's maybe one example. A lot of our guests are talking about diversification outside of the US, into Europe, into EMEA, into Asia. Guy was talking about SK Hynix and Samsung. Where is that story in terms of how much diversification do you want out of the US at this point?
I think you want tactical diversification, right? I mean, let's be clear. US's earnings profile is one that is very ambitious, right? The market is overall looking for about 15% earnings growth. That needs to come down, right? But let's also be clear that US does deliver earnings, right? In the last 3 years, the average CAGR of EPS in Europe has been 0, right? So at this minute, if you think about European earnings, they are beginning to look slightly better. Japanese earnings are looking much better. Real disposable income in Japan is just about to get positive at a time when US real disposable income growth is going to come up. So I do think that geographical diversification over the next 3, perhaps 6 months does make a lot of sense. I don't think that's your structural asset allocation. I think your structural asset allocation is still long the US. Tactically, it does make sense to be in Asia. It does make sense particularly to be in Japan. It makes sense to be in Europe. Australia, Canada, you're seeing decent numbers coming out of these countries.
What I'm seeing at the moment is with all this churn, US equity markets are just doing this. Like, at an index level, nothing is happening.
Absolutely right. And
does that carry on?
That carries on for the near term. I mean, we're expecting the S&P to be at 6850 by the end of March, right? So we have been expecting this for some time because we think that there is this real tussle. Even at a macro level, there's a macro tussle, there are micro tussles between moving away from tech. Do you move to small caps? Is the rotation to an equal-weighted S&P or to Russell?
But most people invest at an index level.
Yeah, and that's the problem. So at an index level, for the passive investor, for the ETF investor, I don't think you're going to see tremendous gains in the S&P. This is one of the reasons why we want to diversify away from the US for the next 3 to 6 months, but not for the long haul. So at a macro level as well, does the fiscal give you help, or does the inflation, which I think is going to be higher in the next 3 months, take away from you? So at an index level, we're expecting the market to not give you strong returns in the next 3 months. Later in the year, the S&P heads towards 7,500, but by end of March, we'll probably be here where we are.
Okay. Always a pleasure. Nice to see you, Barney. Thanks for stopping by. Barney Wager, Chief Strategist, joining us from the UBS Investment Bank. Call 6 looks like this. Let's quickly show you because I want to talk about Schroders. I want Chloe to talk about Schroders. That is what the market looks like. Generally, we are seeing some decent gains across the board. Luxury's having a particularly good morning on the back of Hermes. Let's talk about what else we're talking about this morning. Schroders is, hope, top of the list. Chloe Melee, over to you.
Good morning, Guy. Indeed, this is the big M&A story of the day. So Schroders is getting bought by Nuveen for £9.9 billion. And this marks the end of 2 centuries of independence for this asset manager, the largest standalone asset manager in the UK. And this is a company that had been struggling lately. And therefore, the fact that it is getting snapped up in this way is being taken very well by the market this morning. And we are up almost 30% for Schroders. Moving on to Essilor, and that is also doing very well. Sales for that glasses company came in much higher than expectations, and that is thanks in particular to really strong demand for its AI glasses. So that is the partnership that it has with Meta, and that is doing really, really well. And we are up more than 9% for Essilor. Siemens is also in the green this morning. It raised its outlook, and that is because it has made that move towards more industrial automation, more AI solutions, and that means that it is benefiting from really strong demand from factory automation customers and from data center customers as well. And so it had raised its outlook in as a consequence, and that is up more than 5.5%, almost 6% for Siemens. Adyen is in the red this morning. This is a payments processing company. The revenue missed in Europe and North America, and so that is creating some concern about the growth momentum going forward for that company. And we are seeing a major drop in the shares this morning, about 19%. And then the car sector is also in the red, led by Mercedes, which said this morning that it expects margin to remain under pressure this year because of that tariff uncertainty, because of that continued competition from Chinese rivals, and it is dragging down the rest of that sector. And we're seeing BMW and Volkswagen also in the red this morning as a result.
OK, our equities reporter Chloe Millet with some really fascinating individual corporate names and stock moves to focus in on this Thursday. Coming up, another one. Storied asset manager Schroders agrees to be acquired by a subsidiary of Nuveen in a deal valuing it at just under £10 billion. We will speak exclusively to Schroders CEO Richard Oldfield. That is next. Stay tuned. This is Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Anne-Marie Hordern in Davos, Switzerland, and this is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
17 minutes past the hour. Let's talk about the big story out of the City of London this morning. Nuveen is buying Schroders. £9.9 billion is the price tag. It ends more than 2 centuries of independence for the UK's largest standalone asset manager. The Schroders brand, will they be retained? And London will serve as the combined group's non-US headquarters and its largest office. The deal creates one of the largest active asset managers in the world, $2.5 trillion. AUM, assets under management. Joining us now for an exclusive interview is the Schroders CEO, Richard Oldfield. Good morning, sir. Why are you selling?
Well, Guy, I'm going to take us back a second. So there were 2 announcements this morning. The first one was our results, and it's important as context to the deal. Our operating profit was up 25% to 757 million. EPS is up 39%. This is a great business. It's in a really strong foundation. But what we are doing here is creating this powerhouse of asset and wealth active management. It's going to have an unparalleled breadth of public to private capabilities. And at 2.5 trillion, it gives us the firepower to actually invest in our business and make ourselves more relevant to clients. It's a business combination that's almost perfect on paper. We have total complementarity. There's no overlap in geographies, really. There's very little overlap in products. So we're about growth. We're not about taking money out of the system. We actually drive this business and create something really powerful. And the cultures fit, the heritage, the 300 years together. So it's not just, you mentioned our two centuries of history. Nuveen comes with more than 100 years of history as well, and that actually helps us have very similar cultures. And as you mentioned, Guy, this is all about the City of London. We put that right at the heart of the deal, making commitments to the UK and London.
Richard, did they call you? Did you call them? Where did the conversation start? How did it go? Kind of just give me a bit of colour here.
Well, as you'd expect of the last year, I've been talking to many of my peers around the world about how they respond to the industry challenges that we've got. And what became clear as I met Bill is that we had businesses that were very similar, and we discussed the complementarity. And that led to them approaching us with an offer earlier in this year.
Richard, good morning to you. So you mentioned there that this is about having the firepower to invest. Would it be right to say that AI has changed the landscape, and the requirement to invest in that technology to find that an opportunity rather than a threat means that it's better done with a larger business? Is that one of the drivers?
Well, that's definitely one of the drivers, because the scale of this operation will be able to create more capacity to invest in our business. And it's not just about AI. Actually, when you think about our industry, it's about tokenization and distributed ledger technology. It's about reshaping our industry, about different distribution models. And yes, it's about AI in terms of how we do research, how we do portfolio construction, how we access wealth clients. So I think there's a whole range of technologies here that are going to transform our industry as other industries, and we need to be right at the forefront of that change.
You talked about making commitments around the City of London, Richard, and we read in our stories this morning that London is going to be the headquarters of the non-US business. What do those commitments look like, though? How watertight are they?
Well, they're all listed in the 2.7 offering document, and I think Nuveen have been pretty clear. London will be the non-US headquarters for at least 5 years. There are commitments about jobs over the subsequent 2-year period. We'll have about, to put this in context for you, Anna, there's 3,100 people in the combined group right here in London, and that's the largest location of any office for Nuveen, and it would be about a third of the overall workforce. So this is a big, sizable presence here in London. We're not stepping back at all from our commitment to support the UK capital markets, be at the centre of how policies are formulated, be at the centre of how people come to market. So I think the commitments are very watertight and they're very real, and I think it just shows the size of the UK and London in the overall group.
Richard, what are your commitments on jobs? Should we expect that there will be jobs that will go as a result of this acquisition?
Well, Tom, look, that's a great question, and lots of people are asking that. But there's a very firm commitment that there won't be job losses from this. Go back to why we're doing the deal. It's complementarity, right? We don't have overlapping investment capabilities. We're taking the strength and depth of Nuveen's private markets capabilities, fixed income and US distribution, and we're putting that with our public markets heritage, some of our specialist capabilities in private markets, and our UK, European and Asia distribution. So there isn't an awful lot of challenges here in terms of overlapping headcount. So there is a very firm commitment that people will keep their jobs, except for some PLC functions. Obviously, we won't need that going forward. And of course, we already had some plans from a transformation perspective. But I think it's a really firm commitment to keep jobs here, to keep talent here, to keep capabilities here in London and in the other investment centres that we've got across the world at Schroders.
What do you think it tells us about the broader cost structure pressures for active fund managers?
Well, I think what we've done really well over the last 12 months is show that we can actually take our own medicine, Tom, right? So we've been through a transformation programme. We've taken more than £75 million out of our P&L successfully this year. That's allowed us to drive the revenue up. So there's a lot that we can do to manage our own cost pressures as an industry. But as Anna talked about, there are new areas where we need to invest, where we need to develop new products. And that is best achieved when we actually have scale and broader capabilities for our clients.
Richard, was Bill the only conversation you had, Bill Huffman, the CEO of Nuveen? Did you talk to anybody else? Were there others in the bidding for the business? Would you expect somebody else potentially to come in? This is an interesting asset. Is there possibly somebody else that could be interested in it? Again, I'm just curious as to how this developed and why you've ended up with Nuveen rather than somebody else.
So this business has never been up for sale, and that's quite important because we are confident in our own plan, Guy, and actually we have conviction that we can deliver value for shareholders. When this offer was made, it comes from an organisation that I respect enormously. It comes from an organisation that will drive value for our clients, for our people, and actually it is a price that I think is super attractive to our shareholders. At 17 times 2025 earnings were compared very well with similar transactions. We have got a premium on spot, I think, of 34%. We are at a 61% over a 12-month VWAP. So I feel really confident. Sorry, it's a 30% premium to spot. It's 34% over the last 30-day VWAP. So this is really attractive for our shareholder base. And what it does is it crystallises immediately the value in our organic plan, as well as actually the future benefits that we think we can achieve through that combination with Nuveen. There is support from our principal shareholder group. So that's sort of locked at 41% of the shares.
OK. Can I ask you, you mentioned AI. Are you clear on what AI will do to wealth management, asset management and research? Because the market seems to be wrestling with this question.
Well, I don't think any of us have the actual answer, Anna, and I think AI will change the industry, not just wealth management, but asset management as well, in ways that today we can't see. But we're already using it here at Schroders. We're using it in terms of how we connect with our clients. We're using it in terms of how we provide research. We're using it in terms of portfolio construction. So it's already changing the industry, and I think sometimes people think we haven't been changing because of AI over the last few years, but that has been happening. We'll continue to see change, but people also want to see people in wealth management, and that's a really important thing we've got to remember.
Rich, before we let you go, are you staying on as CEO or moving on elsewhere?
I am. I'm really excited by this deal. We're going to drive value for our clients, for our people. I think this is a great opportunity. Okay. So I'm committed to being here. I'll be the CEO of Schroders still, as from an international business perspective.
Richard, thank you very much indeed. What a big day for you and the team. Richard Oldfield, Schroders CEO. Coming up, the UK economy grew less than expected in another blow to Keir Starmer's premiership. We're going to dig into the numbers with Vanguard's Jumana Salahin. That is next. This is Bloomberg.
Crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked, and we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
This is the opening trade. We're 30 minutes into today's session. On the front foot, there's some activity in the equity markets this morning. Some decent gains at the headline level, up 0.5%. The FTSE 100 is actually the laggard right now, with gains of just 18 points. The strength's really coming through over in France. The luxury sector is getting a lift, up 1.3%. Worth noting, of course, that financial services are one of the biggest gainers, as are banks. We're looking at Schroders, of course, a massive pop there on the back of the Nuveen deal. Up 0.9% on the DAX as well, gaining 226 points. Guy, what are you looking at?
So I'm getting slightly obsessed with this number here, okay? 370 up, 275 down. Day by day, you're getting a little balance, a little bit more balance one side than the other, but basically the market continues to just kind of pivot. You get a little bit of upside one day, a little bit of down, but we're going sideways, and that's the narrative that we're getting. In so many ways, again, 277 down, 317 up. It's basically one for one. So that's the narrative we're looking at. Volume's a little better today, which is good. Let's talk about the deals. Let's talk about what we're seeing in terms of the numbers. Schroders is obviously up. We've just been speaking to Richard. The deal's been done. We're up by nearly 30% on that stock. A few wobbles, kind of, whether we're up 31% or 28%, but we're basically at the kind of the offer price. Luxottica's having a great day. It's up by 8.41%. Are glasses the next form factor? Are they going to take over from the phone? Don't know about that. Siemens is up by 6.4%. So there's a number of kind of M&A deals, single stock stories, tech deals that are kind of impacting this market this morning. Downside, Adyen's under real pressure. That stock is down by 19%. So again, you're getting some real volatility in this kind of fintech space at the moment. Adyen down quite hard. Ice creams are also not having a good day, which is never a good day for anybody, to be honest. And Mercedes-Benz Group is down by 4.35%. That's rippling into names like BMW as well. So you've got you've got to be focused on almost the single story narrative this morning to understand what is happening at the index level, which is really interesting because the index level continues to go sideways, Anna.
Yes, absolutely. Let's get an update on some of the other big stories we're covering this morning. Bloomberg has learned that Anthropic is nearing the completion of a deal to raise more than $20 billion in a funding round co-led by investors including Peter Thiel's Founders Fund, D.E. Shaw and Dragoneer Investment Group. The funding round has become a who's who of Silicon Valley and Wall Street investors. Other participants include Blackstone and BlackRock. Sources say Anthropic is set to be valued at about $350 billion in that deal. The Republican-led U.S. House has passed legislation aimed at ending President Donald Trump's tariffs on Canada. The vote signals growing anxiety over the White House's economic agenda before midterm elections focused on heavily on affordability. Trump is almost certain to veto any bill calling for a repeal of tariffs. And the UK economy grew less than forecast in the fourth quarter as business investment shrank and services stagnated, adding to pressure on the embattled Prime Minister Keir Starmer. Gross domestic product rose rose by 0.1%, lower than the 0.2% in Bloomberg's survey of economists. Tom.
Well, let's stay on that story and get some more insights and bring in Jumana Salahin, Chief European Economist at Vanguard. Jumana, good morning. Let's start on the UK economy then. How concerned should we be? How does it change your forecast for the year?
So it doesn't actually change our forecast for 2026. 2025 actually came in line with our expectations because, you see ups and downs month on month. So I wouldn't read too much into the numbers.
And 2026 forecasts are?
1% for
1% growth for the UK?
Yeah.
Okay.
Yeah. So that is below what we saw, 1.3 down to 1. So we see a weakening of the UK economy in 2026. And the story, I can tell you the story if you want.
Yeah, what's the biggest drag?
The biggest drag is obviously, wages. Real wages are going to come down. Inflation is falling, but real wages are falling by more. So the consumer doesn't have that income to support the spending. So we see that weakness coming through.
Okay.
Inflation.
Yeah.
What does inflation do? Because you can have kind of 1% growth, but if inflation's kind of higher than that, we've got a problem. What is inflation going to do?
So inflation, we expect, is coming down.
Okay.
Right? So we've seen a little bit of movement up and down, 3.4 the last number, but we see it coming down to 2% by the end of 2026. So we're quite positive on inflation.
Which bits of inflation are going to come down? Because it feels like a lot of the inflation at the moment feels like it's regulated.
That's right. That's right.
So I'm wondering what happens in terms of actually how the consumer feels in terms of the regulatory, in terms of the inflation picture.
Yeah, absolutely right. And we know that the government's taken some measures with its packages to reduce those regulated prices. So our estimate was it's going to take 0.2 off of inflation just from the regulated price adjustment. So we're going to see that coming down. And also across the board, we will see inflation, don't forget, is the change in prices. Right? So we are going to see that easing across the board for goods and services coming down. So it's not like one particular sector, but definitely regulated is going to come down faster.
Jumana, what story should I be telling about the UK economy right now? Because it's possible to tell a kind of gloomy one around services not living up to expectation based on the numbers out today. It's also possible to look at some maybe green shoots, we say that quietly, for the UK economy and think about that into 2026. Have we turned a corner from the budget? Is that what that narrative depends on?
Yeah, so I think the budget was a little bit positive news, positive on growth because, on the margin, there was a little bit more front loading of spending, so that pushed up. So in terms of our forecast revisions post-budget, we revised up GDP from 0.8 for the whole year, 2026, to 1. So there was some positive, and inflation down by 0.2. So it was good news. But there is a structural force here, which is the UK economy has been at a 1% economy, not a 2% economy like the US. So there are some underlying forces here that, we do say the UK economy is stagnating. And we do get that in the latest data today.
Yes. We spoke to the Treasury earlier on, Dan Tomlinson from the Treasury, saying that they are obsessed with growth. They're investing into a fast-changing world, though, aren't they, with AI very much at the forefront of everybody's minds. How does that play out for an economy like the UK, which is very services-focused? It is very white-collar. And we spent all of the last 2 weeks seeing story after story about concerns about white-collar jobs and industries.
Yeah, absolutely. Great question. We think in our Vanguard Economic Outlook for 2026 that AI is going to be the most important long-term trend, the mega trends that we call, shaping the economy. Now, in the US and China, they're doing most of the innovation. Headline numbers for investment, 2 trillion. What is the UK doing? 100 billion. So we need to be doing more investment. Maybe we can't do the innovation, but can we do the adoption? Can we be using that technology plug and play that those big Mag 7 companies are doing the investment for? And that's really where the challenges is. And, the job story, white-collar jobs, whenever we see a transformative technology, what we call a general-purpose technology, Internet revolution was the first one. The second one we're seeing is AI. We are going to see jobs adjust. There will be, with everybody's job, there will be tasks which can be automated. So that's how we see it. It's more task-based.
You don't think the UK is specifically exposed? I have seen some research that says that the UK is more exposed than others because of the makeup of the economy.
No, I wouldn't say the UK is particularly exposed. Okay. No, it's more about can they adopt fast enough.
What are the productivity gains on that adoption story?
So the productivity gains are, they are numbers that are sort of less than 1%. We're talking 0.5%, the productivity gains that you can get from innovation. So that's kind of what we see. But on a long-term basis, so we're talking about the next 5 to 10 years, that's quite good, right? So if we can go up from 1 to 1.5, that's actually pretty good from productivity, from innovation, from AI, adoption from AI, sorry, not innovation.
The BOE has views on AI, and I want to go back to your take on 1% growth and inflation coming down to 2% by the end of this year. Does the BOE have room to do more on rate cuts?
Yes, we've got 2 more rate cuts priced in. We think that probably next month there will be a rate cut, particularly on the back of the numbers today. So that's what we've got priced in, taking interest rates back to neutral territory, which we think is 3.25%.
Just before we go on to other subjects, if we see political instability in the UK, how upended do you think your models could be? If we see yields going higher, what's the effect of what will be the effect? If you plug in a high yield, what effect do you get in terms of some of the outcomes you see in terms of your models?
Yeah, so if you get the higher yield on, you have to think about, like, there's 2 sides. First of all, the real economy.
Sure.
And that really depends on that investment and that productivity. And I would say some of the political instability is already priced into markets in terms of, the interest investment cases.
Yeah.
So that's kind of in. On the margin, what happens if you have those higher long-term rates due to political instability? That feeds back to hurt the government debt. So you start paying, more in that interest rate, right? So it's the long end of the yield curve which drives the amount that we're paying back for the gilts that we've borrowed. And that could lead to that negative feedback loop, which we're trying to get out of, right? The whole purpose of the budget, the narrative is, hey, if the budget can give us that growth, that allows the Bank of England to cut. That allows us to get into that positive feedback loop, and that's really the challenge.
Meanwhile, Germany is investing heavily, isn't it, on infrastructure and on defence. Excuse me, we get 2 stories here when we talk about this. Some people say it's not showing up in the numbers yet because they can't get the money out the door quick enough. Others say, yeah, it's all coming through. What are you seeing in the numbers?
So we're actually positively surprised. So they said 500 billion over 10 years. That's about 50 billion a year, right? So we actually saw spending close to 40 billion, which is great news because, as you said, people are like, will they be able to spend it? Now, the question is, what are they spending on? So it turned out that they have twisted it more towards consumption rather than investment. And we would like to see, for the long term, if you can tilt it towards investment in defence, in infrastructure, in technology, that gives you that longer-term boost.
Jumana, thank you very much.
Thank
Indeed,
you.
Jumana Salheen, Chief European Economist at Vanguard. And we will get and continue to focus on the German economy, particularly the polls coming through from Siemens, which is having a very strong session after an outlook upgrade to its earnings per share. So the stock price is up about just over 6% right now. I spoke to the CEO of the German industrial powerhouse Siemens on the back of those earnings then, and found out what he had to say as well about the AI impact and the potential impact on Europe's largest economy. Take a listen.
We will see how dynamic, how fast AI is hitting really the real world. We believe that this happens very fast. But from that perspective, we see still there's a good growth. There might be shortages on power supply or supply maybe on GPUs. But since the supply chain is also ramping up, we believe that this keeps on going.
And you think that the CapEx spend, the commitments from those hyperscalers, $650 billion US potentially this year, that is rational?
I mean, I didn't make the math of all the commitment which everybody gave, including the investment banks. Adding that up, there might be a slippage, but if you take even a slippage into consideration, still enough money for a market to keep on going.
And you've got a record backlog now. About 120 billion euros is the backlog. What are the constraints around delivering that backlog? Are you able to deliver on those orders?
Clear, yes. I mean, we really invested early enough. So we doubled our manufacturing capacity for medium low voltage in the United States, exactly for data centers. We increased capacity for rolling stock. By the way, big backlog comes also for rolling stock. So we have capacity. We invested in capacity, also in capacity for our automation devices. So that's not a problem. We will deliver.
There is a currency impact. How and to what extent is FX impacting you, particularly euro strength, and how are you looking to mitigate that? Are you taking any hedging strategies around the currency?
I mean, we always do some hatching in the background. The impact, I think, is something like 50 base points, and we planned the fiscal year on this weak dollar, and so therefore that's part of our planning. If that stays in that ballpark as we see today, that's part of our forecast and our planning.
Okay. You talk about the software part of the business. We've seen a significant sell-off, including industrial software names, in the last couple of days. What do you make of what we've seen there? How defensible is industrial software from the evolution of AI and some of these products being put out into the market now?
So we know that AI has the potential to disrupt some of the software businesses. I mean, if you talk about software which runs on call centers and the like, I mean, that's fully on the block. But if you go on the other end, on industrial software, simulation software, physics-based software, we don't see that at all. We rather see an enrichment of the software, which allows more and more customers to use it. Take, for example, simulation. Simulation is costly, takes a lot of time. Using GPUs, we can accelerate it 100 or even 1,000 times, making it accessible. Yet, the point is that you always want to frame it with the physics, because hallucination is not an option on a shop floor, neither in your designs. And this is where physics comes in. It always gives you a confinement of what really is right and wrong.
The Siemens CEO, Roland Busch, speaking to me there on the back of those earnings. And again, it's the data center push that's coming through, really offsetting. They continue to see weakness in the auto industry. He made that pretty clear. He wants to see a turnaround in the German economy. He says that more needs to be done. He thinks the government are putting in place the right policies. He wants to see growth of above 0.7%, clearly. He thinks that maybe they can get there. But data centers and that backlog, they have this huge backlog now that they have to fulfill.
He's a real believer, isn't he? Yeah. And despite acknowledging that in some cases there'll be hallucinations still at the moment, that's not an option in some of the ways.
Industrial software,
and that's not an option in the factory, is the way he ended that, which I thought was really interesting. But yeah, a real believer in the potential for his business to benefit.
You just see the numbers. You have to. I think if you're seeing these kinds of numbers as a CEO, you just got to go, I need to invest into this. You can't have any skepticism. You have. It's like the TSMC CEO. I'm a little nervous. I'm worried. Is this actually going to deliver? But the numbers I see in front of me compel me to work with
you
this.
Invest through the worry. That seems to be the thing. Because we asked the ASML boss about that in the context of the TSMC comments. You know, are you nervous as well? He says, if you're not doing your job properly, if you're not worrying about that, that's what the job of the CEO is to do, to worry if the investment is the right one and the right scale. But clearly they see a lot to invest in.
Yeah, because these are real orders that they have to fulfill. And the question is less about whether those orders are going to transpire and more about whether they can actually deliver on those orders.
It's still a supply chain story. It's still a kind of, can I get the kit I need? Can I get the labour I want? All of these issues remain ever present, and you see it in the United States. You see it in the construction data yesterday, the payroll numbers. Can you build enough? Can you get enough people to work on the data centres to build the data centres?
Yeah, and interestingly, we were talking to Germana about the German investment story, and some people had said to us, you know, this is going to, you know, the numbers aren't going to get out the door quick enough. Germany has a history of not being able to spend the money it allocates to fiscal spend quickly enough. She was saying that there is some evidence it's getting out the door, but actually she wants to see it more on the structural side, on the infrastructure side, rather than on the more consumer-facing side. So that's an interesting one, because that's something we'll return to. And it's a big day for German earnings, German corporates, isn't it? We've had Mercedes out with numbers, and that stock's under pressure, down by 4.3%. So it's another day where some of those granular stories are perhaps more interesting than where the index sits.
But again, that's kind of how do you draw a line through this and come up with a narrative at the end of it? Is everybody just going to have to become a single stock investor, a theme investor? Can you figure out a strategy around that? People keep telling me that this is the time for active management, but active managers must be whipsawed at the moment in terms of the price action they're seeing.
And Bana Boeja of UBS coming out with a different view to many of our guests on this, which is that actually the cyclical story that he's starting to see, he's not compelled by that. And maybe tactically, over 3 to 6 months, that's where you go. But after that period of time, you want to be back in those stalwart US names for the earnings strength.
Yeah, precisely. Why do you want to come back? Because how long does this boom in America last? How long does the data continue to be supported? Is it just up until the midterms, or the market's going to price beyond the midterms quite soon.
Yeah.
So do you start to fade that trade at that point? It's really difficult.
And it's interesting from the political landscape, how you respond to the global threats at the moment and the fact that you want to promote your country's product, but you don't necessarily want to put up barriers to trade. And this came up when we were talking about the UK economy. You were asking about that of the Treasury. Well, Emmanuel Macron and Friedrich Merz seem to be on different pages when it comes to this. So on the German side, they seem to be saying, we don't want to put up too many barriers. On the French side, they're saying we really need to push the Made in Europe story.
Yes, so that debate between the leaders of France and Germany, I think we get more perspective now on the German economy. I think we've got someone standing by to talk about this because, of course, we have had the earnings story coming through as well from a number of big industrial players in Germany. So for a broader context, let's bring in William Wilkes in Frankfurt. William, what does it tell us about the kind of impulse that we're seeing? What is the strength of corporate Germany? It seems to be a mix. Siemens is firing on all cylinders, it seems. Mercedes, the auto sector, continues to be under pretty significant pressure.
Good morning, Tom. Yes, you can see exactly in this morning's earnings some of the challenges facing German industry. On one hand, you've got Siemens, which is doing very well. They restructured a few years ago and shifted to focus on software, and that's starting to really pay dividends. It's higher margin business. It's a bit less vulnerable to shifts in demand. Whereas on the other side, you have the problem really that's hitting German industry, which is this new competition coming in from China, which you're seeing in the Mercedes-Benz earnings, where really what's going on there is you've got a company with very high costs and it's struggling to keep up in China against rivals that are getting better at engineering and manufacturing and have a much lower cost base.
And on the Mercedes side, we keep asking, William, whether we're at the end of the pain for the German auto sector. But now, with the rise of China, feels we started another leg on that story. That competitive threat really having an impact.
Yeah, indeed, and there's still quite a long way to go. Mercedes still sells a lot of cars in China, so there's room for further decline if they can't turn it around. And obviously, the other cloud hanging over them is no one really knows what the tariff outlook really is, not just in China, but also Europe is becoming more protectionist. The United States is becoming more protectionist, and China might do more to support their own manufacturers and shut out Western ones. And basically, that's a real headache for a company that, since the fall of the Berlin Wall, has made its business model about exporting between all these different regions. And now they have to kind of manage worsening global fragmentation. And that's a very, very difficult situation for any globally active manufacturer.
OK, William, thank you very much. Indeed, William Wilkes on some of the corporate challenges, particularly in the auto space, that continue with Mercedes, of course. And you can see the share price down around 4%. Very different story for Siemens as it leverages that software play and exposure to data centre demand. Financial services is one of the best performing sectors. It is top of your list right now. Banks following as well with gains of 0.9%. And we'll stay on that. We'll get some more details on the specificity around the comp for a particular CEO. What has Morgan Stanley's CEO Ted Pick been awarded in terms of the salary? We're going to give you the answer when we come back. This is Bloomberg.
We are in such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes. And I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Welcome back. Before the break, we asked what has Morgan Stanley boosted CEO Ted Pick's salary to? The answer is $45 million. Morgan Stanley have pushed up Ted Pick's pay, up from $34 million after a record year for the Wall Street firm. The stock is up about 33% in the last 12 months. Pick took charge of the bank in early 2024 after years of leading its trading operations. Morgan Stanley posted its strongest year last year, with earnings per share hitting a record. The company has been helped by its push into debt capital markets, arranging financing for projects tied to that AI boom. Pick's pay compares to $47 million for David Solomon of Goldman and $43 million for Jamie Dimon of JP Morgan.
OK. Kind of takes us to our next subject, I think reasonably neatly. Morgan Stanley, big asset manager now. Schroders, now part of a bigger asset management group. So that's kind of by symmetry on this. So the company's been taken over. The stock is rising. I thought it was interesting. It sounds like it was kind of the Nuveen conversation was one that started. The offer was made earlier on this year. But it looks like they didn't put the business up for sale, which I think is interesting.
Yes, absolutely. Let's listen into what we heard from the CEO of Schroders, Richard Oldfield, speaking to us earlier on. And we were keen to understand what it was that was driving this decision to do this deal.
What we are doing here is creating this powerhouse of asset and wealth active management. It's going to have an unparalleled breadth of public to private capabilities. And at $2.5 trillion, it gives us the firepower to actually invest in our business and make ourselves more relevant to clients.
The firepower to invest in your business. That was the thing that I took away from this. And also bringing more private markets.
With $2.5 trillion of assets under management, that's probably a fair assessment. Powerhouse.
But the AI was definitely part of the conversation.
Yeah,
this kind of this need to invest.
Yeah.
Like you have to be a powerhouse.
Yes, even if he fully acknowledges, like a lot of other people, we don't know who exactly the winners and losers are going to be just yet.
That is it for the opening trade. The Pulse is up next. This is Bloomberg.
Welcome to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Schroders succumbs. The storied London company agrees to a £10 billion takeover by Nuveen of the US, creating one of the world's largest active asset managers. Well, Donald Trump's trade policies face their biggest political challenge to date, as 6 House Republicans break ranks to vote against his levies on Canadian imports. Plus, traders bet on fewer Fed cuts this year after a strong U.S. jobs report, payrolls rising by the most in more than a year. So good morning, everyone. It's Thursday. There's quite a lot going on in the markets. We're also getting ready for our coverage of the Munich Security Conference later, tomorrow and then onto the weekend. The European stocks seem to be climbing. Overall, again, we had some pretty strong company reports. Look, I'm looking at the Stock 600. It's gaining some 0.5%. Again, companies like Essilor, Luxottica, but also Hermes rising after posting some pretty strong sales. And then oil rising also as tensions in the Middle East seems to be outweighing concerns that there's a supply glowing. We look at sterling 13640, and then Bitcoin also sliding to trade around 67,100. The Bloomberg Dollar Spot Index pairing earlier losses. So let's also have a look at the markets map here in Europe. But again, it is really one of earnings. Siemens up more than 6%. Schroders, our top story in terms of corporate news, jumping some 30% on the news that Nuveen is buying the asset manager. Now, we are also getting the IEA, so we'll have a full debrief on oil. Stockpiles actually swelling last year by the most since 2020, and that's according to the IEA. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, the Republican-led U.S. House has passed legislation aimed at ending President Donald Trump's tariffs on Canada. The vote signals growing anxiety over the White House's economic agenda before midterm elections, focused heavily on affordability. Now, Trump is almost certain to veto any bill calling for a repeal of tariffs. For more, we're joined by Brendan Murray, who leads Bloomberg's trade coverage. Brendan, the man who never sleeps, how much of a blow was the vote to Trump's political agenda, and what does this setback actually mean?
Well, one of the hallmarks of President Trump's past year in office is his ability to keep a unified front and keep the Republicans on side to go along with his tariff policies throughout some turbulent several months there. But what we saw in Washington late yesterday was some cracks starting to form in that united front. I think it's worth remembering also that this vote was focused on Canada, and so certainly there are some states where there is a lot of U.S. trade with Canada, and so American public opinion toward Canada is a lot different than it would be if this vote were against the tariffs on Chinese imports. So you don't want to read too much into this, that this is some kind of sweeping rebuke of the tariff policy, but it's the beginning and perhaps a turning point. If the economy doesn't start to heat up from here, we could see more and more votes like this and more Republicans defecting and voting against Trump's tariffs.
Does this mean any tariff relief for Canada, Brendan? And what might this mean actually for the North American trade deal known as USMCA?
Right. So the message here from Canada, from the U.S. Congress was maybe we should ease up a bit on Canada. President Trump has really picked on the U.S.'s neighbor to the north. He's gone after Bombardier. He's gone to the aircraft maker. He's targeted this bridge that's about to open. And so he's really kind of focused his frustration on Canada at the moment. And the message from the U.S. Congress is, maybe we shouldn't go so hard with tariffs on Canada, a close trading partner, and certainly one where there's a lot of support among especially the northern states for good relations with Canada.
Brendan, thank you so much. Brendan Murray there, who leads Bloomberg's trade coverage. Now, a strong U.S. employment report caught investors in the $30 trillion Treasury bond market off guard, sending yields surging as traders lowered their expectations for Fed interest rate cuts this year. Now, the Sell Now, Ask Questions Later trade sank real estate service stocks as investors rotate out of companies vulnerable to AI. So to walk us through what's happening at the macro and micro level, we're joined by our senior markets strategist, Neil Campling, and Beata Mathy, of course, head of European equity strategy at Citi. Beata, thanks so much for joining us. Neil, we come to you every day because every day there's something else actually that we worry about in terms of business strategy or business model. So what did we learn this week and who's next?
Well, that is the trillion-dollar question in many respects. So if we take the example yesterday with these commercial real estate stocks that were hit hard, there wasn't a new agentic AI model that was released. It was more the perception of there could be a model that's released and that could impact this particular sector. So we've moved away from previously the actual models being released and seeing the companies affected to now the potential for models being released. We're definitely seeing we saw indiscriminate selling last week of all software stocks. This week, we started to see some of the software infrastructure companies actually rebounding because they own the data. So there is some sort of awareness now that not all should be treated the same. I think I was talking to a very experienced tech investor yesterday, and he was explaining to me that what we have to understand is that with these new models, they are now focused on very specific tasks. Yeah. So we can't assume that the cloud models we had in the past can be used in these models. It's like trying to use a Toyota Prius to run an F1 race. You need to have a very...
My heart. Toyota Prius, an F1.
But it's not an F1 Ferrari, is it? So that's the problem. You need to build the models that produce the fastest, most accurate results and prediction in the future. And I think there's an awareness now in terms of trying to value these companies that there are, a lot of companies that will lose from this race, but there are a few specific winners.
I mean, Beata, this is the concern, I guess. This is not really about valuations. This is about business models, right? It's nobody really wants to be Kodak. I'm sorry about Kodak, but the point is that we don't really know how much disruption there is.
Absolutely. So it seems that the market is trying to figure out all the losers in the space of 2 weeks. Every day, another identified supposed loser, right? But as Neil has mentioned, there will be nuance. The market is just selling everybody in the same sector, but proprietary data is key, of course. And we've been arguing that this year is the year of bullish stock market, but a very volatile stock market, and the volatility would be induced by the AI trade, which is evolving. So right now we are concentrating on losers. We don't know what the terminal value of these companies is. We know that they've come down a lot, but is it enough? It's really quite unknown right now. But also what we need to discover what the new winners are going to be, right? So adoption, and very effective adoption this year, is key, and this is one of our main themes for the year.
So, Beata, you think this week was challenging, and I don't know whether, again, because of these quick rotations, I mean, it is sometimes difficult just to catch your breath, actually, from one day to the other. So are you expecting this kind of intensity to continue? Underlying fundamental, like European reporting season, was also not bad.
Absolutely. So there are a few things here. First of all, the reaction to the reporting season. Okay, not great, but all right reporting season. And we are seeing very disproportionate price reaction to these reports, right? So when you miss, forget about it, you get punished a lot. But actually, on average, if you beat expectations, average price reaction in Europe, at least, has been negative. It doesn't happen very often, right? So this is one. That's to do with the markets being very rich. You've mentioned it isn't about the valuations. Of course, for the individual stocks, it is about the terminal value and how disrupted they can be. But for the overall stock market, it is a stock market price for perfection and over-delivery. That's been the case with the US for some time. Now, actually, perhaps with the exception of the emerging markets, Europe is also one of these markets that is priced for perfection and over-delivery. So you need to really over-deliver a lot to get it in. And then the weird thing is, of course, is how come the index level is, and you have these crazy moves underneath the surface. So what we notice is...
What is it, dislocation? Like broken correlation?
It is ferocious rotation and huge dispersion. So dispersion has been climbing already, and in Europe is the highest since the global financial crisis. It has been higher in the TMT bubble build-out. And then, so that actually, it's not necessarily a bad thing for stock pickers. It tells you that there are opportunities, right, if you are on the right side. But as the rotation happens, you need to be very nimble and change all the time. And on the other side, you have very low correlations. So stocks are not moving together. The difference between the two, the gap, is the lowest since it's been only lower in 1999 and 2000. The same can be said about instead of correlations, you could use volatility of the index level. Very high, not as high as the gap between the other two, but historically, when we looked at the forward performance from these levels of gap between dispersion and volatility, at best, you're flat over 1 to 3 months. Yeah. Over 6 months, market up. But in the near term, it tells you that this volatility or a bit of anxiousness in the market could continue.
I mean, a curiosity, Neil, I guess, is like how much of this is market, angst because too much was priced in. I mean, I don't believe a lot of the big sell-offs that we've seen in software. I mean, the CEOs will be on top of this. All we talk about is AI disruption. Yep. So are there any steps that they can take to not go, not to have their business model shattered?
Well, I mean, it depends on whether you have a moat, whether you have a real business moat or not. And to Betta's point as well, you talked about terminal values. This is the discovery process taking place today, I think probably in both public and private markets, because a lot of these deals, if you like, in terms of private equity deals in software, as well as the public companies, we are now starting to question the terminal values. Yep. We're now starting to have to adjust the calculations for the DCFs, and that's where you get the markdowns. But that's also where, if we look at previous tech cycles, the likes of a company like an Oracle, for example, was being disrupted by someone like Salesforce. But what Oracle actually did is it took advantage of the depressed valuations to buy JD Edwards, to buy PeopleSoft. It built up a huge arsenal of companies under its hood because it had that structure and it could buy in the cash flows. I suspect the next wave we will see is actually a wave of M&A from the leaders buying some of the other companies that they can then sort of improve margins and improve their moat around their offering.
I mean, going back to like reporting, repricing, rotation, is there anything that looks more or less attractive after the week that was?
That's an interesting point. And of course, in this rotation, everybody is piling into outside of tech stocks, and we have rotation into mid caps away from large caps. Actually, when we look at valuation after last week and we look at forward PEs versus where they are trading percentile wise in the last 25 years history, in the US, one of the most attractive sectors right now is tech. Right? Software is a big part of that cheapness, but it does look the most attractive. So value, where everybody's rotating into, actually looks more expensive now than growth. So that's something to contemplate on. Outside the US, it's still the opposite. Value is much cheaper versus its own history than growth, right? So
time will tell.
Yes.
So is it very quickly on, I mean, in terms of AI in Europe, is there anything that you're looking at specifically?
So, of course, AI, in like the first phase of AI that we've gone through, hyperscalers, the build out of data centers, Europe didn't, outside a few individual companies, didn't have too much to offer or participate. However, if indeed this is the year of the market demanding evidence that this big capex spend is going to yield some returns via, well, labor productivity gains, for example, this is where Europe can really kick in and could be very interesting. So physical AI, broader set of sectors applying it and seeing some gains.
Is there a name?
Siemens Energy is a good example, and Siemens numbers today, record highs to the stock. You know, you have to have the pipes, you have to have the infrastructure to enable AI in the first place. So there are infrastructure ways of playing the AI trend across the globe, and Europe's included.
Okay, thank you both for a great conversation for this Thursday. Neil Campling, our senior market strategist, and Beata Manthi, head of European equity strategy at Citi. Now, coming up, the UK's largest standalone asset manager is being bought for nearly £10 billion. We have the details next, and this is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
That matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, Nuveen is buying Schroders in a £10 billion deal, creating one of the world's largest active asset managers with nearly $2.5 trillion of assets. While speaking exclusively to Bloomberg, Richard Oldfield, the Schroders chief executive, said the deal will give the company more firepower.
What we are doing here is creating this powerhouse of asset and wealth active management. It's going to have an unparalleled breadth of public to private capabilities. And at 2.5 trillion, it gives us the firepower to actually invest in our business and make ourselves more relevant to clients.
Let's bring in Tom Metcalf, our managing editor for finance in the EMEA region. Tom, firepower. I mean, how critical is this for actually an active manager?
Oh, it's absolutely essential. So it's all about scale, right? And Schroders, long time, been one of those where they've clearly been needing to, address that. I think that the shock here is just how quickly it's happened since Bruno Schroeder died. The family's always been, a hallmark of its independence. So I think in the sort of halls of Schroders, people are kind of waking up this morning going, did not see this coming, because total shock to the city.
2.5 trillion. I mean, again, we're a bit blasé. Where does that rank?
Oh, as an active manager now, it's definitely one of the big players. So the largest is something called Capital Group, a very low profile, but has about 3 trillion. So it's basically top rank. But then, of course, you want to compare that to the BlackRocks, the Vanguard. BlackRock has 14 trillion. And that's just a sign of why, active managers, there's all these pressures on them, lower fees, all that stuff, which is why they need to, Schroders was not that small, but it really needs to be, top tier in the industry to survive.
Tom, how big of a loss is this for London, for the UK, and the City of London?
Yeah, I think it's certainly an emotional one. Actually, it's kind of a real link back to the old City of London. Schroders, probably along with Rothschild, one of the last hallmarks of that. I think really pragmatically, something like this had to happen. But I think there'll be a lot of probably quite sad people actually, because it's a real institution, and whatever happens, moving out of family ownership. American owners effectively, something's going to change, whatever the CEO was just saying about, this is fantastic. I imagine a lot of people are quite nervous today.
Yeah, I know we'll continue, of course, some of our great reporting in this, Tom. As always, thanks so much, Tom Metcalf, our managing editor for finance in the EMEA region. Now, oil climbing for a second day as traders remain concerned about U.S.-Iran tensions with the potential for military strikes and risks to supply oil. With us now, Nadia Martin-Wiggin, director of Svealand Capital. Nadia, thank you so much for joining us. I mean, every day we talk about crude, and the sentiment, because it all ties back to geopolitics. But what are you seeing in terms of refining and where the oil price goes next?
Well, we actually see a very strong market for refining. We see that runs in January were up 2 million barrels per day versus expectations in December. And we saw that the U.S. increased runs year on year by 1 million barrels per day, despite the fact that we had all that cold weather. So I think in that regard, the market has been much too bearish in terms of expectations, and inventories are still low.
So is there a glut? Again, I've never seen a market where actually there's two narratives that seem to be really competing and no one can get on the same page.
Well, I'd say the glut narrative has definitely been the dominant one, and that is really continued since the second half of 2024. But what we see now is that really the inventories haven't built. The IEA report this morning, it only shows a 3.9 million barrel build in December. OPEC was showing 6.5 million barrels. And yet the IEA is talking about a 3 million barrel per day build last year. In supply versus demand, they expect the call on OPEC to be 600,000 barrels per day lower this quarter than last quarter, and for that to continue. And I just can't find the oil.
But so how do you read that? Is it a problem with the economy, that there's just not enough consumption? Is it Russian oil that's sitting somewhere?
Well, I think the demand is actually higher than they're capturing, first of all. There is inventory, of course, building in China in particular, that we expect to continue at least through the first half of this year, if not the next year. Geopolitics are a part of that. I think on Russia, we're finally really seeing a logistical problem. So when War 2.0 started, the IEA was saying we could lose millions of barrels per day of oil. That didn't happen. Now we could increasingly start to lose from 100,000 barrels per day up to 600,000 barrels per day because of logistical problems. It's not a production problem, but it's where to put this sanctioned oil that isn't getting bought.
And so this is not basically the U.S. telling India, look, if you want a trade deal, don't buy Russian oil.
Well, it is a part of it. I mean, in that we already see a pullback of around 500,000 barrels per day. There's still more than 1 million they could buy. But also China's taking almost all they can of Russian oil at this price. They want an even steeper discount. And of course, they're not taking Venezuelan so much anymore because it's expensive. So I think they're putting that pressure, and that will resume a bit. But we do see that it's tricky. The dark fleet has to continue rising for Russia to keep able to produce.
What's China doing? Are they still building stock?
Yes. And in our view, easily they could build 1 million barrels per day this year. If we think about Xi and his address, we could see something happen in Taiwan next year. They are preparing. They're not only buying oil, they're also, we see that there's a pull to the east to own tankers. We even see stockpiling a bit on the metal side in China, and that's in preparation in our view.
So if you think, this is maybe what, like an invasion of Taiwan, a takeover of Taiwan? What happens to the price of oil if that happens?
Well, then I think it would go higher because that is that demand pull. We get more of this kind of splintering off of the world. And even if they were not going to invade Taiwan, I think they want to be prepared because we're in such a divided world. So everyone needs to have their resources in line. And we see that being led by the U.S.
Iran and then gold. Iran, again, we're on tenterhooks. Is there going to be a strike or not? And there's a huge danger for the Strait of Hormuz. But what does it mean if there was a strike, let's say it's a surgical strike from the U.S. to get rid of the leadership? What does that do to the price of oil?
Well, it depends. Well, first of all, it's bullish. I think what we saw with Venezuela, though, the U.S. focused on blockading the oil. So one thing is the closing of the Strait of Hormuz by the Iranians, which, we're on the fence if they would actually do that because it's so bad for them. But on the other hand, the U.S. could control shipments going out, and they could control Iranian crude, which is the focus, not the rest of the crude coming out of the Middle East. And that's what we saw with Venezuela. So I think that shows things. What we saw also with Venezuela, Maduro's out, not a complete change. In Iran, it's very difficult to see who would replace the government. The way I like to think of it is they've never been weaker, the government right now, but who is going to step in? And that's where I think it's complicated. So more strikes rather than a complete regime change, I think, in the near term to start.
Gold.
Yes.
So is this just a pure play against U.S. assets?
Well, I think it is about nervousness in the world. And this started with central banks. We had Russia buying before they invaded Ukraine. Then we had the Central and Eastern European central banks being the huge buyers since the invasion of Ukraine 2.0. We saw LatAm coming back into the market end of last year. Oh, Venezuela happened. Suddenly they were buying again. And then the big new player is really Tether, with their stable coins and their U.S. and their gold coin. And that's the last 2 quarters of last year. They were the biggest buyers in the market. And that's diversifying away from just having a U.S. Treasury-backed cryptocurrency, which is what the governments around the world are doing. And, then we have discussions of ADNOC issuing a bond in won. And that is just indicating that we're going to diversify our centers of universe and our supply chains.
But so gold goes higher? We saw quite a big violent pullback, actually.
Yeah.
Was that a blip?
Well, no, I think part of that was driven by silver. I think we saw a big jump in ETF buying at the end of last year in December, especially in Asia. And that's more nervous money that kept buying. But the long-term buyers are there, and we expect to break through the previous highs this year, no problem.
And then it just keeps on going higher? Is there a 3-year target that we need to be looking at?
Oh, it's a lot of geopolitics in the world, changing trade patterns and so forth. But, we definitely think $6,000 is a target, and then we just see.
Nadia, this is a difficult question, but could you see, if something happened with Taiwan or even Iran, could you see gold actually moving more than oil because it's almost like an asset worry, a worry asset?
Yeah, and it's also a trade concern, right? Yeah. So that absolutely, and what we've seen so far is it's been moving so much more than oil. Oil has been stuck in this range bound, but I think the market is understanding how much this short, bearish, negative narrative on oil for the last year and a half has actually pushed out a lot of interest out of oil. And once they start to see that this market is actually getting tighter, then we'll see a lot of flow coming into that oil side to push up prices.
Nadia, thank you so much for joining us. Nadia Martin, Wigan, Director of Sveland Capital. Coming up, we'll delve into the world of peer-to-peer luxury fashion with the Chief Executive of the clothing rental app By Rotation. That's coming up next, and this is Bloomberg.
This is a 15, 16 grams tuna. Then sushi rice is still a little bit warm. So take one, like a very, don't make it too tight. So from now, and very light, like a ball. Put wasabi in the middle. Then my process 1 to 6. 1. This is putting the between the rice air. Then make the 4 fingers curl. Make sushi shape. Then touch this. 2. Then turn. Now these 2 fingers, top to the bottom, make the sushi shape the more beautiful. 3. Then, looks like pushing, not pushing. 3, 4, turn, same way, 5, and 6. So this is the 1 to 6.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Schroders succumbs. The storied London company agrees to a £10 billion takeover by Nuveen of the U.S., creating one of the world's largest active asset managers. Donald Trump's trade policies face their biggest political challenge to date as 6 House Republicans break ranks to vote against his levies on Canadian imports. Plus, traders bet on fewer Fed cuts this year after a strong U.S. jobs report, payrolls rising by the most in more than a year. So traders have lowered their expectations for Fed rate cuts this year after strong employment data. Let's bring in Ven Ram, Bloomberg Markets Live cross-asset strategist. Ven, I'm going to ask you about correlations. I'm going to ask you about rotations. But first, is this kind of jobs report good news for traders, even if it gives the Fed a little bit more room to stay put?
Morning, Francine. I think, yes, it is good news for traders, particularly for equity traders, because it means that, the jobs market is doing fine. The U.S. economy is roaring. So, and the Fed is going to be in a situation where they want to be cutting rates, even though perhaps they shouldn't be cutting rates. So that's the bowl is fully flowing over. The punch bowl is fully overflowing for equities traders. But if you look at treasuries, Francine, I think there's a message there. If you look at the 2-year yields, we haven't meaningfully come off 350, and we keep coming back to that level. Since September, we have bounced, we have not able to go below that level. And if you look at the long-term 10-year yields and above, they are also not coming off 420 levels. So there's a message in for the Fed there that even if you cut rates, the markets are going to be increasingly skeptical whether yield should accompany them lower together.
Ven, the dollar's reaction to payrolls, a little bit anemic. So, this quiet quitting, how should we look at tomorrow's CPI?
Well, I think that, the dollar is moving a bit away from the data, if you will, Francine. But I think there is a bit of risk premium. There's considerable risk premium priced into the dollar. That's to the tune of 4% and more. And that's down to erratic policy making and also the fear of investors that the U.S. administration wants a weaker dollar, despite all that they say outwardly, particularly because President Trump said so explicitly last month. And we are also heading into the midterm elections. So there's a fair bit of skepticism. Dollar shorts are building. So I don't think there's a good atmosphere to be constructive on the dollar.
Okay, Ven, thanks so much. As always, Ven Ram there, Bloomberg Markets Live cross-asset strategist. Now, onto a bit of fashion, a bit of luxury. Hermès sales grew on robust demand for its coveted Birkin bags. The French bag maker is one of the industry's most resilient players, chalking up gains across all of its markets and most of its products. Well, for more, we're joined by Deborah Aitken, senior analyst at Bloomberg Intelligence. So what are we to make? I mean, I feel like they can't do any wrong, Deborah. I mean, it's a bag maker. It's like the luxury company that everybody wants to be or wants to own.
Absolutely, a totally unique model, so true. But, you know, one of the things, so we saw 10% growth, the market's struggling in the first quarter. We saw that growth move from 7% in 1Q to 10% in the fourth quarter, a solid outlook for next year. But when we think about, we always label to Birkin bag, but actually their leather goods is 45% of the business now versus 55% a few years ago. It's only on limited number of designs, but then it's doing really well in ready-to-wear, in home, in jewellery, back to growth in second half in watches as well. So you're right. So compared to so many of the peers, you could label it in that way.
I mean, if you look at the PE valuation, right?
Yeah.
I mean, it's just also really strong.
Yeah.
They haven't put prices up by as much as some of the others.
So they always put the prices up in the way that, manages their cost base. So actually in the for 2026, they say 5 to 6%, which will still be quite robust versus probably 3 to 4% elsewhere. And that's on the back of their artisans, the new products to market, their production sites and others. But also these companies in France are facing big corporation taxes, again into the second year with that surcharge, high currency exposure. And then you have the US tariff as well. They can manage that. And what separates them really, aside that top line, is very much the fact that they grew gross margin, operating margin, beat consensus, and they run their EPS in line with reported revenue growth last year, 2025.
Deborah, we love talking luxury on this program, and it always also often comes back to look where, there's too many luxury products, there's maybe too many luxury companies, but also we're going to have a good conversation with the founder of Buy Rotation about secondhand. This is peer-to-peer lending. But actually, are you seeing more of a resurgence of secondhand, and does that mean that people are buying less?
You would think, if I look at social media, there's a lot more, for example, Hermès and Louis Vuitton, because Louis Vuitton is much higher volume. There's a lot more around, and there are those who wish to have real heritage, something that is 20 years old plus, which is craved for, and also with Christian Dior's and others, Chanel. However, it is high end, and then there's the mid end, which doesn't really hold the price so well. No. So, for Hermès, you're waiting in a queue often still for the product, so it is a way to own prior to where you would be in the queue. Yeah. And so the Hermès CEO would say he's not bothered by that. It opens up the brand to the mid-market type of thing, but he's doing that from a lower volume. And I think there is for used, for pre-loved, for second-hand, a way forward for all of this industry, because we are getting growing middle classes, and that is helping, with some of that demand to be swept up in that area.
So interesting, Deborah. Thank you so much. Deborah Aitken, they're a senior analyst at Bloomberg Intelligence. Now, if the typical Hermès bag is out of reach, but you'd still like to raid the wardrobes of style icons like Dame Helen Mirren or Ellie Goulding, you may have come across Buy Rotation. Often described as the Airbnb of designer fashion, this peer-to-peer platform offers a red carpet look at a fraction of the cost, or helps you build a side hustle by monetizing your own wardrobe. Well, Buy Rotation's founder, Ishita Kabra-Davies, is with me now. Ishita, thank you so much for joining us. I remember speaking, almost when you launched to actually Buy Rotation. And again, the idea is that if I have a wedding or just have a big event, I can rent from someone, someone else, and then rent it for a couple of days. Like, are you surprised by the kind of growth you've had?
Yeah, and I think the interesting thing is that we started off with a pretty low average order value, where it was more about contemporary clothing, which Deborah just spoke about. And now you can rent things like a very rare Hermès Anemone Kelly Puchette bag on the app. So it's really become much more about rare, vintage luxury and access rather than ownership.
Yeah, and it's amazing how actually I do feel, especially for the younger generation, there is a little bit of a shift. It's a lot of them say, well, I don't need to own it, but I'd like to wear it for social media. Or, I mean, is it different, depending on the age of your customers, on what they want to buy and where?
Certainly. I mean, we've obviously categorized our customers. You've got some who are renting for things like graduation, some who are renting for holidays and weddings, and then you've got some who are actually trying to rent and try items before they actually invest in buying them. So, I recently rented this Chanel bag, which is worth over £9,000. It's from 2019, so you can't even buy it anymore. And I rented it for £150 for a week, had lots of fun with it, and then I realized it's not something I would actually buy. So it's something that you can use even to try before you invest in that piece. And we talk a lot about investment because we are seeing fashion as an alternative asset class of its own. So you can rent out your pieces and make more than £200,000 on the Buy Rotation app, and that's in addition to your full-time job.
That's really quite impressive. You're also announcing a strategic partnership with Uber, and this is, again, it just goes back to people want things pretty fast.
Yeah, and we're talking about fast fashion, but not as in fast, low-quality fashion. We're talking about fashion on demand. This beats a lot of luxury e-com retailers who can only do next-day delivery, whereas with our partnership with Uber, you could rent something that's in your neighborhood because you can find out what is around you at the moment on the app, and essentially send an Uber courier, as we have a partnership with them, and get it within the hour.
Ashita, we talked to a lot of entrepreneurs to try and figure out what you think the funding environment is like. Is it tough being in the UK at the moment? Is there demand? Do you have enough funding? Is the government helping?
Yeah, we are very lucky that I believe we are the winners in the UK when it comes to rental and peer-to-peer. We really position ourselves more as a tech company, so more of the sharing economy, and we have partnered with the likes of Uber and Airbnb. For us, there is a lot of growth potential in the US, where we launched a couple of years ago, and we're also looking at the UAE. So for me, while UK is very much our headquarters and we're very proudly British, we dress Lady Starmer, for example, we are very much a global company with global ambitions, much like myself as a private citizen.
Is there more, is there more rivalry, or do you have more fierce competitors in the UAE or the US?
I would say probably in the US, because in the UAE, secondhand, they're still kind of coming to terms with it. I'm from Singapore myself, and there is a big stigma around secondhand. But I think attitudes and the way that they look at secondhand will eventually change. The US is more rife for it, I think. You've obviously got the tariffs, which make secondhand much more attractive. You've also got access to European goods, again, the Hermes, the Dior's, and you can get them secondhand by renting them, forget even buying them. So the amount that you're spending to rent these items, for a week is like 3% versus buying them secondhand for 70%.
Ashita, when you look at the UK, is there anything that the government who could help actually entrepreneurs like yourself?
I think, continue to support and champion, especially investments into female-founded businesses. I think there's a lot of lip service around that. There's a lot of mentoring programs. I have said before at the UN as well, that women don't need mentorship, we need funding. So stop telling us about all these programs and actually put your dollars where your mouth is, or whatever that saying is.
Is there enough capital going into female-founded companies?
Not enough. Never enough. There could definitely be more. And I think on the consumer side as well, especially since we position ourselves as a social network, a lot of the social networks are all born in the US. There seems to be no winner in the UK and Europe, which is such a shame because there's so much culture here.
If you were to start the company now, would you do anything differently?
I don't think so. I love peer-to-peer, and actually, very interestingly, we are the business model that has survived and, been through the trials and tribulations. If you look at quite a lot of the other players out there within rental, they're very inventory-based. They're very heavy on their CapEx and OpEx, sorry. And I think what's really interesting for us is that we are transforming how fashion is consumed altogether by unlocking a third of your wardrobe that's just sitting there and not doing anything. It's really an asset class.
Ashita, thank you so much for joining us. And, check out Buy Rotation. Ashita Cabral-Davies, founder of Buy Rotation. How much growth are you expecting?
We're expecting 3x.
There you go, 3x. Now on to another corporate news, and Siemens has raised its outlook on growing demand for data centers and its factory automation products. Now the German industrial company benefiting from its move into industrial software and artificial intelligence solutions. The chief executive has it speaking to Bloomberg's Tom McKenzie.
We will see how dynamic, how fast AI is hitting really the real world. We believe that this happens very fast. But from that perspective, we see still there's a good growth. There might be shortages on power supply or supply maybe on GPUs. But since the supply chain is also ramping up, we believe that this keeps on going.
And you think that the CapEx spend, the commitments from those hyperscalers, $650 billion US potentially this year, that is rational?
I mean, I didn't make the math of all the commitment which everybody gave, including the investment banks. Adding that up, there might be a slippage, but if you take even a slippage into consideration, still enough money for a market to keep on going.
And you've got a record backlog now. About 120 billion euros is the backlog. What are the constraints around delivering that backlog? Are you able to deliver on those orders?
Clear, yes. I mean, we really invested early enough. So we doubled our manufacturing capacity for medium low voltage in the United States, exactly for data centers. We increased capacity for rolling stock. By the way, big backlog comes also for rolling stock. So we have capacity. We invested in capacity, also in capacity for our automation devices. So that's not a problem. We will deliver.
There is a currency impact. How and to what extent is FX impacting you, particularly euro strength, and how are you looking to mitigate that? Are you taking any hedging strategies around the currency?
I mean, we always do some hedging in the background. The impact, I think, is something like 50 basis points, and we planned the fiscal year on this weak dollar, and so therefore that's part of our planning. If that stays in that ballpark as we see today, that's part of our forecast and our planning.
Okay. You talk about the software part of the business. We've seen a significant sell-off, including industrial software names, in the last couple of days. What do you make of what we've seen there? How defensible is industrial software from the evolution of AI and some of these products being put out into the market now?
So we know that AI has the potential to disrupt some of the software businesses. I mean, if you talk about software which runs on call centers and the like, I mean, that's fully on the block. But if you go on the other end, on industrial software, simulation software, physics-based software, we don't see that at all. We rather see an enrichment of the software, which allows more and more customers to use it. Take, for example, simulation. Simulation is costly, takes a lot of time. Using GPUs, we can accelerate it 100 or even 1,000 times, making it accessible. Yet, the point is that you always want to frame it with the physics, because hallucination is not an option on a shop floor, neither in your designs. And this is where physics comes in. It always gives you a confinement of what really is right and wrong.
That was Roland Busch, the chief executive of Siemens. Now, Verisure shares slumping today after the security services company reported fourth quarter earnings that missed estimates. Verisure's shares fell below their IPO price for the first time last week after being caught up in the AI disruption sell-off. Now, the chief executive has been speaking to Bloomberg about the impact of the technology.
We're obviously actually an AI beneficiary. We're going to demonstrate that progressively over time. We're already using AI to great benefit in many aspects of the business. And if I take maybe the core of what we do, which is the security service that we provide, I mean, it's basically what we call detect, verify, intervene. Yep. We're actually using AI algorithms already to do a better job of analysing incidents, right, of confirming whether it's, in a sense, a false positive or real. And we think we do that better than anyone else.
Coming up, normally on the same page, but maybe not right now. President Trump hosts the Israeli Prime Minister in the White House. We have the details on what the visit means for Iran. That's next, and this is Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Nuveen is buying Schroders in a £10 billion deal, creating one of the world's largest active asset managers with nearly $2.5 trillion of assets. Speaking exclusively to Bloomberg, Richard Oldfield, the chief executive of Schroders, says the deal will make the company into a powerhouse.
Well, Guy, I'm going to take us back a second. So there were two announcements this morning. The first one was our results, and it's important as context to the deal. Our operating profit was up 25% to $757 million. EPS is up 39%. This is a great business. It's in a really strong foundation. But what we are doing here is creating this powerhouse of asset and wealth active management. It's going to have an unparalleled breadth of public to private capabilities. And at $2.5 trillion, it gives us the firepower to actually invest in our business and make ourselves more relevant to clients. It's a business combination that's almost perfect on paper. We have total complementarity. There's no overlap in geographies, really. There's very little overlap in products. So we're about growth. We're not about taking money out of the system. We actually drive this business and create something really powerful. And the cultures fit. The heritage, the 300 years together. So it's not just, you mentioned our two centuries of history. Nuveen comes with more than 100 years of history as well. And that actually helps us have very similar cultures. And as you mentioned, Guy, this is all about the City of London. We put that right at the heart of the deal, making commitments to the UK and London.
Richard, did they call you? Did you call them? Where did the conversation start? How did it go? Kind of just give me a bit of colour here.
Well, as you'd expect of the last year, I've been talking to many of my peers around the world about how they respond to the industry challenges that we've got. And what became clear as I met Bill is that we had businesses that were very similar, and we discussed the complementarity. And that led to them approaching us with an offer earlier in this year.
Richard, good morning to you. So you mentioned there that this is about having the firepower to invest. Would it be right to say that AI has changed the landscape and the requirement to invest in that technology, to find that an opportunity rather than a threat, means that it's better done with a larger business? Is that one of the drivers?
Well, that's definitely one of the drivers, because the scale of this operation will be able to create more capacity to invest in our business. And it's not just about AI. Actually, when you think about our industry, it's about tokenization and distributed ledger technology. It's about reshaping our industry, about different distribution models. And yes, it's about AI in terms of how we do research, how we do portfolio construction, how we access wealth clients. So I think there's a whole range of technologies here that are going to transform our industry as other industries. And we need to be right at the forefront of that change.
You talked about making commitments around the City of London, Richard, and we read in our stories this morning that London is going to be the headquarters of the non-US business. What do those commitments look like, though? How watertight are they?
Well, they're all listed in the 2.7 offering document, and I think Nuveen have been pretty clear. London will be the non-US headquarters for at least 5 years. There are commitments about jobs over the subsequent 2-year period. We'll have about, to put this in context for you, Anna, there's 3,100 people in the combined group right here in London, and that's the largest location of any office for Naveen, and it would be about a third of the overall workforce. So this is a big, sizable presence here in London. We're not stepping back at all from our commitment to support the UK capital markets, be at the centre of how policies are formulated, be at the centre of how people come to market. So I think the commitments are very watertight and they're very real, and I think it just shows the size of the UK and London in the overall group.
Well, that was Richard Oldfield, the chief executive of Schroders, speaking exclusively to Bloomberg. Now, U.S. President Donald Trump says he intends to press ahead on talks with Iran, despite reservations from the Israeli prime minister who was in the White House yesterday. Let's bring in Ethan Broner, our Israel bureau chief in Tel Aviv. Ethan, thank you for joining us. So President Trump and Netanyahu normally aligned in their worldview, but will Netanyahu be disappointed this time?
Well, I think you're right that in this particular case, the president is more eager for a deal. The Israelis really don't believe that it's worth negotiating with Iran, that this is a regime that is uncompromising and will not step down from its anti-Israel, anti-Western ideology. So I would say that the Israelis were certainly Netanyahu was certainly somewhat disappointed, but, you know, we have to wait and see. There's another carrier group possibly on the way into the region. And, you know, there are several issues the Israelis want the Americans to press Iran on. I think that President Trump is aware that a quick military activity is unlikely to take down this regime, and he doesn't like long engagements. He wants quick, decisive action, and I think he's hoping that a deal will get further in that direction than a strike. So we'll see. There is tension, it would seem, between the two over this.
Ethan, also the agenda, Trump's so-called Board of Peace. So what was discussed?
You know, I mean, the big issue for the Israelis is disarming Hamas. And so far, there's no evidence of anyone able to disarm Hamas except for the Israelis, or if they go back to war, to do so. The Americans say they have a plan in which Hamas will disarm voluntarily, and perhaps the arms will be held somewhere in storage. Everyone is pretty skeptical of this. I think we have to see where this goes. But it does feel like, to be on this particular issue more than on Iran, that the Americans are willing to see the Israelis go back in, if necessary, at least on a short-term basis, if nothing else works. At least that's what's being held up as a threat, in the same way that these carrier groups are being held up as a threat. It's very hard to sort out, you know, the theater of it from the reality of it. And my guess is that the leaders themselves aren't quite sure the difference at the moment.
But Ethan, what does each party want from each other?
You mean between the United States and Israel?
Yeah, and Israel. Mm-hmm.
Oh, I mean, the Israelis want, of course, no daylight between them and the United States. They want the United States to agree that the future of this region is only secure if the regime in Iran is ultimately taken down or forced out, enough pressure is put on it for it to go. That's certainly what they want. The Americans, I think, have more belief in diplomacy. They also seem to think that this government shouldn't last, but it's not clear to me how much they want to invest in taking it down.
Ethan, thank you so much. Ethan Broner there, Bloomberg's Israel bureau chief in Tel Aviv. Now, The Pulse is live from the Munich Security Conference tomorrow. We'll be joined by big guests, including the executive director of the Aspen Strategy Group and the vice chair of PIMCO. Up next is Bloomberg Brief, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
You don't think the court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It's 5 a.m. in New York City. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Traders paring back rate cut bets following that payrolls report. Jobless claims up next. Stocks recovering from another AI scare trade, while Anthropic inches closer to a deal that would value the firm at $350 billion. And midterm anxieties rise for President Trump as the House passes a bill targeting his levies on Canadian imports. So futures are pointed higher today. Now, yesterday we had another AI rolling scare. This time it was real estate stocks. The previous day it was wealth stocks. Every time an AI tool gets rolled out, the whole industry seems to decline. We did have a positive session in Asia, though, and maybe the market is moving on and from these scares. But we are seeing a very definitely positive futures session. Now, yesterday the S&P was unchanged and the Nasdaq was up 0.3%. So these sessions are being capped by whatever the current AI story is. Let's take a look at the bond market because, of course, the payrolls report is really what's in focus as well. It was stronger than expected, but was it really enough to change minds at the FOMC? We're back really into the range that we've been at. The curve, albeit flatter. We're at about 66 basis points on the 2-10 spread now, with the 2-year yield at 350 again, the 10-year yield just below 416, and that 30-year yield below 480. Not a whole lot happening with metals, but we are seeing gold continue to stay above $5,000. All right, we'll get into all of this in just a few moments, but first let's get to some individual movers. For that, we'll go over to London and Abir Abu Omar. Abir.
Hey, Vonnie. We're sticking with the AI story this morning, starting with Cisco, which is pretty down this morning in the pre-market, almost 8%. And why? Their results yesterday that came out post-market suggested that the sales were good on the AI outlook, but their margins are really hurt by this crunch, this unprecedented crunch in memory chips. So that crunch and Cisco is obviously a user of those chips. That crunch has sent prices skyrocketing, and that's been affecting what we're seeing in the stock this morning, although the company did say that they're handling the shortage better than peers. And again, sticking with the AI trend, we turn to AppLovin, another stock that is down this morning in the pre-trade, almost 5% down. It spared some of those losses from earlier, but it's really suffering from the AI boom. It's been painted as one of those stocks in the laggards basket of AI. It's down 30% so far this year, and we're seeing that investors are not taking kindly to the results from yesterday. Finally, we turn to some good finance, good old finance, with Schroders, which is trading this morning in London, up almost 30%. And that's on the back of the Nuveen deal that we heard about this morning. Vonnie, we had an interview with the CEO who said that the UK will remain a key focus for the combined asset manager, but the majority of the AUM will be in the Americas, over 50%. Vonnie?
Yeah, lovely move there for Schroders. Abir, thank you so much. We'll chat to you again later in the hour. That's Abir Abu Omar. Also coming up this hour, more data on deck this week. We're going to take a closer look at the economy with Priya Misra of JP Morgan Asset Management. So, traders pushing out bets for a first rate cut this year after that stronger than expected jobs report, now seeing a first cut in July. Kansas City Fed president saying that the Fed should hold rates at a, quote, somewhat restrictive level, adding that further rate cuts risk allowing high inflation to persist even longer. Bloomberg's Ven Ram joins us now for more. So, Ven, is the economy in good enough shape, and can we tell from just that one jobs report for the Fed to wait literally a whole 7 months for a first cut?
I would definitely say so, Vonnie, because the jobs report was pretty strong and it laid low the claims that, this is a low fire environment. If you juxtapose the strong jobs report together with the productivity gains stemming from AI, it kind of suggests that the US economy has got plenty of momentum behind it. Now, should you be cutting rates into that environment? Now, the Fed thinks that the economy is going to grow 2.3% this year, with core PCE at 2.5% this year. Those inputs mean that the Taylor rule rate is suggesting that the Fed funds rate should be 3.75, exactly where we are now. So where is the room to cut rates, especially if the economy is going to overshoot in terms of growth and inflation also staying much above 2.5%, the Fed's inflation target. So there is no wiggle room for rate cuts here, and which is why you hear Fed speaker after Fed speaker say that there is no room for rate cuts. We are already at neutral. Any more would fan inflation. So it's definitely not the prescribed measure here.
Sure, but then were those fears over the labour market that we had before the holidays, so at the end of last year when the Fed switched its focus really to the labour market side of the mandate, were they then misplaced? And can we tell that from just this one delayed job report?
Well, I mean, that's a fair question, but I think that on the whole, if you read the tea leaves in the economy, Vonnie, I think what you get, you can barely argue that there is a case for back-to-back rate cuts here. This is an economy that is firing well on all cylinders. Okay, we are in a low fire environment before we got this latest report, but so that kind of suggests that the economy may be cooling, the jobs market may be cooling, but there are productivity gains stemming from AI that can't be wished away. So I think that, the Fed has to err on the side of caution and can't be cutting rates and stoking inflation when it has already missed the inflation target for several years in a row now.
All right, well, we do get CPI tomorrow, and we did find out that wages grew pretty healthily in that jobs report as well. Ven, thank you so much. That is Ven Ram there of our MLive team. Turning to tech now, and Anthropic close to raising more than $20 billion in one of the largest startup funding rounds ever. Backers, including Peter Thiel's founder fund and D.E. Shaw, it would value the company at about $350 billion. Joining us now is Tom McKenzie, host of Bloomberg Tech Europe. Tom, in some ways it feels like we're back in the old VC era where people just didn't want to be left out of anything that might turn into, the next, what used to be a unicorn, right?
Yeah, Vonnie, and to the extent that they don't want to be left out, you're getting investors who are invested in two major competitors at the same time. You've got OpenAI, so some names on that list, on that cap table for Anthropic, also on the cap table of OpenAI, two fierce competitors, of course. So that speaks to that desire, as you mentioned, to not wanting to be left out in terms of the developments and the evolution that's coming through. So Anthropic, $20 billion, that's according to our reporting in terms of this latest fundraising deal, valuing, as you said, the company at around $350 billion US dollars. Just for size and scope and for context, that puts it above in terms of market cap. If you're looking at Netflix, it's a similar kind of market cap to Netflix. The market cap of Netflix similar to that level of valuation. It puts it above the market cap of Goldman Sachs, significantly above Disney. So that's the kind of size we're talking about in terms of the value of this company now. So yes, we had Peter Thiel's VC fund backing this, one of the co-leads, but also you had Cotu, you had MGX, and other significant names getting behind this deal. And this, of course, after a really significant spotlight on the Anthropic, with the latest model coming through, very much focused on the coding space and on the financial space as well, financials and engineering, and on the back of this plugin that really disrupted the legal sector. And so Anthropic has been getting a lot of headlines. Now it's racking up this additional investment. And again, there has been reporting suggesting that this is a company that's looking to IPO at some point this year. It seems they're finding no trouble, at least, raising capital in the private market.
Well, bets in these types of companies, in this case OpenAI, seem to be paying off. At least they did for Masayoshi Son. SoftBank swinging to a profit on the valuation boost from OpenAI. But it's very tethered to that now, right? It's very tethered to the success of ChatGPT, essentially.
It absolutely is. Look, we're talking about the quarterly earnings of SoftBank, and central to that was that stake, about 11% stake that SoftBank now has in OpenAI. It has sold down its stakes in NVIDIA. It's under a bit of pressure because it has 90% stake in ARM, the semiconductor maker, of course, or at least designer of those platforms. And that company is under pressure. But it is the OpenAI story that's paid off for them in the most recent quarter. They came through with a profit. It was actually a miss versus the estimates, but it's the fourth straight quarter of profits. And year on year, you were looking at a loss, and now they've turned to profitability. So that's positive. The gains from OpenAI in that bet, around $20 billion in terms of the value of their stake right now and the increase that they've seen on OpenAI. And SoftBank are in talks, according to reporting, to potentially put another $30 billion. They've also already invested about $30 billion US dollars in OpenAI. They're looking, according to reporting, to invest potentially another $30 billion in OpenAI.
We got some more positive comments about the AI industry, if you like, if you can call it that, from Siemens, the CEO, saying, look, essentially, industrial demand is off the charts. I mean, how is Siemens benefiting from this that the likes of, say, Cisco is suffering from because Cisco can't get enough memory?
Yeah, so I was speaking to the CEO, Roland Busch of Siemens, about this. You can see the share price reaction there. So investors welcoming this news, and they have really benefited from shifting away from industries like the auto sector. They still see challenges there, to really focus on the data center, on the electrification story, on the design software story as well. They've been quite acquisitive in terms of buying design and industrial software companies. And I asked the CEO whether he's concerned about AI disruption in that space. He said absolutely not, because of the complexity of that kind of software. He thinks it's very, very defensible. But the key takeaway was that they are seeing this massive demand, huge backlog, in fact, for the build out of data centers. They have a lot of skin in the game on that front, and that really is driving momentum for Siemens, both on the software front, but also on providing that electrification for the data center growth. And he said the US market is looking very strong for Siemens.
We'll have to take a look at that Siemens interview once again. Tom, thank you so much. Great interview. Bloomberg's Tom McKenzie. And do tune in to Bloomberg Tech Europe with Tom as he takes a deep dive into quantum computing. That's this Friday. In Europe, Schroders surging in London as Nuveen set to buy the asset manager in a near $14 billion deal. Bloomberg spoke with Schroders CEO Richard Oldfield earlier.
What we are doing here is creating this powerhouse of asset and wealth active management. It's going to have an unparalleled breadth of public to private capabilities. And at 2.5 trillion, it gives us the firepower to actually invest in our business and make ourselves more relevant to clients.
Joining us now is Bloomberg Asset Management reporter Leo Kenscherper. So thanks for joining, Leo. What do these companies have in common, and what will be additive to the combination?
Good morning. Yes, so I think it's fair to say that these are two companies with strong legacies. So Schroders was founded more than 200 years ago, one of these big City of London institutions. And you also have Nuveen, which was founded in the 19th century. So the companies were really keen to tout that. Schroders' issue over the past 20 years has been that they haven't been able to build that scale in private markets that they really that they really needed to become a one-stop shop, for institutional investors. And this is where Nuveen comes in. Schroveen, as one of my editors has called them earlier, will have about 17% of combined AUM in private markets, and overall the group together will have 2.5 trillion in assets under management, and this, puts them in a position to rival players like Capital Group, for instance, which is the world's largest active-only manager.
Yeah, I mean, and it's a phenomenal premium for Schroders as well. Was Schroders undervalued, or what's the story? Why the 30% move up to the deal price?
Yes. Yes, exactly. So the share price hit an all-time high in 2021. That was the post-COVID liquidity, post-COVID boom. But since then, it's been down roughly 25%. And so this premium, I think 29% to yesterday's close, sort of reflects that. So it's not a, I wouldn't say it's a massive premium. It's just, you could argue, if you were on the board of Schroders or if you were a shareholder, maybe should have done this deal 4 years ago.
Yeah. Leo, what else should we be looking out for in terms of deals in that space? Any more huge ones potentially on the horizon?
Yes, so anyone you ask in financial services deal making will confirm that US asset managers are increasingly looking at European players and UK players in particular because they trade at a slightly larger discount. So now who's left here in the UK is Aberdeen. They still manage around 500 billion in assets, and there have been various rumors, at least over the past few years, about them. There's also Man Group, which is more of a hedge fund player. They're also London listed, and of course you've got slightly bigger players in Europe, DWS and Amundi. Similar size to Schroders, DWS in particular. But, of course, they are still very much digestible for a larger US player.
Yeah, absolutely. Fascinating space. Leo, thank you so much for joining today. That is Bloomberg's Leo Kencherper. Now to other top stories trending on the terminal this morning. The Republican-led House has passed legislation aimed at ending President Trump's levies on Canadian imports. The vote is the strongest political blow yet for the president's tariffs policies and signals growing anxiety over his economic agenda ahead of the midterm elections. President Trump is almost certain to veto any bill. The US and Japan are closing in on the first 3 projects to be funded by Tokyo's $550 billion investment vehicle. The projects are part of a bilateral trade deal, and sources say that 3 considered finalists in a review process are related to a data center, a deep-sea oil terminal in the Gulf of Mexico, and synthetic diamonds for semiconductors. And Morgan Stanley boosted CEO Ted Pick's pay to $45 million in 2025 after a record year. That's a 32% increase over the previous year, Pick's first at the helm. 3/4 of the bonus will be deferred over 3 years. Coming up, Hermès says strong sales were in line in the quarter, and it's all thanks to the Birkin bag. More on how the French bag maker remains one of luxury's most resilient players next. This is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersecci in Davos, Switzerland, and this is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. 24th, as affordability, immigration, and national security dominate the headlines leading into the midterms, President Trump will deliver his State of the Union address. Balance of Power will bring you live global coverage starting at 8 p.m. Eastern.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Shares of Hermes are rising after demand continues for its coveted Birkin bags. The French bag maker is one of the industry's most resilient players as it caters to the most exclusive clients. Joining us now is Deborah Aitken, senior analyst at Bloomberg Intelligence. So a fantastic quarter for Hermes, but it wasn't thanks to perfume or beauty or anything like that. It was really all thanks to the Birkin bag, Deborah. And my first question would be, is this because people are buying an investment? Or is it genuinely that they have dollars to spend on luxury items? Because they would be very different reads of the US and foreign consumer.
Hi, yeah, it's very much domestic driven, and it is by those individuals who generally own more than one of the product within the brand range. You know, and actually we've seen the Birkin bag, yes, still very strong. Other brands and styles strong too. But now leather goods is 45% of sales. It used to be 55%. So also for Hermes, there's quality within homewares, ready-to-wear, jewellery and others, which are also driving this growth. So we saw growth 1Q 7%, 4Q 10%, so some momentum building.
How is Hermes dealing with the global tariff environment and just this turn inwards on the part of many countries now? Can it, get the raw materials it needs, get the labour it needs and still keep those margins healthy?
So very vertically integrated, that's one of its core strengths, a major core strength. It's artisans, it takes on around 250 new artisans a year, it adds one production factory per year. And what it did last year, particularly for the US, we saw high single-digit pricing. Generally, across the board, it's 5 to 6% pricing, which they'll carry through into 2026 as well. And for it and why it stands out versus its peers, its premium valuation, is because that helps it absolutely to not only manage margin, but to grow margin. So we actually saw operating margin up over 100 bips, beating consensus very nicely. Gross margin up over 100 bips, beating consensus nicely, operating margin up as well, and carrying through what it did on the net on revenue to the EPS line, despite those tariffs, the extra surcharge on corporation tax in France, headwinds from currency and others. So that's a very solid set of results.
Hugely impressive performance. Deborah, what about L'Oreal? Because we get results from L'Oreal later. A little bit of a different consumer, but what should we expect?
Yeah. Again, momentum from 1Q through to 4Q. So the market generally is looking at just over 6% sales growth, like-for-like sales growth in the 4Q. We're hoping L'Oreal will come through and give market growth projection for the whole beauty market of around 4% this year, 4% plus, which would be a little bit better than 2025. 20 bips operating margin improvement, which is typical for their model, and that we're expecting to see Lux come back. All these companies have big exposure in Asia. China duty-free would still be a drag, but China domestic should be rebuilding. Luxury over there rebuilding. Derma globally rebuilding. And actually the biggest growth is set to come from around 7% from the US. Wow. So we're looking at them doing very well in premium in the US and holding their own in mass.
All right, Deborah. A nice quarter for some of these players. Thank you so much, Deborah Aitken of Bloomberg Intelligence. Coming up, AG Pam Bondi under fire over her handling of Epstein in a congressional hearing. More on that and what else is making headlines in your front page news next. This is Bloomberg.
operators like ourselves. And then the customers land up going to the black market, and the black market don't pay tax, do whatever, and there's no customer, there's no responsible gaming, and the fiscals of these governments don't collect any money. So it's finding a balance between overtaxing and then not regulating. Anything from 15 to 25% of the net gaming revenue.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Time now for your front page news. And first up, the Washington Post leading with Attorney General Pam Bondi defending her leadership of the Justice Department before House lawmakers. She testified before the Judiciary Committee, where she was pressed on her handling of the Epstein files and prosecution of President Trump's political foes. The Post says the hearing comes at a critical time for the Justice Department. Next up on the Wall Street Journal, the Pentagon has told a second aircraft carrier strike group to prepare to deploy to the Middle East. This as the US military readies for a potential attack on Iran if negotiations fail. US officials caution that President Trump hasn't yet given an official order to deploy the second carrier and that plans could change. And finally, the Financial Times reporting Microsoft is pursuing true self-sufficiency in AI by building its own powerful models and reducing its reliance on OpenAI. This according to an interview with Microsoft AI chief Mustafa Suleyman. Do stay tuned. We're going to be speaking with Priya Misra of JP Morgan Asset Management next.
The world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Bloomberg has learned that there are discussions around a potential all-cash offer for Warner's studio and streaming businesses.
For the past few years, we hadn't really seen any deals above $30 billion. And now we're seeing, Warner Brothers, $80 billion, the big railroad deal. And what we're hearing from sources is that next year we're going to see more of the same. It's just going to be the mega deal.
I would expect next year will be an even better year for M&A and IPOs.
That's just kind of what we do at Serena Ventures, is just kind of learn how we can fill in different gaps in different areas that are being missed. And by the way, these gaps tend to be really, really massive.
I know you've been very bullish on the return of M&A. Do you expect more deals, if they are of this size, to have the same sort of structure and contours?
I think we're
we're going to see the return of large transactions, and I think they're going to avail themselves of both private credit options and public options.
There's a lot of merger talk. There's a lot of firepower.
You know, investors wanted to know at what price would this deal be, and now they answered that question at $70 a share.
So congratulations to Bloomberg's Deals team for getting it first.
I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
It's 5:30 a.m. in New York City. Good morning. I'm Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Traders paring back rate cut bets following that payrolls report. Jobless claims up next. Stocks recovering from another AI scare trade, while Anthropic inches closer to a deal that would value it at $350 billion. And midterm anxieties rise for President Trump as the House passes a bill targeting his levies on Canadian imports. So let's look at those futures, all in the green after a flat day for the S&P 500 yesterday. The Nasdaq 100 was up just 1/3%. Those gains capped by the latest AI scare trade. It was real estate yesterday. We did have a good session in Asia overnight, though, setting the tone a little bit today as well. And of course, the payrolls report, which came in better than expected. Let's look at bonds because we have a bit of a flatter curve. 66 basis points now, the 2-10 spread, 350 on the front end, 479.81 on the back end. I do want to point to Yardeni Research today coining the whole AI trade AI-phoria or euphoria, but also admitting that it's taking no prisoners, and that's indeed what we're seeing in corners of the market. But does it all play out in a week? Or does it take longer than that? Well, we'll see. Let's get to some of those stocks, though, moving. Let's get to London and Abir Abu Omar. Abir.
Good morning, Vonnie. We're focusing on the winners and losers of the AI trade, starting with Cisco, which is not really having a good morning in the pre-trade, down almost 8%. Now, why is that? Their results were not terrible yesterday, but the stock is really hammered by this crunch in memory chips that is sending those prices soaring. But the CEO did come out and he said that although, you know, the memory chip crunch is weighing on the stock, it is set to benefit more, or it's set to do better than peers that are struggling with the same issue. Turning to another stock, Vonnie, that is doing incredibly well this morning, we turn to Fastly first. So Fastly is one of those stocks that are benefiting from the AI boom. Essentially, what the CEO has said is that as we turn into this year, 2026, Fastly is going to be one of those companies that is really benefiting from the tailwinds of AI. So we speak a lot about, you know, the macro picture when it comes to artificial intelligence and disruptions in different sectors. But Fastly is one of those winners of the AI trade. And finally, already trading Schroders, and Schroders was up more than 30% this morning. It's pared down some of those gains, but still massive increase in the stock, and that's on the back of some good M&A news. It's being acquired by Nuveen for a deal that is worth almost 10 billion pounds or $13.5 billion. So the stock is rising on that news to create one of the biggest active asset managers in the world. Vonnie.
Abir, thank you so much for that. Much appreciated, Abir Abu Omar. Investors are now looking ahead to jobless claims and CPI data after getting past yesterday's NFP report pretty unscathed. JP Morgan Asset Management's Priya Misra still concerned about the labour market, writing, quote, "We continue to characterise the job market as a low hire, low fire one, despite the higher than expected payrolls on Wednesday. Labour market's a bit fragile in terms of hiring trends and breadth." Priya joins us now. Priya, why are you still concerned about it when nobody else seems to be that concerned about it, including the Fed, which was before the holidays and seems to have forgotten about what might be fragility in the labour market?
Sure. So I think we've had a lot of data. There's, right from whether it's ISM employment that looked like it was sort of stabilizing. The Fed's already cut a lot. So I think the Fed is hoping that the labour market is stable. You know, we do think it's sort of stable, but it's stable at a low level. You look at whether it's household surveys, whether it's business surveys, hiring numbers are still weak. And then, yesterday's report was good, But when we look at that breadth of hiring, it's really education, it's healthcare. We're getting older. That's sort of a secular trend. It's not clear that we're sort of seeing this upswing or any sort of reacceleration. So in our view, we're in this low, higher, but I think we're one number away from, nervousness again. If you see initial claims pick up, if you see another challenger job survey picking up, I think the market will get nervous that if we're transitioning from a low, higher to a low, higher pickup in firing, I think then the market gets really nervous, because I think the market wants to move on to this broadening, this broadening out of the recovery, the fact that, maybe we're sort of reaccelerating with the tax refunds. And I think that then starts to become a question. So I would say we're stabilizing, but we're not reaccelerating.
Was there anything else, though, that gave you a little bit of hope in the report? So we saw wage growth, for example, and it came in better than expected. Now, is that because inflation is a problem and employers are forced to give these wage growth numbers, or is it just because the economy is healthy and they can?
So I think wages, again, average hourly earnings was picking up, but if you see ECI, or the employment cost index, which we got earlier in the week, that was actually weaker than expected. So I would again say we're getting like mixed data signals even on the wage front. Overall, though, and we're going to get CPI on Friday, so we're going to be looking at service inflation. Overall, our sense is, yes, inflation's above target, but a lot of those trends, whether you look at shelter inflation, ex-shelter service inflation, they are sort of heading lower. I think that's what will give comfort to the Fed. We do expect rate cuts later this year, and I think it's going to come from inflation. But I agree with you. If wages start to pick up, then maybe there's signs that the slack in the labor market's going away, that is getting tight again. The Fed's going to be watching that. So that was a sign of, maybe the slack being less, but I would say I'm not convinced that essentially wages are picking up.
If there is fragility under the surface and it just hasn't popped out in the data yet, then can we really wait till July for the first next rate cut?
I think the market's pricing in July because the market's looking at the inflation side. And it's going to take some time because we're going to get, some of that tariff-related inflation show up in the data. We don't expect CPI to get closer to 2.5%, until the second half of the year. So to your point, if the labor market stays okay, we stay in this low, higher, I think the market's okay with second half of the year rate cuts. If we see a rise in initial claims and we start to see a pickup in layoffs, I think then the market's going to price in sooner cuts. It feels like the market's somewhat on edge. With every data point, we're moving things around. But I would look at the 10-year, and that's where there was nervousness, whether it was Japan-driven, Sell America. Look at the 10-year. We've been in this very narrow range, 375 to 4.25 for a while. It tried to break out. I think the fundamentals of the economy don't argue for much higher rates. So, I think that range is fine. It's telling you that maybe we stay in this K-shaped, soft landing economy, and I think we don't need rate cuts for risk assets to do okay, as long as the labor market stays
So is this a potential scenario that plays out? Labor market fragility shows up little by little over the next few months as we get sort of on-time data. In the meantime, we get the process where Kevin Warsh is potentially the next Fed chair, and that's going to be in the second half of the year as well. And inflation doesn't rear its ugly head as much as maybe some had been thinking. And it all works out beautifully for 2 rate cuts in the second half of the year, and we're fine.
Great point. We do have a leadership change at the Fed, and we know that potentially, Kevin Warsh is going to talk about, potentially cutting rates some more in the front end. But I would argue he's got 1 vote at the committee. There are 12 voting members. He's going to have to get the committee on board. I think for more rate cuts, or even any rate cuts right now, he's going to need to see it in the data. I think the rest of the committee is going to want to see inflation heading closer to that 2%. I don't know if you're going to get to 2, but I think even 2.5 broad-based disinflation, I think can get the committee on board. I know Kevin Warsh has this productivity thesis, but productivity is one of the hardest data points to actually measure. It's a bit of a residual. I don't know if he's going to be able to get the committee on board to cut, but in the second half of the year, I think you can get those rate cuts. The market's really nervous about the balance sheet. I think he's going to have a harder time there to either convince the market that, the balance sheet can be shortened, reduced, or even getting the committee on board, because the committee is increasing the balance sheet. I think rightfully so. Banks require those reserves. The balance sheet's not growing because of, the Fed is trying to help asset prices. It's providing the reserves that is required for the plumbing of the banking system.
Priya, what's looking interesting to you across the bond universe? And I'm not just talking about treasuries or other sovereign debt. I'm also talking about, credit and so on. Is there anything that's looking, like it might be the time to jump in and get some of it for your core bond portfolio?
Great point, because we are seeing a lot of opportunities. So when the market's sort of edgy and there's a lot of supply, we've had a lot of credit supply. Overall, we've seen still continued inflows into high quality credit and dispersions picking up. So I think this is the time when you have to do the work, make sure you understand where are the companies with a good, free cash flow coming in, lower leverage ratios, and we're finding high quality credit, whether it's in the investment grade space, whether it's even, high yield. The double B, single B part of the high yield market, which has widened a little bit, we're finding value there. Securitized credit, another area. So I would say credit, as long as the recession risk feels low, which we still think, even if the labor market is fragile, we're not in recession territory. So that's the time when you want to own credit risk, you're picking up spreads over treasuries, and then we like the hedge of owning some duration, owning some curve steepness. It provides the hedge that if you get one data point that gets the market nervous about the economy, interest rates will work, even if spreads widen a little bit. So I think owning that diversified portfolio of high quality credit, some duration, I think that's how we're positioned, and we feel confident if the economy stays as we expect, we're okay, we pick up yield. And if not, we've got that diversification from treasuries.
Something for all eventualities. Priya, thank you so much. Always love having you in studio with us. That is Priya Misra of JP Morgan Asset Management. Now to other top stories trending on the terminal this morning. Nuveen buying Schroders in a $13.5 billion deal, creating one of the world's largest active asset managers with nearly $2.5 trillion in assets. The Schroders brand will be retained, and London will serve as the combined group's non-US headquarters and largest office. Sanofi shares are plunging after abruptly pushing out its chief executive. CEO Paul Hudson boosted research spending, which failed to deliver rapid results. Merck Group CEO Belén Garijo has been appointed as Hudson's successor. And the Waldorf Astoria on Manhattan's Park Avenue is coming up for sale following an extensive renovation. Sources say that real estate investment bank Eastdil Secured is expected to bring the hotel to market on behalf of its Chinese owners. The hotel reopened last year to wide acclaim and high room prices. Coming up, midterm anxiety grows. More on the latest rebuff to President Trump's economic agenda. This is Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
We have 2 crises, 2 essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked, and we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. The House has passed legislation aimed at ending President Trump's tariffs on Canadian imports, adding pressure to the Trump administration agenda just months ahead of the midterm elections. Joining us now is Bloomberg's David Gura. So, David, it is a rebuke, obviously, to President Trump's agenda, but does it go past this? It's never going to become law, right?
That's exactly right. So I think it's easy to say this is a symbolic victory here for Democrats, but they were able to pull over 6 Republicans to support this legislation that had been in the works for almost a year now. Gregory Meeks, the ranking member of the House Foreign Affairs Committee, introduced this law, pushing back on the national security justifications that the president has used here. And we've seen House Speaker Mike Johnson over and over again trying to make it so this legislation wouldn't get to the floor of the House of Representatives. It did, and you had these 6 Republicans crossing over. I think it's important to look at that as an indication that there are some Republicans, some of whom are close to the Canadian border, whose districts do a lot of business with Canada, who are pushing back on what the president has done here when it comes to trade policy. I think the broader takeaway here is the midterms are looming. There is growing dissatisfaction and anxiety among the American electorate about the state of the economy and where it's headed. There's some doubt about the president's trade policies, and you're seeing that kind of manifest in the way that this vote turned out yesterday. I should say also there's a bit of political geography at play here. Yes, this happened on Capitol Hill, right across the street at the Supreme Court. The justices there are weighing some of these same issues. Could the president do what he's done here, using national security grounds to justify the implementation of these tariffs? We are still waiting for a decision from the justices that could come in just a few days' time, Bonnie.
Yeah, exactly. Well, David, you make a good point. You know, it seems like maybe voters are prompting this to some extent because they're obviously pushing their representatives or expressing their feelings, and the representatives are then obviously passing that on. But at the same time, does it mean that President Trump might change his mind or do something differently on USMCA, or really dig in on an agenda he thinks works?
Yeah, Bloomberg reporting that the president is having doubts about the USMCA, which is up for renegotiation, maybe expressing thoughts among his inner circle that it's not something that he wants to continue going forward. Of course, that would be alarming to Canada and to Mexico as that process has begun in earnest with hearings and comment periods. Look, he's aware. His advisors are telling him that affordability is the issue that voters are caring about going into these midterm elections. And we have seen over the course of the last few months the difficulty with which the president's engaged with that issue in speeches and in interviews that he's done. He's doubted that affordability is an actual salient issue for a lot of voters. But we know, based on polling, based on sentiment data, it is something that voters really care about. Will it change his perspective on trade policy? I doubt it. We saw this threat from him on social media last night to any Republicans who dare cross him when it comes to the tariffs issue. But it is something that I think he's having to reckon with, the fact that this is something that voters very much care about, Bonnie.
He will have been very pleased with yesterday's non-farm payrolls report, a positive surprise. It also gives him some leeway when it comes to the immigration argument, potentially. David, is the administration making hay from these numbers?
They are. We saw the reaction to it. Again, I cite his social media posts. He was very happy with the jobs numbers yesterday, as you might expect, and certainly is with merit. These are much better numbers, of course, than Wall Street and others expected. But you look at that in the crucible of what he wants to happen policy-wise, and the person who you were just talking about, Kevin Warsh, nominated to be the next Federal Reserve Chair, talking about cutting rates. All of that greatly complicated by the fact that we have this good number, this good job number yesterday, and we're looking ahead to the new inflation numbers later this week. Yes, there still remains this expectation for 2 cuts this year. How that could change, though, based on the quality of the data, the goodness of the data, to coin a term, I think is something that he's having to sort of navigate as well.
David, thank you so much. That is Bloomberg's David Gura there. Turning to the latest in AI, Anthropic's funding round, the most recent one, close to raising more than $20 billion with backers, including Peter Thiel's Founders Fund and D.E. Shaw. The deal would value the startup at about $350 billion. Joining us now is Bloomberg's Neil Campling. Neil, I mean, with every funding round, obviously, its valuation goes up, but are we hearing echoes of the old VC times when, you know, anybody would fund anything just to be involved in the exit?
It's an interesting question that you pose. I think what it is these funding rounds we're seeing are for some of the biggest AI models that are out there. So often they are the same backers for these particular technologies, and really it's betting that you're going to make more returns from betting on a number of these systems by choosing sort of one or two or three winners. And I think interesting here is that a lot of the OpenAI investors, and we see Microsoft, Nvidia talked about in the articles as well as being investors, have also invested in OpenAI. So it's not just purely on betting everything on one system. There's a number of winners that will emerge clearly from this particular AI trade.
You know, we're talking about companies that have a certain number of products, right? We're talking about ChatGPT, we're talking about Claude. I mean, if you take the pharma industry, for example, they have to come out with a drug and then they have to keep coming out with more drugs or their share prices plummet. We are seeing that, regularly. Are these companies going to have to prove themselves? Is there too much betting on just, one or two products?
I think what we are actually doing now is moving on from the original AI 1.0, if you like. We move from the large language models now into the AI, the agentic AI, the AI agents, where you are training for specific purposes. You're seeing this in what happened with software last week, when people realized that there are solutions you can create for certain areas, whether it's the wealth managers or whether it's other pockets of the market. So you have to provide not just a broad spread, but clearly with these different models, you require a very specific solution to a specific problem. And they are now much cleverer in terms of the predictability than we had from some of what they call the hallucinations, the errors these models presented even just a year ago. That the technology has come on immensely. But certainly, as with every single technology wave, two things are certain in terms of technology is in effect deflationary, which is a positive thing. And the second thing is that there are a handful of winners in every tech cycle. But there are also many victims that come about from this.
Neil, Anthropic has a revenue run rate of $9 billion, right? It's not nothing, but at the same time, will it be kind of rushing to the IPO exit in order to give some of these investors an exit, just in case something happens and the world stops believing in the AI train?
It's a great question. It'll be interesting to see, you would normally expect a larger scale in terms of the revenue run rate before you're coming public. And if they are investing at these kind of rounds currently, I suspect because of the appetite for this deal, this particular one is a who's list of potential investors. So it suggests perhaps that they've got no problem in funding. So while there is no problem in funding, there's no need to rush to the market. There's no need for them to be scrutinized as a public company, which is a different level of scrutiny than you get being in a private market. So I wouldn't expect an IPO anytime soon for Anthropic.
Fascinating. Neil, we had real estate services stocks sinking in the latest AI scare trade, waking up every day now just wondering what's going to be next. But it's spread. It's not just the United States. Europe is also now in the crosshairs.
Yeah, absolutely. And we're seeing this. We saw this yesterday, as you mentioned. CBRE is a good example, was hit double digits yesterday. Now, what's different in this particular example is it wasn't because of a new agentic AI that was launched. It was just fear that there could be one launched. So we're now getting to the realms of not just the release of an agentic that's then impacting stocks. We're now predicting where we might see the next one and the disruption that could take place in the future. It's an interesting point is that CBRE itself is due to have earnings in about an hour's time. And clearly they're not going to have seen an impact yet in those numbers, but you can guarantee the analysts are going to question them on the call as to what they perceive the risks to be long-term from the risks and opportunities of AI.
Absolutely, yeah, there'll be a lot of preparation going on for that call, to say the least. Looking forward to it. Neil, thank you so much. That is Bloomberg's Neil Campling. Coming up, we're going to get you set up for your trading day with more earnings and economic data on deck. This is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Now a look at what's ahead today. First up, initial jobless claims, 8:30 Eastern, followed by existing home sales at 10. Earnings after the market closed from Applied Materials, Airbnb and DraftKings in focus. And more Fed speak. We'll have Governor Stephen Miron and Dallas Fed President Lori Logan at 7 p.m. Eastern. Some of the pre-market movers, Cisco extending its post-earnings decline after that tepid margin forecast. Memory chip pricing a problem there. AppLovin, it's the fourth worst performer in the Nasdaq this year, even though it beat in results and its outlook, being hit by AI disruption concerns once again today. And Rollins down 14%, revenue missed estimates there. It's been caught as well at Wells Fargo. Price target at Wells Fargo is exactly here, 56. Let's take a look at the macro picture before we head into our Thursday trading session. Futures pointed higher, a little bit of relief potentially today, tiny bit of weight to the dollar index, and your 10-year yield really going nowhere below 4.17. That's it for Bloomberg Brief. Surveillance is ahead. This is Bloomberg.
tariffs, I think, are probably the first time in my
गाइस ये नेचुरल गैस का ध्यान रखना, इसमें ये सेलिंग वाले ट्रेड में सेल एसएल जा सकता है, ठीक है। एसएल बिल्कुल टाइट रखना, एग्जैक्टली लेवल पे ओपन इक्वल टू लो कैंडल बनी है। पॉसिबिलिटी है कि प्राइस एसएल पहले उड़ाए, ऊपर की ओर जाए और फिर सेलिंग में आए। एसएल जाएगा तो होल्ड मत करना। मॉर्निंग से काफ़ी देर से रुका हुआ है, ऑलमोस्ट 4:30 होने वाला है, तो देयर इज अ वेरी हाई चांसेस कि प्राइस ब्रेकआउट ही करेगा। बाकी कोई फ्रेश एंट्री मत करना। अब यहाँ पे ये कैंडल ही ओपन इक्वल टू लो है, तो इस पे वैसे भी सेल नहीं करते, ओपन इक्वल टू लो पे डायरेक्टली सेल नहीं करते। क्रूड ऑयल में एक बाइंग ट्रेड यहाँ से बना है, ठीक है। यहाँ पर एक एरिया ऑफ इंटरेस्ट था, लोअर एंड पे इंटरनल लिक्विडिटी जोन भी है, तो दोनों को मिला के ही ये लेवल बनाया हुआ है। देखते हैं नेचुरल गैस में वापस से, मुझे लग रहा है शायद ये कैंडल क्लोज ऊपर ही होगी। 32 सेकेंड्स बचे हैं, ओपन इक्वल टू लो कैंडल बनती है तो देयर इज अ वेरी हाई चांसेस कि प्राइस फिर पुल बैक में भी अगर आता है तो भी ज़्यादा मोमेंटम दे नहीं पाएगा। ये कैंडल भी ओपन इक्वल टू लो है, दिस कैंडल आल्सो ओपन इक्वल टू लो। पर ये पॉइंट ऑफ इंटरेस्ट थोड़ा सा अब स्ट्रॉन्ग बन गया है। 5980 से 6020 के बीच में जो लेवल है, दिस पॉइंट ऑफ इंटरेस्ट नाउ एक्ट लाइक एज स्ट्रॉन्ग। ये वापस कल वाली रेंज में ही आ गया है, ठीक है। कंसोलिडेशन की रेंज में ही लग रहा है अभी भी। वापस थोड़ा सा बुलिश होना है तो 6020 ऊपर पॉइंट ऑफ इंटरेस्ट के ऊपर निकलना पड़ेगा। लिक्विडिटी है, कितना लेता है लिक्विडिटी, नीड टू सी इंट्राडे में। दोबारा एंट्री मत करना नेचुरल गैस में, भले ही पुल बैक क्यों ना आ जाए। मुझे लग रहा है शायद थोड़ा सा अब यहाँ पर इतनी लिक्विडिटी बची नहीं सेल साइड की। अगर इस ट्रेड में से ये करंट कैंडल ओपन इक्वल टू लो बनी थी नेचुरल गैस में, रिट्राट हो चुकी है। ओपन इक्वल टू लो इज नाउ टेकन आउट। प्रीवियस कैंडल का अभी भी ओपन इक्वल टू लो है। इस कैंडल में से इस ट्रेड में से अगर कोई अभी है सेलिंग वाले ट्रेड में, अगर निकलना चाहो तो निकल सकते हो इसमें से कॉस्ट टू कॉस्ट पे। फ्रेश एंट्री मत करना मेरे अकॉर्डिंग अब, ठीक है। कोई अगर है सेलिंग में, अगर निकलना चाह रहा है तो एग्जिट कर सकता है सेलिंग वाले ट्रेड से कॉस्ट टू कॉस्ट में, नहीं तो इससे बड़ा एसएल मत रखना। मोस्ट प्रॉब्ली ये एसएल लेके ही जाएगा शायद। फिर थोड़ा सा मुझे लग रहा है यहाँ पर कोशिश कर सकते हैं। ठीक है, थोड़ी पॉसिबिलिटी है यहाँ पर थोड़ा सा वॉलेटाइल हो सकता है नेचुरल गैस। ये 296 का लेवल ही ऐसा बन गया है। थोड़ा सा हायर टाइम फ्रेम पे देखोगे, 1 आवर और 30 मिनट टाइम फ्रेम पे, यहाँ पर एक लो बना है, फिर लोअर लो फाइट हुई है। दो चीज़ कर सकते हैं नेचुरल गैस में वापस, थोड़ा सा या तो अगर इस लेवल पे रुकना है तो या तो थोड़ा एसएल बढ़ाना पड़ेगा, या फिर इस लेवल को थोड़ा सा और अपर लेवल पे शिफ्ट करना पड़ेगा। तीसरा कोई ऑप्शन दिखता नहीं है यहाँ पर अब फिलहाल के लिए। मैं बुलिश नहीं हूँ अभी भी नेचुरल गैस में, ठीक है। आई एम स्टिल बेरिस, मैं अभी भी थोड़ा बहुत बेरिस ही बना हुआ हूँ। यहाँ पर प्रॉब्लम आएगी सिर्फ कि प्राइस किस तरह से बिहेव करता है इस 296 के लेवल पे। पर मेन प्रॉब्लम एसएल की है कि एसएल कहाँ पर रखेंगे, ठीक है। तो थोड़ा सा लेवल कह सकते हो आप, लेवल का एसएल या तो शिफ्ट करना पड़ेगा इस पूरे जोन के लिए। दूसरा कोई ऑप्शन शो नहीं हो रहा है यहाँ पे। यहाँ पर अगर कोई है सेलिंग में क्रूड ऑयल सॉरी नेचुरल गैस के सेलिंग ट्रेड में, कॉस्ट टू कॉस्ट पर ही है, निकल जाओ। फ्रेश एंट्री मत करना, थोड़ा सा ऊपर आएगा फिर देखते हैं फ्रेश एंट्री एक और। आई एम स्टिल थोड़ा बहुत तो मैं बेरिस ही हूँ अभी भी गैस में। सो कोई निकलना चाहे यहाँ से निकल जाए, मैं फ्रेश एंट्री फिर से बना रहा हूँ। यहाँ पर कॉस्ट टू कॉस्ट पर निकल जाना, फिर रिपीट कर रहा हूँ अगर कोई है, ठीक है। नहीं तो एसएल इसी ट्रेड में बने रहोगे तो एसएल थोड़ा सा डबल करना पड़ेगा 6 पॉइंट का, विच इज़ टू हाई। लॉजिक नहीं बनता, इतना टारगेट नहीं है हमारे पास। बाकी एक फ्रेश एंट्री यहाँ से फिर से बनाएंगे। तो ना प्रॉब्लम क्या आएगी अगर थोड़ा सा हम अपर साइड की ओर भी जाते हैं लिक्विडिटी लेने के लिए नेचुरल गैस में, एसएल कहाँ पर रखेंगे, दैट इज़ अ कंसर्न। क्योंकि यहाँ पर मार्केट ने वो गैप डाउन दिया था, दैट इज़ अ ह्यूज गैप डाउन। उस कैंडल के ऊपर नहीं जा सकते एसएल रखने के लिए, दैट इज़ टू मच। तो यहाँ पर एसएल कैंडल वाइज ही रखेंगे। अगर एक के ऊपर एक दो कैंडल क्लोज होती है तो ब्रेकआउट कंसिडर करेंगे। वैसे नीचे टारगेट भी नहीं है अब, डे लो सपोर्ट की तरह काम करेगा नेचुरल गैस में, ठीक है। तो यहाँ पर एसएल का ध्यान रखना, एसएल डिसाइड करेंगे बेस्ड ऑन द कैंडल क्लोजिंग। एक के ऊपर एक कैंडल क्लोज होती है तो निकल जाएंगे, अगर एक के ऊपर एक दो कैंडल क्लोज नहीं होती हैं तो इट कंसिडर एट अ रेजिस्टेंस, ठीक है। बाकी नीचे डे लो ही है, अगर मार्केट को जाना है थोड़ा सा डाउन साइड पे तो डे लो के नीचे डे लो के नीचे ब्रेक डाउन करना ज़रूरी है। डे लो के नीचे अगर एक के नीचे एक कैंडल क्लोज करती है तो फिर हम थोड़ा सा टारगेट देख सकते हैं डाउन साइड पे। सेम सिनेरियो, अप्रोक्सीमेटली 289 का लेवल है डाउन साइड पे। 289 के नीचे ब्रेक डाउन होता है एक के नीचे एक कैंडल क्लोज तो बड़ा टारगेट मिलेगा। नहीं तो यहाँ पर लॉजिकली और कोई एसएल बना नहीं सकते, ठीक है। वैसे एसएल रखने जाएंगे अगर कैंडल वाइज तो फिर वो सीधा जिस कैंडल ने गैप डाउन किया था उससे पहले वाली जो कैंडल थी 315 पे रखना पड़ेगा। 315 क्या लॉजिक है इसमें, कोई लॉजिक ही नहीं बनेगा मैं यहाँ एसएल रखूँ, इतना टारगेट ही नहीं है। सो कैंडल वाइज एसएल रहेगा, इसमें ध्यान रखना। एक के ऊपर एक कैंडल क्लोज होती है तो ब्रेकआउट। साइड पे जाने के लिए डे लो के नीचे डे लो के नीचे रहेगा इंपॉर्टेंट लेवल। अगर डे लो के नीचे एक के नीचे एक कैंडल क्लोज करेगा तभी इसको थोड़ा सा बेरिस मानेंगे, ठीक है। ऐसा ध्यान रखना, कोई फिक्स नहीं है नेचुरल गैस में सेलिंग वाले ट्रेड का, डिपेंड ऑन द कैंडल। एक के ऊपर एक दो कैंडल क्लोज एग्जिट कंटिन्यूएशन में, ऐसा नहीं होता है तो तब तक ये लेवल रहेगा एज अ रेजिस्टेंस स्टिल। यहाँ पर लग रही है ना एक हाई लिक्विडिटी मिल सकती है। यहाँ पर देखोगे प्राइस एक्शन हायर टाइम फ्रेम पे बेरिस ही है। कैंडल क्या फिर से ओपन इक्वल टू लो है क्या नेचुरल गैस में? कैंडल ओपन इक्वल टू लो बनाई है नेचुरल गैस।
Talking to individuals last night who said actually they feel that the country has been more stable in the past few years than many would have potentially remembered decades ago when they decided to leave the country. Now, if you are a company like Chevron, and today we will be going to visit Chevron PDVSA joint venture oil fields with Secretary Wright, potentially even interim President Delcy Rodriguez will be joining us. If you're already on the ground, you're going to be the ones that are able to quickly ramp up, say, production or put more investment into this country. When it comes to the businesses that are on the sidelines right now, and I'm talking to individuals from the embassy that are trying to restart the embassy here, who, by the way, the embassy actually has mold in it because it was left after 2019, they're getting a tremendous amount of outreach, they say, from everyone in the United States, from C-suite America, from Washington, D.C., that want to be the first ones on the ground. Being the first ones on the ground, coming here and seeing what the situation is, though, is very different from making a massive capital investment. And that is really the question lies for the future of this country and how much business and capital and financial interest it can draw.
Anne-Marie, fantastic work, and looking forward to your conversation with the Energy Secretary, Chris Wright, a little bit later on today. That's coming up on Bloomberg TV and on Bloomberg Radio. Anne-Marie on the ground in Caracas, Venezuela, after some big changes in that country over the past month or so.
The idea that suddenly the leader, Maduro, could just be plucked out, brought to the United States, and make it work because suddenly this is going to be a very different country. Interesting, Delcy Rodriguez and her role in all of this, considering that she worked for Nicolas Maduro and actually was part of that administration, how much she actually is welcoming the U.S. to come in with some of the oil majors.
I'm not sure she's got a choice.
Well, that's
at the
correct.
moment. Yeah.
But how much is she actually full throttle ahead and how much she can get popular support online, that's going to be really interesting.
Should we talk to Goldman about buying stocks in Venezuela?
I think that's obvious,
not what Goldman wants to do.
An obvious transition.
Let's talk about European equities climbing to fresh record highs. The stock 600 outperforming the S&P 500 so far this year. Sharon Bell of Goldman Sachs writing, the search for insulation from AI disruption risk has accelerated the ongoing cyclical rally in the US. We continue to see rising allocations to Europe as a diversifier with reasonable valuation. Sharon joins us now for more. Sharon, welcome to the programme. Let's just build on what you've just written there. The idea that Europeans are starting to look at home again. Are Americans looking abroad? Are they participating in this?
I think it's both. In fact, I would say it's more American investors, US dollar-based investors, that are worried that the US market looks expensive. They're very concentrated in their positions in the US dollar. You've got 4 or 5 companies which are all big bets on one thing, AI. So that may pay off, but you don't know. And it just leaves you with some risk. So people wanting to diversify, including US investors, but domestic investors too. Both have been buying Europe this year.
Sharon, apart from just being European, what is the diversification in Europe? What does it offer?
Yeah, offers very different sector exposure, I would say. I mean, there is a tech sector, obviously, in Europe, but it's much smaller than the sector in the US. You don't have the large hyperscalers, not spending as much in the way that the hyperscalers are in the US. So very different from a tech sector perspective. But also, and I think this is more important, Europe offers things like much more exposure to, as a share of the index, to commodity-related areas, materials, industrials, financials, which have all in the last year performed very well.
Yeah, I'm thinking about Glencore, for example, or Shell, or some of the big banks that have also done pretty well in the region. I just am curious, though, if someone is looking internationally and they're not from Europe, why not go to Asia? What is the draw to Europe that has better exposures that's going to somehow outperform at a time when there's a real kind of question around how much they can break out from some of the crosswinds coming from both the U.S. and China?
Absolutely, and I agree with that. Our philosophy has been you want to broaden your exposure and diversify, not just into Europe, but into Asia, into emerging markets. We've just upped our emerging market targets, for example. So, and actually, Asia and emerging markets have seen better earnings performance this year and have performed extremely well, better than Europe and the US stock market. So I think there's plenty of opportunity globally to diversify, including Europe, as part of that as well. But I do agree there are headwinds for Europe. I mean, economic growth is slower in Europe than elsewhere, although it's still positive and it's been boosted, obviously, by the fiscal spend in Germany. But yes, there are headwinds, such as China competition, although I do think European policymakers are starting to acknowledge this now.
You know, we're talking about the motivation, and we talk about the Sell America trade, which has become cliche. It feels like a little bit different than that, and that's the reason why we keep going back to this George Saravelos of Deutsche Bank note, where he's talking about the loss of safe haven status for the dollar, not necessarily in the sense that it's going to go to zero, but you're not getting the same diversification feature in terms of the dollar outperforming when risk assets sell off. How much do you see that as a driver? Not just people wanting to look home or some of the emotions of the moment.
Yeah, I think it's definitely that there's often when you see a change in trend, there isn't one single driver of it. There's several drivers. I think we talked about the diversification sector exposure. I mentioned valuation differences, but I also think concern about having all your exposure in dollars and wanting to diversify that is also another element of this. And the euro, sterling, Swiss franc provides different currency exposure as well. So I think there's many elements to this desire for global investors to diversify and broaden out their exposures.
There's a lot of anticipation about how much money is going to be spent on AI and the beneficiaries of that, Sharon, as you know. It's a big thing for the year ahead as well, with $650 billion of capex coming from just 4 companies, which is just absolutely absurd. People are thinking about the miners, Sharon, in a much bigger way. And when I think about miners, I think about the FTSE and some of the listings for UK equities. Are you seeing that generate some bigger returns for large cap UK?
Absolutely. FTSE 100 has done extremely well this year. Index targets have generally been raised. I think, in honesty, it's an index which has been ignored for 10 or 15 years by global investors and domestic UK investors. Doesn't really have very much tech exposure. It's got a very different type of exposure, but that's actually doing quite well at the moment. It's also an index which looks relatively inexpensive. So the UK market still trades at 13.5 times PE, which is not quite half what the S&P trades on, but not far off.
Sharon Bell of Goldman Sachs. Sharon, appreciate the insight and the different character coming from European equities on offer for people looking to diversify. Guy Johnson would often call UK equities Jurassic Park. Now, that used to be a bad thing, and now it's a good thing, because that's what people want to buy into.
Honestly, Jurassic Park has shown the stability of time, right? It has proven the test of time in that we still go and talk about Jurassic Park. And guess what? Those dinosaur bones and bodies created oil that we're now using for financing all of our AI. So look, we're looking at all of this, and it's sort of what's old is new again. And we have to invest in real things, because if it's on a computer, there is a high likelihood it will be disrupted, and that scares people.
Futures right now positive by 0.3%. Let's get you an update on stories worldwide with your Bloomberg Brief. Here's Vonnie Quinn. Hey, Vonnie.
Hey, John. McDonald's U.S. growth hitting a 2-year high. The fast food chain reporting fourth quarter earnings and revenue that beat estimates. A focus on affordability, helping to boost traffic as diners spend more per visit. McDonald's is planning to introduce new beverages this year, including refreshers, energy beverages, and crafted sodas. The U.S. and Japan are closing in on the first 3 projects funded by Tokyo's $550 billion investment package as part of a bilateral trade deal. Sources telling us here at Bloomberg all 3 projects are related to a data center infrastructure project led by SoftBank. Discussions between U.S. Commerce Secretary Howard Lutnick and Japan's trade minister aim to finalize details this week. Morgan Stanley CEO Ted Pick getting a big raise. The company boosting his pay by 32% to $45 million for 2025 after a record year for the company. Morgan Stanley shares surged more than 40% last year, far surpassing the strength of the S&P 500. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Thank you for the update. Up next on the programme, President Trump defending his agenda.
Tariffs are bringing us hundreds of billions of dollars. Without tariffs, this country would be in such trouble, as they were for many years. Every prediction the critics made about our tariff policy has failed to materialize.
Some pushback on Capitol Hill. We'll catch up with the Republican Congressman French Hill next from New York City. You're watching Bloomberg TV.
Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, but I'll still be driving some.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Stocks are up by 0.3% on the S&P, on the Nasdaq up by 0.23, on the Russell. Outperformance on the small caps up by 0.58. If we switch at the board and get to the bond market, repricing at the front end of the curve, 2-year yields higher, following stronger than expected payrolls numbers yesterday. The 2-year this morning at 350.57. Some commentary from Wall Street, from Bank of America. That jobs report vindicates our view that the Fed won't cut under Powell. BNP Paribas and Andrew Husby going even further. We think the Fed will be cautious on delivering further rate cuts, quote, which aligns with our base case of no cuts through 2027. That's the call from BNP.
Which is essentially validating what we heard from Torsten Slok, because no cuts for the entirety of 2026 would mean that you're continually kicking the can down the road of potential rate cuts. I just wonder about the Morgan Stanleys and the Citigroups of the world that are reiterating their calls for 3 rate cuts this year on less inflation. How high is that bar for inflation to come down now in order for the Fed to make a move?
Kevin Walsh will be under pressure, won't he? 18 months into the job, no rate cuts?
I think he's already under pressure. He hasn't even gotten the job. So you've got a good point there.
Let's head down to Washington. Under surveillance this morning, President Trump defending his agenda.
We're getting rich because of tariffs, by the way. I hope everyone understands that. Tariffs are bringing us hundreds of billions of dollars. Without tariffs, this country would be in such trouble, as they were for many years. Every prediction the critics made about our tariff policy has failed to materialize. 78% reduction in our trade deficit, and next year we're going to be positive if we keep it all going.
So here's the latest this morning. The president threatening House Republicans taking a stand against his tariff agenda. The president posting on Truth Social, there will be consequences after 6 GOP lawmakers crossed party lines to rebuke the president's levies on Canada. The Republican Congressman French Hill voting against the measure to override President Trump's tariffs, and he joins us now for more. Congressman Hill, welcome to the program, sir. Your reaction to what happened on the Hill yesterday and why you voted the way you did?
Well, good morning, Jonathan. Look, I think we should handle the tariff discussion in a more comprehensive way and not take votes every week on the floor that turns the House floor over to the Democratic Party. That's why I believe that standing with Speaker Mike Johnson on this maintains Republican control of the floor. So this is a very important strategic issue in a parliamentary body like Congress with a very narrow majority. What we should be doing about trade is urging the president to renew USMCA with Canada and Mexico, which is under review for its 5-year review this summer. It's a very important trade arrangement for the 3 countries. progress is being made in working with the Canadians and the Mexicans. So that's number one. It's not to be connected, in my judgment, to the vote last night, which is, did the president have the right to put tariffs on Canada under IEEPA because of the fentanyl matter? You get my point. Let's stick with the big picture here, which is growing America's exports, growing America's influence, using tariffs as a tool to change trade behavior of other nations. Number one on that list, of course, is China.
Congressman, you mentioned USMCA. Our team down in Washington, I'm sure you're familiar with the work of Josh Wingrove, wrote just yesterday that the president is privately musing about exiting the North American Trade Pact, that according to people familiar with the matter. When you read a story like that, do you just consider that part of the negotiation for the upcoming negotiations, or does that concern you?
Yeah. No, I do, because of the way President Trump is responsible for dramatically improving the North American Free Trade Agreement from the 1992-1993 timeframe in creating USMCA in his first term, and it worked quite well. But there's more to be done on Canadians on dairy, or Canadians on softwood lumber, or how the automotive business works back and forth between the two countries, or now the role of IT. We live in an ever-changing economy with ever-changing priorities, but let's face the reality that 30% of GDP in my home state of Arkansas is connected to cross-border trade with Mexico and Canada. So the agreement is important, and it's also important for you to note in that comment that President Trump has, does not impose additional tariffs on USMCA compliant goods. So we are living by the agreement.
Congressman, there's a trade-off here, and I think a lot of people would be sympathetic with the idea of trying to get certain trade partners to change behaviors, and thinking particularly of China. On the other hand, there's a real affordability crisis, and this is a real issue for a whole host of representatives who are coming up for election later this year. I just wonder how much influence you think that Republicans on the Hill have over President Trump's negotiations around tariffs to potentially either abstain from putting additional ones on or rolling some of the existing ones back.
Well, what you've seen him do is fine-tune the efforts with individual countries or regions like the EU, UK, Japan, for example. I want to see the consolidate the wins from those agreements that he's done over this first year in the first place. Secondly, you've seen him roll back some tariffs on commodities that we don't make here in the United States, but we need to use, whether it's a fruit or vegetable or a coffee, for example. And I think that makes sense. You don't want to burden the consumer as you're attempting to change trade policies in other countries, or compel them to follow Americans' lead on something like transnational drug cartel, countering those drug cartels. But on the affordability side, Lisa, I think the most important thing we can do is stay focused on the supply side. The One Big Beautiful Bill last year, signed into law by President Trump, will see real wage increases this year for American families. In Arkansas, we expect some $10,000 in benefit to a family of four from the increased child tax credit, the lower taxes on tips, the use of the standard deduction, lower taxes on seniors' Social Security. Yeah. So on that supply side, combined with what we're doing on regulations and the proposal I made for housing in the 21st Century Housing Act, we got 390 votes on the House floor for that this week.
I personally would like to boost consumption by taking a flight to a number of places in the next week, and I'm just wondering if TSA is going to be in operation. Is the government going to shut down tomorrow night, Congressman?
Oh, Lisa, I hope not. Look, it was so hard on my TSA agents in Little Rock and up in the tower at Little Rock National Airport, the air traffic controllers. That was a bad 42 days. That's not how to run the government. President Trump has used Tom Homan as a leader to consolidate both ICE and CBP operations in Minneapolis, bring transparency to the operation, streamline it, make sure the training is in place, make sure the operation is consistent with federal law. They're using body cams. Let's take that as the right direction and keep our government funded in Homeland Security. So important to so many people.
Congressman, it just feels messy down in Washington, but you pointed out the Housing for the 21st Century Act. We can get things done. We can find support on both sides. Congressman, what was actually achieved down in Washington, and how important is that to you?
Well, it's very important. You know, Jonathan, on the priorities I've had to have conservative center-right policy on redirecting regulation and policy for people's investment opportunities, more crowdfunding, more public offerings, community banking, making community banking great again by lowering the regulatory burden on small banks that make 60% of the home loans in this country. And now 21st Century Housing, we got 300 votes for those policies, as we did for our digital assets and crypto work last year. That shows that Republicans and Democrats, when it comes to economic policy, can get on the same page and pass legislation that President Trump should sign into law that will make people's lives better. Costs will be brought down, supply side capital will advance, and community banking will thrive in this country. And those are all good things.
Final question, Congressman. I've got about 20 seconds. Are you happy you don't have to chair the House Judiciary Committee? Because that was wild yesterday.
Well, I had a pretty wild hearing last week with my ranking member and Mr. Besant's testimony. So I know wild, but it was. But that's what happens on Capitol Hill. We bring the public and their elected representatives together to try to find solutions, and it can get spicy sometimes.
Congressman, appreciate your time. Thank you, sir. Congressman French Hill, thank you, sir, down in Washington, D.C. Serious topic yesterday in front of that committee, and things got very rowdy very quickly.
Well, this seems to be a theme, because you're right. They had the Scott Bessent hearing in the prior week, and it was just as spicy. There's a lot of animosity, and there's a lot of anger, and you could feel that emotion down in Washington, D.C.
Without a doubt. Coming up on the programme, we'll catch up with Kristen Bidley of Citi, Monica Guerra of Morgan Stanley, David Tinsley of Bank of America, Steve Rasciuto of Mizuho. The second hour of Bloomberg Surveillance up next.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Some people would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And, you know, we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns. And a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot. Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
If the data continues like we see, we're not going to get to that rate cut.
The Fed probably won't see the need to do too much more.
The bigger issues are the macroeconomic conditions of the consumer.
Rate cuts, if and when they come, will be based on inflation.
The data will lead the Federal Reserve.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now. Your scores look like this. Equity futures on the S&P 500 firmer by 0.33%. On the Nasdaq up by 0.3. Outperformance on the Russell up by 0.6. That outperformance yesterday didn't hold. It didn't stick. The Russell actually ended the session lower, even with stronger than expected payrolls data. Bond yields at the front end repricing higher, pushing out Fed rate cuts. Twos above 350. Yields just about unchanged on the session. Going into this, 90 minutes away. 8:30 Eastern Time. Another read on the labour market. Jobless claims in focus.
It might take on a little bit more import simply because it was inconclusive yesterday. Yes, the headline number came in better than expected, blew away expectations, 130,000. At the same time, under the hood, downward revisions. Also, you've got some seasonal effects, and people poked holes, not in that this was a good number. This was a good number, but in that it showed a reacceleration in the U.S. economy that was required to get the likes of small caps reignited.
And the hawks are starting to feel good.
Exactly.
After questioning their stance at the back end of last week, they're feeling good. The Cleveland Fed President Beth Hammack this week, based on my forecast, we could be on hold for quite some time. Over in Kansas, President Jeff Schmidt, further rate cuts, risk allowing high inflation to persist even longer.
Which is the reason why you've got a number of Wall Street firms saying forget about it for any kind of rate cut in 2026. Others, whether it's Morgan Stanley or whether it's Citigroup, talking about a potential for 3 rate cuts this year. How much are those rate cuts necessary for some of the more cyclical areas to get reignited? Ultimately, it depends on what the data show and how much can we really say that a Kevin Warsh Fed is not going to cut rates. And that is a political discussion that a lot of people will say has been answered for us.
So I have exactly the same response to all of this. When BNP Paribas come out and say no rate cuts through 2027, that is no longer just an economic assessment. You're making an assessment about a new Fed chair selected by the president almost exclusively to cut interest rates. And you're making the forecast that in their first 18 months on the job, they won't reduce interest rates?
This goes to the question of how much control they have and whether they can influence a Fed committee to cut rates if the data shows a good degree of growth. What that forecast sets up to me is a massive battle and a tirade going on Truth Social about what potentially should be happening at the Federal Reserve. So ultimately, there's going to be conflict one way or another. Ultimately, it comes down to what the data shows in terms of understanding just what momentum there is in the U.S. economy.
2 Fed hawks already digging in. And you can see that based on the recent Fed speak. Coming up this hour, we'll catch up with Kristen Bidley of Citi Wealth as equities inch higher. Monica Guerra of Morgan Stanley as President Trump's Canada tariffs hit a snag in the House. And Steve Rasciuto of Mizuho as investors await fresh labour and inflation data. We begin this hour with stocks holding near all-time highs following a choppy 24 hours. Kristen Bidley of Citi Wealth writing bifurcation will continue within software and the broader market, highlighting the need for diversification. Kristen joins us now for more. Chris, good morning.
Good morning.
Let's talk about that bifurcation. At the start of the year was software versus hardware, and that's been going on for a number of months.
A number of months.
Have things got a little bit more complicated?
I think in a good way, actually. I think things have gotten more complicated where it's no longer we're just going to take at face value the AI trade and everything's going to grind higher. I think this bifurcation of saying, OK, let's look at earnings, let's look at the CapEx spend, and we're going to delineate between those who are actually seeing an ROI on that expenditure and those who are just spending money. If you don't see the ROI, investors are getting less patient, and I think that's healthy.
As we see this disruption cascade from industry to industry, there are others who are just hiding elsewhere. Julian Emmanuel Evercore was on the programme in the previous hour. People are just hiding in staples.
I know,
which is amazing. They don't really know what to do.
Amazing.
So everyone's talking about this cyclical upswing, and you've got staples up double digits year to date. Does that make sense?
And I think it doesn't entirely make sense because you would normally think if people are putting money into staples, it's almost recessionary fears are front and center. But I would say, where can you hide in certain industries that are not that cannot be penetrated by AI. I think it's as simple as that. You have the valuation play as well as something where it's like, is this industry going to be disrupted? Where people are starting to ask the question, what is going to be disrupted? And then also, when are they going to start to see the productivity gains? Which is also why we're seeing some of those sell-offs when it comes to even what came out about wealth management, real estate services. What does it mean for those models going forward?
I won't press you on wealth management for obvious reasons.
I would love to talk about it, actually.
The disruption divide seems to be the story. It doesn't feel like anymore it's a cyclical story. It just feels like it's based on the disruption divide.
But I think this is, again, you have the first part of this equation is infrastructure. And then looking at that significant amount of spending, is that a bubble? When are we going to see the ROI? It's not a bubble. It's really kind of the infancy stages of this. And that's going to then benefit a number of other industries. Then you have the application of that infrastructure spend, which will flow through to areas like financials, like insurance companies, like logistics and trucking. And so then it's who are the beneficiaries, and are they making the right investment decisions to then be true beneficiaries of this?
Let's talk about wealth management. We went there in terms of the disruption and how much you could actually be taken out of a job for AI, because we're all wondering the same thing about ourselves, and how much can this sort of iterate in order to make us completely obsolete and irrelevant. Was it interesting to you when it hit the industry that you're in to understand what people were not understanding, or did you get a sense of just abject fear and go into a bunker?
No, we've been preparing for this for quite some time. So when you think of how AI impacts wealth management, it makes us better at our jobs. So there's that common phrase where it's, the person, AI is not going to take your job, but the person using AI is going to take your job. So this makes all of us more productive. But what we also need to take a look at is, it's not just about the AI tools. Who has the data? So the underlying data becomes critical. So for example, within my business, we've been covering law firms for 56 years. We have extensive data on the state of the law industry, also on lawyers themselves in terms of their financial plans, their career progression. So if you're going to take something like a financial planning software, yes, it's great to have the underlying balance sheet kind of calculations, but if you can combine that with really powerful data and insights on industries that are unique to you, at Citi we have credit card data, we have data on the consumer, we have data on how people are investing, it then multiplies that.
So data is the edge. You work with law firms. That's another area that people are now talking about potentially being disrupted. Why get an associate that's never going to sleep and have a miserable life when you could just use ChatGPT that's never going to complain? I'm just wondering at what point...
Those are real structural changes,
So those are real. So then
at
what point does that really reduce headcount and reduce the need for the human in the equation?
So when we talked about the employment backdrop, one of the things that we've talked about on this program together before is I am concerned about the youth unemployment rate. That is an area, we talk about it within like the legal profession, that you used to have this pyramid structure and it's moving to more of a cylinder because you don't need as many first-year associates. And you're seeing that actually come to fruition, not in the future, but in today in terms of hiring plans. So there will be structural changes in terms of what your workforce and labor force looks like. And I think that's going to impact not true advisors, but it will impact some of the entry-level positions.
If you're wondering where the rant came from, because it felt so personal, Lisa was almost a lawyer. And then
is this a
backed
true
out.
story? All right.
Bramo chose to be a journalist instead of a
Actually,
lawyer.
do you want to know the truth? A law professor who is my advisor said to me, you would love law school, you would hate being a lawyer, go be a journalist. And I said, okay, I'll do that.
Will AI change that for you?
Go back to being a lawyer? I can adjudicate things while on air.
Kristen, so much of this is happening, and that's true. So much of this is happening in the US. So much of it's driven out of the US. And yet we had a guest 30 minutes ago talking about the opportunities elsewhere in Europe. Is it the end of US tech dominance? Is it the end of supremacy in the equity market?
I don't think so. I think, look, the flows year to date absolutely are showing that people are diversifying away from the US, both in terms of the dollar as well as the equity market. So if we look at what's rallied, you can look at Japanese equities, you can look at Korean equities, you can look at emerging markets in terms of the price action that we've seen year to date. But we need these mega cap stocks to perform, and they are the ones that are really driving the expenditures, they're driving the innovation. And when you look at their earnings growth, it's still really impressive. So this is like they are delivering from an earnings standpoint. So to be on the forefront of innovation and the investment and what's really going to drive long-term secular growth, the U.S. has to be there, and these mega cap companies need to as well.
What we hear repeatedly, and I'm sure you hear the same thing, is that the international investor base is nervous about taking additional dollar exposure. Now, I know additional dollar exposure because they've taken so much over the last decade. Do you hear the same thing?
I think the major thing that we're hearing, and I actually just came back from Europe, I was in London and Madrid last week, the major thing is like when you look at last year was painful, right? In terms of like, yes, you had U.S. equities rally, but when you then translate that back into your home currency, if you're a euro-based investor, that totally changes the equation. But for like your average like U.S. investor who is very dollar-based and very dollar-centric, it's not really an issue.
I'm curious, given the fact that you do travel, given the fact that you talk to so many investors, how has sentiment shifted from the end of last year to now, which feels like about 15 years?
So we did a poll. We had a couple of events in Madrid and in London, and we did a poll, and it basically ended up exactly the same in both locations. So it was, you know, instead of us talking about our outlook, which is constructive, and we do believe that there are tailwinds with volatility, it was about 60% of participants. It was consistent across both locations. 60% of our investors were constructive and bullish and saw some tailwinds in terms of the earnings backdrop, and particularly even within the U.S. market. 20% concerned, and a lot of it was around, are there structural changes that we need to be anticipating? And the remaining 20% just admitted they were entirely confused.
Count me in that bucket.
I think I'm in that group too. Chris, it's good to see you. Thanks for
Good
dropping
to see
by.
you
Thank
too.
you. Kristen Bidley there of City Wealth. Can you imagine if we lost Bramo to the legal professional? That would just be awful.
There is a huge cohort would probably be clapping, so, you know, too bad, sorry.
I'd hate it, Bramo. I'd hate it. Let's give you an update on stories elsewhere with your Bloomberg brief. Let's cross over to Vonnie Quinn. Hey, Vonnie.
Hey, John. CarMax topping hotel industry veteran Keith Barr as its next CEO. Barr will take the helm in March and will be challenged with improving CarMax's online sales experience and lowering costs. He previously served as CEO for IHG for 6 years. Anthropic nearing the completion of a deal to raise more than $20 billion. Sources telling us here at Bloomberg the funding round is co-led by investors including Peter Thiel's Founders Fund, D.E. Shaw and Dragoneer Investment Group. Anthropic is said to be valued at about $350 billion, and that announcement could come as soon as this week. WhatsApp says the Russian government has moved to block its messaging app. Russia removed technical internet records that help connect platforms like WhatsApp, making the services unreachable from inside the country. The Kremlin pressing citizens to adopt a state-run app called Max. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. More from Vonnie in about 30 minutes' time. Up next on the programme, trade policy, pushback.
It was just announced how a trade deficit has gone down. Now, if you go down 1 point, 2 points, you're like a genius. Gone down 78%. That's because of tariffs.
6 Republicans crossing party lines, some pushback on Capitol Hill. That conversation up next with Monica Guerra of Morgan Stanley. Live from New York City this morning. Good morning.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Pretty decent. Strong payrolls data just yesterday. Later this morning, about an hour from now, you'll get jobless claims. Another read on the labour market in America. The estimate in our survey, 223. The previous number, the wrong kind of upside surprise. We got 231. We're looking for that number to come back down and get further signs that this labour market is stabilising. In this equity market, equity futures look like this. On the S&P 500, firmer by 1/3%. On the Nasdaq, up by 0.26. On the Russell, up by 0.6%. Curious that the gains in the Russell and the small caps did not stick yesterday. Didn't hold even with that stronger than expected economic data. Something that did stick, this move here in the bond market. Repricing at the front end of the curve. Just pushing out, not totally pricing out, but pushing out the prospect of further interest rate cuts from the Federal Reserve.
The hawks got ammunition. Why would they cut rates if you see the labor market potentially stabilizing and not exactly falling off a cliff? Ultimately, tomorrow is going to be really important. The idea that we're going to get the inflation read, CPI, will give us a sense of just how much leeway they have to potentially cut rates on disinflationary trends, even if you aren't seeing any kind of deterioration in labor.
You mentioned Morgan Stanley a little bit earlier. Mike Gapin is the one looking for precisely that. Not weakness in the labor market, but softer inflation, leaving the door open for them to reduce interest rates. And they're the kind of cuts that Kevin Walsh would love to deliver, because they're not complicated. You come out and say inflation's lower, I'm cutting interest rates, as opposed to everything's fantastic, growth is absolutely flying, and you're cutting interest rates because why?
Yeah, exactly, which leads to the whole political question. There also is a really bad message that he could send if the labor market does crack. You don't want to say, I'm cutting interest rates, because guess what? We need them, and we need them badly. That is not the right message the market wants to hear either.
Some pressure on that man before he even gets confirmed at the top of the Federal Reserve. Out of Savannah this morning, trade policy pushed back.
It was just announced our trade deficit has gone down. Now, if you go down 1 point, 2 points, you're like a genius. It's gone down 78%. That's because of tariffs. So we're doing numbers that nobody thought were possible. 78% reduction in our trade deficit. And next year, we're going to be positive if we keep it all going.
Congress isn't celebrating. Here's the latest this morning. 6 House Republicans defying the president, voting to block some of his tariffs on Canada as unease over the administration's economic policies continues to grow. The president vowing consequences for any members of his party opposing the levies. Tyler Kendall has more for us. Hey, Tyler.
Yeah, hey, John, good morning. Well, this marks the strongest political pushback that we've seen against one of President Trump's signature economic policies as we head into the midterm elections. And House Speaker Mike Johnson tried to prevent his members from taking this politically fraught vote. He had tried to delay it until at least after the Supreme Court rules on President Trump's broad-based IEEPA tariffs, but at this point, they're now all on the record. And if you're a reporter here in Washington, you get inundated with campaign emails. And I have to say, after this vote took place, my inbox was flooded with Democrats targeting Republicans in farm states who voted in favor of the president's tariff policies. Now, Democrats want to make this a top focus as Republicans play defense, according to the polling, on the economy. But the White House is still defending its policies, and we should say that the vast majority of Republicans did vote with the president on this one. But still, if you were one of the 6 that didn't, President Trump really could make good on some threats to hurt them come the primary season, because he has amassed a record $483 million war chest. And people familiar with the matter told us last month that he plans to be personally involved in how that cash gets deployed. Plus, keep in mind, this is just the first in what's expected to be a series of votes targeting President Trump's tariff policies. This vote was about Canada, but we're expecting another one later later this month looking at the tariffs levied against Mexico. John, with all of this said, and just to be sure, this measure now goes to the Senate, where it actually really likely could pass, but then it will come to President Trump's desk where he would veto it. It would take a 2/3 majority in both chambers to override that veto. So none of this legislation is probably going to turn into law. But at this point, it really is showing that perhaps more symbolic push on the behalf of lawmakers as we head into November.
Tyler Kendall with the latest down in Washington. Tyler, thank you. Joining us here in New York is Monica Guerra of Morgan Stanley Wealth Management. Monica, good to see you.
Good to see you.
So the Canada, let's get to the Canada. So at some point, USMCA renegotiation, there's a meeting with Xi Jinping in the spring. There's already pushback on Capitol Hill. How is that going to shape outcomes for the year ahead?
So when we're thinking about USMCA, it's really critical to remember that this is a review. And typically, you don't get a renegotiation. But what we're seeing is that renegotiation's on the table. So you had China and Canada have a conversation while we have reason to believe that Canada did communicate that with the U.S. in advance. It still is setting the stage, right, for hardball when we're thinking about actual renegotiation this summer. So we're waiting to see what that looks like, and then we have this pressure from Congress adding to the table. So everyone wants a voice in this negotiation, not just the president.
This isn't NAFTA. That's gone. The president called it USMCA. Mm-hmm. It's his. What doesn't he like about his own deal?
One of the biggest areas where you get the pressure is with the UAW, right, the United Auto Workers. They're really looking at essentially lessening the pay differential between U.S. Mexico, U.S. Canada. They're also seeing a lot of fair trade and fair worker concerns. So you're getting this from the trade unions. They're looking to have a lot of pressure alleviated off the table. The president also wants Canada and Mexico to affirmatively pull away from China. You've seen some, more firm action on the Mexican side of the border, but not necessarily with Canada. Canada's now saying, hey, we're an open buyer. We don't necessarily have the same, geopolitical viewpoint. We aren't the founders of the Monroe Doctrine, so we're okay with, starting negotiations elsewhere.
How much does this latest House vote constrain the president? And I say this because he's going to renegotiate this without necessarily a vote of faith and confidence from particularly a number of Republican Congress members that are on the border, that actually have business with Canada and are realizing this isn't going to be good for their constituents.
What this really shows is cracks, right, in the party. We've seen really lockstep support of the president. Where does it actually move the needle? Potentially, I would say right now from a legislative standpoint, no, you're not going to be able to get this through the Senate. What's interesting about this, though, is that if you have GOP members defecting, they are pretty positive, I guarantee it, pretty positive that they could withstand a primary. So this is essentially not necessarily a game changer for them with their electorate because their base is concerned about this issue, right? So any sort of challenger that would come in, I think that would be a very difficult fight.
They're concerned about affordability, and that has been something that keeps coming up. It seems to be the word of the year, at least on the political front. I just wonder what more Congress can do. Can they provide additional stimulus with the support that they have, with the concerns about the deficit, and frankly, with the jobs number that we just got that beat expectations?
So one of the things that we're really looking at from a stimulus standpoint is, pre-midterms. So again, once we get through that USMCA renegotiation, you get through August, then it's going to be full-blown campaigning. And that's when you're likely to see more of the affordability measures come in. Maybe you get more on housing. You're likely to get some movement in healthcare, whether that's pharma caps or a Trump healthcare plan. We don't know yet. But they're going to essentially look around the edges and see where they can make good on that affordability promise. The other thing that's really critical that people aren't paying really close attention to is the OBBA tax cuts and how those tax refunds this year are going to be at record highs, about 40% higher than we had in the last year. This is notable because what it does is that it alleviates
trade, what you just heard there from Morgan Stanley, also a tax refund trade. Yet today, up by double digits. In just a moment, we'll catch up with David Tinsley of the Bank of America Institute as the K-shaped economy opens up. And they note in their data a widening divide, not just between low income and high income, but middle income and high income. The problems are migrating up from low income to middle income.
Housing costs and healthcare costs are eating into the average family's income in a way that isn't being priced into how we categorize some of these levels.
We'll speak to David in about 5 minutes' time. Plus, Yahira has your morning movers. Strong demand for memory storage, lifting shares of SanDisk and Micron. Big moves in the pre-market on those names once again. Big moves so far year to date. Wild rallies worldwide. Equity futures on the S&P up by 1/3 on the S&P 500. 1 hour from now, jobless claims the next stop for your economic data following a stronger than expected payrolls report in America.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Haslinda Amin in Davos, Switzerland, and this is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
2 days, no gains. Let's see if we can turn it around. We're positive by a third of 1% on the S&P, and the Nasdaq up a similar amount. And your outperformance from the Russell higher by 0.6%. In the bond market, talk lots about a 2-year back above 350. Just a break of that, we're down a basis point. On 10s, we're down another basis point too, and down 2 at the long end of the curve. 30s to 478. Just how quickly we faded that post-payrolls bump in equities and in foreign exchange, and now to some extent in the bond market.
How many notes did you read? Take it with a grain of salt. You know, I'm not necessarily confident that this indicates some sort of shift. How about that birth-death model? How about the downward revisions? I mean, how many holes were poked in it in some of the notes that we got overnight? You can argue, okay, nonetheless, this is a pretty good number. This doesn't necessarily, though, scream of growth that really would supersede any kind of disinflation that potentially could cause rate cuts.
Look, there's an obvious bias, I think, for a lot of people, conditioned by experience of the last 12, 18, 24 months, just to mentally revise the jobs figure down, because ultimately in 12 months' time it will be done anyway by officials. So why wouldn't you? Can you really put much weight on this? I hope we see it continue. I would say that the only supporting factor right now in the data that I've seen over the last week or so is the ISM. Outside of that, a lot of it is going against the grain. Jobless claims being one. I hope it turns around in an hour from now. Challenger job cuts were problematic. Jolts were problematic. The sentiment surveys haven't been great either.
And in the payrolls, you did see construction workers actually pick up in terms of employment, some of the other areas in the industrial sectors. To your point, how much does this really up the volume, increase what we do when we pay attention to jobless claims in order to really correlate what we saw yesterday?
Claims 60 minutes away. We'll look out for that as we count you down to the opening bell, 2 hours away. Let's get you some single names, some morning movers. Yahara has more. Hey, Yahara.
Hi, John. Cisco is the latest company to warn us that rising memory chip prices will eat into profits this quarter. So shares are falling 7% in the pre-market. That overshadowing what was otherwise a solid report by Cisco, with its sales outlook coming in better than expected due to its role in the AI infrastructure build-outs. And that pricing warning is lighting a fire under the memory chip stocks looking to cash in. You're seeing SanDisk up 6.6%, Micron up 3.5% as more companies talk about memory shortages and higher prices during this earnings season. Analysts at Goldman calling it the great memory crunch as AI data centers can't get enough and supply just isn't keeping up. And speaking of data centers, we end on Equinix. This is the world's largest the largest operator of data centers. Shares are up nearly 10% in the pre-market after the company reported record fourth quarter sales and a better than expected 2026 outlook, all due to AI-related bookings. John?
Yeah, I'm not shocked at all. Yahara, thank you. If you operate data centers right now, we can imagine who your customers are, can't we?
There are a couple of names, and they are big, and they are competing with one another to try to get capacity to make sure that their competitor isn't going to get it. So a definitely race going on in that space.
Spending serious money. And I read down this morning, the Congressional Budget Office issuing a fresh warning for the U.S. fiscal outlook. The CBO raising its estimate of deficits for the coming decade by $1.4 trillion. President Trump's tax law and immigration policies outweighing tariff revenue. Elsewhere, Apple's latest Siri upgrade facing the possibility of further delays. Sources telling us here at Bloomberg the testing of a new update revealed sluggish response times and accuracy issues. Features meant to be released in March may not be available until May. And finally, McDonald's fourth quarter U.S. sales growing at the fastest pace in more than 2 years. The company's offering of more affordable menu items and value meals is paying off.
It increased traffic, right? It increased customers coming in the doors and buying extra value meals that had been cut in terms of price by 15% or more late last year. This is similar to what we heard from Pepsi. This is similar to what we've heard from other fast food retailers. And I just want to read you this quote from the CEO, Chris Kempczinski. As I've said before, and I will say again, McDonald's is not going to be beat on value and affordability. This raises the question about how much you end up with some sort of war in terms of lowering prices. And it speaks to the fact that going forward, this is not changing. This is the bottom of the K that is not improving, is not seeing their circumstance really materially get better, which is the reason why it really has to come down to adding value, i.e. cutting prices and giving customers something that they feel is worth it.
They've had to lead on basically franchises to get them to cut prices. I think we all saw that value meal for $18 in Connecticut. Did you see those pictures?
Yes.
In the last year? Warren Buffett will say price is what you pay and value is what you get. If I'm paying $18 for a meal at McDonald's, I'm not getting value. And by definition, That is not a value meal. And that's where the big effort has been in the past 12 months, just to push those prices lower and to give them the support they need to make it happen.
There are two ways to view that. On one hand, you could view this as they went too far with some of the price increases over the past couple of years. The second thing is that people are becoming that much more sensitive to what those prices are and are pushing back in a more serious way than they have in the past. And that latter point is the concern, given what we are seeing in terms of both the labor growth dynamic as well as what we're seeing with debt and so the ability to pay, certainly in delinquencies.
Consumer price tolerance was right up here coming out of the pandemic. Charge what you want, people to pay it. That's what people thought. Consumer price tolerance has absolutely sank over the last year or so. Let's stay on that story. Credit card spending rising to its highest level in nearly 2 years last month. The Bank of America Institute writing, "We are concerned, though, that a K-shape is opening up between higher income and middle income households alongside the existing gap with lower income households." David Tinsley of the Bank of America Institute joins us now for more. David, welcome to the programme. Let's talk about the headline number and the strength we're seeing, and then we can get to the disparity and the bifurcation beneath. David, the momentum at the top line, are you encouraged by that?
Yes. I mean, like you were saying in the graphic there, 2.6 year over year. That's a pretty strong number, strongest in nearly 2 years. Bear in mind, it was a pretty bad month weather-wise. You know, bits of the east, bits of the south were sort of shut down at the end of the month. So I think, in aggregate, the story is a solid one.
In aggregate. And that's really the headline, David, because beneath the surface, it really isn't. I was going through the stats that you and the team put out in the last 24 hours. This gap opening up between middle and high-income Americas, just how wide and how quickly is that widening happening?
Well, yeah, that's exactly the point. The aggregate is fine, but then when you look beneath that, there's like the jaws of a crocodile, in which the top of the K, higher income households, spending growth 2.5–3% over the last few months. Lower income households, 0.3 in January, sort of quite close to zero, really, over the last few months. What we're really concerned about in the data right now is that the middle income group, which for a good period of time last year was in the middle between that lower and higher story, is sort of drifting down closer towards the lower income consumer end. And of course, you know, put simply in a macro sense, the lower income consumer doesn't drive the economy. But the middle income consumer is a very important part of the overall consumer story. So you can't really afford to lose those guys.
Why do you think this is? Why has the picture gotten worse for middle-income individuals, considering the fact that the stock market is up? Is it a lack of an exposure to the stock market? Is it their jobs that they're in are not seeing wages increase as fast as elsewhere?
Well, you know, when we look at our spending data and then we look across the wages data we see coming into our customers' accounts, we get a very consistent story. So these middle-income households have seen a softer wage growth picture over the last few months. It's running about 0.4 percentage points, 0.5 softer than the last 6 months of last year. So, you know, to answer your point, I think mainly it's a labour story. And really, most of these households don't have a lot of equity. They're not really exposed to the wealth effects. That's very much a kind of top income tier story there. And there, you're seeing a much more consistent story in terms of spending.
Based on that backdrop, do you think that we're underestimating or overestimating the influence of some of the tax cuts that are expected to trickle through in the first couple months of 2026 in the United States?
Well, what we see in our data when we look back over the last few years is that people tend to spend their people who are going to get larger tax refunds tend to file early. And when you look at lower income, younger households, they spend more of that tax refund than the other groups. You know, in a sense, it's very intuitive. So I think we will see a jump in spending and some easing in the affordability issues from those lower income households, those younger households. My concern isn't really so much as the sugar rush of tax refunds, it's when they wear off. So in our data, we see deposits staying high for about 6 months after these tax refunds come in. People kind of whittle them down slowly. But, you know, look at the end of this year, say, if that labour market position remains soft, then that makes me more concerned about how, essentially, what is going to be the driver of consumption at the back end of this year.
David, just on the spend, typically, when you track that money, where does it go? We had a guest from Morgan Stanley on a moment ago who said a lot of that cash is just going to go to staples and not discretionary. What's your read on things? What do you see in the actual data?
Yeah, well, it's a sort of mixed bag, really, and I think that is right. Basically, you know, affordability issues are at the forefront right now, and when we look at things like trade down, we're seeing lower-income consumers spending at grocery stores running much stronger than they're spending at premium stores, and we're also seeing rental costs. To give you an idea, around a quarter of lower-income households, their monthly rent is worth more than 50% of their household income. So these are quite restrictive affordability issues. So I think, yes, I think the tax refunds will ease affordability issues. We'll see some leakage into discretionary, I'm sure, but to the extent that it's a lower income and middle income story, it will be more on groceries. Maybe there'll be some easing in terms of quick serve restaurants, you know, referring to your piece earlier, you know, the value meals, etc., might come back into vogue a bit more.
David, it's good to see you. Thanks for breaking down the latest data.
Thanks a lot.
Thank you, sir. David Tinsley there of the Bank of America Institute following their Consumer Checkpoint report. If you missed that yesterday, consumer spending showed solid resilience in January. Total card spending from internal data rising 2.6% year over year, strongest pace in nearly 2 years. That's kind of where the good news ends. Beneath the surface, the wage growth gap between higher and middle income, the largest in nearly 5 years. And it's that middle income squeeze that team is concerned about.
You know, if you think about some of these jobs that typically are thought of as middle income types of work, office managers, sales managers, executive assistants, some of the roles that might get disrupted by artificial intelligence. There are others that won't, right? Registered nurses, I'm thinking of, in other areas. But you start looking at this, you start wondering, okay, how much of this is also because there isn't the same kind of price pressure for labor that there has been in the past. This is the reason why people really want to understand that dynamic, because it is affecting that K-shape and how it is becoming pernicious.
That's the latest on the US consumer. If you want to check the markets, equities session highs up by 0.4% on the S&P, with an update on stories worldwide with your Bloomberg brief. It's Vonnie Quinn. Hey, Vonnie.
Hey, John. U.S. Energy Secretary Chris Wright says Washington can help Venezuela raise its oil, gas and electricity output this year. Speaking in Caracas, Wright saying the administration will issue new licenses for businesses to buy Venezuelan products. Wright is the most senior U.S. official to make a public visit to Venezuela since the capture of Nicolas Maduro. Federal agents are looking along roadways in the Catalina foothills near Tucson as part of the investigation into the disappearance of Nancy Guthrie. The Pima County Sheriff's Department and the FBI are saying they're following up on 18,000 tips. The mother of Today's Show co-host Savannah Guthrie has been missing since February 1st. The Fed is signaling plans to abandon some of the confidential warnings it previously sent to banks to improve operations. Sources are telling us here at Bloomberg the remaining flags will focus more on immediate risks to a bank's financial health, less on processes and procedures. Banks have argued that Fed supervision has become too complex and expensive. And that's your Bloomberg brief. John.
Hey, Vonnie, thank you. More from Vonnie in 30 minutes. Up next on the programme, the Fed faces the data.
What today's jobs data showed you is that underlying economic growth is fine, but when I look forward, I see inflation coming down quite dramatically this year. So I view there's being a variety of reasons still why I would want to see lower interest rates.
Up next, we'll get the view of Steve Rasciuto of Mizuho from New York City. You're watching Bloomberg Surveillance.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
So this is the bull case. We heard from Eric Johnson of Cantor a little bit earlier this week. This is what it sounds like. Market's going to break out soon. Upcoming corporate buyback season, tax refund checks over the next 6 weeks. ISM turning higher, massive AI capex numbers we've all seen just announced. Throw in the payrolls report and it's going to happen, except this keeps happening. Keep bumping up against 7K. And the market cap weighted index, the S&P 500, just is struggling to break out. Even with the decent data we saw in the ISM last week, even with the payrolls we saw in the last 24 hours.
There's some structural anxieties underneath this. There's, on one hand, the real economy, which we don't have a real handle on. And then there's, of course, how much AI is going to be adopted and just be disruptive to a whole host of different industries. And all of these anxieties are leading to a mush that is leaving everyone just kind of churning.
Feels constrained, doesn't it?
It does.
The fear. And I will say the fear and the anxiety that this just cascades through the financial system and then ultimately ends up in the sector you're in, so you hide where staples, which was ultimately what Julian Emmanuel Evercore communicated to us about an hour ago. He's basically making the point that a lot of people are just worried and looking for somewhere to hide. They don't want to be the next software, the next real estate, the next, where were we in the last 24 hours? Wealth managers. Yeah. Who's next? Which sector?
I keep going back to Christian Bitterly's poll. 60% relatively bullish, 20% very concerned about some of these disruptions, and 20% utterly confused. Pretty much sums it up.
It was easy when the Fed was just cutting interest rates and you palmed into small caps and it all made sense.
This is so much more fun, though. I actually really enjoy the single name stories and how much things are changing.
Repricing the Federal Reserve in the last 24 hours. Under surveillance this morning, the Fed faces the data.
What today's jobs data showed you is that underlying economic growth is fine, but when I look forward, I see inflation coming down quite dramatically this year. So I view there's being a variety of reasons still why I would want to see lower interest rates. And while today's jobs data made me feel really good about the economy, I think the truth is that pushing out the supply side of the economy still allows for monetary policies to accommodate that.
So here's the latest this morning. The Federal Reserve facing a busy week of data on both sides of the central bank's mandate. The U.S. economy delivering a blowout payrolls report ahead of a fresh read on inflation with CPI due tomorrow. Stephen Rasciuto of Mizuho writing the first half of the year is seen benefiting from strong individual tax refunds and the second half from last year's 75 basis point reduction in the funds rate. Steve joins us now for more. Stephen, welcome to the show. It's always good to catch up with you, sir. How much weight should we put on that payrolls report? Is it the real deal?
Well, I think when you back it up against the claims data that we've been seeing on a regular basis, I mean, ignore last week's numbers. When you look at where claims are, you look at where continuing claims are, and you look at the decline in the exhaustion rate, i.e. people falling off the continuing claims roll, you're seeing a healthier labor market environment, and you're seeing it actually picking up speed. You see a healthy labor market environment in the NFIB numbers. You saw some healthy data in the ISM numbers. I think, you have to look at all this data and say, well, why is it taking place the way it is? And I think the answer is because the economy is fundamentally healthy. And I think it is going to accelerate as we go forward into 2026. And I don't worry about the second half of the year, as I wrote in that little piece, because primarily we think the interest rate story comes up to really replace the tax cuts as the driver of the economy as we go into the second half of the year. Remember, in 2025, we had a real acceleration in growth in the second half of the year after a disappointing first half of the year, and the Fed was all worried about the first half growth decline, and that what they used to justify the rate cuts. But at the end of the day, the economy accelerated in the second half as a result of the rate cuts in 2024, and I think that continues to dominate again this year.
Well, Steve, I want to pick up on that point. The 12-month lag what is the 12-month lag about? Because for someone just following financial markets, they might sit here and say, I might sit here and say, highly financialized economy, it goes through financial markets almost immediately, and you can feel the effect straight away. What takes 12 months?
It takes 12 months for people to reassess their situation, and we're really talking about a 6-month lag, which I think is the important piece of the equation, because there's usually this belief that monetary policy takes anywhere from 6 months to 18 months to be reflected in the economy, the long and variable lags that all Fed chairmen like to talk about. But the reality of the situation is those long and variable lags really depend on the underlying health of balance sheets. And I know you were talking before about the K-shaped economy and the adjustments taking place in the economy. But when you look at where the economy is and you go back, you're looking at 5 years ago, which was the COVID environment. And we're renormalizing to a pre-COVID environment. And that's what you're seeing in a lot of the data. When you look at things like delinquency rates relative to balances, balances are very low, so delinquency rates look high. But when you scale them by income or you scale them by GDP, suddenly delinquency rates don't look to be a problem. This is all the type of normalizing analysis that I think we've been doing relative to other people that I think is really, really driving the point that this economy is on a solid fundamental trajectory. And I disagree completely about the argument that we're going to get inflation coming down. We've been talking about inflation coming down from 3% for several years now, and it isn't happening. How long are we going to continue to wait for Godot? That's the real problem, because the Federal Reserve has to wake up and smell the roses that inflation is stuck at these levels.
We'll get to inflation in just a second. I'm just curious. I'm dealing with whiplash right now after David Tinsley was just telling us that the middle class is falling into the same type of affordability crisis as the lower income individuals in this country. How do you square that story with this idea that there is stimulus that is working its way through the system?
Well, I think you come around with the fact that the corporate stimulus came last year. The consumer kit stimulus comes this year. A lot of people are just now filing their tax returns. They're just now getting their refund distributions. We're on the real exponential rise in refund check distribution. So we expect to start seeing it showing up in the data in the next couple of weeks. With regard to the concept of the middle income households, remember, you just went through the longest government shutdown in history. You went through a very, very cold winter, early winter environment. You went through the reciprocal tariff adjustments of last year. So seeing some disruptions get developed as a result of that is not surprising. It's where do we go forward that becomes the critical issue. The indicators that he's been looking at are basically indicators that tells you where we were, and not looking at, well, if the economy does get the cyclical boost we're expecting, if labor markets do get the cyclical improvement we're expecting, then guess what? You wind up reversing all those trends after being worried about them for so long.
Stephen, going back to the
data is beginning to show that's happening.
Going back to the inflation point that you're making, the pushback that you're hearing across Wall Street, and Tiffany Wilding of PIMCO put this out there, that after a period of stubbornly high rental housing inflation, you're actually seeing the opposite, surprisingly low housing-related inflation. And this is being borne out in a whole host of different data. I'm just wondering, where is the inflation going to come from?
Well, you're going to see it in the good side. I mean, we honestly believe that the acceleration in growth in the economy is going to lead to a greater demand pull equation. We think we're going to see it in a lot of those factors that really lead to higher prices. A tighter labor market environment will lead to higher wages. Higher wages will help contribute to stronger demand. Stronger demand will contribute to higher prices in some of the areas where good prices have been declining. This is why CPI is an index. It's not one component. And this is the thing everyone keeps on forgetting about CPI. Remember, 2 years ago, it was all about, oh, my God, you got to ignore the rising insurance rates that were driving CPI higher. The reality is you can't ignore rising insurance rates. You can't ignore all the other components. You have to look at the aggregate of the index. That's what really matters, is the aggregate, not all these individual components. You look at the number of components. I can always find something to hang my hat on to be bullish. Like, people looked at the payroll employment number and they started doing some really apples to oranges comparisons in the birth-death model. The reality is it's the best data we have. Stop arguing with the data. The data is the data. Accept the data for what it is. Make your analysis off the data. Stop looking for arguments within the data to discredit the data.
Steve, don't stop. This was great. Steve, it's good to see you. I've got 20 seconds. Quick question. Next move, hike or a cut at the Federal Reserve?
Nothing. They do nothing for at least 12 months.
Steve Rasciuto of Mizuho. Steve, thank you, sir. 12 months on hold over at the Federal Reserve.
Love the data, hold the data, embrace the data, own the data.
The data is what it is.
The data just is the best thing that we've got, so stop arguing with it. It sounds very parental.
Preach.
Well,
seriously.
Come on, but preaching to deaf ears in terms of Wall Street right now.
Unchanged for 12 months at the Federal Reserve. It's another call, seen a few of them. It's not alone.
Yeah, a lot of people think that this doesn't give a justification to cut rates.
Coming up on the programme, Joe Amato of Neuberger Berman, Devin Ryan of Citizens, Matt Lazzetti of Deutsche Bank, George Bory of Allspring. The third hour of Bloomberg Surveillance. Up next.
A cidade estava sitiada.
Nisso eu começo, eu tremia, não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering, and someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Nisho tanya ki kon ahna ta chuara pango ahna le pa manchang le ni ay kon mamanya. Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
We have two crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked, and we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersecci in Davos, Switzerland, and this is Bloomberg.
All of these trades right now are so sort of knife edge.
Tech is a much more nuanced sector now.
If you look at places where we've outperformed, it's been the physical over the digital.
The tactical case for a continued bounce from here is pretty strong, I would say.
We think we're going to go back to a high-quality, large-cap trade.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now. Your scores look like this. Equity futures on the S&P positive by a third of 1%. Call it a quarter on the Nasdaq. On the Russell, up by 0.6 in the bond market. Yields at the front end of the curve around 350 as we start to reprice this Federal Reserve. Going into more economic data later this morning. That data is 30 minutes away. Jobless claims follows a blowout jobs report.
Jobless claims take on more import right now because there were so many questions around the non-farm payrolls report. Yes, it was a very big number. It was a beat, 130,000 jobs created. Nonetheless, people looking at all of the things that Steve Rasciuto just told us to ignore and saying, hold on a second, can we really get confidence that there is a reacceleration in the U.S. labor market? The peripheral data will matter to confirm the story that people are telling.
Well, Steve's point is that the rate cuts we saw at the back end of last year are going to hit in the second half of this year. And that's where you'll see the growth. So for those of you that just think you get a one-off bump from the tax refunds, they're wrong in Steve's mind, because you'll get that bump also in the second half. That's why he's bullish the next 12 months.
The hard thing for me is that to speak in averages right now is so difficult, given that the circumstances for different cohorts of the economy, both on a company side and on a family side, is just so disparate that it's very difficult to understand which way overall averages are going to break.
Lots of disparity beneath those averages, and we can talk about the bifurcation elsewhere in just a moment. Futures positive by a third of 1% on the S&P 500. Coming up this hour, Joe Amato of Neuberger Berman as markets search for direction. Devin Ryan of Citizens challenging the AI disruption narrative. And Matt Lazzetti of Deutsche Bank as Wall Street watches for the latest read on the labour market. We begin this hour with stocks steady near record levels. Neuberger Berman President Joe Amato writing a mix of past and future stimulus, rising business confidence and improving loan growth set the stage for further equity gains. Joe joins us now from what? Joe, good morning.
Good morning. Good
Where are those equity gains coming from?
Well, you've seen this rotation. So the things that have been driving the market over the last couple of years have now switched over. So the broadening out theme that we've talked a lot about, we were probably early in that theme. It didn't play out necessarily fully last year, but you're seeing it this year. So while the market, as most people would describe it, the S&P is up just a little bit this year, value's up 8%. Small cap stocks up 10, 12. You've got European stocks up. You've got Japan, the best performing market, major market in the country. So this rotation into things outside of what's worked over the last 2 years, I think is an important trend. And I think it's driven by accelerating growth in overall economic activity.
Equal weight, all-time highs on the S&P 500 speaks to the same thing. Is it just a cyclical upswing, or is there an AI disruption theme to all of this as well? Are these just better places to hide from getting smacked around the head one day by some update somewhere?
I think it's both. I think, we coming into this year, we did think that the nominal growth was going to increase, cumulative rate cuts, fiscal stimulus. So a number of those things have in fact played out. So you're seeing GDP growth, whether it was the second half of last year and going in the momentum continuing in the first quarter of this year. But at the same time, you have disruption. So, AI has been sort of like a heat-seeking missile looking at different sectors in the equity markets. First it was software, then it was private credit, then it's data service providers, this morning real estate companies. So, that disruption, and I think we may have even talked about it last time I was on the show, which is this AI is going to be the most massive creative destruction process we've ever seen, and it's going to be happening faster than we've ever seen it. And the last number of weeks we've seen it manifested in the markets, but it's hard to prove the negative about, if you're a company that's still seeing good financial results, yet you have some vulnerability to AI disruption, the market's just selling first and then moving on.
You should trademark that analogy, a heat-seeking missile, in terms of the AI trade, because it really just describes what's been going on in markets over the past couple of days. I'm curious, and we'll get to that heat-seeking missile in a second. I am curious, though, does that mean you see the cyclical part of the market as being maybe less sensitive to the economic data than other people do, because it is this dual type of trade?
It's a little bit of the revenge of the old economy. So you're seeing manufacturing pick up. Some of the pressure, the areas that suffered from very modest growth over the course of the last couple of years are now seeing better growth, and they are vulnerable. The automation trend going back 10 or 20 years ago put pressure on blue-collar jobs and a lot of pressure on those businesses, and professional services are now seeing the impact of that disruption.
So from your perspective, do you avoid that heat-seeking missile, or do you follow it Are you the ambulance chaser that goes in and tries to pick up the pieces after it's already done its thing?
I think we're more looking to sort through when everyone's throwing the baby out with the proverbial bathwater, who may be more, competitive in the context of whether it's a software company, whether it's a private credit entity or what have you. So I think the market overreacts to these things naturally. The pendulum always swings too far in both directions. And I think it presents some opportunities for intermediate to longer term investors.
Things are moving so quickly, so fast, and that's something you just mentioned, alluded to, and I think that's a major feature that we need to discuss. Typically, we embrace creative destruction in this country. It's a feature of American dynamism, or at least it used to be. Now it's moving so quickly, I just wonder how much constraint there will be down in a place like Washington, D.C., how much pushback we'll actually find.
Well, I think the manifestation of that's going to be in the labor market, and you've got these trends of stronger economic growth. A big chunk of the economic growth was AI infrastructure investment, right? So you saw good economic growth the second half of last year with virtually, not zero job growth or very little job growth in the second half of last year. So, I think there are going to be important public policy and political decisions to be made when some of this disruption starts to manifest itself in a tough labor market.
Does that influence how you think about investing over the long term through this cycle?
It does. I mean, you've got more volatility. I wrote about in a recent piece I did around, just wider ranges of outcomes of policy you're seeing over the recent election periods, and I think that becomes more challenging for businesses to plan longer term. So we're seeing businesses themselves be shorter term in their thinking, because policy and regulatory issues may change. Think about, regulatory policies during the Biden administration, now in the Trump administration, was almost a 180. So that makes it harder, and that's, I think, contributed to the short-termism in markets, which is frustrating for us, because, again, we like to think longer term, maybe 1-3 year, 3 to 5 year type horizons. It's tough given the volatility in policy.
Does that potential overhang of regulation, of a policy prescription that could potentially constrain some of this tech development, also constrain the potential for big tech to really be the leadership in the equity space?
Well, I think regulation is coming to AI and tech in general. The more power that tech has in the economy, I think the more attraction they're going to get from politicians and consumers concerned about some of the excesses that could occur. So, the balance between federal regulation versus state regulation, for instance, in AI, is going to be an important determinant of how the U.S. remains a leader in AI or whether it gets dragged down by a patch quilt of state regulation.
How much is this part of why Chinese technology, South Korean technology, Asian technology in general is getting bid up to a much more significant degree than U.S. technology right now?
I think those dynamics are going to come to every economy that you see disruption. So obviously the regulatory framework in China is going to be different than the U.S. But you are seeing the sort of China-dominated tech ecosystem and a Western and really U.S.-dominated tech ecosystem, and they're probably not going to interact much. But I think the dynamics affecting the labor market are going to be similar over the long term, and whether you're a Chinese regulator or whether you're a U.S. regulator, you're going to have to deal with it.
Joe, where are you finding diversification at the moment?
Well, value, small cap, non-U.S. So that's really where we've been overweight, and that rotation has.
Can I just pick up on the non-U.S. piece of that? Lisa just talked about the gains we've seen in places like South Korea. Is it still just the same trade as U.S. tech, or is it different?
South Korea, Taiwan, these are very narrow markets. Only a couple stocks driving the indices. So I would think a more broad-based market like Japan is more broadly investable to diversify from what, again, has been working over the last couple of years. We're not negative on the U.S., but it's just we think this rotation and the growth and the broadening out is going to be an important theme.
Is Japan working despite higher yields or because of higher yields?
I think Japan has shifted from a deflationary regime to an inflationary regime, which is a hugely important issue for equity markets. You combine that with constructive fiscal policy. We are certainly looking at the JGB market, because if that gets unhinged, that could derail this growth.
Is it unhinged?
Not yet. But probably most importantly in Japan is the emphasis on driving better shareholder returns and a focus on improving returns on equity for their companies, which has really been a secular trend that we've played for the last few years.
A big push since the Governor Kuroda days and Abe.
Yeah.
10 years
it's
or so
really
ago.
a continuation of Abenomics.
Without a doubt. Joe, it's good to see you.
Yeah.
Thank you very much. Joe Amata there of Neuberger Berman, the president. Japanese equities up by 15%. It's close to that level year to date.
And guess what? Japanese bond yields have actually been falling. They fell some 10 basis points in the long end overnight. Why? Because people have more confidence in the idea of who is going to govern and how they're going to govern. And frankly, the Prime Minister has come out pushing back against some of the profligacy of fiscal spending plans in the past. So right now, actually, it is exactly the opposite of what people thought if she consolidated her majority.
Some better news out of Japan, let's put it that way. Elsewhere, stateside, equities out by 0.25% on the S&P 500. With an update on news worldwide with your Bloomberg Brief is Vonnie Quinn. Hey, Vonnie.
Hey, John. AI company Anthropic nearing completion of a deal to raise more than $20 billion. Sources are telling us here at Bloomberg the funding round is co-led by investors including Peter Thiel's Founders Fund, D.E. Shaw and Dragoneer Investment Group. Anthropic is said to be valued at about $350 billion, and the announcement could come as early as this week. President Donald Trump says he told Israeli Prime Minister Benjamin Netanyahu that he intends to press ahead on talks with Iran. In a Truth Social post, Trump said nothing definitive was reached during their meeting in Washington, but he insists his preference is to reach a deal with Tehran. Netanyahu's office says the two leaders agreed to continue coordinating closely. New York's Waldorf Astoria is getting put up for sale. Sources tell us here at Bloomberg the Chinese owners are selling it only months after reopening following renovations. Real estate investment bank East Still Secured is expected to bring the hotel to market on behalf of the owners. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. More from Vonnie later this hour in about 30 minutes' time. Up next, the Morning Calls, plus Devin Ryan of Citizens pushing back on the AI disruption narrative. That conversation up next. Live from New York City this morning. Good morning.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
If you look at the start of this bull market, the only two sectors that have outperformed the S&P 500 have been communication services and information technology, the place where the hyperscalers reside. We don't think the next really intense episode of rebalancing happens until the AI trade reaches a crescendo, which we think is still well off into the future.
Julian Emmanuel of Evercore weighing in on this equity market. I think Julian over at Evercore has a price target on the S&P of 77.50. And his argument is basically that if you want the index level to have another 10% of upside into year end, you need those names, those big tech players, to participate. which is why he thinks the leadership will return at some point later this year, even if he does like other parts of the equity market as well. Speaking of the equity market, equity futures right now in the S&P 500 heading into data later, about 15 minutes away. Futures positive by 0.2% on the S&P, higher by 0.16% on the Nasdaq. There's that move in the Russell, the 2,000 up by 0.55%. In the bond market, yields just a little bit lower. We're down a basis point at the front end of the curve, 350 after repricing high yesterday, following much stronger than anticipated jobs data. That's the market setup. Let's get you some single names, some morning calls. First up, Citi raising its price target on Cisco to 90, citing multiple expansion for AI stocks. That name's getting hammered. We're down 7%. Your second call from JP Morgan downgrading Kraft Heinz to underweight, saying ongoing challenges could weigh on volumes through the year. That name is softer, lighter lower by 1.5%. And finally, Piper Sandler reiterating its call on Newmark as overweight, saying even with AI fears driving a sell-off, its bull case is unchanged. Let's stick with AI. Wealth management firms struggling to recover from this week's sell-off. The Charles Schwab CEO, Rick Wurster, pushing back on the narrative that AI is bad for business.
For us, AI is a real accelerant. We're best positioned in the financial services industry to help clients with AI because of our size, our scale, the depth of our relationships, and all the data we have, which is a key ingredient to winning in AI. AI is a beneficial to our business, not a hindrance, and it's going to help us flourish and grow and serve clients in new ways and ultimately lead to the growth of the company.
Devin Ryan, the director of fintech research at Citizens, believes the AI vigilantes are overreacting, writing, "This feels far more like evolution than mass disruption. What these headlines ultimately point to is a familiar pressure point, pricing." Devin joins us now for more. Devin, good morning.
Morning.
I could sense that Rick Wurster was slightly annoyed by the price action. I've noticed from other research notes that other analysts are too. I shared this quote a little bit earlier from another bank. The generalist money flows are responding to the rapid AI product rate of change dynamic, overwhelming the deeper thinking fundamental software sector specialists. That was about software in the last week. You're the deep thinker, the analyst that covers these single names. Do you feel like the tourists have arrived and taken over your sector?
That's what it seemed like earlier this week. AI is not a new theme, and it's something that I think is going to be a really big deal. So I think they got that part right, but in terms of it being a big negative, at least in the near term, I think is absolutely wrong. And when I kind of go backwards, I started covering this space over 20 years ago. There was 300,000 financial advisors. Today, there's about 300,000 financial advisors. So there's the same number of advisors, yet the number of assets is up 7x. So these advisors need tools, they need technology, they need ways to do more with their customers, drive efficiency, and be more productive. And AI is an area that I think a lot of these companies are already using behind the scenes to help drive productivity, drive efficiency, and we think that'll continue. But this is a non-commoditized financial service. Fees are opaque, and it's going to take a long time to really disrupt this industry.
Well, let's keep it going. So we've seen this cascade from industry to industry, wave after wave, over the last week or so. What's the biggest thing that people are getting wrong?
Well, I just think that near term there's any impact. I actually think that it's the opposite. Like, these companies are going to make more money, not less money, using AI. And that's what they're getting wrong. I think people are just going to the lowest common denominator of AI disrupts everything, so therefore bad. And I think it's right that AI is going to change this industry over the next 10 years, 20 years, where people are going to have to use these tools, and there will be more automated advice, just like 10 years ago, 20 years ago, the robo-advisors were coming for wealth managers, and we saw zero fee compression from that. What it did is lower the bar for people to get access. And I think that's what AI will enable advisors to do, cover more clients, cover more assets, and really just have the tools they need to have that personal relationship, which I think the personal relationship is what people are willing to pay for.
You used the word commoditized, and you talked about how fees are still pretty opaque and that there's a sense that that is going to be difficult to really erode into. Isn't there a demand in an increasingly commoditized world to have more transparency, to drive down those fees, especially if there is an increasing amount of the job that can be done with a computer program?
Yeah, the way I think about, Lisa, is that every person has different needs. So if you're covering a couple hundred clients as a financial advisor, each one of your clients has different goals, different family situation, and so what you're charging them for is different for each client. You maybe have different fee structures on different clients based on what you're doing for them, and so therefore it doesn't lend itself. These aren't fees that are put up on a billboard. They'll cover the retail brokers when they went from $9.99 to $4.99 to $0, because everybody's competing on this commoditized service. When you're working with families, you're working for their goals, for their complex lives. It's less about the fee, and it's more about the relationship and the trust and what you can do for them. So again, these are things, people are going to work with their advisors. At some point, things may change, but it's to me, this is like decades, whereas there's a lot of other areas within financial services that are going to change faster as we go to this kind of lowest common denominator.
But I guess does this point to the fear that people have in the wealth management unit, but also the optimism that people have elsewhere, that if you have a greater degree of transparency, and you have a greater degree of desire for data that can then be plugged into different programs that can be far smarter than I can about exactly compiling it and giving you a narrative, it's going to cause a much faster pace of evolution. It's going to really compress some of these profit margins dramatically in a way that previous technological shifts just haven't done.
Yeah. Well, I think at the financial service level, the highest level, that is true. But you have to go through business by business. So in wealth, where you're dealing with people and you have a person involved in that, the technology itself is going to do more. It's going to provide better advice in some cases. It's going to allow advisors or without an advisor to really lower the bar for people to get access to all different types of asset and liability strategies that were reserved for family offices and the highest net worth. And I think that's going to change. But advisors are going to be able to use these tools to do more with their customers. That's on the revenue side. Think about the expense side, the back offices and all the areas of expenses these firms have where AI is already call centers and it's automating tasks that you had a lot of people doing. And we've already been seeing that. So my point is, this isn't a new concept. These companies, the largest wealth managers, Schwab, Morgan Stanley, Raymond James, they've been working on this for years. So this isn't a new concept.
Are they going to employ a lot fewer people?
So I think that over time there will be fewer people, and I think that what the technology is doing will essentially automate a lot of jobs that people have. So I think that's where you get mass efficiencies, and it really also just repositions people. So advisors, for example, a lot of advisors' jobs over time have been the manual tasks, things they don't like to do. It's order entry, it is back office that even the advisor's doing. This is going to enable them to go out, get more clients, do more with their existing clients, spend more time with them where people want to pay for that personal relationship. They want the concierge. And not everybody's going to want to pay for that. And they get the all digital experience. And they already have that today. AI will enable that. But on the full service, if you want the concierge, I think people are willing to pay a small fee for that non-commoditized relationship.
If all of these companies are employing fewer people, where does the asset growth come from?
So asset growth comes from, I guess the question is, do assets appreciate? So you go back to, I started covering the space in the early 2000s and markets are up 7x.
But they're not managing markets, they're managing people, aren't they? And people's wealth.
They're managing people's wealth, but there's an inflationary aspect to people's wealth. And also, if you go back 10, 20 years, it was about stock picking, right? Advisors were picking stocks, helping them beat the benchmark. Today, it's about all your financial, your assets, your liabilities, how many kids you have going to college, when are you trying to retire by? And that's the whole point. This is not, you put it into a cookie cutter box and you get an outcome. It's everybody, you have family members sick. And so you have a lot of things that are constantly happening where people have their advisor that they've gone through a lot with. And, again, the next generation may change. And this big generational transfer of tens of trillions of dollars, that's going to potentially be different. That's happening over the next 3 decades. So for the next couple of decades, as long as the people are alive that have the money today and they have their trust relationship, there's a high switching cost to exiting your advisor relationship.
Forgive me for taking this to the extreme, but I think it's something we've got to think about over the long term. If fewer and fewer people are holding the assets because fewer and fewer people are being employed by these industries, isn't the government coming after a slice of all of this?
That's a whole other question, John. Is the government going to look to put higher taxes on or some other type of excise, if you will, potentially in the future? But based on where we are right now, I think that this is an industry where technology is actually needed. And you would say, it's slow moving because, like I said, there's 300,000 advisors today than there were 20 years ago. But technology is going to improve the process for advisors and I think their customers and ultimately lead to better financial outcomes too. So I think the good news is, to Lisa's point, you're going to get better advice, you're going to get better products, and ultimately advisors are going to have to do more to earn the fee that they get today.
Devin Smart. It's great to get the pushback. Appreciate it. Thank you, sir. Thank you very much. Devin Ryan there of Citizens, pushing back against some of the disruption we've seen in that sector over the past few days.
You brought up government regulation. I found a particular press release that came out earlier this morning absolutely fascinating. Anthropic coming out saying that they're donating $20 million to Public First Action, talking about how some 69% of Americans think the government is not doing enough to regulate the uses of AI. We agree. It's being adopted very quickly. You need to get on the ball and actually create regulation. So pause. A company that right now is raising billions upon billions of dollars to create AI programs that are going to potentially disrupt millions of jobs, is coming out and saying to the government, please regulate us. Please explain.
What's it say at the top of the statement?
Try Claude.
There you go.
But it just sort of, but it highlights, you know, how big of a concern this is. Is this a PR move? Is this trying to get ahead of the regulation to try to influence it? Is it something to stay in the public imagination as that heat-seeking missile, as Joe Amato said, continues to go after each industry? These are the questions that this really raises, but it's fascinating that they put this out especially today.
The change is real. I'm not here to push back against that. The change is real. I don't think anyone should be naive. I do think, though, you should be eyes wide open about what's happening here. This is the roadshow for the IPO. These companies are raising a tremendous amount of money over the next 12 months. Don't wait for the opening bell. This is the roadshow. It's happening. A lot of this is marketing. Some of it's real, but a lot of it is marketing.
I'm just trying Claude, sorry. Don't mind me.
See, there you go.
I'm over here.
Breaking jobless claims up next. Matt Lazzetti will break it down over at Deutsche Bank. He's here to react from New York City. You're watching Bloomberg TV.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Live from New York City, welcome back to the program. 60 minutes away from the opening bell, seconds away from some economic data. The scores look like this going into jobless claims. Equities firmer by 0.25% on the S&P, on the Nasdaq up by 0.2. On the Russell 2000, the small caps higher by 0.7. In the bond market, yields repricing higher in yesterday's session following stronger than expected payrolls. This morning lower by a basis point at the front end, down by almost 3 at the very long end of the curve. 30s down to 477.89. Here's the jobless claims number, and it stays somewhat elevated relative to the previous week. 227, that is the wrong kind of upside surprise, just on the margin. Our median estimate was 223 here at Bloomberg, and the continuing claims slightly higher as well. So jobless claims coming in at 227,000. The survey was for 223, and the previous number, a revised 232. So yields stay just a little bit lower, down a basis point at the front end and down by a little more than 2 at the very long end of the curve.
Yeah, continuing claims popped up to the highest going back about a month. So that's what some people are going to be watching to get a sense of just how much people are taking a longer time getting a job. Look, this just goes to the inconclusivity of what we got yesterday. If it was such a rip-roaring labor market, why are initial jobless claims ticking up just ever so slightly week after week?
Levels versus change. Levels, the 4-week average of around 220 is not a big problem in any way, shape or form. If you look across history, 220 is a pretty low number for jobless claims, but I'm with you, change. It has crept higher over the past few weeks, and when you compare it to the blowout payrolls report yesterday, this is why some people are poking holes in the bull case for the US economy.
And if you take a look at the revisions for the prior month, you can see that that actually was revised upward just a touch, nothing dramatic. Again, we're not raising a red flag or saying that the world's on fire. 232,000 versus 231. Nonetheless, there is a confirmation here that things are not completely rosy, which is the reason why people are saying, look, you might get some stability, but it isn't exactly a runaway labor market that's going to speak to acceleration and growth.
To weigh in on all of this, Enda Curran down in Washington, D.C. to break down the data. Enda, as Lisa pointed out, there's no big fireworks, no drama here. What stands out for you?
Maybe a little bit of a reality check, Jonathan. As you mentioned, it was expected to stabilise this reading, but it's come in a little bit above expectations. And the previous month's been revised up as well. It suggests that, you know, the labour market softness story hasn't gone away despite yesterday's bumper number. So I would say something of a reality check. And also, by the way, I think in the wake of yesterday's numbers, there's been more focus as the day went on the revisions. Yes, the January number was strong, but the revisions for the totality of last year, as we now know, mean it was the worst hiring year outside of a recession since 2003. So that puts a lot of question marks on, is January signalling a turning point? Are we turning a corner in the labour market, that stabilisation story, or is it going to be something of a blip that will ultimately be revised back? And when you get to jobless claims this morning, as you say, they're not a game changer in and of themselves, but it's probably a reminder that the soft labour market story hasn't totally gone away.
Governor Myron responded to the strong jobs data yesterday, and he made the point that, yes, that's strong, but the reason I want to cut interest rates is because what I think is going to happen with inflation. That takes us to CPI tomorrow morning. Are you expecting to see more signs of disinflation building in this economy?
I think that's the broad expectation. I mean, Governor Myron has certainly been, a bit of an outlier, as you know, John. He's been calling for deeper rate cuts, and he's putting a lot on the fact that rental inflation will come off much faster, and he sees much faster disinflation than others do. But the inflation story tomorrow is expected to be somewhat intact. But I think there's no immediate, or at least Fed watchers don't see any immediate change on the horizon for Fed policy near term. Rates seem to be on hold. Policymakers are signalling they're comfortable with where rates are at the moment. And I think over the coming months, we're very much going to be on a wait and see, especially on the labour market front.
Enda, good to see you. Enda Curran down in Washington, D.C. We'll catch up with Enda again tomorrow when we get inflation data, 8:30 tomorrow morning. If you're just joining us, welcome. Upside surprise, as we often say with claims, the wrong kind of upside surprise, 227. The estimate in our survey, 223. That's down just a little bit from a revised 232 for the previous week. With us around the table, Matt Lazzetti of Deutsche Bank. Matt, welcome to the programme. I'm going to start with a bit of jargon. You're going to translate. What is residual seasonality? What is that? That phrase gets thrown around on Wall Street. What does that mean?
I love starting with residual seasonality on 8:30. So, we get data that comes in and it's non-seasonally adjusted. The government agencies go through this process of seasonally adjusting it. And essentially, you're trying to take out the typical seasonal patterns that you would have throughout the year. They're not able to do that perfectly. And so what you tend to see in some of these data is in different parts of the year, you have stronger data or weaker data. Over the past several years, you've seen stronger inflation data to start the year. I would add that you've actually seen stronger labor market data to start the year as well. So the upside surprise we got yesterday, we had gotten upside surprises in prior years as well. from my perspective, and I think if you translate this for the Fed, they should not get overly excited about a month or two of very strong data. They should also not get overly depressed or pessimistic about a month or two of very weak data, as you saw in the back half of last year.
So if I want a clean read, forgive me, to get a clean read on the labour market, where do I go?
That's certainly a difficulty. I think you want to be smoothing through over longer time periods. So inflation, I think there's all this focus on 3-month annualized changes. I think that's not the right measure that you want to be looking at. I think the year-over-year rate, it smooths through all the seasonal differences that we get. And so therefore, it's giving you a little bit of a better read of underlying trends in the inflation data.
And what does that say? I mean, in terms of just how much you get job growth that does stabilize at the same time that you get inflation that's starting to come down. I mean, is that picture confirmed when you smooth out the data? You take the crystal ball, you shake it up, you put a little patina on it.
Yeah.
Is that what you get?
Yeah, I want to paint a little bit of a brighter picture of the labor market data than I think we were just presenting. I think as you look at jobless claims, I think it's pretty clear that the weather has impacted those over the past 2 weeks. So last week, initial jobless claims, half of the rise was in New York, New Jersey, Pennsylvania. I think we could all relate to that being in this area, the snow that we've had. Half of the rise in continuing claims this morning, which is a week delayed, was also driven by those 3 states. So I think we're still working through some weather effects. I think as you broadly look at the labor market at this point in time, the unemployment rate has come back down to 4.3%. The quits rate, which is a very good measure of labor market slack, has basically been unchanged over the past 12 or 18 months. You have a layoff rate, which remains well below where it was before the pandemic. So you still have this somewhat uncomfortable environment of low hiring and low firing, but it's a labor market that's been pretty stable over the past 12 months.
So where is the hiring coming from, and is it good enough to sustain this? And I ask this given the fact that we're talking about wealth management potentially laying people off or not hiring people because of artificial intelligence, the fact that we've seen that roll through the tech sector. We're seeing that sort of sector by sector. How much do you start seeing that with wage pressure that really doesn't speak to this consumption boom and real acceleration backdrop that so many people are talking about?
I think that's one of the holes that people might poke in yesterday's jobs report. So you had 170,000 or so jobs added in the private sector, about 130,000 coming from education and healthcare workers. That's been the trend. You have this outside support coming from this particular sector. But I would actually add the diffusion index, which measures kind of more broadly where are we getting jobs from, picked up to a 2-year high. You saw goods producing industries actually add the most since mid-2023 yesterday. Manufacturing picked up, construction picked up. So there was some early evidence that maybe there's a broadening out of job gains that are taking place. On AI specifically, I think there's been a lot of focus on the younger age groups, that 22 to 24 age group, particularly those that are college educated. I think really importantly in the data yesterday, you saw the 20 to 24 unemployment rate. It's down 2 percentage points over the past several months and basically hasn't risen over the past 6 or 12 months. So that was a positive development, I think, from yesterday.
You mentioned the improving breadth outside of just healthcare. Are you seeing data elsewhere that corresponds with that supports it?
I think when you look at the ISM manufacturing index as an example, that has shown some strength as of late. Some of the survey-based indicators have looked a little bit better, but look, it's all tentative. You don't want to kind of ring the all clear signal here for the Fed. I think for the Fed, as we look over the next several months, yesterday's report, I think for me was strong enough where it says now if you get 1 week jobs report, that's not sufficient for them to cut rates.
The bar's higher.
The bar is now higher as you look ahead, and the market responded with that by taking out rate cuts over the next 2 meetings. The market's still building in this big premium when Kevin Warsh comes in as the Fed chair in June, that all of a sudden he's going to start cutting rates at that point.
Do you think he will?
No.
Why?
I think there's 2 things that are ongoing here. One is the reaction function of the committee, and the reaction function may be somewhat more dovish for the new Fed chair. But he's coming into a committee that, at this point, sees very good reasons, I think, to keep rates on hold. The second part of this will just be the data. The Fed has to be responding to the incoming data. And I think as you get evidence that the labor market has stabilized over the next several months, and with inflation, core PCE, which is what they're targeting, probably remaining between 2.75 and 3%, it's pretty clear from their dual mandate objectives. They're missing very clearly on one, but the labor market looks much closer on the other.
I'm thinking of what we hear, but, what about the other side of the mandate? Maybe they're not missing just as much as they have been expecting, given the fact that you see rents coming down in a significant way. McDonald's is cutting prices for value meals. Pepsi is cutting prices in order to bring in more customers. I mean, isn't there a potential disinflationary rush that we could see as early as tomorrow that could potentially give credence to some of the doves on the committee?
I think as you look ahead, there is a potential disinflationary trend that's in place. I think shelter will be key to that. One of the surprises in the last CPI print was actually that shelter and owner's equivalent rent bounced back more strongly than anticipated. So we'll have to see whether or not that continues tomorrow. I think bigger picture, we are expecting disinflation. Shelter is part of that. Core goods inflation, I think, should be part of that as well. We think tariff rates are going to come down over the course of this year, continue to come down. But the Fed has missed their inflation target by a wide margin for now 5 years. And the labor market is very close to what they think full employment is at this point in time. With that context, I think it makes a lot of sense to then be cautious about adjusting policy lower.
And yet they cut 3 times at the end of last year. And Steve Rasciuto of Missouri was on the programme earlier suggesting that in 6 months, that will lead to another economic pickup. What's your thought on the long and variable lags? Just how long are they? How variable are they?
Yeah, I think the analysis that's done there, and for the U.S. Monetary Policy Forum, we did some work on this last year. Those long and variable lags that Milton Friedman talked about, we're kind of in year-over-year data and the cumulative effect over time. Yes, they might peak in about 18 months. When you look at the impact on quarterly data, it's pretty short. So it tends to happen over the first or second quarter. I think as you look at financial conditions today, the Fed's own metrics tell you that financial conditions are adding a percentage point to growth over the next year. That's the easiest that they've been since 2022 before they started raising rates. You have fiscal policy, which becomes more supportive over the course of this year. People worried about AI. CapEx might be coming down. We're getting upside surprises from those companies there. So, yes, I think the economy has a lot of support at this point.
We've seen a series of upside surprises there over the last week. Matt, it's good to see you. Thank you,
good
sir.
To see you.
A clinic, as always. Matt Lazzetti there of Deutsche Bank. Equities session highs were up by 0.4% on the S&P 500, within striking distance, not too far away from all-time highs on the S&P. With an update on stories elsewhere this morning with your Bloomberg Brief, let's cross over to Vonnie Quinn. Hey, Vonnie.
Hey, John. Thank you. Recapping the data we just got, jobless claims coming in at 227,000. That's just an edge above estimates called for 223,000. It's a slight tick down from the previous week that saw claims revised to 232,000. Continuing claims also remaining elevated, coming in at 1.86 million. That's more than what estimates had called for. Nuveen is buying Schroders for about $13.5 billion. The acquisition is creating one of the world's largest active asset managers with nearly $2.5 trillion of assets. It ends more than 2 centuries of independence for the UK's largest standalone asset manager, although the Schroders brand will be retained. Morgan Stanley CEO Ted Pick getting a big raise. The company boosting his pay by 32% for 2025 to $45 million after the record year for the firm. Morgan Stanley shares surged more than 40% last year, far surpassing the performance of the S&P 500. And that is your Bloomberg Brief. John.
Not bad, Ted. Not bad. I know he's watching at this time,
yeah.
So
Ted,
that's
congratulations. Buy yourself a nice bottle of champagne.
I think lunch is on you, Ted. I think that's fair to say. Coming up next on the programme, George Bory of Allspring looking ahead to tomorrow's CPI print, plus Yahira has your morning movers. Coal stocks getting a boost from new support from the Trump administration. We're up in the pre-market there. From New York City, you're watching Bloomberg TV.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. I'm not here to say what I would and wouldn't do in the future. But the theatrical experience is one that means a great deal to me. It means a great deal to us. Mm-hmm. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. But that's where I'm at today.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
The opening bell 44 minutes away. Equity futures session highs up by 0.4 on the S&P, higher by 0.8 on the Russell 2000. That rotation to small caps, that outperformance rather, continues. In the bond market, 2-year, 10-year, 30-year yields shaping up as follows. The 2-year down almost a basis point. No drama here. Down at the long end by 2 basis points as well on 30s to 4.78. A lot of issuance through the week, particularly across the long end of the curve, 10s and 30s.
Yesterday, we got some 10s that did not go that well, actually. We saw dealers take down a bigger proportion of the overall sale. And you saw it really cheapen up after it came to market, which raises this issue of the peripheral demand for long-end treasuries. I got to say, getting a boost today from Japan and what's going on over there. So, yes, it could be what people expect about U.S. monetary policy, but I always have one eye on what's going on with Japanese folks.
As you should. As you should. $25 billion of 30-year bonds coming to market later on this afternoon, so look out for that. As we count you down to the opening bell, let's get you some single names, some morning movers. Yahira has more. Hey, Yahira.
Hi, John. Big drop for Icon shares this morning, down 32% now in the pre-market after the company announced it is launching an internal accounting probe. This is a healthcare services contractor company, and it's not a small firm. It has a $10 billion market cap, but what they're saying is preliminary findings show it may have overstated revenue in 2023 and 2024 by less than 2%. While on the surface, that's not huge, it is causing some uncertainty because Icon has pulled guidance and delayed its results. Meanwhile, we are seeing Cisco shares also falling in the pre-market, down 6.25% after it became the latest company to warn us that rising memory chip prices will eat into the bottom line. That matters because Cisco, of course, is the world's largest maker of networking equipment, and it uses those components across a wide range of products, and that overshadowing what was otherwise a solid report by Cisco. And we move on to coal stocks. They are rallying in the pre-market after the Trump administration announced new support for the industry as they lean more and more on this energy source. We are seeing Peabody Energy up 4%. The White House just yesterday ordered the Pentagon to buy electricity from coal plants to power their military operations, and they announced new fundings to upgrade existing facilities. John.
Yahira, thank you. Thanks for the update. Some movers there for you going into the opening bell. Heading into the opening bell, here's the trading diary the week ahead. At 1 p.m. Eastern time, that 30-year bond sale. Look out for that. Plus the Fed speak from Logan and Myron tomorrow. The CPI data, the last big data point going into the weekend. As we come out the other side of things, remember, long weekend here stateside, closed on Monday for the President's Day holiday. Wednesday, we get some Fed minutes. And a week today, earnings from Walmart. The first big retailer to report, I believe Costco and Target, is early March, but that's going to be an important read on this consumer and the broader economy.
Walmart has been one of the top performers over the past year, but also the past 5 years and 10 years as they morph into something of a tech company alongside a consumer spending company. Do they see the same trend that McDonald's sees? How are they catering to a low-end consumer at the same time that they're broadening their business?
Let's keep it on the data. Traders looking ahead to the latest read on inflation with CPI due tomorrow. George Bory of Allspring Global writing the following. With about $1 trillion of stimulus earmarked for the first half of 26, the US economy could overheat, leading to an uptick in inflation. George joins us now for more. George, welcome. Can you put some numbers on overheating? What does that actually look like?
Yeah, no, it's as you've just heard, we've got some mixed data. We've seen mixed data. We saw a pretty solid payroll report yesterday. But as you just mentioned, some of the retail numbers are mixed. But we know that there's a significant amount of stimulus coming into the system between tax cuts, tax refunds, tax incentives, and also, a very, very significant spend on the AI front. That clearly is underpinning the economy. Now, as you point out, there are some signs of disinflation, and we are seeing disinflation kind of gradually unfold across the economy. And this is tomorrow's print is the expectation is that that CPI is likely to show another small notch lower. We're not convinced that can be sustained, and to the extent the strength that we're seeing in the economy does show some signs of broadening out. And while the labor market still has some pockets of weakness, we start to see a broadening there. And we see good, strong corporate profitability continuing to unfold over the course of the year. These are enough to cause both growth to expand and to broaden, as well as to keep inflation elevated. And that is one of our major concerns as we go into this year, is that there's an overwhelming consensus that disinflation is the sort of the path forward, and that it's going to be a strong and accelerating path. We don't believe that's necessarily true, and that inflation's not sticky, it's stuck. And it's the stuck nature of inflation that concerns us as bond investors.
So, George, let me jump in. Typically, for a guy like you in fixed income, when you say all those things, I would say that sounds like it's bad for treasuries and good for credit. The credit piece of it, though, is where a question mark is now, because some of the stimulus this year, some of the tailwinds are coming out of the tech sector because they're borrowing and they're spending even more. So how do you think about credit against that backdrop?
Yeah, no, credit is doing well in the aggregate. Broad inflation, sort of modest inflation, if you will. This kind of, you call it 2 3/4, 3% type of inflation, is actually a pretty healthy operating environment for the broad credit platform, so that companies are earning, pretty good profits, and their cost of funding remains fairly well contained. However, as you point out, in the tech sector, there's a significant increase in spending. There's a significant increase in borrowing. All the hyperscalers are borrowing to build out this sort of $5 to $10 trillion infrastructure spend for AI. That is coming at the expense of some credit spread widening within the sector, and then starts to rebenchmark other sectors as investors look to the alternatives. However, concentration risk does start to creep into bond investor behavior and consideration, because as the AI spend broadens out and increases, investors are being asked to lend more and more and more. And we do start to reach limits as to how much investors are willing to lend and how concentrated investors are willing to allow their portfolios to become.
And George,
this is not
sorry,
a
just
huge
sorry
problem,
to
but
break
it is
in.
starting to emerge.
But George, this is a problem for the investment grade side, right? When you look at some of the issuance. So you might say, okay, we'll go into high yield, go into some of the more cyclically sensitive areas. At the same time, what we're seeing there is increasing disruption risk. So which do you prefer? The concentration risk of investment grade or the potential disruption risk of high yield?
You can pick your spots. And so I think on the disruption side, You are seeing some degrees of overreaction. So our bias would be really to take advantage of those when we see sell-offs, when we see specific sectors come under pressure, and you start to see kind of weakness emerge from a credit perspective. On the funding side, you have to be very selective. There are both maturities that look attractive, but then there are also issuers that you may think have a pretty good competitive advantage from a funding perspective. So we like this volatility. Actually, it creates a lot of opportunity within our credit funds, within our investment process, and it allows you to kind of pick your spots, if you will. And so this very, very compressed, this tight spread environment is showing an increasing amount of dispersion in an otherwise overall tight environment. That's a good opportunity for us as bond investors, as active investors, to pick our spots, to align portfolios with companies that both have a competitive advantage so they can withstand or accelerate in a new AI environment, but also lend to those companies that are spending on projects and products and environments that we think have good long-term value. That's a great bond picking environment that allows you to excel. It allows you to create diversity in the portfolio and really set up your bond stream of coupons so that there's a lot of consistency as you move forward.
Hey, George, appreciate the pitch. It's good to hear from you. George Borey there of Allspring Global on the fixed income market. Losing count the amount of guests that have come on this programme in the last hour and mentioned sticky inflation for the year ahead.
And this seems to be a theme for half of the people. And then the other people say it's going to be rapid disinflation that leads to the Fed to cut rates 3 times this year.
Led by Shouter.
Which is the reason why you have this average that belies the dispersion that we're seeing under the hood.
And that's the promotional material for tomorrow morning when we count you down to CPI Friday. CPI Friday, just around the corner, 8:30 Eastern Time for that data. Coming up tomorrow, looking forward to catching up with Peter Chia of Academy Securities, Andrew Hollenhorst of Citi, Kelsey Barrow of JP Morgan Asset Management, and the Republican Senator Tom Tillis. From New York City this morning, good morning. Thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Bloomberg has learned that there are discussions around a potential all-cash offer for Warner's studio and streaming businesses.
For the past few years, we hadn't really seen any deals above $30 billion. And now we're seeing, Warner Brothers, $80 billion, the big railroad deal. And what we're hearing from sources is that next year we're going to see more of the same. It's just going to be the mega deal.
I would expect next year will be an even better year for M&A and IPOs.
That's just kind of what we do at Serena Ventures, is just kind of learn how we can fill in different gaps in different areas that are being missed. And by the way, these gaps tend to be really, really massive.
I know you've been very bullish on the return of M&A. Do you expect more deals, if they are of this size, to have the same sort of structure and contours?
I think we're going to see the return of large transactions, and I think they're going to avail themselves of both private credit options and public options.
There's a lot of merger talk. There's a lot of firepower.
Investors wanted to know at what price would this deal be, and now they answered that question at $70 a share.
So congratulations to Bloomberg's deals team for getting it first.
I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Power Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop. I'll still be driving something.
Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
It's Thirsty Thursday, and futures are higher. 30 minutes till the start of the cash trade. I'm Matt Miller.
I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, the old economy is hot again. Stocks in the Dow Transport are getting a new lease on life as a new wave of AI anxiety spreads across other sectors.
Nuveen is buying Schroders, creating one of the world's largest active managers with nearly $2.5 trillion in assets.
And President Trump's tariff agenda suffers its strongest political hit yet as the House passed a bill to scrap some of his levies on Canadian imports.
So we're still working our way through earnings, and one of the big ones that we got was Cisco, and that was a disappointment, Matt. I want to show you what it's doing pre-market. Down 6.5%. We're going to talk with Caroline about this in just a moment, but big picture story, weaker than expected forecast or profitability in the current quarter due to mounting memory chip prices, and that overshadowed an upbeat sales outlook, a problem the whole industry has been struggling with.
It's a $300 or $400 billion company, so it's big. On the flip side of that trade is the memory chip makers, which are surging as their price hikes boost margins. You can see SanDisk, Micron, and Western Digital, three of the biggest gainers of 2025 and of early 2026, putting up even more gains. So these memory chips continue to rally, Danny.
The trend is going nowhere. Let's bring in Bloomberg's Caroline Hyde to discuss it. Caroline, I'm almost surprised the reaction to Cisco is so big, because didn't we know this was a problem, that memory was really expensive?
And that it beat everywhere else.
True.
Revenue is looking healthy, up 10% for the quarter just gone. They beat on their bottom line as well. But what they're signaling is that this is expensive to get the right equipment in for the networking that they're building out, particularly when they're really leaning into the AI opportunity here. They say there's going to be $5 billion of orders for their AI more broadly for 2026. But if they're having to wheel and deal, having to do special negotiation with some of their suppliers, having to increase prices to those that are coming to them for the networking gear, it's just speaking to the difficulty that these companies find themselves in. Chuck Robbins was really quite bullish about the fact that they can deal with it probably better than anyone else because of the substantial place they have within the market. But this is wearing on everyone who's having to buy back. Just think how Dell has been implicated. Apple, we've also been worried about, even though it owns its own supply chain in many ways. The memory threat is eating into a margin that people wanted to see at 68%, and you're going somewhere 65 to 66% for Cisco.
SoftBank back to a quarterly profit on investment gains from OpenAI.
What a bet.
What's the story here?
4 straight quarterly profits, actually. We haven't seen that from SoftBank since 2021. They are all in on the AI build-out. Now, whether it's been committing to Stargate, $500 billion infrastructure spend here, alongside OpenAI, Oracle, and MGX as well, over from the Middle East. But this is Massa going back to his knitting. He has made his name by doing extraordinary bets on companies like Alibaba. We thought maybe he'd lost it during his way of the Vision Fund and the fact that we saw such a coming of reality to a lot of the tech stocks and indeed valuations at that time. But now OpenAI is just up and to the right. We're thinking it might be worth, $750 to $830 billion. Well, he's been building up his stake. He's got about 11% of the company. He's already spent $36 billion. He wants to spend potentially up to another whopping $30 billion on this company. But it pays off because the valuation keeps going higher. But look, this isn't like liquid money he's got sloshing around at the moment. And it's notable that he has been having to think creatively, get some more loan on margin, be able to sell off. Remember, he's been selling off T-Mobile shares to be able to buy more. He exited NVIDIA entirely.
All right, really a lot to look forward to then, as usual, on Bloomberg Tech. Caroline Hyde co-anchors that program, kicks off at 11 a.m. Now, Nuveen is buying Schroders in a $13.5 billion deal. It creates one of the world's largest active asset managers, $2.5 trillion. Schroders CEO Richard Oldfield spoke on Bloomberg earlier.
What we are doing here is creating this powerhouse of asset and wealth active management. It's going to have an unparalleled breadth of public to private capabilities. And at 2.5 trillion, it gives us the firepower to actually invest in our business and make ourselves more relevant to clients.
Bloomberg Deals executive editor Aaron Kirschfield joins us now. And Aaron, I mean, this is an active company, right? They just did a deal with Apollo. Now they're getting sold to Chicago-based Nuveen. Tell us about the behemoth being created here.
Yeah, I think this is all about scale because Schroders has been facing significant headwinds, as all active managers are. You need to have the scale, and it's also, you know, people are putting their money into passive investments, ETFs, et cetera. So we have been chasing noise, rumors about Schroders getting taken out for over a year. And interestingly, the CEO himself said just this summer, no, the Schroders family is not putting us up for sale. There's no intention to sell. As we've all woken up to this morning, it was quite the opposite, and they are now doing a deal to get big and get big before they can't survive any further.
So what is it about this environment where you particularly need scale, Aaron? Is it rates coming down? Is it fee compression? Is it all the above? Is it something completely different?
It's a big mix of all of the above. The reality is the costs at Schroders were under pressure. They were being viewed as too expensive. Their stock was down 25% in the last 5 years, and people were just worried money investments were just not going through Schroders. So, you know, they really felt the pressure, which is why even if they were publicly saying, no, we're not planning to sell, behind the scenes, people familiar with the matter have said they've been talking to various parties over the months, and they obviously found the partner they wanted, which has made commitments to staying, you know, having a big presence in London, keeping employees here, keeping the Schroders name, which, you know, is a very storied name in the UK. So it is a bit of a U-turn, came as a big surprise, even if there had been rumblings for days, if not weeks.
Aaron, thank you very much for that. Bloomberg Deals executive editor Aaron Kirschfield, who you and his team can catch on Bloomberg Deals, airs every Wednesday at 12 p.m. Eastern. In earnings news, McDonald's sales grew at the fastest pace in 2 years as its focus on value meals pays off. Bloomberg's Red Brown covered the earnings and joins us now. Red, is that what this is? The fact that you had McDonald's lower the price of its value meals, and that's why sales did so much better?
Yeah, I think that's a big element of it. That's what the company is pointing to a lot. But there's also, they did really popular promotions as well. There's the Grinch meal that was like one of their best sales day in company history, they said. So that also really boosted the results, especially in the U.S. But I think overarching across all of their international markets as well, it is really this value push, being very conscientious of how they're raising prices, that is really getting foot traffic back into the stores, especially among lower income consumers.
It's interesting, as you know, more people take GLP-1s, I would assume they avoid McDonald's, but it looks like they continue to go there, and they're driving comp sales higher at other fast food chains as well, right? I see QSR just came out with comp sales up 3.1%, higher than the estimate.
Yeah, I mean, the company was asked about GLP-1s, and they, again, this came up on Chipotle as well this quarter, and both companies seem like really not worried about this. They feel like they have a menu that's going to be able to appeal to these people. McDonald's talked about, you know, they have protein options as well. They have the snack wraps, things like that are smaller and maybe just a little bit lighter for somebody who is trying to get the right macros and things like that, which I know you care about, Matt. In these meals.
I do feel like every ad I've seen, like I keep seeing this Chipotle ad that's like, you can now get, or maybe it's Sweet Greens, you can now get like a cup of chicken, and isn't that the best protein you can get? And why would you have a protein shake if you can just eat a nice cup of chicken?
It is. Chicken is very high quality protein.
But I wonder also, Red, if some of the sales illuminate that they just raised prices too much in that post-COVID boom. That it's not necessarily that consumers are weak, but they just went too far with trying to hike up where their prices were, and they're correcting for that now.
Yeah, that's definitely, I think, the acknowledgement from the company. They really made a significant investment when they said that we're willing to go in, because you have to remember that McDonald's corporate doesn't necessarily set the prices. These are independent companies. These are owned by franchisees. They determine the prices. But McDonald's went to these people and said, look, we know you love the higher prices, but we need to bring them down. We need to reestablish McDonald's as the number one value option for consumers. And to do that, they said, we're willing to invest with you. We're willing to make up losses from these price cuts that we're asking you to do. So they really do see that the problem was the prices, and they were willing to do what they needed to bring them back down.
All right, Red, thanks so much for joining us. Red Brown covers the restaurant business for us on the BN side. Quick check on what's going on in futures. You're seeing gains here, 1/3% on S&P futures. NASDAQ futures up a little bit more than that, and the small caps doing even better. In terms of our single stock stories, Crocs.
Crocs.
Right up there.
Oh, yeah. Look at this move for Crocs. More than 13.5% of the pre-market. Low in past estimates, seeing strong demand, identifying $100 million in cost savings. I gave my father-in-law a pair of Crocs for this past Christmas.
Who doesn't need plastic shoes?
You're welcome, Crocs.
Birkenstock revenue jumped 18%, speaking of footwear, in the fourth quarter as holiday sales of clogs and boots were strong.
Now, speaking of ugly footwear.
And yet.
That's the commonality, that just like big old bricks on your feet, plastic or leather.
But I guess Crocs are like the new Birkenstock, right? I mean,
sure.
for the new generation of
for the
like
kids.
lower IQ Gen Z.
That's horrible. But Birkenstock is popular among the kids, too. A very different industry. Brookfield profit rose in the fourth quarter. The company reported record earnings from its asset manager and strong growth in its wealth business. Those shares up nearly 2%.
Coming up, a rare rebuke for President Trump. The House gives part of Trump's tariff agenda a big hit. We're live in Washington next. This is Open Interest.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophy. 1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Let's get now to high interest. Look at what's making headlines around the world. Clear Street Group is cutting its IPO size by nearly 2/3 after investor pushback. The broker now plans to sell 13 million shares at $26 to $28 apiece, down sharply from its earlier target. That trims the potential raise to about $364 million and lowers its valuation to $7.2 billion. The IPO still reportedly oversubscribed, though, and expected to price today. Citi says markets are too relaxed about U.S. inflation. The strategist argues that price pressures remain structurally higher and investors are underpricing risk. He recommends betting on five-year inflation forwards, now near 2.5%. Strong jobs data has already pushed Treasury yields higher. And in a major rebuke to President Trump, the Republican-led House passed a bill to end tariffs on Canadian imports, with 6 Republicans breaking ranks. The move highlights growing GOP anxiety over affordability ahead of the midterm elections.
Let's get more details on that now from Tyler Kendall, Bloomberg's Washington correspondent. Tyler, I'm guessing this is largely symbolic, right? Because Trump can just veto anything that comes to his desk. So what does this do in terms of actually pushing back on President Donald Trump's tariff policies?
Right, exactly, Danny. This is more of a message from lawmakers who say that they are feeling the pressure when it comes to the top issue for American voters, which is, of course, the economy. And you're right, this is going to be symbolic. President Trump can veto anything. The measure is probably going to go to the Senate next, where it actually likely will pass. But once it goes on to the president's desk, it would then take a 2/3 majority in both chambers in Congress to override his veto. So this isn't going to necessarily become law, but it does underscore how these lawmakers want to send a message to this White House. And it's interesting because if you look at the 6 lawmakers that went against President Trump, yes, some of them have long feuded with the president over other policies, but the other lawmakers really represent those critical battleground districts. And it was interesting to hear them talk about why they took this vote in the way that they did. Some of them are citing concerns specifically to their constituents, like one lawmaker in Washington state talking about how we've seen transport between Canada and the U.S. decline since these tariffs, whereas others spoke about some broader reaching impacts, talking about how the president took unilateral action and he didn't seek congressional approval when it came to his tariffs. With all of this said, we should probably still state that the vast majority of Republicans did vote in favor with the president. And part of that could have been a threat hanging over them that the president is going to put resources behind anyone who challenged him on this vote. He's going to back their primary challenger. And Matt and Danny, the numbers are pretty remarkable when you think about it. President Trump has amassed a $483 million war chest. People familiar with the matter tell us he is going to be directly involved in how that cash gets deployed as we head into November.
Tyler, I think it's safe to say that after the Trump-Biden debate, there was a bipartisan revelation that President Biden could no longer run for office again. And I wonder if there was a similar bipartisan reaction to Pam Bondi's testimony in D.C. yesterday. Listen to this clip.
Donald Trump signed that law to release all of those documents. He is the most transparent president in the nation's history. And none of them asked Merrick Garland over the last 4 years one word about Jeffrey Epstein. How ironic is that? You know why? Because Donald Trump, the Dow right now is over. The Dow is over $50,000. I don't know why you're laughing. You're a great stock trader, as I hear, Raskin.
So Pam Bondi, who is the United States Attorney General, had no answer to questions about why the Department of Justice unredacted the names of victims, why the Department of Justice has not released all of the Epstein files, why the Department of Justice kept the names of perpetrators redacted in a release to Congress, and why the Department of Justice has done nothing in terms of indictments or investigations into people accused of these heinous crimes. Is anything going to happen here?
Well, Matt, at this point, all we've seen really from congressional lawmakers is their ability to hold these oversight hearings. To your question on if there's going to be something tangible that comes from this in terms of perhaps Pam Bondi's job, President Trump has largely stood behind her. In fact, when asked last week about how she's doing, he defended the Department of Justice's handling of the investigation. He urged the country to move on, in his words, when it comes to the Epstein files. But as you're outlining, there are a lot of huge questions, and it is turning into an issue that has political potency. In fact, Thomas Massie, one of those lawmakers who voted against the president when it comes to the tariffs, has been leading the charge when it comes to getting out more information on these files. This week marked the first opportunity for lawmakers to view some of the unredacted files within the Department of Justice, though Thomas Massie raised concerns about those unredactions there, saying that there wasn't enough information that he was ultimately looking for. So it's going to be something to watch closely, since we know that the White House is really now playing defense on the issue. Again, President Trump throwing money behind Thomas Massie's challenger when it comes to the primary in May. This is going to be one of those bellwethers to watch on whether or not the party can get beyond this issue, or if there's going to be some other consequences for Republicans down the road.
The other issue that Trump risks the narrative, or maybe it already has, getting away from him, Tyler, is on immigration. If affordability, tariffs, and the Epstein files are two, this is perhaps the third. Chuck Schumer, the Senate Democrat leader, putting on X, we're 3 days away from a DHS shutdown, and Republicans have not gotten serious about negotiating a solution that reins in ICE. Tyler, where is this all heading?
So, Danny, today is actually a very critical day in the Senate, and it does look like it is highly likely that we could see the Department of Homeland Security shut down this weekend. What's going to happen today is that the Senate is going to put up essentially a test procedural vote on a DHS funding package that has already passed the House. That is likely to fail. That would have been for longer-term fiscal year funding. Next, what they will likely do is put on the floor a short-term stopgap measure that would perhaps fund DHS for another 2 weeks. But Democrats, as you just outlined there, as we heard from the Senate Minority Leader Chuck Schumer, are saying that they're not even going to get on board with a short-term patch until there are real negotiations for changes when it comes to immigration and customs enforcement. The issue is that the parties are just so far apart when it comes to this issue. Republicans have said some of those top demand from Democrats are essentially non-starters, such as new judicial warrant requirements or what's been called demasking of ICE agents while they're conducting immigration operations. What Republicans had wanted was for these concerns, these demands to be addressed through executive action. Let President Trump do them through some sorts of orders, such as body camera mandates, as one example. But Democrats are holding firm that they need to see these changes ultimately codified into law. The issue, Matt and Danny, is that if DHS shuts down, this is a massive department, 260,000 employees, and it's not just ICE that's encompassed in DHS. In fact, ICE is probably going to be shielded by any shutdown, considering that the agency was given funding to the tune of $75 million under the One Big Beautiful Bill. We're looking at the Coast Guard, FEMA, and TSA most likely to be impacted.
Tyler, thank you very much for those updates. That's Bloomberg's Tyler Kendall in Washington. Coming up, Kayla Cedar of State Street joins us to discuss AI disruption in markets and where this economy actually is. That's going to be coming up very shortly. This is Bloomberg Open Interest.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your opening trade.
Only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
date, value outperforming, which isn't necessarily a positive look on a go-forward basis for markets. Staples screaming higher, and I would characterize it as FOMO, but also financials underperforming at the same time. Extraordinary. That message tends to say recession ahead, but actually there's a much more nuanced story. It is really a manifestation of this AI disruption trade.
That's Julian Emanuel earlier today on Surveillance. Let's bring in State Street Macro multi-asset strategist Kayla Cedar. Kayla, wonderful to see you as always. I got to ask, because you obviously cover like the universe of investing. You have a very macro lens, but I'm wondering how many of your conversations with clients have been with AI disruption in recent days? Just how heavily is this weighing on everyone's minds?
Yeah, hi, Danny. Thanks so much for having me. AI is, for months has been the conversation. I think one thing that's standing out now when we talk to clients is, what does AI actually mean, and where do we get exposure? Where is it disruptive, or where should we avoid? And one thing I think that really stands out to us within the overall AI space is when we look at positioning across places like software, tech hardware, and semis, we still see lots of institutional investors looking for exposure to semis, looking for exposure to tech hardware, and they've decreased their exposure to software right around neutral. And so when you're thinking about these longer term investors, what are they worried about? It does look like they are worried about disruption in the software space. With that said, they're not willing to go underweight yet. I think they're just biding their time to get a sense of how disruptive this could actually be.
All right, Kayla, we're going to keep you with us through the opening bell. Kayla Cedar, on the AI disruption that we're watching and the rotation in this trade. In terms of futures, we are seeing gains today, 0.3% on S&P futures. At the small caps rising by 0.75%. When we come back, we'll give you the opening bell on the New York Stock Exchange and the NASDAQ market site. This is Bloomberg.
Nobu-san, would you say, when you look at your career, that the pivotal moment was actually that meeting with Robert De Niro? It took him 4 years to convince you to open a restaurant near him. You eventually did, and that started a partnership that has lasted through the decade.
I met him 1988 after my first restaurant opened. He asked me to come to open the restaurant in New York. And beginning, I didn't know what he did.
You didn't know he was an actor?
No, I don't know what he doing. And because I never watched the movies, I was traveling the business. But of course, after, people, hey, Nobu, so you must know him. And then I understand.
How is he as a partner?
He's for me, and a great partner. He understands to my concept. He support me 100%. But he's a very smart people. Sometimes so strange idea, but it's good idea. So, example, Nobu Hotels idea come from him. He said, "Hey Nobu, so we have a lot of new restaurants coming in somebody's hotel. For him, Doesn't make any sense. Then we start to Nobu Hotel de Las Vegas 11 years ago. Now it's a big success. So next step is the residence.
The Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Moments away from the start of cash trading. This is Bloomberg Open Interest. I'm Matt Miller. We're looking at futures that are higher across the board. S&P futures up 0.3%. The small caps gaining almost 0.8% right now. At the New York Stock Exchange, FPS Forgent ringing the opening bell after a successful IPO. The shares have been trading for a couple of days and doing well. Everybody on the staff got the memo to wear a blue tie, except for that guy in the corner.
Call him out, Matt.
I mean,
no,
did he not check his email?
There's a guy in the back in gray. There's a guy in the back in gray.
Well, he
He's
made
hiding.
some really questionable decisions. APC, this is Arco Petroleum, also raising money in an IPO. They are, well, the parent company, Arco Corp, one of the largest independent convenience store operators and fuel vendors in the country. So like Easy Mart or Flash Mart or whatever. And then Petroleum, they do the wholesale vending to all these convenience stores around the country. So really interesting business.
I've never heard of them, but that makes sense. They're behind the scenes, I guess, for it. Here's a company you probably have heard of. It's Cisco. Having a really tough session. Shares are down 6.6% at the open, a weaker than expected forecast for profitability. The reason for that, as you might expect, is mounting memory chip prices. And that is even though, Matt, that they had an upbeat sales outlook, but just their margins getting squeezed is the main issue for them.
Right. So Cisco's margins are getting squeezed by higher memory chip prices. Memory chip makers are doing very well today, and they have been doing well all year, and they did incredibly well last year as well. The biggest winners on the S&P 500 are the biggest winners today: SanDisk, Micron, and Western Digital. Let's bring back State Street macro multi-asset strategist Kayla Sater. Kayla, I guess this is all going to somehow shake out in the wash, right? Because you want to buy the hardware, even if hardware makers are buying equipment from companies that are paying, are charging higher prices. What do you make of this trade? How do you sort it all out?
Yeah, I think the big picture is that the AI trade is continuing. I think the fact that we continue to see improvement in revenue growth across the board within that AI trade is encouraging. But as you said, there is a cost to these chips. And so that's why we continue to see allocation towards some of these places like semis. But I think overall, the most important thing at this point is that we continue to see expansion and we continue to see revenue growth. And so I think that will bring back dip buyers within the overall AI trade if they've been a little nervous at the start of the year.
So far this year,
guys, in natural gas लग रहा है मुझे आज ब्रेकआउट करके ही मानेगा. फिर ट्राई किया मार्केट ने, अब तो यूएस मार्केट भी ओपन हो गया. यहाँ पर देख पा रहे होगे काफ़ी देर होल्ड किया, काफ़ी ज़्यादा सेलिंग आई, बट लोअर एंड से मार्केट बार बार रिवर्स कर जा रहा है. मार्केट ओपन है, लेट्स सी. का फोरकास्ट तो बेरी सी है आज नेचुरल गैस की. लास्ट टाइम जितना था उससे ज़्यादा एक्सपेक्ट कर रहे हैं, तो फोरकास्ट के अकॉर्डिंग डेटा आता है, तो डेटा के अकॉर्डिंग हो सकता है थोड़ा डाउन साइड आए, बट अभी के लिए ये रुक ही नहीं रहा बिल्कुल रेजिस्टेंस पे. आउट होके तो फिर यहाँ पर अभी और कोई लेवल नहीं है. 7:30 कैंडल ने पूरा गेम बिगाड़ दिया। मोमेंटम डाउन साइड तक बहुत आया था बट यहाँ से कंप्लीट रिवर्सल। करंट कैंडल ऑल्सो ओपन इक्वल टू लो। अगर अब यहाँ से सस्टेन करता है अपसाइड पे तो वापस 320 के अराउंड जा सकता है वापस अपर लेवल पे। ये इन्वेंट्री आने वाली है, ध्यान रखना। क्रूड ऑयल की, सॉरी नेचुरल गैस की। क्रूड ऑयल की तो कल ऑलरेडी आ गई है। Yes, today natural gas inventory is there. 9 बजे है भी inventory.
Bud Cort has died at the age of 77.
Actor Bud Cort is best known for the quirky 1971 romantic comedy Harold and Maude.
I like you, Maude. I like you, Harold.
He played Harold, a death-obsessed 19-year-old, opposite Ruth Gordon as a 79-year-old Holocaust survivor.
I haven't lived. I've died a few times.
He was nominated for a Golden Globe. The film became a cult classic. Bud Cort appeared in more than 40 movies and dozens of TV shows. Steve Kathan, CBS News.
His Dawson's Creek co-star is paying tribute to James Van Der Beek. A day after he died, Katie Holmes has posted a handwritten note to Instagram recalling conversations, laughter about life, James Taylor songs. She promises to be there for Van Der Beek's wife and 6 children.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, originals and the Bloomberg Business app.
Good Thursday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're streaming as well on YouTube.com and on Bloomberg.com/videos. That's where you'll find all of the Bloomberg live feeds and curated video. It is Scarlett Fu and Paul Sweeney with you. This is the Bloomberg Intelligence Program for the next 2 hours. Coming up, we're going to start off down in Washington, D.C. Tyler Kendall, Bloomberg Washington correspondent, get the latest from there. We see how President Trump rebuked over Canada tariffs as midterm anxieties grow. So the House voting against the president on some of those Canadian tariffs, and we'll get the latest there. Brian Jacobson, chief economist at Annex Wealth Management, will get his thoughts about these markets and some of the economic data we received this week. Woo Jin Ho, Bloomberg Intelligence senior hardware networking analyst, talked to us about Cisco Systems. Some tepid margin forecast here, pushing that stock down a little bit. And we're going to talk to Jody Lurie, Bloomberg Intelligence credit analyst on Hyatt Hotels. They reported their earnings and see how the business is in the hotel biz. So we'll get the latest there. But right now, let's kick everything off with John Tucker and Business Flash.
All right, this flash brought to you by IPKR. Will the year-over-year change in the U.S. CPI exceed 2.6% in February? Turn your view into a trade at ibkr.com/forecast. Last trading day is March 11th. Were you out last month looking for a house? Of course you weren't. It was freezing. So the latest data point shows sales of used homes fell in January by the most in about 4 years. The contract closings decreasing 8.4%. At an annualized pace, it's 3.91 million. So that's way below estimates. But again, it was cold. Tomorrow's inflation report, that's going to offer further clues of the future policy moves by the Federal Reserve. Right now, the Dow continues to push higher into record territory. Hello, old economy. Some of the best performing industry groups belong to materials and industrials. Meantime, Julian Emanuel of Evercore ISI says the tech selling may have gone too far.
From our mind, we do think in areas like software, in areas where, lots of stocks have heavy short interest, you do want to dip your toe in.
The S&P 500 up 7 points, up 0.1%, 69.48. The Dow Jones Industrial Average up 183 points, a rise of 0.4%, 50,299. And the tech-heavy NASDAQ 100 is lower, down 65 points. That's down 0.3%. I mean, who is buying these things? Hermes sales beating robust demand for Birkin bags at 15 grand.
The upper leg of the K-shaped economy.
That's our economy.
Way up the top of the
that's right.
K. All right, ain't me. Bailey Lipschultz, maybe, Valentine's Day coming up.
No. I will buy flowers, though they are overpriced.
Oh, okay. That's somewhere down the bottom of the K. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Scarlett and Paul.
All right, John Tucker, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live with you in the Bloomberg Interactive Broker Studio. streaming live on youtube.com and bloomberg.com/videos. And that's where you will find us. Red and green on the screen here today. Let's take a look at some of the stocks on the move today. We can do that with Bloomberg's Bailey Lipschultz. Bailey, what are you looking at today?
Yeah, we're looking at a flat S&P 500, but as you mentioned, plenty going on under the surface. Want to start with Cisco Systems, ticker CSCO. I know you guys are going to touch on it later in the show, but down right now about 10%. This comes after headline earnings. Pretty darn good. But when you look under the surface, margin outlook weak, BI analysts saying that they expect the company to have to mitigate further margin erosion. We saw Bank of America coming out saying that it's not only their overall memory prices, but also the mix. Do want to just call out, though, that Cisco Systems before the print year to date was up 11%. So on our equities desk, we sometimes call that price to perfection. So missing expectations, the buy side will look for reasons to sell the stock, but you never really want to see one of the bigger companies in the S&P 500 down almost 10%. Its worst day since November 2023.
The company started by two Stanford professors who all they wanted to do was send mushy love notes to each other over their computers.
This is my favorite part about talking Cisco when you're on, because it's the same story, but it's new to
and
listeners.
It's right before it's perfect.
Exactly.
It's like we planned it that way. What's next?
Well, you're talking about Valentine's Day. It has love in the name. AppLovin, ticker APP, down 17%. This is a company that has been under pressure given uncertainty around the AI impact, down 43% year to date. That is your worst performer in the S&P 500. Again, earnings not that bad. This is a company, though, that uses mobile app marketing. So if you ever play any of those games on your phone, they're typically the ones serving you those ads. So fourth quarter results and outlook not that bad, but there is so much uncertainty around AI disruption, how it's going to impact the business. This is a company that was under market selling pressure the last few weeks.
It's also a meme stock, right? Or it trades like a meme stock a lot.
Trades like a meme stock. Its valuation is quite lofty. We saw this company be one of the best performers over the last few years. There was a lot of potential excitement. We do also see about 5% of the shares currently sold short, which is actually pretty high given a stock is down almost 50% year to date. So it does have a bit of that retail trader flavor. But I would say at least trading patterns recently, less meme stock and more ouch.
All right, one more quick.
Equinix, ticker EQIX. They're in the data center space. Surprise, surprise, they beat expectations. Shares up more than 12%. Year to date, up about 28%. So as we continue to use OpenAI and XAI and Anthropic to do our jobs, or also just create fun videos, data center capacity and demand really outstripping expectations. So Equinix off to a hot start, providing a bit of a boost to expectations for some of those private companies in the data center space, which, again, have been challenged when you look at their stock performance over the last 18 months.
All right, good stuff. Thank you so much. Bailey Lipschultz covers almost everything for us, but he focuses definitely on IPOs. So we'll bring him back on when there's those new listings to talk about. For more conversations like this, subscribe to our Stock Movers reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. It's time to head over to Washington. There's a lot going on there, as there always is.
Usually, yeah.
It's hard to keep up. But one thing that's notable is that there's a little bit of pushback from some Republicans against what the president has been doing, especially when it comes to tariffs. I want to bring in our Tyler Kendall. She is our Bloomberg Washington correspondent for more on this. Tyler, tell us how we see a handful of Republicans pushing back against one of President Trump's signature policies, which is tariffs.
Yeah, hey, Scarlett. So last night we saw 6 Republicans ultimately join Democrats and pass this resolution that would repeal President Trump's tariffs, in particular when it comes to the tariffs levied against Canada. With this said, the measure now has to go to the Senate. If it does pass, which actually it looks like it may be likely to, it would end up on President Trump's desk and he would likely veto the measure. So this isn't expected to actually become law, but it does mark perhaps a more symbolic pushback among Republican lawmakers. As we know, polling has repeatedly shown that the party is playing defense on the economy when it comes to heading in to the 2026 midterms. So there's a few different threads that we could pull on. If you look at the Republicans that ultimately dissented and went against the president's tariff policies, yes, one of them has often feuded with President Trump. That's Congressman Thomas Massie, a Republican from Kentucky. But a lot of the other ones represent these key battleground districts, and they're facing some pretty tough primaries. And it was interesting interesting to hear some of them explain their reasoning. One lawmaker from Washington State spoke about how they're seeing commerce decline between the U.S. and Canada and border crossings into his state and his district. Another brought up concerns about how President Trump has taken unilateral action when it comes to his tariffs and didn't seek congressional approval, and they wanted to make their vote known in that way. With this said, of course, the White House is largely defending its tariff policies, and the vast majority of Republicans did vote with President Trump's. We're only talking about 6, but it still does mark the strongest sign of political pushback that we have seen so far when it comes ultimately to this tariff policy.
This affordability issue is something that seems like a really strong speaking point for the Democrats here. The Republicans are certainly making some statements, some policy statements about, mortgages and so on and so forth. Is it something they feel like they can get ahead of? Because right now they seem to be playing defense.
Right. There is, we've seen really a flurry of policy proposals out of this White House, perhaps some with more populist tones, right? President Trump's proposals when it comes to credit card interest rates or banning institutional investors from buying single family homes. So we'll have to see what ultimately resonates, because polling has repeatedly shown us that at the moment that economic message isn't resonating with Republican voters. I'd point you to a Gallup poll out just this week that finds that 50% of U.S. adults feel negatively about the U.S. economy. However, I will say that the White House is rather optimistic going into the year ahead. You're going to hear them talk a lot about those expected larger tax refunds coming under the One Big Beautiful Bill, and they are still doubling down on their tariff policies, even as we just saw what happened here in Congress, talking about an expected boost to manufacturing jobs as one example. But Paul, to your point, this vote yesterday actually really marked a defeat for House Speaker Mike Johnson, who tried really hard to not force his members to take a politically fraught vote and get them on the record. Because I have to say, if you're a reporter here in Washington, you get a lot of campaign emails. And after that vote happened, Democrats started sending these emails targeting Republicans in farm states in particular about siding with President Trump's tariff policies. So it's going to be something to watch as its political potency definitely takes us ahead into November.
Absolutely. The other thing I wanted to get the latest on you from is the White House border czar, Tom Homan, saying that he has proposed, and the president has agreed, that the federal surge operation in Minneapolis is coming to an end. Can you give some more color on this?
Well, Scarlett, this actually marks a major de-escalation from the Trump administration as they have tried to refocus and address the unrest that has unfolded in Minneapolis. Now, as you said, the border czar, Tom Homan, confirming that the surge has ended or will conclude, according to him, but also adding that a small footprint of personnel will remain for a period of time to close out and then transition full command and control back to the field office. So there still is going to be some presence there in a sense, but it does mark a drawback for the Trump administration, which has been under pressure when it comes to the Department of Homeland Security and immigration policies, including here on Capitol Hill. And it's interesting that this is coming from the federal level, because Republicans in Congress have told Democrats that they would like them to get on board with President Trump issuing perhaps more executive actions to address their concerns when it comes to immigration, like a body camera mandate as one example. But as of now, Democrats say they need to see those changes codify into law, which is why DHS may shut down at the end of the week.
Tyler, once again, thank you very much. We appreciate getting a few minutes of your time. Tyler Kendall, Bloomberg Television Washington correspondent, joining us remotely from the U.S. Capitol, getting us the latest reporting on all things Washington, D.C. S&P up 10 points, the Dow up 200, but the NASDAQ is down 44 points. More coming up. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. You'd be forgiven if you're getting dizzy. We're rotating like we're on the teacup ride. Out of technology stocks into the economically sensitive areas of the market. That's why the Dow's pushing higher. Dow Jones Industrial Average up 146 points right now, a rise of 0.3%. Yeah, more of a record, 50,269. And then the Cisco, we've been following, this is the network equipment maker, down 10% on a tepid margin forecast from Cisco. Usually it would be Jobs Friday tomorrow, but it's Inflation Friday. Markets are hoping for evidence that maybe price pressures are in a downward.
ओए गाइस, इन्वेंट्री आने वाली है ये नेचुरल गैस में कॉस्ट टू कॉस्ट पर ही है प्राइस. अपना एसएल कॉस्ट पे रख लो, ठीक है, या फिर अगर निकलना चाह रहे हो तो इन्वेंट्री से पहले निकल भी सकते हो. इन्वेंट्री के बाद ही देखेंगे. अब नेक्स्ट ट्रेड, इस और कोई ट्रेड नहीं है अब, ठीक है. इस सेलिंग के ट्रेड से अगर निकलना चाहो तो निकल भी सकते हो कॉस्ट टू कॉस्ट पे, नहीं तो एसएल कॉस्ट पे रखे रहना. अब रिस्क मत लेना इसमें. इन्वेंट्री वैसे तो बेरी सी है, फोरकास्ट के अकॉर्डिंग तो मार्केट को डाउन ही जाना चाहिए, बट हो सकता है फोरकास्ट बुलिश आ जाए प्राइस के लिए, तो हो सकता है प्राइस यहाँ से रिवर्स कर जाए. तो एसएल कॉस्ट पे रख लो या फिर इससे बड़ा एसएल मत लेना. क्रूड भी मार्केट नहीं रुक रहा है, क्रूड में भी. ऑल डिपेंड अपॉन द नेचुरल गैस इन्वेंट्री क्या आता है. 6 मिनट है, 5 मिनट नाउ. पास बेरी जरूर है, बट ऑल डिपेंड अपॉन इन्वेंट्री नाउ. नेचुरल गैस के अलावा क्रूड ऑयल देखोगे, कैंडल अगेन ओपन इक्वल टू हाई बन रही है यहाँ पर. लेट्स सी क्या ये सपोर्ट भी ब्रेक होता है, बिकॉज अगर ये ब्रेक हुआ तो फिर सीधा 5680 तक जाएगा प्राइस अगेन. नेचुरल गैस में अगर कॉस्ट टू कॉस्ट पे निकलना चाहो निकल भी सकते हो, बाकी नहीं तो अपना एसएल कॉस्ट पे रखे रहना. फोरकास्ट पे डिपेंड करता है प्राइस कहाँ जाएगा. 1 minute left in inventory, natural gas inventory. Seconds left in inventory. ओके, गैप डाउन ओपन हुआ है, लग रहा है नेगेटिव ही आई है। लेट्स सी क्या एक कंटिन्यूएशन में जाता है या फिर नहीं। इन्वेंट्री नेगेटिव फॉर नेचुरल गैस प्राइस। लास्ट टाइम था -360 बुलियन, एक्सपेक्टेड था ज़्यादा आएगा डेटा, कम आया है। सो इट इज़ bearish for natural gas price. Natural gas inventory is bearish for natural gas price. Candle गैप डाउन ओपन हुई है विथ ओपन इक्वल टू हाई, नीड टू सी ये नीचे आता है नहीं आता है। 288 ब्लैक कलर की कैंडल बड़ी इंपॉर्टेंट है अभी। ठीक है, वैसे ही इतना यहाँ पर साइडवेज चला गया, अब क्या करेगा पता नहीं प्राइस। ठीक है, अभी फिलहाल के लिए छोटा सा सपोर्ट डे लो का है 288.8 के अराउंड। इसके नीचे निकलता है तो फिर मुझे लग रहा है 280 तक भी जा सकता है उस केस में। फिलहाल ये ब्लैक कलर की लाइन डे लो इज द फर्स्ट सपोर्ट राइट नाउ। हो सकता है साइडवेज में ना चला जाए, ध्यान रखना, क्योंकि ये रेजिस्टेंस इतना टेस्ट हो गया यहाँ पर। सेलर इतना ट्राई कर चुके हैं नीचे लेके आने का, जा भी नहीं रहा है। अब तो इन्वेंट्री भी बेरिस आ गई है, लेट्स सी क्या करता है प्राइस। लॉजिकली तो इसको गिर जाना चाहिए था अभी तक, क्योंकि अब ये निकलता है इस लेवल के ऊपर कहीं तो फिर नेक्स्ट रेजिस्टेंस सीधा 323-325 के अराउंड ही है, वहीं मिलेगा मार्केट को नेक्स्ट रेजिस्टेंस। अगर ये यहाँ से नीचे नहीं आता है तो दैट इज़ अ वेरी इंपॉर्टेंट एंड क्रिटिकल लेवल फॉर सेलर्स नाउ इफ दे वांट टू डिफेंड दिस लेवल। यहीं तक टारगेट है पहला, वैसे डे लो तक ये ब्रेक हुआ तो फिर हम 280 तक जा सकते हैं उसके बाद इन नेचुरल गैस। क्रूड अगर ये ब्रेक करता है तो फिर क्रूड वापस से बेरिश ही है वापस, जब तक वापस 5880 के ऊपर सस्टेन नहीं करता, वापस से रेंज बाउंड हो जाएगा। नीचे आता है तो अब सीधा 5700 ही है अगर ये सपोर्ट क्रूड में ब्रेक हुआ। गैस में नीचे मुझे लग रहा है अगर ये ब्रेक करता है डे लो अच्छा गिरना चाहिए, फिर एक्सपेक्ट करेंगे कि प्राइस यहाँ तक भी जाए। डे लो थोड़ा सा प्राइस के लिए अभी मेजर सपोर्ट बना हुआ है। बेरिश आई है, प्राइस कंटिन्यूएशन पे जाए तो मजा आएगा। ऑलमोस्ट एक्सपेक्ट कर सकते हैं इस लेवल से प्राइस फॉल करता है तो 20 पॉइंट के अराउंड भी फॉल हो सकता है। फिर फाइनल टारगेट एक ये है, वो मुझे नहीं लगता अभी मिलेगा। यहाँ तक देखते हैं 280 तक जाता है कि अगर डे लो ब्रेक करता है तो 280 आना चाहिए, लॉजिकली सस्टेन करना चाहिए डे लो के नीचे अगर ब्रेक डाउन होता है। बाकी क्रूड ऑयल में ये ब्रेक डाउन हो गया है, अब एक्सपेक्ट करो नीचे तक आए। नेक्स्ट सपोर्ट है इधर पे, यहाँ से एक बाइंग का वापस देखेंगे। ये बाकी रेंज बाउंड हो गया है वापस। लिक्विडिटी जोन था, मुझे लग रहा है कल वही लिक्विडिटी लेने गया ऊपर पॉइंट ऑफ इंटरेस्ट पर्टिकुलर जोन से, वापस से रेंज के अंदर ही आ गया। भी सपोर्ट है नीचे, इधर पे एक सपोर्ट और है। इन्वेंट्री तो ऑलरेडी आ गई है, इन्वेंट्री बेरी सी है। चाहो तो प्रॉफिट बुक कर सकते हो, ट्रेल करना है तो फिर सेकंड टारगेट ये है 280 के अप्रॉक्सीमेटली। बाकी हो सकता है कल हमें गैप डाउन देखने के लिए मिल जाए नेचुरल गैस, अगर आज टारगेट नहीं मिला तो। अच्छा खासा आ गया प्राइस नीचे ऑलरेडी नेचुरल गैस का. लेट्स सी सेकंड टारगेट इंपॉर्टेंट है, आज अचीव होता है या फिर नहीं. बाकी अगर आज नहीं होता है, कल गैप डाउन ओपन मिले तो और बेस्ट है, मैं तो कहूँगा. अभी टाइम देखोगे 9:30 है, 2 घंटे हमारे पास और हैं, 2 से ढाई घंटे मार्केट क्लोजिंग में. अगर ये आ गया पूरा यहाँ तक बेस्ट है. मान लो इसी एरिया के आसपास कहीं क्लोजिंग आ जाती है और कल गैप डाउन ओपन होता है 270 72 के आसपास, फिर वहाँ वापस बाइंग का प्लान करेंगे इस एरिया के आसपास कल. देखते नीचे आता है नेचुरल गैस, तो क्रूड आया तो बाइंग जरूर बनेगी.
So, is there debt for you to look at for these hotel companies? Or are they all this asset-light stuff?
There is debt because the companies are still borrowing. You know, they're borrowing to sort of build out their platforms. They're borrowing to do tech upgrades. They're borrowing for all sorts of reasons. Marriott has sort of this, I don't want to say it's a flywheel because it's not, but they're at the point now where they have, you know, they have BBB ratings. They access the commercial paper market, and they can access it because of their short-term ratings at the moment, and they use it as cash gaps, right? And they'll fill those cash gaps, and then they refinance the debt that's coming due. So I don't think we're in a situation where these higher-grade companies like Marriott is going to necessarily decrease their debt load. They're just going to sort of lean on the EBITDA growth. They're going to lean on the fact that they have these cash flows to support that. You know, they are going to give back to shareholders. They're continuing to do so. We're seeing Hyatt talk about that as well. And I expect that that's going to be the case. Now, in Hyatt's situation, they are still talking a little bit more about deleveraging just to get back to the category that they need to be in. But I think that over time, it's the type of thing that we see these companies issue debt for an acquisition, and then they delever, and then they do it again.
Yep. All right. I've seen that playbook before. Jody Lurie, Senior Credit Analyst for Bloomberg Intelligence, joining us from Wilmington, Delaware office via Zoom. Very interesting strategy. I'm seeing more and more people do that. It's easier than getting to the Philadelphia office, I'm guessing. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence begins in just moments with the S&P down 35 points, the Dow down 30 points, but the NASDAQ down 250 points. That's 1%, folks. 10-year Treasury yields coming in by 4 basis points, 4.13%. We'll have more coming up. This is Bloomberg Morning.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
All right, good Thursday morning from the Bloomberg Interactive Broker Studio in Midtown Manhattan. This is the second hour of Bloomberg Intelligence with Paul Sweeney, Scarlett Fu, and John Tucker. We've got a lot coming up on this Thursday morning. We're going to start with a check on Coinbase. They will be reporting earnings after the market close. Paul Goldberg is our senior equity analyst to give us a preview. We're also going to talk about McDonald's, those $5 value meals picking up a lot of fans.
I know, absolutely. I mean, yeah, that's the market we're in right now.
That's
people
the
looking
market.
for value.
All right, Michael Halen, he is our senior restaurant and food service analyst, will give us his take on Mickey D's. And we're going to check in with Laureen Gilbert. She's the CEO of Wealthwise Financial to get her take on the markets. We're not seeing a whole lot of movements in equities. They've kind of been meandering about. We're looking at just off record highs here for the Dow, for the S&P 500. And Nathan Naidu, he is our technology research analyst, talking to us about AppLovin and the guidance that it did give. It certainly is tied to the AI story, but it's also become a bit of a meme stock of late. I certainly see it mentioned a lot in a lot of those Reddit forums. Let's first, though, bring in John Tucker, as promised, for our Bloomberg Business Flash and a check on the markets.
Yes, a check on the markets, and it never fails. I'll write a report, and as soon as I get to deliver it, things turn.
Changes.
Yeah, exactly. The Dow has now turned negative, down 65 points, 50,057. S&P 500, 38 points lower, and the Nasdaq Composite Index, as Paul mentioned, down 1% right now, 265 points lower. So we'll do the best performing industry groups, the old stuff, utilities, consumer staples, real estate, healthcare. Worst performing industry group in the S&P 500, at least, information technology. McDonald's, those shares, they are still up 2.2%. That was helping the Dow pare any further losses right now and reporting stronger profit for the latest quarter than expected. AppLovin, those shares are down close to 19%, even though they reported stronger profit for the latest quarter. Like other software companies, they've kind of come under pressure from worries that AI-powered competitors are going to steal all their customers. And Cisco Systems falling after their reports. Cisco shares, let me get you a quote right now, down over 11%. Meantime, Amanda Agati at PNC Bank sees any additional sell-off in tech shares as a buying opportunity.
To the extent that we saw a more meaningful correction, yes, we would definitely be piling into it. It's still very early innings. And so, it's hard to assign the right, quote unquote, right P multiple to these companies, but we think there's a ton of runway left. This is just short-term noise.
Right now, the Dow, again, down 78 points, a decline of 0.2%. S&P 500, 37 points lower than Nasdaq 100, down 267 points. Americans have tallied up a staggering amount of new debt in the past decade. Collectively, we have about $1.3 trillion in credit card debt, $1.7 trillion in auto loans, and a few $100 billion worth of personal loans. According to Wallet Hub, Maine, the state of Maine tops the nation with the biggest increase in consumer debt in the final quarter of last year. So, and I have no idea why. We check the markets for you all day long, right here on Bloomberg Radio. What? You've got a theory?
No,
Hold on.
I do have a theory. Maine is close to Canada, and it does rely on probably Canadian tourists coming through.
I did think
Maybe
about
that's part of that.
So
because all the border towns along the Canadian border in the U.S., they're definitely suffering.
Yeah.
They're not seeing the tourists come through.
Yeah, and people say they're not coming to Florida and Arizona for the winter, which I can't believe, but that's what I hear.
Yeah. All right. Anecdotal, but still important. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash, Scarlett and Paul.
All right, John Tucker, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on youtube.com and bloomberg.com /videos here. As John was just reporting, we got red across the screen here, but let's take a look at some of the stocks on the move today. And we can do that with Bloomberg Television's markets correspondent, Nora Melinda. Nora, what are you looking at?
Let's take a look at shares of Equinix. This is ticker EQIX, a data center REIT, one of the companies I used to cover really closely on our equities team. So we're seeing shares that are surging for double-digit gains right now. We're seeing shares up about 11%. This is after its 2026 revenue guidance beat the average analyst estimate. Analysts on Wall Street are essentially positive about the increased bookings, as well as highlighting a boost to the company's forecast from accelerated AI demand. So when you really think about those secondary beneficiaries of artificial intelligence, it's certainly some of those data centers.
Yep, absolutely. Crocs. Is anybody here a Crocs person?
I own a pair. I do own one pair.
Okay.
I'm always bewildered by Crocs because there's so many knockoffs available.
I know.
So the people who actually pay full price for Crocs, like I get it buying that once, but you know, these things don't last, and then people just buy the knockoff ones later on.
Absolutely. Ticker CROX. Shares of Crocs are up today. We're seeing them up for double-digit gains, up as much as 22%. That's the best day since February. This is after the fourth quarter adjusted EPS did beat, and then also revenue beating estimates. We did see annual guidance also came in ahead of consensus. So clearly a good day for Crocs. I mean, stock is up about 16% so far this year. Do you own a pair, Paul?
No, and in fact, my youngest came to visit me this summer at the shore wearing Crocs. I said, leave them outside, bro. They're not coming in my house. Now, it's the beach, so you can go right to flip-flops. But, I mean, come on, please.
Did he explain why he became a Crocs devotee?
No, he knows better. So he left them at the door.
What are the decorations that people put on their Crocs?
There's a name for
Gibbets. I found it. Gibbets.
Which is
That's
also
what
a
they're
big
called.
business.
So you can decorate your Crocs and make them more
But again,
personalized.
that can be, someone else can make those. You don't need to buy them from Crocs. I don't
This
know.
is
I do a lot
also
of my
true.
shopping in Chinatown, so that I'm just saying.
All right, Viking Therapeutics?
Viking Therapeutics, I mean, you can always count on one of these biotech healthcare stocks to be moving on a particular day. Ticker VKTX, shares up as much as 20% today in trading. That's the biggest intraday jump since April, now fading a bit, so up about 9%. This is after the biotech company said that it has plans to advance its oral obesity drug to phase 3 in the third quarter of this year. I mean, we all know that fat loss pills, obesity drugs have really been topical as of late. So as you can imagine, the street likes this. We're seeing shares, though, of the company down about 11% so far for 2026.
All right, Nora, thank you so much. Nora Melinda is our Bloomberg Television markets correspondent. And for more conversations like what you just heard, be sure to subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. One of the big decliners in trading today is Coinbase, off almost 7%. This is a company that, of course, its fortunes are tied very closely to the price of Bitcoin, which has been down since early October. Really has been a bad news story for anyone who's been long Bitcoin. Paul Goldberg is our senior equity analyst here now to help us take a look at what Coinbase is likely to report. And Paul, we already heard from Robinhood that crypto trading revenue declined, and that's a big reason why the results disappointed investors. How much insight can Coinbase offer through its forecast on where it sees crypto prices headed?
Yeah, thank you, Scarlett. Coinbase doesn't really give forecasts about the crypto price direction. They do usually provide in the earnings call the current month activity, so probably they'll give us something that happened in January, maybe early February as well, but they really don't do predictions. They do provide guidance on the subscription and services revenue, and that has been holding reasonably okay. So if we look at the fourth quarter, right now the expectations are for the trading revenue to be down about 35%, but for the subscription and services revenue to actually increase about 15% from last year. So it still has some impacts of the lower Bitcoin prices and activity levels and Ethereum prices and so on, but it's still kind of grinding higher.
So, Paul, as an investor, equity investor in Coinbase, are there metrics that I really need to pay attention to, or is my performance simply at the whim of the underlying token, that being Bitcoin?
I think what you want to look at is a few things, and they're probably longer term than just one quarter. Number one is the institutional adoption. So you see all the companies from JP Morgan to Bank of New York and so on getting into that business. And you did mention Robinhood, obviously, which is sort of a competition for them. So there's more and more institutional activity in that space. Number two, in December, they had a company call, which I think a lot of people didn't pay too much attention given it was right before the holidays. It talked about everything exchange, where they're trying to compete across many financial services, getting into prediction markets, tokenized securities, providing payments. It's kind of very early days, but they're really trying to become a financial supermarket. So any kind of additional color or things they're going to talk about, that's going to be really useful in a call.
And I guess that begs the question, won't that involve increased costs, increased expenses to build out that infrastructure to make itself known as an exchange for things other than crypto?
Well, I think they're close to $1 billion on the expenses a quarter, putting money into the business, and they've always been very kind of open-ended in terms of putting money to work. I think what plays well for Coinbase is their cash pile. So they have about $12 billion of cash. If you take out the USDC, which is some people consider cash, but is a stable coin, so that's fairly stable, it's $9 billion. So it's a lot of money to run with, and as long as their earnings stay positive, they have a good runway for investments.
Paul, thanks so much. Appreciate it. As always, Paul Goldberg, he is the senior equity analyst at Bloomberg Intelligence based down there in Princeton, New Jersey. Again, a busy day in the earnings front, particularly for some of the restaurant companies. McDonald's reported numbers that beat estimates. Restaurant brands, think Burger King, I think is it raised its dividend. So let's talk to Michael Halen. He is the analyst at Bloomberg Intelligence. He follows all the restaurant companies out there. Mike, thanks so much for joining us here. Let's talk about McDonald's. Their value menu was a kind of a hit with consumers.
Yeah, they've reestablished themselves as the value leader in QSR, which makes sense, right? They have 14,000 stores in the U.S., more scale than anybody. You know, and they've done a phenomenal job with the marketing. I mean, I think they sold 55 million pairs of Grinch socks, right? The Grinch Happy Meal,
there you go, John Tucker.
One of their most successful promotions ever, right? So yeah, they're firing on all cylinders. They also benefited from lapping E. coli a year ago, and that's how they ended up with such a strong comp in which was a pretty tough quarter for most of the industry because of the cold weather and the flu that we saw in December.
Right. And we also are hearing that McDonald's is not going to rest on its laurels. It's looking to innovate. It's going to introduce some new beverages under the McCafe.
Yeah.
That's hard to say. The McCafe brand.
McCafe.
Yeah.
It's not
Okay.
French.
Anyway, indulgent coffees. That sounds kind of fancy. Is that to appeal to the consumer who might be trading down to McDonald's?
No, you know what? It's beverages are hot. I mean, Cosmix, you know, although that chain isn't you know has been kind of dissolved. They've learned a lot about the beverage industry through that test, right? Dirty sodas. You know, there's a chain out west called Swig that absolutely crushes it with dirty sodas. Think you know Coca-Cola with added syrups and whipped cream on top and things of that nature, right?
That's a lot of sugar.
Energy drinks. These are like a really hot segment of the QSR industry. It has been for years, right? As some of these bigger, slower moving chains like McDonald's are starting to kind of jump on this bandwagon a little bit later. But, you know, we think this could be meaningful for them in the second half, you know, and it's no longer public, but, you know, this could take a chunk out of Sonic's business, you know, because they've long been a beneficiary of the beverage market, you know, and what's nice about that business is a lot of those drinks are sold and during that snack period, you know, during when these restaurants have a low around, you know, 2, 3, 4 o'clock in the afternoon.
Restaurant Brands, they also reported some numbers here. Mike, remind us who Restaurant Brands is and what they're doing these days. How are their results?
Yeah, so you know, it was kind of mixed results versus what the street was looking for. You know, I look at the underlying trends and I think they're still strong. So the reason why it's down right now is, you know, Burger King showed an acceleration in the U.S., which is pretty promising. You know, they showed strong results out of international. International is a pretty well-oiled machine for this company, but there was some deceleration in the Tim Hortons numbers, which makes up 60% of adjusted EBITDA. And, you know, Popeyes remains kind of weak, right? So I'd say the biggest concern in this report is really about the slowdown in Tim Hortons, but it's lapping tougher comps. And when we look at, you know, same store sales trends going back, you know, a handful of years, the trends are actually accelerating, even though it decelerated on the 1 year and a 2 year basis. And so, you know, Tim Hortons is a monster in Canada. I wouldn't be too concerned about it. Like I said, a big part of this story is the international unit growth that they're putting up. And we think they can get back up to mid-single digits here in another year or so. You know, Popeyes and Burger King are absolutely crushing it around the globe. And, you know, we expect pretty solid growth here, and we think they can outperform a lot of their quick service peers here in 2026.
Michael, how are the McDonald's and the restaurant brands of the world using AI? We've seen them embrace automation with, you have to go order yourself at the kiosk and then someone calls your number. So they've made things more automated in that regard. But how will AI change the whole experience?
Yeah, well, AI is going to change the experience, the restaurant experience, in different ways. Like different chains are going to look to different solutions. Something that works for one type of chain, like a Chipotle, isn't going to work for McDonald's and vice versa. So, I think when you're looking at AI, first and foremost, it's going to be a continued progress on that one-to-one marketing, getting people into your loyalty program and eventually getting those very directed offers to them at the right times, right? This has been kind of a long time coming. AI should really kind of help with that piece. And I think for these quick service chains, the thing that's going to be probably most useful is like an AI assistant. Taco Bell is rolling this out, testing it, and then eventually going to roll out to all its stores, where they have basically an AI assistant for their GM. Tells them how much food they need to prep, if they need more labor on the line, helps them have more accurate sales projections so they know how much labor they're going to need on any given day, how much food prep they need to do, whatever it might be, right? So I think those are going to be the two most ubiquitous use cases and probably the ones that we'll see most of the progress on in the near term.
All right. Michael Halen, thank you so much. Appreciate it. Senior Restaurant and Food Service Analyst of Bloomberg Intelligence. I've never been to a Tim Hortons, but I'm looking at the website. The menu looks pretty tasty.
Oh, no, that's
there's some
huge.
big coffee fans.
Yeah.
North of the border.
Yeah, absolutely. Looks like some good sandwiches there, some good eats. So next time I'm up there.
Is there one in Penn Station? I thought there was.
Oh, maybe. There gotta be. I mean, there's everything else in Penn Station. For good, better or worse. This is Bloomberg.
MTTS है मल्टीपल टाइम टेस्टेड सपोर्ट जोन, कई बार टेस्ट हो चुका है ऑलरेडी। लिखा हुआ है MTTS। कोई पॉइंट ऑफ इंटरेस्ट पे रुका हुआ है, सही है। वैसे मुझे लग रहा है शायद इसी एरिया के आसपास कहीं क्लोजिंग आनी चाहिए आज। कल गैप डाउन मिले तो मज़ा आएगा वापस से बाई करने में, या फिर देखेंगे नीचे सपोर्ट होल्ड होता है नहीं होता है। Russia memo sees return to dollar system in pitch made for Trump। मेजर न्यूज़, एक जगह तो ब्रिक्स करेंसी की बात कर रहे हैं और ये
points. That is down to 411 right now. Rutro, another Lulu, Lululemon Athletica, facing yet another see-through leggings issue.
Again?
These are the analysts at KeyBank Capital. They say a version of the company's pants dubbed Heart Scatter. They've been called out for being see-through when bending and squatting. And remember, just weeks ago, the company was in the hot seat after the Get Low line was called out for similar issues. Lulu ended up pulling that line from the website just days after it was released and then returning it to the website, adding disclosures like, weird dark-colored stuff underneath. Shares Lululemon Athletica right now down, and let me get you an accurate quote here, down 2.7%. We check the markets for you all day long right here on Bloomberg. I could do this. I could run these companies right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Scarlett and Paul.
So the rule here, or not the rule, but the takeaway is don't make leggings that are see-through.
Well, isn't there like a test facility?
Like a quality control person?
Yeah, like some guy. Don't release those.
The management's kind of spinning their wheels right now because for a while they were trying to talk about how the consumer was not educated enough. Because they should check out the instructions on how to wear it. Wearing leggings is not that complicated. It really isn't. It shouldn't be.
Anyway. All right, John Tucker, thank you so much for that. I'm glad we made that. It is Scarlett, Phil, and Paul Sweeney. We're live here in our Bloomberg Interactive Broker studio, streaming live on YouTube.com and also on Bloomberg.com/videos. And that's where you'll find us here. We've actually had, over the last several months, a rotation going on in this marketplace. People getting out of some of these higher growth names, some of the technology names, maybe some of the Mag 7 names, and putting some money to work in some of the more cyclical parts of the economy, believing that this economy will be remain strong in 2026. Let's see if our next guest is part of that. Lorraine Gilbert, CEO of Wealthwise Financial, based in Dallas, Texas. Lorraine, what do you make of that rotation trade? Are you getting some reverse inquiry from your clients that, hey, maybe I should lighten up a little bit on tech and maybe go a little bit more industrials, financials, staples, that kind of thing? What are you hearing?
Yeah, well, that's definitely our opinion. I think that technology, of course, we have to and want to have a solid weighting there. We're currently slightly under benchmark on technology, expecting this decline that we've been seeing in those names and looking for opportunities to get back to benchmark. Where we're overweighted is definitely industrials. And if you look at the industrial story, there's a number of reasons to be overweight there. One, just the U.S. and Israel looking at potentially intervening in Iran. That's certainly one reason. A weaker dollar, which also is a tailwind to industrials. And then the concert of Europe looking at increased defense spending. So a lot of reasons to look at industrials. And of course, like you said, it's also been already a good place to be.
In terms of timeline, how long are you thinking this rotation still will last for, and how much further we have to go with it? I mean, are we, second inning, or are we seventh inning of this rotation?
That's always hard to tell. And, we just take it quarter by quarter and look at things of the areas that we like. But right now, definitely an area of overweighting along with financials as well. And then we've seen the disruption, a major disruption in software. So we have been out of that area, and we're currently looking for opportunities. So as we see these areas of the market that may have a pullback, we are looking for specific names where we can take opportunities.
So, Lorraine, 2025 was a wonderful year for U.S. equities, but an even better year for major international markets outside the U.S. How do you think about that U.S. versus rest of the world kind of allocation these days?
Yeah, I think when we're looking at earnings calls right now, the one word that sticks out to me is international. Because when we look at companies that have more than 50% of the revenues coming from outside the United States, those earnings growth numbers have been significantly greater than just those counterparts in the United States. So looking at multinational corporations that have more than 50% of their revenue coming internationally, we think is a very good story that's going to continue. So international is definitely what we see. Once again, weaker dollar lends itself well to an international story. So we do see that runway being longer than shorter.
Is there any room in your portfolio for crypto, for Bitcoin?
Guys, gold और silver को देखोगे continuously fall कर रहा है major news की वजह से. That is not a news आप कह सकते हो, but from some sources actually. कुछ देर पहले ये न्यूज आई थी रसिया की ओर से, जो मैंने अभी अभी कमेंट बॉक्स में डाल भी दी है. मुझे लग रहा है उसकी वजह से थोड़ा सा गोल्ड और सिल्वर पे प्रेशर पड़ रहा है सेलिंग का. हाई लेवल क्रेमलिन memo set out plans for Russia to return to the dollar system in a pitch seemingly made for Donald Trump. अगर आप थोड़ा सा डॉलर को देखोगे, यूएस डॉलर को, वहां पर आपको इतना कुछ खास इम्पैक्ट नहीं दिखेगा 15 मिनट टाइम फ्रेम पे. एक सडन बड़ी कैंडल बनी थी, उसका तो नॉर्मल है, बट लुक एट द सिल्वर एंड गोल्ड ऑलरेडी 3% डाउन हो गए हैं. स्पेशली लुक एट दिस इज द सिल्वर कैंडल. ये जस्ट न्यूज़ ही आई अभी 9:30 के अराउंड, कंटिन्यूसली फॉल ही करते जा रहा है. $5 पे था अभी कुछ देर पहले, जस्ट $85 पे 8 बजे. $75 आने वाला है. ये लग रहा है मुझे और गिरेगा क्या. अब लास्ट स्विंग बनाया है $64, $75 तो फिक्स से आ ही जाएगा. खैर गोल्ड भी देखोगे $5,000 के नीचे आ गया वापस, 4,900 के भी नीचे ट्रेड कर रहा है अब तो. ठीक है, इंडियन गोल्ड को भी अगर चेक करोगे तो दैट इज ऑल्सो शार्पली फॉल MCX में। यहाँ पर देख पा रहे होगे सीधा गैप डाउन ही है, थोड़ी रिकवरी जरूर आ रही है बट फॉरेक्स में कोई रिकवरी नहीं है। सिल्वर का तो और बुरा हाल है। सर्किट लग गया ना इसमें, लोअर सर्किट लग गया, लोअर सर्किट पे है सिल्वर नाउ। ठीक है, फॉरेक्स को चेक करना है, MCX में तो लोअर सर्किट लग गया सिल्वर में, कंटिन्यूसली फॉल है सिल्वर, कंटिन्यूसली फॉलिंग। गोल्ड थोड़ा सा रिबाउंड किया है, MCX में फॉरेक्स में तो एक कंटिन्यूसली गिर ही रहा है डाउन साइड पे, यहाँ रिबाउंड कैसे कर रहा है ये, पहले ही ज़्यादा गिर गया लगता है। देखना पड़ेगा तो गाइस ये $65 के नीचे जाता है या फिर नहीं। $75 तो आप मान के चलो आना ही है इसको, $75 पे रुकेगा थोड़ा बहुत, देन वी विल सी। ऑलमोस्ट 9% डाउन। ये तो गैप डाउन ओपन हो रहा है, हो क्या रहा है सिल्वर में। ये फॉरेक्स चार्ट है, फॉरेक्स चार्ट में गैप डाउन ओपनिंग। ओके यार, थोड़ी प्रॉफिट बुकिंग आई है $75-76 से नाउ, ऑलमोस्ट 10% गिर गया था अभी। गोल्ड ने भी थोड़ी बहुत रिकवरी करी है। ठीक है, रुकना चाहिए 75 पे थोड़ा बहुत, 75 के आसपास। उसके नीचे गया तो फिर तो वापस हम जो रिसेंट लो था 64 65 वहां पहुंच जाएंगे। बिल्कुल शार्प फॉल है, पिछले टाइम से देखोगे इतना कंसोलिडेशन किया, सारे एसएल एक साथ निकाल दिया लग रहा है मुझे यहाँ पर, जितने लोगों के एसएल थे। अभी भी नीचे एक ट्रेंड लाइन है, आई होप होल्ड करेगा। सिल्वर देखने में मजा आ रहा है, सिल्वर जिस तरह से फॉल कर रहा है। The Wall Street Journal reports that the Trump administration covertly smuggled 6,000 Starlink terminals into Iran following the regime brutal crackdown on recent protesters. Passes bill to require proof of US citizenship for midterm voters. CIA makes new push to recruit Chinese military officer as informants. ट्रम्बल हुआ है शायद सिल्वर में इस न्यूज़ की वजह से, देखते हैं कितना और सेल ऑफ करता है। वैसे तो 75 से नीचे जाना थोड़ा सा मुश्किल लग रहा है अभी इंट्राडे में। मेजर न्यूज़ है फिलहाल के लिए जो आई थी, जो मैं बता रहा हूँ आपको रसिया की ओर से, जो ये बताया जा रहा है कि वो वापस यूएस डॉलर सिस्टम में वापस आना चाहता है। अगर ऐसा होता है तो कहीं ना कहीं एक झटका है ब्रिक्स कंट्री के लिए, गोल्ड और सिल्वर के लिए भी एक झटका है, क्योंकि फिर चाइना अकेला बचता है मेजर कंट्री जो कहीं ना कहीं यूएस डॉलर से दूर होने की कोशिश करेगा। इवन वो भी कोई पूरा दूर नहीं है, बट दिस इज द मेजर न्यूज़ राइट नाउ। Russian memorandum suggests reconnecting the US dollar system, presenting the moves as part of the part of the proposal directed at President Trump. Major news. वापस से सिस्टम पे आ जाएगा फिर तो रसिया कंप्लीटली।
$25 billion in market cap for a company you've probably never heard of, but it's in your phone every day, pushing ads to you in-game apps. So AppLovin, that's the company. Stock trading down today. A bad day.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom. It is Bloomberg Business Flash. The tech selling now dragging down all the major averages lower. AppLovin, one of the worst performing individual stock in the S&P 500, down almost 20%. Then you have Cisco, also one of the worst performers. That is down right now close to right around 11%. Overall, the S&P 500, 65 points lower, down just about 1%. The Dow, after being higher earlier, complete U-turn here, down 470 points right now. That is down 1%. And the NASDAQ 100, 381 points lower. That is down 1.5%. Rian Mitrione at the Cowen family office remains focused on the market rotation out of tech.
Over the last 3 months, we have the growth, which is largely driven by tech, down almost 5% after leading the market for the last couple years. Whereas we have, value up 10% and small caps up about 9%. So there's been a real divergence over the last few months.
And the Bloomberg Mag 7 index right now, that is down 1.6%. You have yields lower, Treasury yields lower. The 2-year down 5 basis points, 346 right now. The 10s down 5 basis points. That is at 412. That comes ahead of the inflation data that we're going to get tomorrow. This is an interesting one. It just crossed a few minutes ago. The Justice Department's top antitrust cop, Abigail Slater, has just resigned. And all this calls into question how the Trump administration is going to handle competition policy moving forward. The resignation comes just weeks before the agency is set to head to trial against Live Nation in a bid to force it to sell its ticketing arm, Ticketmaster. And you look at shares of Live Nation right now, they're actually up close to 4%. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Scarlett and Paul.
That's interesting because the Trump administration, at least this time around, doesn't ask a whole lot of its appointees to resign.
Well, I think what's happening here is I think the Department of Justice taking Live Nation to trial is actually a pretty aggressive tactic. Mm-hmm. And maybe that may not play well with the Trump administration.
Well, when she was confirmed, she got broad bipartisan support. She got a lot of support. And right now, it was viewed at the time that the Trump administration would continue to pursue this strategy of, aggressive antitrust enforcement.
And Ticketmaster is very much part of that affordability concern that the Trump administration is trying to address.
We still don't know why she resigned.
No, so
that's fair.
We'll stay on top of that. All right, it is Thursday. That means we check in with one Barry Ritholtz. Barry Ritholtz is host of Masters in Business on Bloomberg Radio and a founder of Ritholtz Wealth Management as well. Hey, Barry, we had kind of a big labor data point yesterday. We had a pretty decent near-term look at jobs, came in better than expected. But boy, the revisions for last year were much higher than you typically see. How do you think this U.S. labor market is?
Yeah, it's kind of a fascinating report. I called it an exercise in confirmation bias. You can find whatever you wanted, whether you were bullish or bearish. Look, we know last year began with a robust economy and a market making all-time highs. A year later, it looks like the economy, while still in expansion mode, is somewhat less robust and markets continue to make all-time highs. So it's almost as if the markets don't really care about what's going on in the U.S. economy.
They're following a narrative and they're sticking with it. How does this set us up for how the markets will receive the CPI data tomorrow?
I kind of got the sense from the traders I spoke with and the commentary I read that people looked at this as, hey, that was an upside surprise for January. So maybe this moves the next rate cut a little further away, and we'll see if CPI confirms it. I'm a little less convinced that the labor market is that strong. In fact, all right, so after that revision, which essentially meant we created almost no jobs last year, other than a handful of healthcare jobs. I look at that January number and say, well, is that likely to be revised downwards also? And if you're looking for something to blame, I have to point the finger at tariffs. They've caused an uptick in a modest uptick in inflation. Some of the recent studies have said about 90+% of the costs are shouldered by the consumers with the 2025 tariffs. And so listen, the labor market, we're not seeing big layoffs, we're seeing a handful of specific layoffs, but it's pretty clear there's signs of stress. There are some fractures appearing. The labor market is getting increasingly fragile. Probably the most disappointing thing was the surveys of our jobs easy to find or hard to find. And a lot of job seekers are having a hard time, especially if they're young. I think that's what's driving the very negative consumer sentiment readings.
Barry, we've actually seen a little bit of a rotation in this equity market. People kind of getting out of some of the higher growth names, maybe into some more cyclical names, maybe into some more small and mid-cap names. Is that a short-term trade, or is that something we should pay attention to longer term?
Yeah, people keep asking me that, and it's like, where were you guys last year? Everybody was so hyper-focused on this market is being driven by the Magnificent Seven. Let me point out that in 2025, only 2 of the Mag 7 outperformed the S&P 500, meaning it was NVIDIA and Google. Everybody else in that group was a laggard. And if you just look at how the market has performed in Q4 2025 and now right up to the first month and a half of 2026, small cap, value, mid cap, really outperforming the big cap tech. So we like to see that sort of breadth. You want to see more participation to the upside than just a very narrow group of leadership. The two cross currents are, hey, the tax cuts and that we were passed in the first year of the Trump presidency, that's $1 trillion+ in stimulus, and that's still working its way through the system. It's kind of hard to mess that up. I would argue that the mayhem we've seen with the ICE enforcement and the deportation, and 2025 very likely to be the first year in centuries that the U.S. has not seen a substantial gain in population. That's a factor. The tariffs are certainly confusing. It's not that tariffs are such a big part of the overall economy. It's that it just kind of freezes corporate America in place. Hey, do we do this hiring? Do we build this warehouse, this factory, this whatever? If it's not a data center, the answer is, why don't we just wait for the dust to settle? If it is a data center for AI, go ahead. Let's pour billions of dollars into it. That's the other element that's so fascinating. AI is clearly a giant and transformative technology, but without the sort of AI investment we've been seeing over the past few years, we would be much closer to a contraction than we are. This isn't, some people have been saying, is it the Biden economy? Is it the Trump economy? No, it's the Claude economy. It's the AI economy.
That's an elegant way of putting it. Very quickly, where's the speculative money going? It feels like metals has seen a little bit of a, come down from where they had been.
Yeah, silver cut in half is kind of telling you that there were some technical reasons why that was taking place. If you look at the margin and the futures contract and how things were trading, that just got out of hand, and I'm glad it corrected fairly quickly. The speculative money has come out of a lot of that area and seems to have come out of Bitcoin, which also another speculative trade that has got cut in half. I don't know if I would call this speculative, but if you look at emerging markets and you look at Japan, that's where the big rotation is. As long as the dollar is weak, overseas is the place to be.
All right, Barry, thank you so much. Barry Ritholtz, he is the host of Masters in Business on Bloomberg Radio. Be sure to tune in to Barry Ritholtz right here on Bloomberg Radio. We're looking at declines across equities, whether it's small caps, whether it's tech names, whether it's the cyclicals. This is Bloomberg.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio in New York City. We're streaming live on YouTube as well. Of course, you know, youtube.com, but we're now on bloomberg.com/videos. And that's where you will find all the Bloomberg Live video coming out all day, every day, as well as all the curated videos. So that's the place to go on bloomberg.com. One of the big themes really over the last several months has been the debt issuance from a lot of these big tech companies that are funding, actually, their AI investments. Historically, tech companies have just used cash on the balance sheet or their great organic free cash flow to fund any investments. But we're talking big numbers now for CapEx. Somebody who's been really following it for Bloomberg Intelligence, been very helpful to us, has been Rob Schiffman, Senior Technology Credit Analyst for Bloomberg Intelligence. And back in the day when we hired Rob, I'm like, why do we need a technology credit analyst? They don't need any debt. Once again, we were wrong. Rob Schiffman was right. Rob, tell us about, let's start with one of the big names, Meta. They're cranking up their CapEx for AI. They came to the market. What are you seeing from the market's reaction to the Metas of the world, the Googles of the world, Oracle's coming to the market with these tens of billions of dollars of bond deals?
Yeah, it's a bit of a tale of two cities, where there's a lot of fear out there that there's so much CapEx, there's so much borrowing, it can't possibly justify itself. And we're setting ourselves up for some sort of massive bubble burst. And then there's the other side, which is what I'm on, is that I think that this is extremely smart spending. That when you've got such strong balance sheets, when you have the capacity to add a lot of debt and grow your business over the long term, the best use of your cash is to invest it organically versus paying dividends and giving stock buybacks, which don't end up helping your stock price anyway. I do think that there's a mild concern on valuation, that spreads are really tight. We're still near historical, all-time tight, high-grade credit spreads, with tech being one of the tightest trading sectors. So what happens when you issue hundreds of billions of dollars of bonds? They get a little bit wider. But the question is, how much wider are they going to go? I don't think that much. And what we've seen is, I think the market agrees with me in multiple ways. Rating agencies have not downgraded anybody. They're still AA and AAA ratings. And from a buyer's perspective, they are lining up to buy these deals, hundreds of billions of dollars of order books. And I think they're ready to wave a lot more in. Part of it is we're in a spread compressed, low yield environment, and people have a bid for yield. So if you can find it in the highest quality names, why not do it?
And of course, as you well know, I think the conversation has shifted to, okay, I now understand the magnitude of the money a lot. I know what you guys are building, data centers and other tech. But tell me now how that is going to benefit your business and higher revenues and higher profitability. The bond market seems comfortable with that because, again, you mentioned tight spreads, lots of demand out there for this paper. So how is the market thinking about those return on investments?
Sure. There's a little bit of difference of perception versus reality. So perception is, this is way too much money being spent. It's never going to work. Reality is, if you look at the Mag 7, the hyperscalers from last year, all-time record highs for revenues and EBITDA. If you look at consensus for this year, all-time record highs for revenues and EBITDA, and next year, and the year after that. So the real question is, how much will growth be? How much exponentially will we get from these dollars? I think equity valuations are much more at risk than creditors are, and the reason is because cash flows are going up. Second thing, in terms of perception, I think this whole concept of AI, people are confused. And the reality is, what people think about AI today is they think about ChatGPT, or they think about Alexa or Siri, and they can't see the bigger picture. You know, we don't have robots serving your food at McDonald's yet. We don't have Jetson flying automobiles. Like the world, it takes a while. But if you think about all the disruption we've seen over the past few weeks, you know, particularly in software, why is that happening? It's because it's coming. We're about to see this AI revolution where revenues and cash flows are going to grow at enormous, enormous rates. But you have to build it first. It doesn't just pop up. So I think the visionaries at these companies see that sort of demand, see all the products and services that are going to come, and are more than happy to put their capital to work. It's the average investor, even the large cap PM it's hard to grapple to getting a return on invested capital when they've never seen these levels of capital invested before.
What have the rating agencies said? I've not seen any cautionary language. What are they saying these days?
So in general, everyone who has issued a big bond deal in the last few months has gotten affirmed. I like to point out, Alphabet did $32 billion last week, or this week, I guess.
Yep.
In dollars as well as alternative currencies. And S&P affirmed their AA+ rating and said Alphabet has $180 billion of net debt capacity within their current thresholds. That means if they issued $170 billion of more debt, they would not be downgraded. Start thinking about that as a AA+ rated credit. I would argue that might mean they have $1 trillion of capacity. Now, that's obviously they're never going to get there or do that. It just shows the magnitude. And the reason why they have so much capacity is because if you take a look at their revenues and cash flow, they can support it. So I understand when you're thinking about 3 or 4 years, it's hard to imagine.
Rob, great stuff as always. Appreciate you giving us some of your time. Rob Schiffman, Senior Tech Credit Analyst for Bloomberg Intelligence. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Pressed Metal. Stay tuned for the latest market news and industry research. Your top stories and global business headlines are coming up in just a moment, with the S&P selling off 1.1%, the NASDAQ off 1.5%, the Dow off 500 points. That's an even 1%. More coming up. This is Bloomberg. Good morning.
This is CBS News on the Hour, your home for original reporting.
I'm Steve Kathan. President Trump's Borders Hour praised the federal immigration crackdown in Minnesota as he announced it was coming to an end. Governor Tim Walz put it this way.
This surge of untrained, aggressive federal agents are going to leave Minnesota.
I'm Michael Wallace. Borders Czar Tom Homan made the announcement.
I have proposed, and President Trump has concurred, that this surge operation conclude.
He declared the surge a success, despite the protests and shooting deaths of 2 civilians.
There are some issues here. We fixed those issues. We've had great success with this operation, and we're leaving Minnesota safer.
Homan says Minnesota is now less of a sanctuary state for criminals. He denied reports that agents have arrested immigrants inside hospitals, elementary schools, and churches.
Chairing a Senate hearing, Kentucky Republican Rand Paul says more information is needed about the deaths of 3 people during the ICE surge in Minnesota.
State and local officials tell one story. Federal officials tell another story. Depending on the media source, the public may hear only one side. The hearing today, though, is to evaluate the facts and not to defend any one particular narrative.
Now to Arizona, where authorities are going through thousands of tips in the Nancy Guthrie case. CBS's Andres Gutierrez says there's been a new online family post.
Savannah Guthrie has posted yet another Instagram clip, this one 22 seconds long, in which there is a caption that says, "Our lovely mom, we will never give up on her. Thank you for your prayers and hope." And it goes along with some home videos of Nancy essentially with her kids there.
CBS's Jason Allen is in El Paso, Texas, where questions swirl the day after the airport and airspace were closed for hours amid word of Mexican cartel drones and an apparent U.S. laser test.
This, we understand from sources, is a high-energy laser weapon that they had been working on in training, and that Border Patrol, even in recent days, had used it to take out a drone, or in one circumstance, something that may have ended up being a balloon.
On the Health Watch, new research finds exercise trains the brain to build endurance. Study author Nicholas Betley.
In addition to your muscles building, the circuit in your brain that encodes this adaptation and the ability to recover also strengthens. So it gets bigger and stronger with exercise.
We're hearing from some of the 19 Buddhist monks who just finished a walk for peace from Texas to the nation's capital. They're in Annapolis today, the leader urging daily mindfulness.
Peace will be with us when we practice this.
And checking Wall Street right now, a downturn for the markets. The Dow is off more than 500 points. The S&P is down 60. This is CBS News. Quite a find at a historic house museum in New York City.
We're going to remove the bottom drawer of this built-in wardrobe.
Curator Emily Hillwright at the Merchant's House, lifting the lid for me as Director of Operations Camille Cirkowitz points out a link to what's now deemed to be an original feature of the 1832 museum.
Inside we have a lid that was made specifically to fit the space. And it comes out to reveal the entrance to a passageway that extends over 15 feet down. It has a built-in ladder.
Proving, the museum's curator says, the home's builder Joseph Brewster's ties to the Underground Railroad that helped protect enslaved people. Deborah Rodriguez, CBS News, New York.
Actor Bud Cort has died at 77. He was a Golden Globe nominee for his role in the 1971 film Harold and Maude. Steve Kathan, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
It's Escape from Minneapolis. Welcome to the Thursday edition as President Trump's border czar announces the end of ICE operations in the Twin Cities and throughout Minnesota, just a day before the Department of Homeland Security shuts down here in Washington. We're going to get the latest on this from Bloomberg's Tyler Kendall, who's live on Capitol Hill, with analysis from our political panel. Later this hour, the author of the Everything Risk newsletter, Bloomberg's Edward Harrison, joins us on this week's conflicting economic data and exactly how it's playing in the markets, which, by the way, is where we start right now. Let's get it going with Charlie Pellet, his view of Wall Street from World Headquarters in New York. Hey, Charlie.
Well, hello there, Joe Matthew. We got the bulls escaping from Wall Street right now with the Dow, the S&P, NASDAQ all declining. Right to the numbers here because we got fast-moving markets to the downside. S&P right now, after earlier gains, tumbling 84 points. That is a drop there of 1.2%. S&P now at 68.61. Dow Industrials down 575, down 1.1%. Just a couple of moments ago had been down as many as 600 points. NASDAQ down 1.5%. A tech rout underway. NASDAQ 100 index down 1.6%. And the Russell 2000 index of small cap shares, the Russell 2000 index down by 2.1%. And our Mag 7 index lower by 1.6%. So volatility shaking Wall Street. Concerns over tech profits spurs an industry rout after a tepid margin outlook from Cisco Systems. The 10-year now at 4.12%, with a 2-year 3.46%. Gold down $128 the ounce. Spot gold at $49.54, down 2.6%. Silver down 8.5%, $77.06 for an ounce of silver. And West Texas Intermediate crude down 2.7%, $62.87 a barrel. Jobless claims settle back after severe winter weather. Claims down by 5,000. Home resales fall the most in 4 years despite lower rates. 30-year mortgage now reaching 6.09%. As for the economic backdrop, George Bory is Chief Investment Strategist for Fixed Income at Allspring Global Investments. He was the guest this morning on Surveillance.
We know that there's a significant amount of stimulus coming into the system between tax cuts, tax refunds, tax incentives, and also, a very, very significant spend on the AI front. That clearly is underpinning the economy.
George Bory of Allspring Global interviewed on Surveillance. Among those tech names selling off, Cisco Systems plunging 11.8% after earnings. Apple down 3.7%. Microsoft today down 0.7%. Bottom line here, Joe Matthew, a sell-off on Wall Street. Balance of Power continues now. Once again, your host, here he is, Joe Matthew.
Thank you so much. Charlie Pellet, live from New York. It's great to have you, Charlie, despite the news here. We'll keep tabs on markets. Charlie will be back in just about 15 minutes' time with another read on Wall Street. On this 12th of February, thanks for joining us on the Thursday edition. You made it to Little Friday. I know it seems like we should be done with this week, but I say that every week around this time. Balance of Power, live from Washington on Bloomberg Radio, satellite radio channel 121, your Sirius XM, and streaming live on YouTube. If you want to dial us up, this is a good day. I just want to, a little bit later on this hour, once we get through the breaking news, Tyler's up on the hill. She's going to be with us in a second. This is not just any old Thursday around here. It's Chili Cook-Off Day in the Bloomberg Bureau in Washington, D.C. Oh, yeah. If you could see the line of folks waiting to sample the chili. We're going to do this live right here on the air. We'll have a blind tasting, and I hope that this is a good turnout for one in particular, because I believe we've got 10 chilies. Is that right, James? There are 10. All have creative names, including one called the Balance of Peppers. I'm hopeful. So DHS is set to shut down tomorrow night. That part hasn't changed. We do not have a deal. The counter offer did emerge last night from the White House. We're going to have the latest on that for you. But what's breaking today is what's coming out of Minnesota. The headline on the terminal: Trump to end Minnesota immigration blitz in White House retreat. The word retreat echoing around the Capitol as we heard from Tom Homan, President Trump's border czar, about ICE operations in the Twin Cities. Listen.
In success that has been made arresting public safety threats and other priorities since this search operation began, as well as the unprecedented levels of coordination we have obtained from state officials and local law enforcement, I have proposed, and President Trump has concurred, that this surge operation conclude. A significant drawdown has already been underway this week and will continue to the next week.
Tom Homan, earlier today, still in Minnesota. He's been there for weeks since they dispatched Mr. Bovino, who, by the way, is back on social media. We'll have to get to that. This collides with what's happening here, or maybe it coincides is a better word, what's happening here in Washington, where, of course, funding for the Department of Homeland Security is in the balance as Democrats and, yes, some Republicans balk at the way ICE has been comporting itself. We also have the acting director of ICE on Capitol Hill for a second day of testimony. And so we sent Tyler Kendall up to the Hill to see what was going on. And she joins us right now with the latest on a number of stories that are intersecting as we speak. Bloomberg Washington correspondent in the halls of Congress. If you're with us on YouTube, there she is, Tyler. You can get to the funding issue, I'm sure, but what are you hearing on Capitol Hill about Tom Homan's announcement today? And does that impact the debate at all?
Well, it has been broadly applauded by both sides of the aisle, Joe. In fact, I just caught up with the lead negotiator for Republicans when it comes to DHS funding. That's Katie Britt, a Republican from Alabama, who applauded the president's move and pointed to it as being part of Republicans' good faith negotiations to try to fund the Department of Homeland Security. The thing is that when it comes to these negotiations, that's not something that could be codified into law. And we know that Democrats want to see some of their demands actually tacked onto legislation that would ultimately fund DHS for the rest of the fiscal year, which essentially leaves us at the moment at this impasse, as it feels that both sides are far apart on some of those more tangible demands that would be written into law, such as a demasking, as it's been called, of immigration agents on the ground when they're conducting immigration operations, or these new judicial warrant requirements. So it's definitely something that's contributing to the conversation here on Capitol Hill, and does mark a de-escalation by the administration that has been trying to quell what has been just the massive unrest in Minneapolis. Just for context here, of course, we saw those 700 federal agents pulled out of the city in recent weeks. That still left around 2,000 federal agents, and normally there's about 150 that would be typically stationed on the ground, to the point that while Tom Homan did confirm that this surge is over, he did also go on in his remarks to say that there still will be a presence in some sense, but operations are going to be a lot more targeted, and there is going to be a dramatically smaller footprint on the ground going forward.
Does this change the story at all for DHS funding, Tyler? I'm assuming the answer is no, and we haven't seen any sign of a deal. So DHS shuts down tomorrow night?
It feels like that, Joe. There is, of course, as you well know, a last-ditch effort here. Perhaps we could see the Senate vote on some sort of continuing resolution, kick the can down the road, maybe another 2 weeks like we just saw with this past CR, so that they can continue negotiations going forward. But at this point, Democrats have said that they're rejecting the idea that there can be a stopgap measure, because they do not like the proposals that the White House and Republicans are ultimately countering with. And that's what makes this so complicated, because Democrats, again, need to see some of these changes codified into law. And it is not clear at this point exactly what the White House has offered in exchange. We've been trying to glean some details up here on Capitol Hill, but at this point, it's not totally clear what what's on the table to ultimately negotiate with. So at this point, it doesn't feel likely anything could happen. We're up against a recess, a long weekend. And important to note that DHS funding impacts a lot of different agencies. We're not just talking about ICE, we're talking about FEMA, we're talking about the Coast Guard, we're talking about the TSA. And that's a point that a lot of Republicans have been trying to make here on Capitol Hill, that we should just fund this and then maybe work on separate legislation, have the president do executive action. But again, Democrats say this needs to be tied to this specific bill.
All right, Tyler, we move to another important development on Capitol Hill that everybody should be aware of. It might not change the president's approach to tariffs or the tariff regime at all, because he'll likely veto any of this that comes to his desk. But following a vote yesterday that essentially took protections away and allowed votes on the president's tariffs in the House, Democrats went for it. Gregory Meeks had a bill to end tariffs on Canada, and it passed with the help of 6 rebels on the Republican side. Tyler, this is being framed as a watershed moment for this White House, a check on the president. Democrats have plans to do more of this voting. What else do you know?
Right, so this is the strongest political pushback that we've seen so far, Joe, to one of President Trump's top economic policies. But you're exactly right. We're not really expecting this to become law. We are expecting the Senate to vote on this. The Senate Majority Leader John Thune confirmed as much earlier today, and we have seen the Senate actually pass similar bills. So this very likely will end up on President Trump's desk. But as you well know, it would take a 2/3 majority in both chambers to ultimately overturn a veto. So this isn't going to turn into law, but it is a powerful messaging tactic, perhaps, from Republicans who have been playing defense when it comes to the issue of affordability, according to our polling. With all that said, we should, of course, mention that the vast majority of Republicans did vote with the president when it did come to this. But it was really interesting to look at those 6 rebels, as you called them, that voted against the president, because yes, at least one of them has been perhaps feuding pretty publicly with President Trump, Congressman Thomas Massie of Kentucky. A lot of the other ones represent these battleground districts as we head into November, and they need to appeal to a broader voter base. And Joe, we saw last night in the wake of this vote, President Trump now threatening to throw support behind primary challengers for these 6 Republicans. And we should keep in mind that that is a very viable threat. President Trump has amassed an unprecedented $483 million war chest. We had reporting last month that he's going to be directly involved in how that cash gets deployed as we head into November.
Absolutely incredible, Tyler. I know you bumped into Tom Tillis earlier. Even if DHS closes, it will apparently not impact the status of Doggy Gras and the Paw Raid. That's P-A-W. Senator Tom Tillis has confirmed February 25th at Hart Atrium, there will be a bipartisan PAW Doggy Gras. Is that a good sign for bipartisan relations?
Unfortunately, his office kicked out this notice right after I caught up with him, so I don't have original reporting for you on this specific topic, though I think that we probably could all use a little bit more bipartisanship, if I said that right.
Good job, Tyler. She's on the case for us. What happens if he catches the car? Bloomberg's Tyler Kendall, Washington correspondent, live in the corridors of the Dirksen Senate office building. I'm Joe Matthew in Washington. Coming up, the Everything Risk newsletter on Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are selling off. We got the VIX back above 20. The Dow, the S&P, NASDAQ, all in the red. S&P right now, worst level of the day, down almost 80. The stock rout is deepening as tech giants get hammered. Right now, the S&P down 1.1%. Dow Industrials down 1.1%. NASDAQ Composite down 1.6%. The NASDAQ 100 index lower by 1.6%. Cisco, after earnings, plunging now by 12.1%. Our Mag 7 index down 1.6%. The Russell 2000 index of small cap shares tumbling by 2%. Keeping an eye on Dow Transports, they are plunging by 5.6%. Again, the VIX back above 20. 10-year 4.12%, with the 2-year 3.46%. Spot gold down $119 the ounce, $49.65 on precious metal, down 2.3%. Silver's down 8.5% now, $76.94 the ounce. And West Texas Intermediate crude oil down 3%. Right now, we've got WTI $62.65 a barrel, and Bitcoin just below 66,000, down 2.7%. The White House is ramping up pressure on J.P. Morgan Chase's Jamie Dimon to cap credit card interest rates, a demand of President Trump and his push to address affordability. In an interview this morning, White House trade advisor Peter Navarro on Bloomberg Radio called Dimon, quote, criminal the way you charge the American people at 22, 25, and 30%, and the president wants you to lower that. J.P. Morgan Chase shares are down now by 3%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. Back we go to Washington. Once again, your host. Here he is with the Thursday edition, Joe Matthew.
Yes, Thursday, Charlie. Little Friday here on Balance of Power. Charlie will have more on the markets in about 20 minutes' time. Thanks for being here on Bloomberg Radio. I suggest you dial up YouTube right now, unless you're already watching us on Bloomberg Originals, because it's an important day here in the Bureau, the annual chili cook-off, and we're smack dab right in the middle of the United States, Congress, and the White House here, and we're going to find some bipartisanship, I guess, when it comes to the chili. Edward Harrison is going to help me out with this, because we wanted to get down to risk today, right? We've been talking about some pretty important economic data. We had a weird Jobs Wednesday. We've got jobless claims today, and then we've got, obviously, CPI. Well, I shouldn't say obvious. This is all jammed up because of the government shutdown, so they're falling on weird days. And the market's not sure what to do because there's a lot of conflicting data. So we thought we would bring Edward Harrison in, while we also, if you're on YouTube now, good job, because we've got our chili cam set up here. Now, there are, Edward, great to see you. There are 10 chilies, I guess, here that there have been. Okay, so we got 3. We're going to do a blind tasting. Let me just give you a spoon here.
Excellent.
And we'll try to make this work for everybody on the radio as well, because there is one of these chilies. Now, if you're just listening, this is a blind tasting. They're not labeled, okay? We're not sure exactly what we're having. One of these, though, is Tony's chili that won last year, and it's called the Balance of Peppers, Edward. So here, why don't you get us rolling on one of these? I'm going to start this one, and let's just see if we have a winner in the works. It's been pretty cold out. I mean, it's good chilly weather, obviously. This is, wow.
Not bad.
I hope that's Tony's. Here, check this out. Some of the other names that we have here, by the way, everybody's super clever. We have K Street Heat. We have the Green Bee. Honey, I Brought the Heat. Chili, Chili, Bang, Bang. But again, the Balance of Peppers is looking for another win. Here we go. Thank you, Edward. If we don't get fired today, it'll never happen. There's a nice shot for us here on YouTube. Everybody, oh, that's really good, too.
Is that your winner? One. Yeah, I think that was the one, the darker one.
I think there's sausage going on in there. Okay, wow. All right, I'm going, this is my winner here. You guys tell us before this segment is over which one that is, and we'll be good. I don't even need lunch now. This is great. So now that we've taken care of that, Balance of Peppers, Tony wins again? Fantastic. Good job, Tony. The Balance of Peppers, everybody, on Bloomberg Radio. This is a market that is supposedly in the middle of this massive rotation that doesn't seem to care about tariffs, that doesn't know what to do with economic data because it's arguing with itself. Is that the definition of everything risk?
It is. I mean, today we have this rotation on no news, really. Suddenly there was an air pocket. People de-risked. They got out of the riskiest assets. The NASDAQ was down the most. We saw oil fall. We saw Bitcoin fall. Silver's down a lot. So, there's a lot of nervousness about where we are in this cycle, especially because the AI theme is coming under pressure to a degree because debt has entered the picture there. Right. And so people are looking at this economic data to find out how should we think about the U.S. economy at this juncture.
Interesting. It's been really interesting watching this rotation occur with the S&P 500 kind of sitting in one place, but a total reordering happening under the hood. So we believe the rotation is real. Does it stick, I guess, is the question.
Yeah, I mean, I think it depends on how the data come out in the future, because if you look at the AI trade, half of the companies, the largest companies, the mega cap tech companies, have actually traded down over the last 6 months. We're talking about Meta, we're talking about Microsoft, Oracle in particular, and the other half have traded up. So over the last 6 months, people have already started to make that rotation to start to discriminate between potential winners and potential losers. And now we're seeing a wholesale sort of let's actually go beyond that and move within sectors of the U.S. economy.
Interesting. I've got a slow burn going here. I think that was Tony's chili. That's the nice heat. It's working really well here at the lunch hour. Now, how are you reading jobs data? We're going to get inflation tomorrow, as I mentioned, but we've got a jobs report yesterday and jobless claims today, where you can pick your number.
Right.
You can call it the golden age like the White House or the end of the world as we know it. How are you interpreting this?
I'm looking at it as a relatively good market, but one that's deteriorating.
We lost 1 million jobs last year.
Right.
What is
compared to the benchmark that we originally had?
Downward revisions, worry you or not?
I
on
think
that scale.
I think that that is in line with what we saw the previous year.
Okay.
And it was definitely known. It shows that at this point in the cycle that as we should expect, the jobs are not as plentiful in terms of the number of people who are being hired. And when you look at sort of the immigration crackdown as well, that's also going to have an impact.
Really interesting.
If you think about the end of last year, there was all that angst about the numbers, especially because of the shutdown. Over the holidays that went away, to a degree, you could say it's coming back. It's not that the economy is terrible, the labor market's terrible. It's just that it's weaker than we thought it was, and that's having some residual negative impact on equities, but it's having a positive impact on bonds.
As you write, the labor market is weakened enough to expect rate cut expectations to move forward over the coming weeks. Are expectations the same as reality?
Yeah, I think that the question is we have the Powell Fed. How are they setting themselves up for the next Fed chairman? Because Powell basically told us in the last FOMC, we're happy with where things are. We're going to see how things pan out in the exact same way that the markets are looking. And that means basically hold. And if you look at how the markets are priced, it's like 5% chance of a cut in March, 20% in April, and it's only starting in June and July that we're really on the table for that. But obviously, if the jobs numbers get worse, then that could move up substantially.
All right, so jury's out, it sounds like. There are a lot of people who, again, are saying we're not going to get any cuts the rest of the year.
Right, but I think that that's probably aggressive.
Okay.
It could only happen if the jobs numbers stay as good as they had been in the past. What I would say, by the way, is we all know here in D.C., we had terrible weather. That none of that was in the numbers for January.
Got it.
So the numbers that we saw earlier this week, those numbers are not reflective of where we are right now.
So Snowcrete will show up a month later.
Definitely.
Can we talk about crypto? I don't ask you a lot about Bitcoin and so forth, but man, this has been... You want to talk about the Everything Risk newsletter here. You could have your own special note on Bitcoin alone. And we're back below 70,000. People don't know how to read the technicals and say there are no fundamentals. So what do we do?
I think it's very much in line with this de-risking trade that we're seeing. And if you look from day to day, and you look at silver, you look at Bitcoin, you look at the NASDAQ, what you're seeing is the most volatile assets having the trading selling off or going up, and in general they've gone down. That is the most volatile, Bitcoin, then silver, and then to a certain degree the NASDAQ have taken the brunt of this rotation that we're seeing.
Really something. Look at this. It's just about to slip below 66. Oh, there it just went. We got a 65 handle on Bitcoin, down $1,800 right now, or 2.5%. So does this just trade with the NASDAQ now? The whole point, I thought, was that it was some sort of decentralized idea that would protect you. This was a hedge on the market.
Right. So, but I mean, it's just like with silver. When a lot of people get into that trade, then the momentum of that trade causes a lot of speculation that needs to be unwound. If you were a pro-Bitcoin person, you would say, okay, we're unwinding that speculation and we're going to hit a floor. But today's price action tells you that's not necessarily the case. You have two things. One, you have the fact that miners are not going to be able to make money at levels close to where we are now. And then secondly, one of the biggest holders, that Strategy, Michael Saylor's company, they're below water. They're 10,000 below where they need to be in order to be broke.
That's right. He's got a $76,000 cost basis, right?
Right.
And he's still buying, Edward?
He's not
buying.
And that's a sign. We've gotten to a level now where there's no extra bid. None of these Bitcoin treasury companies are going to get in there and take on that risk when the price action, the momentum is in the opposite direction.
Really
so you could say that that's actually that adds an extra flavor of negative momentum there.
Really amazing. He's going to have a pretty serious margin call at some point here. The debt is a big deal for Strategy. There are very few people, maybe none, at Bloomberg who have your global view of the markets. We just went through economic data. We touched the bond market. We hit Fed funds. You're talking about the rotation out of tech, crypto. Edward, what will have your focus now that we're coming around the back end of earnings season to give us either our next leg up or down, a correction, or another rally in the weeks ahead?
I think the tax cuts, the question is how stimulative can they be? Because at this point, we're looking at two things. We're looking at AI investment, and we're looking at government deficits as being overwhelming everything else. No matter how bad things get, that's a huge boost to the economy. And we're at this inflection point where people are starting to worry about the employment market. If you get that extra boost from the tax cuts, perhaps that can also be overcome. And I would say that given where we are, we've seen 12% year-on-year growth in EPS earnings for this last quarter. That's a good number. And if you take that forward, you can still hit new highs on the S&P.
Fantastic. Edward, this is great. One of the smartest minds we have in our bureau. Hey, we'll shake hands too. Edward Harrison, the Everything Risk newsletter, and a connoisseur of chili. Balance of Peppers is our winner, right? Thanks for helping me do this. I'm going to get a napkin and some water. Live from Washington, this is Balance of Peppers, only on Bloomberg Radio.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. We are looking at a slight bounce off the bottom for the S&P 500 index, but still, and I stress, holding close to session lows. Looking at a 75-point drop right now at 68.66 on the S&P. That is a drop of 1.1%. The Dow also down by 1.1%, tumbling 537 points, more than a tumble there. We have got NASDAQ down 1.5%. The NASDAQ 100 index also down 1.5%, and the Russell 2000 index of small cap shares down 1.9%. The 10-year 4.12%, with the 2-year currently yielding 3.46%. Gold right now down 2.2%, $49.71 the ounce. Silver's down 8.2%, $77.37 a barrel, and West Texas Intermediate crude at $62.78, down now by 2.9%. Bitcoin down 2.6%, just below $66,000. President Trump's tariff policies suffered their strongest political blow yet yesterday, with the Republican-led House passing legislation aimed at ending the president's levies on Canadian imports. This amid a new study about just who is picking up the tab for tariffs. Martha Gimbel is executive director of the Budget Lab at Yale University.
Yesterday, the Congressional Budget Office released its updated baseline. And they said that 95% of tariffs are paid for by the American consumer. So for all of the discussion from the administration that, no, China's going to be paying this, Mexico's going to be paying this, that's just not where we are. All of the economists agree, you're paying this, I'm paying this.
Martha Gimbel, executive director of the Budget Lab at Yale University. Dow transports are declining today. We got the Dow transports down by 5.8%. Culprit logistics stocks, they're sinking as investors rush to the exit on the group amid fears over disruption from artificial intelligence, making it the latest casualty of the so-called AI scare trade. Case in point, shares of C.H. Robinson, CHRW on the ticker, plunging now by 23.4%. Among other trucking/logistics companies, J.B. Hunt Services down 8.7%, and XPO Logistics, they are down by 7.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That Joe Matthew is a Bloomberg Business Flash.
Many thanks, Charlie. He'll be back at the top of the hour with the latest read on the markets. As we welcome our global television audience to the conversation, Kaylee Lyons will come aboard and we'll be off and running. Thank you for being with us here. Hour one of Balance of Power on Bloomberg Radio, satellite radio, channel 121, streaming live on YouTube. I hope you liked the chili, and I'm glad you're spending time with us here on the Thursday edition. As we think back to February of 2010, what were you doing? Where were you when the first billboard appeared? This was on Interstate 35 in Wyoming, Minnesota. Remember this? George W. Bush. Miss me yet? This was a big story at the time. This billboard showed up in the outset of the Obama administration. Things were looking a little shaky at that point, and of course there was a wipeout in the midterm elections. Miss me yet? Said the billboard with a smirking George W. Bush. They first thought this was some kind of internet hoax. Then they started popping up around the country. It turned out that it was created by an anonymous source. We never knew who put them up there, according to the billboard owner, Schubert and Hui Outdoor Advertising. And I'm wondering when the first Joe Biden Miss Me Yet billboard appears. As you know, history has a way of repeating itself. And as we read in Axios this morning, they did a good job crunching together a number of polls that shows not only President Trump underwater when it comes to approval ratings, but voters saying that Joe Biden did a better job as president. 3 national surveys find a majority or plurality of voters say that Trump is doing a worse job than Biden. Results ranging from 46% to 51%. Look no further than the Harvard Caps Harris poll. This is Mark Penn's polling firm. 51% of registered voters say Trump is doing a worse job than Biden. 49% say he's doing better. Rasmussen, this is not a liberal group, known as a Trump-friendly pollster, finding 48% of likely voters say Joe Biden did a better job as president compared with 40% who chose Trump. I bet their inbox is pretty sharp today. Another 8% say the two presidents have performed about the same. Add YouGov Economist, it's the same story. 46% of adults say Trump doing a worse job than Biden, compared with 40 who say he's doing better. Is this just the way it goes? Is this the seasonality in a midterm cycle? It's what happens after the first year of a new or not so new administration in this case? We ask our political panel. We've got a good one for you today. Bloomberg Politics contributor Rick Davis is with us, our Republican strategist and partner at Stone Court Capital, and Doug Farrer, principal, Maywood Strategies, former senior advisor to the FTC Commissioner Lena Khan. Great, gentlemen, to have both of you with us. Rick, you know a lot about polling, and I'm wondering if you think it's freak-out time here for the administration, and if that billboard showing Joe Biden's going to pop up soon.
Yeah, I called Karl Rove about that billboard. Sounds like just the kind of thing he would do. But that's just me. I was wearing a hat that said I voted for McCain. I mean, like, same thing goes. But yeah, this is actually pretty surprising. Sure, you always love the one you're with, and Biden had a horrible exit from the White House, failed presidential campaign, and all that. So the fact that, he's scoring ahead of Donald Trump, who, literally has just finished his first year, is a bit of a surprise. And I think some of these numbers too, when you add an NBC poll that, it's never been favorable to Donald Trump, but I've seen this replicated in other places that 49% strongly disapprove of the president's performance in office. Now, that's different from just disapprove. And so when you have a strongly number like that, that means that those 49% aren't going to vote for you or anybody else probably with an R by their name. And a lot of that's driven by the economy. And so he still hasn't gotten out of the economy doghouse. And whether you like it or not, I mean, Biden had bad economy numbers, but nothing compared to Donald Trump in his first year in office.
So, Doug, is Donald Trump the best thing that could happen to Joe Biden's legacy?
Well, I don't know about that, but I mean, sometimes, and I appreciate what Rick said, politics is pretty simple. Yeah. Donald Trump promised, I'm going to lower prices. And since then, he's conducted this crazy campaign with ICE and immigration. He's, done all sorts of really weirdly corrupt deals with different Emirati groups and all sorts of things, accepted the plane. And at the end of the day, people are paying more for healthcare, housing, groceries, you name it. And so that's really what's driving this, in my view. He's not delivering. And, the other thing I think is Joe Biden's a fundamentally decent guy. You can disagree with the policies that he had. President Trump comes across as more of a troll, somebody who's a little more aggressive. A troll? And a mean. Well, look, he does on
like an internet
social.
Troll or like a troll hiding under the bridge waiting to...
An internet troll,
That's
right?
Okay.
I mean,
but
his True Social
Trump would tell you that it was the Biden crime family, that he had massive ethical problems when he was in the White House.
It's amazing when I hear that, because the scale of a story like the UAE paying $500 million in World Liberty Financial to access high technology semiconductors that are unavailable in lots of markets blows anything Hunter Biden related out of the water, and it's already off the headlines. So I think, there's a different standard going on here, and that's driven by Trump's flood the zone strategy.
Do you delineate between these two, Rick Davis, of the affordability issue, the economy being judged on the cost of living and so forth, or is it some of the stories that Doug refers to, the Air Force One from Qatar, the donations for the ballroom, et cetera?
Yeah, I think, I separate them by sort of inside the Beltway and outside the Beltway. The economy is an outside the Beltway problem that, for whatever reason, isn't being addressed inside the Beltway. And yet all the other scandals and whatnot that Doug's referring to, I see those as inside the Beltway. They haven't really metastasized as a political issue. So when you have the twin pillars of, people really feeling like the economy isn't helping them, and if not hurting them, and then a complete, transformation of the immigration issue to once helping Republicans to now hurting them, you see a big swing. That YouGov poll that you talked about that shows 46% thinking Biden did a better job than Trump's currently doing, saw a massive change with, 18 to 29-year-olds, where it's a 51% swing against Trump in his first year in office. Now, that was a critical voter group that helped propel him to the election, and they've literally turned upside down on him. So to me, I look outside the Beltway. I mean, most of this stuff is good sport and it's entertaining and it doesn't affect politics much. But when you've got the economy and the twin pillar of the immigration issue going upside down, in other words, imploding your base, you're really suffering. And I would say the one issue that is both an inside the Beltway and outside the Beltway issue is Jeffrey Epstein. It's got traction out there, and a lot of the Republican base isn't happy with how the Trump administration has handled something they promised they were going to get done.
Really interesting. Does this make Joe Biden a contender then in 2028? We've got a model now for 2 non-consecutive terms.
I don't know about that. You'd have to ask him. But
I'm not being serious. Does it help maybe someone named Kamala Harris or the generic Democrat when it comes to the presidential race?
You know, I think it's hard to look past the midterms, but generally,
Sure.
yes. I mean, it appears like it's going to be really favorable in the midterms, and potentially that'll carry on.
How many seats do you think?
To 2028. Oh, I'd hate to handicap it, but it's going to be a
Susan
lot.
Del Bene was on here yesterday. They've added 5 seats to the map of the DCCC, which brings it to 44. If they turn 44 seats in the House, what does that tell you about the electorate?
I mean, I think it tells me that the electorate is still really pissed off about prices for things they're paying for. They don't care about the S&P and the Dow, like Pam Bondi said yesterday. They care about what bread costs, what eggs cost, how they can afford to pay rent. And, I think they'll continue to be pissed off until somebody fixes it. So that's a big opportunity for the Democrats.
Really interesting. Rick, you heard that conversation we had with Susan Del Bene. Does a 44-seat turn seem like something plausible in your view?
Yeah, certainly when you look at the last year, right, Democrats won every statewide election that's been had, all the specials. And they've been doing it in Republican districts where they could win, where Trump won by 15 plus, right? I mean, that's and then when you extrapolate that to districts around the country, you got about 45 districts that would fall into the category that if Democrats perform plus 15, they win all those districts. I would say the one thing Democrats have to figure out is they have the worst party rating they've ever had in polling that I've seen. I mean, like, people will vote for them, but they won't vote for the Democratic Party. They'll vote against the Republican Party and against Donald Trump. So if they really want to have ambitions in 28, they got to figure out who they are as a party and start fixing that problem, because that is a glowering issue in the polling data.
Really interesting. Does this pan out into a government shutdown this week? And I'm connecting the dots, I guess, in a strange way, but the lack of trust, the lack of cooperation in Washington between these two parties has left us now in this perpetual shutdown conversation. We're doing this again?
I mean, I think with respect to DHS, yes, the Democrats feel not only it's a winning issue for them, they saw what happened in Minnesota with ICE, and they feel that they've got to impose a political cost on behalf of their
How does
constituents.
that feel when TSA misses the first paycheck? Is
Well,
that
that's
going to change the vibe here?
That's an interesting point, because ICE has a ton of money because of the
right.
previous budget, and so they can outlast the Coast Guard, they can outlast FEMA, they can outlast TSA. So I think there will be countervailing pressure on Democrats to figure something out. So far, the White House proposal on a little bit of masks, maybe some cameras, is just not going to cut it. So we'll just have to see where it goes. But certainly, there's a clock on this one.
They've got the counter proposal, Rick, and didn't seem to help. Are you expecting the DHS shutdown tomorrow? Or does Rosa DeLauro's bill that would take ICE away from all the rest of these other agencies, FEMA, TSA, Coast Guard, could we see something like that pass, where we've actually managed to keep most of that department open, but Democrats keep ICE in the barrel, as it were?
Yeah, I'd be surprised if that would fly in the Senate. They're smart. They know that keeping the Democrats' feet to the fire on not funding FEMA, not funding Coast Guard, not funding TSA is part of their leverage, right? At some point, a TSA employee is not going to get a paycheck, and Republicans want to use that as a push against Democrats. So, the last thing the Republicans want to do is focus solely on a debate around the Border Patrol. So, it's I doubt if anything's going to go. We've talked about this all week, and what's really unique about this shutdown is Nobody wants to shut down, but nobody wants to do anything about it. And the president, says one day he's going to be the guy who negotiates a deal, and then he disappears for a week, and then he shows up, late last night with an offer. When you combine that offer with what Homan said today about withdrawing all these folks, not just out of Minneapolis, but all the rest of the states they surged in, I think you got the makings of a deal.
Really interesting, Rick. We're going to have a lot more on that announcement from Tom Homan with our panel in hour 2. Rick and Doug will be back. Kaylee Lyons will join us, and we'll welcome our global television audience to the conversation. Also looking forward to asking Doug about this news at DOJ. The antitrust chief has quit. He knows a thing or two about what goes on at the FTC. We'll have that on.
Live from Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lyons.
Another partial shutdown is set to hit tomorrow. Welcome to the Thursday edition as we count down to a funding deadline at the Department of Homeland Security with no agreement in place on ICE restrictions. I'm Joe Matthew alongside Kaylee Lyons in Washington. Thanks for joining us, Kaylee. This happening just as Tom Homan announces the withdrawal of ICE agents from Minnesota.
Yeah, Operation Metro Surge apparently is coming to an end after Homan had previously announced 700 federal personnel were going to be leaving the Minneapolis area. Of course, leaving thousands there still. Apparently, that larger drawdown is now happening. The question is it a change of heart on the Trump administration's part in regard to the operations there that's happening too late to assuage Democratic concerns about the way in which this conduct has been handled?
Yeah, it may not impact the debate here in Washington at all, and it doesn't really seem to be yet, Kaylee, but we're going to have the opportunity this hour to talk with a couple of lawmakers and take their temperature, beginning with Senator Shelley Moore Capito, the Republican from West Virginia, very close to the president, might have some thoughts on this. She'll be here in just a couple moments.
Yeah, and from the Republican Main Street Caucus in the House of Representatives, Congressman Mike Flood will join us as well later this hour. And interesting to get his take, too, on the fact that 6 of his Republican colleagues last night broke with the Speaker and President Trump and a vote on overturning his Canadian tariffs specifically. And a question as to whether or not that foretells more breaks like that could come.
Yeah, not many in the jailbreak, as some had predicted, but we're going to see rolling votes. Mexico probably up next, and they're going to be identifying a number of countries with Democrats trying to seize on this moment. We'll see what comes next.
Indeed, we will, just like we're seeing what comes next in today's trading day. So let's get on a check on the markets now from New York, and we turn to Charlie Pellet. Hey, Charlie.
Thank you very much. Welcome back again. I know it's just 4 days in, but welcome back. Good to have you with us. We have got the Dow, the S&P, NASDAQ, all trading lower right now. We got to get right to the markets. Fast-moving markets on this Thursday here with the S&P down 94 right now. Drop there of 1.3%. Low of the session on the S&P. Now it's 68.48. Dow Industrials down 650. That is a drop of 1.3%. Tech stocks getting hit hard today. We have got the NASDAQ Composite Index down 415 points, a decline of 1.8%. And the NASDAQ 100 Index down 1.8%. The Russell 2000 is down by 2.4%. All of this after gains earlier in the day. But bottom line here, the stock rout is deepening. Tech giants getting hammered. 10-year, 4.12%. The VIX, by the way, back above 20. The 2-year, 3.46%. Gold is down $142 the ounce at $49.42. That is a drop there of 2.8%. Silver now down 10.3%, $75.57 on spot silver. West Texas Intermediate crude down 3%, $62.71 a barrel. And Bitcoin now down by 3.3%, $65,520 on Bitcoin. The White House is ramping up pressure on J.P. Morgan Chase CEO Jamie Dimon to cap credit card interest rates, a demand of President Trump amid his push to address affordability. Now, in an interview with Bloomberg this morning, the White House trade advisor Peter Navarro called Dimon, quote, criminal, the way you charge the American people at 22, 25, and 30%, and the president wants you to lower that. J.P. Morgan Chase shares down now by 3.3%. Again, recapping here, stocks lower, cannot ignore Dow Transports down 5.5% now, S&P down 1.3%, the VIX just above 20. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Balance of Power continues now from Washington. Once again, your host, Joe Matthews. She's back. Kaylee Lyons.
All right, Charlie Pellet, thank you so much. Checking out the Thursday trading action. And for most people, a Thursday would mean we are 1 day away from the end of the work week. That Friday would be upon us. But of course, here in Washington, at least if you are an elected representative on Capitol Hill, usually your work week ends on a Thursday. Everybody flies out of here. And it does look, Joe, like that is what is going to happen this evening, even if there is no deal to keep the Department of Homeland Security funded beyond the deadline of tomorrow. It doesn't look like that deal is anywhere close to getting done. Therefore, they're taking recess as they plan to.
Yeah, both chambers. So this could be, well, it's undetermined if this shutdown takes place in Homeland Security, exactly how long it will last, because there does not appear to be a continuing resolution that anybody can agree on here. And before we talk about this and a lot more with Senator Shelley Moore Capito, the Republican from West Virginia, is going to join us live from Capitol Hill. Bloomberg Washington correspondent Tyler Kendall is also roaming the halls of the Capitol and finding a lot of news today. There's a lot going on with regard to this debate, but also, Tyler, the Federal Reserve and the next chair. I want to start here with you because you had a conversation with Tom Tillis earlier today that's making a lot of news, knowing that there was this idea of maybe a swap in investigations, if you will, to unlock a confirmation hearing in the banking committee. If the DOJ were to drop its Senate banking committee would pick it up. Tyler, is Tom Tillis in favor of this move?
No, Joe, he told us reporters here on Capitol Hill that he is batting down this idea. And he's really central to what is going to happen to Kevin Warsh's nomination going forward, because he is that key member on the Senate Banking Committee where Republicans only hold that 13-11 majority. So in terms of this proposal being floated, one Republican official does tell Bloomberg News that an option being put on the table could be for the Senate Banking Committee, as you outlined, to take over the investigation or lead an investigation, presumably to have the Department of Justice let up on its investigation. But Tom Tillis says that is not going to be a viable option.
I really do think Warsh is a great nominee. In fact, the short list was great. I told the president that. But I'm not going to have an investigation out there because I still think it speaks to the very thing that I moved quickly to make a point on the Sunday night when the investigation revelation was there. We have to have an independent Fed, and we can't finesse this. They either need to move forward with a compelling investigation that convinces me I was wrong, or resolve the current investigation and move on.
Joe and Kaylee, I then pressed Senator Tillis to see if he could confirm that these negotiations are happening behind the scenes with the White House. He said that he would not detail his private conversations with the administration, though it was interesting to hear him also add that he felt that the administration was actually caught off guard by this investigation that was launched by the Department of Justice into Jerome Powell. So it's one of those threads that we're going to have to keep following closely here, because as you well know, Powell's term as chair is up in May, and this is a process that actually does take some time. While Warsh has been broadly applauded, this typically would have been considered a pretty easy confirmation hearing. It's going to take some weeks at least to get going, because he has to meet privately with all of the members here in the Senate before we can even talk about setting that potential hearing date.
So this is a thread we will continue to follow, as you say, Tyler. Another thread we're following, of course, today, knowing that the deadline looms tomorrow to keep the Department of Homeland Security funded or risk shutting it down. Has there been any progress today that you sense on Capitol Hill to avoid that outcome, or are we just expecting everyone to get on their planes and deal with this on the other side of recess?
Well, Kaylee, it depends on who you ask. I did have a conversation with the lead Republican negotiator for DHS funding, that's Senator Katie Britt, a Republican from Alabama. She told me that they have made, quote, significant strides when it comes to negotiation. She's talking about the sides sending a text back and forth to each other. But when you ask Democrats, they're saying that the proposals being put on the table by the White House is not enough to actually amount to getting their votes, not for the full fiscal year funding for DHS, that appears to be an option that is long gone at this point, but for potentially supporting another continuing resolution for potentially 2 weeks, as we just saw for DHS. And of course, as you well know, there was that breaking news this morning. President Trump's border czar confirming that they are going to end that surge in Minnesota. While that was broadly applauded by both sides of the aisle, it is action like that that Democrats say isn't enough to get them to the table. They need to see some of their demands really codified into law instead of just falling to executive action.
All right, Bloomberg's Tyler Kendall live on Capitol Hill for us. Thank you so much. And sticking on Capitol Hill here on Bloomberg TV and radio, I'm pleased to say also joining us live now is Republican Senator Shelley Moore Capito of West Virginia, the chair of the Committee on Environment and Public Works. Senator Capito, thank you so much for being back with us. Is it your expectation that the Department of Homeland Security is going to be shutting down come midnight tomorrow, or do you see an 11th hour opportunity to avert that outcome today?
You know, right now I would have to say that it looks fairly inevitable that we will have a partial shutdown of the Department of Homeland Security. I think it's good to frame that, remember, we did pass a lot of bills and the president signed into law. So 96% of the government is fully functioning. But that critical piece of Homeland Security in all likelihood will shut down. But I am for extending the time for debate. I am for making improvements such as Senator Britt was able to negotiate into the Homeland Security bill. We need to move beyond this and make sure that our Coast Guard and our TSA and our Secret Service and our FEMA are all funded along with our Border Patrol and ICE.
Senator, it's good to see you. I wonder your thoughts on this approach that some Democrats are taking in the House. Rosa DeLauro has a bill that would essentially strip ICE itself away from the other agencies under DHS, like the TSA, FEMA, the Coast Guard? If the House accomplished that, would that even be entertained in the Senate?
You know, I don't think that's a good strategy. We've got to look at Homeland Security in the whole. It is important that we have internal enforcement of our not just immigration laws, but our ability to work with cities and counties and states to be able to remove people that have been adjudicated and are under deportation orders. And that's what ICE does. And so I'm fully supportive of the efforts that they've moved forward, and the same with Border Patrol. I mean, can we make improvements? Yes. And improvements are built into the bill. More cameras, more training, more IG or, inspectors, inspections. These improvements can be made. They're already built into the bill that the Democrats will not accept. And I think they're using this as a political statement. I think if we pull it out, it becomes even more polarized and more political.
Well, as we consider the politicization of the ICE issue specifically, it of course has been a focal, or the focal point of that has been in Minnesota and Minneapolis, specifically in the aftermath of the two U.S. citizens who were killed. We learned from Tom Homan, the Borders are today, that they are going to be drawing down Operation Metro Surge in Minnesota. Let's take a listen to what Mr. Homan said earlier.
In success that has been made arresting public safety threats and other priorities since this surge operation began, as well as the unprecedented levels of coordination we have obtained from state officials and local law enforcement, I have proposed, and President Trump has concurred, that this surge operation conclude. A significant drawdown has already been underway this week and will continue through the next week.
So if we are at the conclusion of this operation, Senator, with the benefit of hindsight, did the operation surge too far?
Well, here, what I'm reading and what he's saying is the key component that he's emphasizing is the coordination between state and local. And I'm not sure that that was there before the temperature went way up. And then I think this has been part of the compromise between that Tom Homan was able to forge with state and local authorities and with ICE and Border Patrol. Let's lower the temperature, let's work together as law enforcement officers, and let's get the worst of the worst out of here. And I think those are reasonable propositions. Did it go too far? I think obviously mistakes have been made and had some very life-ending and altering results. And for that, I think we all wish we could go back and change that. But I think lowering the temperature, removing themselves from the operation and leaving it to state and locals, that's what we need to do. We need to have that coordinated effect.
You know, it's interesting, Senator, we've talked to a number of your colleagues, Republican senators, about the issue of demasking, and we've heard the arguments on both sides of it. It appears to be a breaking point, and I'm wondering if demasking is a non-starter for you.
You know, in my view, that's just sort of an issue that I think gains a lot of attention. We just obviously as a nation went through a big masking issue during COVID, but also the protesters in New York, they were all masked. And we were saying, you know, if you're protesting, we need to be able to see your face. And then now we see the same sort of argument on the opposite side. I think that you have to do this on a case-by-case basis. We have to protect our officers. And I think the protesters in Minneapolis showed that they're willing to dox, threaten families, and threaten the health and security of a federal law enforcement officer, which in and of itself is pretty frightening. So I think maybe when the temperature goes down, we'll see more abilities for identifications. But I do want to reserve the right for our officers to wear a mask if they feel their life's in danger. Yes.
Senator, I'd like to switch gears as we are expecting later this hour President Trump to be appearing at the White House with the administrator of the EPA, Lee Zeldin, to formally revoke the so-called endangerment finding around greenhouse gases. Lee Zeldin calls this the largest act of deregulation in the history of the United States. But I ask you, given your chairship of the Environment and Public Works Committee, is it too large an act of deregulation? Could this not have negative environmental consequences?
No. No, we have environmental laws that are strict, stringent, and they're adhered to. What this has done is taken an issue in the early Obama administration and ballooned it up into what can we do for global carbon emissions, and what we see, and as you read articles, different opinion articles from different papers, some that are very liberal papers have said, yes, the endangerment finding went too far. You cannot have the executive take control of the legislative prerogatives of Congress. And that's what's happened, and it's stayed. It's going to be the largest, I think, economic deregulation that we've seen. I'm sure it will be litigated, but I feel confident that he's on firm ground, especially in light of some of the past decisions by the Supreme Court that we've seen that have said the executive and the agencies have to stay within the boundaries that Congress has set. And an endangerment finding goes way beyond that.
Really interesting. I don't know if you were there, Senator, but the President of the United States was awarded the undisputed champion of beautiful clean coal trophy yesterday at the White House. Peabody Energy, Jim Gretsch actually gave it to him. In the effort to celebrate an order that the president made directing the Pentagon to buy electricity from coal-fired power plants. What does that mean for the industry in West Virginia, this Pentagon deal?
Well, this provides the certainty to the coal industry, but it also provides a lot of balance and certainty to the nation. Let's just look at this practically. Over the last 2 to 3 weeks, we've had these amazingly low temperatures. If you look at the energy, who's providing the energy to warm our homes, what source? Coal has had a major role here, along with natural gas and nuclear. And so we have to preserve these baseload energy availabilities to do a lot of things, but just the basic needs of heating our homes and making sure that our hospitals are open, all of these things. So the president's a big fan of coal. Coal country loves the president. I was there yesterday. It means a longer life for a lot of our coal producing power plants, but also more coal mining jobs. They're doing it better, safer, and cleaner than they ever have. And it just makes a lot of sense for our nation.
Senator, we just have a minute left, but I know you today have officially signed on to the Save America Act that passed the House of Representatives last night, of course, a voter ID piece of legislation. Your Republican colleague, Senator Lisa Murkowski, has suggested that legislation such as this could have the effect of federalizing elections. We know President Trump has had made some comments about nationalizing elections as well. Is that an idea you stand behind, or do you have concern about that?
Well, yeah, I don't want to federalize our elections so that every state has the same election parameters and our secretaries of states can't form and function their election practices that their legislature puts forward. So this doesn't do this. This basically says you just have to prove that you're an American citizen to vote in an American election. It sounds simple. I would say it's probably not as simple as it sounds, because I think some of the identification issues could pose a challenge to some secretaries of state, whether you need a passport or birth certificate or a real ID card, and some of these issues have been raised. But honestly, it's a simple concept. Many states have voter ID. Mine's one of them.
Senator, it's great to have you back on Bloomberg. Republican Shelley Moore Capito, West Virginia, live from Capitol Hill. I'm Joe Matthew alongside Kaylee Lyons in Washington. We'll assemble our political panel next and get into the shutdown politics once again. This is getting to be a routine. Stay with us. Much more straight ahead on Bloomberg TV and radio.